Trades this morning. Defense stocks could be under a little bit of pressure, but the momentum coming out of the United States Friday is feeding through into us here in Europe. Monday, and this is what it looks like. Here we go. The opening trade looks a little bit like this. The FTSE 100 expected to be up by, let's call it circa 0.5%, maybe a little underperformance coming through there, but it's going to be an interesting week for UK assets with the budget very much on the horizon. So we're climbing a little bit, maybe not as much as anticipated. We'll wait for that market to get going a little bit. Remember, there's a lot of Italian XD in the market as well, so when you look for maybe the rating upgrade effect coming through into Italian assets this morning, just bear in mind that a lot of banks are going ex-dividend. CAC yet to open, DAX, SMI, IBEX still yet to open as well. There's the IBEX up by 0.9%. There's the CAC up by 0.6%. FTSE's now at 0.4%. The Germans are going to take their time. We'll wait and see what that market looks like. Defense stocks are going to be an interesting side on this story this morning. What are they going to do on the back of what we're seeing around the Ukrainian story? I think it's going to be a fascinating trade too. But keep an eye on energy, keep an eye on miners, keep an eye on the tech trade as well. Kriti, what do we got?
I mean, you said it exactly. Those are the three major sectors that are moving here. Let's start with the energy trade because that's the one that seems to be moving the market the most. I'm seeing the likes of Shell, I'm seeing the likes of Eni down. So if you're worried about some of the drops that you're seeing in energy prices, some of this has to do with geopolitical risk. That is where you are seeing the pressure. I should also mention we're getting early reads on the defense sector. Saab, for example, we'll call that our proxy for the others as they are kind of take their time to open. Down about 3%. Total also in the red. BP also in the red. So there you go. There's your geopolitical read-through. The rest of the market, 465 stocks in the green. And the outperformers, I'm going to start off with a pharmaceutical story, your favorites, Novo Nordisk, your Sanofi's, your Roche's. It then graduated to ASML and SAP. So tech and pharma leading this market, defense and energy are your laggards.
If you see Asia having a good tech session, you see the US having a good tech session, you just buy these stocks.
Get in on the party.
It's the proxy. HSBC was up quite strongly overnight in Hong Kong. It is trading quite well as well this morning in the London session. Luxury's on the front foot. But as you say, elsewhere, it is the energy story and the defense story that is dragging us down. There's all that kind of Italian XD in the market as well. So names like Intesa Sanpaolo, all of those names not reacting to the rating upgrade, but we're all reacting to the fact that we've got a dividend payout, which we need to factor into our thinking. But as you say, very much in terms of the weight, it's a market that's on the front foot, 460 up, 100 down. So you've got a pretty big balance pointing us in the positive direction this morning.
And you made this point last week, actually, that some of the defensive names that we tend to see outperform in kind of a scary risk-off kind of environment, your Nestle's, your National Grids, they're actually down today as well and driving the market, the downside of the market as well. So it's just another indication that people are looking to buy risk later today. I'm curious how much volume we're seeing. I should also mention one specific mover, Bayer, higher by 7.5% this morning. It is in line with some of the pharmaceutical gains. It's also due to some positive drug study results as well. Looks like their experimental stroke prevention drug has been showing some positive results in the market, rewarding it for it. Shares, I mean, bouncing as I'm speaking, higher by 9%. So pharmaceuticals having a good day in multiple respects.
Good news to see some buyer positive news coming through. That will certainly help out the German market, which is going to be hit by the names like Rheinmetall, etc., which are going to be dragging us down. So how do we feel this Monday morning? Risk on? Certainly that seems to be the tone generally in the market. Is it enough to carry us forward? Are you feeling risk on enough to talk about a Santa rally? Let's ask Fiona Ball, Global Head of Equities at S&P Dow Jones Indices, who joins us around the table. Good morning.
Morning.
Last week was choppy. Last week was nervous. How are we feeling this week?
Last week was definitely on the nervy side. Look, I think the news over the weekend was probably relatively mixed. We think about geopolitical. We look at, as you were already talking about, the defence stocks. Got 6 weeks coming into Christmas. Expect a relatively quiet this week usually with the US holiday. But let's see.
Maybe not. There's a lot of US data coming out this week, which we normally wouldn't get. So maybe that's an extra kind of incentive to drive volatility higher. But in terms of kind of where we are, what seemed to change the tone Friday was just John Williams from the New York Fed coming out and saying, yeah, maybe we do see a December cut. Is that what the rest of the year really now hangs on, whether or not the Fed does or doesn't deliver 25 basis points on the downside?
I think that's going to be probably the key data point that we look for over the next couple of weeks. We expect that we'll see, potentially some more interest in dividend-type strategies as people are looking for hunting for income based on that idea of a Fed cut now and more Fed cuts next year. But I think the Fed decision's the big one to watch for.
How dependent is this rally on that? Is this market still sensitive to things like valuations, or is this purely about monetary policy?
Look, the S&P 500's up 12% year to date, right? Not a bad year. Certainly well above, historical, average performance you'd expect from the US equity market. Valuations have been stretched. They've been stretched all year. We've seen that flow into markets outside of the US, European valuations also historically looking stretched. But we've still got tailwinds as well. So, maybe we are in for a Santa rally.
Well, that's in the States. Does the valuation argument apply to the defense stocks that we're seeing drive this market? So we're seeing them down today. There's a geopolitical read-through as well. Is there a valuation conversation to be had around the Rheinmetalls, the Hensoldts of the world?
Look, defence has been one of the great sector stories of this year. If you think about where, a heap of money's flowed into new ETFs, there's been more than a handful of new European defence ETFs, and they've performed very strongly. I think it's, not unreasonable that with changes to the geopolitical landscape, news stories coming out over the weekend that, you might see some pressure there.
You talk about the 12% that the S&P has delivered. If I'm a euro investor, it's 1%. European cash has outperformed the S&P this year. What do I do with that? What are you seeing in terms of hedging? What do you think you do next year do I need to hedge my US risk? From a currency perspective?
We've certainly seen flows into European equities. Like a crazy stat from that I was reading last week is that flows into European beta passive ETFs up 30-fold this year.
Right.
So we've already seen...
US money or European money?
I would say that's largely European money. So we've already seen European investors adjust their portfolio, and they've been doing that all year. And as you said, part of that reason is that in local currency terms, that US equity exposure hasn't been fantastic. In fact, it's probably been bad. So what do they do going forward? I mean, we expect that there will still be very strong demand for non-US exposure going forward, whether that's Europe. Latin America has also performed very well this year, and there have been pockets in Asia of specific country performance that's been very strong.
What do you think how does Europe look next year? Everybody's got very excited about the fact that the Germans are going to be spending a lot of money, and as a result of which we're going to see this kind of economic powerhouse at the heart of Europe driving sentiment and making it more positive. I'm not seeing it yet. I'm not seeing it showing up in the data. Is Germany going to... How critical is it that Germany actually delivers on that fiscal narrative for European equities to hold up?
Well, the German economy is largely what drives the European economy. We know that. So, where they go, the rest of the European market will follow.
So, yes, quite important.
It's very, very important.
Sticking with the German theme a little bit, so much of that has to do with some of the way that the European bond moves are trading. I would ask you about the bond market, but I am curious about whether the equity market is going to be taking its cue from the bond market. Is this a rally? Are we dealing with a lot of luck here, given that the dollar's range-bound, the bond market's range-bound, and frankly, so is the commodity market? Is this luck?
Luck in terms of the current equity, cross-asset luck. Look, there are points and there are catalysts that underpin the current performance in European equities, right? We've seen defence, as you said. We've seen strong performance in some of the pharma. So we will need to see that continue for that equity market to stay elevated.
What about things like, we have so much of a focus on the geopolitical risk and the conversation happening in Geneva right now around Ukraine. There's another conversation happening in Brussels right now around potential tariff exemptions between the United States and the EU. Do trade and tariffs matter for this market?
Absolutely. And again, if you look at the markets outside of the US that have actually performed pretty well this year, it's been those ones that have been able to navigate the tariff story. So it's been Europe and it's been Latin America.
Do you do it on an index level, or do you do it sector by sector? So if we're talking about auto carve-outs or we're talking about food carve-outs, then we need to go sector by sector, or is it simply the U.S. likes, Europe more than they like Switzerland, and therefore Switzerland underperforms? How do we think about that?
I think you can think about it either way. I mean, we've seen, again, at the country level, some countries have done, particularly well at navigating that. And then if you go back and look at the sector level, you've seen some real laggards, and you can point to tariffs as being one of those reasons.
Can I just get your kind of bigger picture take on what happens next? One of the themes that certainly is very present in this market is the idea that passive money is just mechanical money. That as the market goes higher, it pulls in more money. It's almost a self-fulfilling prophecy. a lot of people are talking to me about that working in reverse. If the market does roll over, if we start to see some turbulence, that actually you could see that money coming out. Is that how you see this market working? Are the passive flows just what is just mechanically driving everything at the moment? And it doesn't matter what valuations look like. It doesn't matter. We talk about all of these other factors, but it's just that kind of that relentless amount of money that flows into passive funds, week after week, month after month, quarter after quarter.
I think there's a few points to remember. I mean, passive money is still making a decision, right? It's not. It is still, going to a certain country, going to a certain region, going to a certain sector, or going to a certain strategy. Could be going to factors, could be going to dividends. So we're not talking about this wholesale flow of money into one single product. And the other thing I'd say is that, the work that we do that looks at passive versus active performance, our SPIVA reports, shows that even during periods of turbulence, active managers don't outperform.
Sure, but if the market goes down, how self-reinforcing does the money on the way? The market is kind of being driven higher by just the weight of money that is coming in. Does that work? Could that work in reverse?
It could, but I mean, I think our expectation is that we just see that money change that we see investors change their portfolio construction.
Right.
So that money doesn't actually leave the market; it just goes to other parts of the market.
Okay, nice to see. Very, very busy week that we've got coming up, so great to get a setup from you. Fiona Bolt, S&P Dow Jones Indices Global Head of Equities. Core 6 looks like this morning. Let's talk a little bit about where we're seeing the market moving. And as you can see, defence stocks are under pressure. The safety rolling over a little bit this morning, but pharma's doing well. But the real story this morning is defence down, tech up, and that seems to be one of the big themes that we're watching. There's also a bit of M&A that we need to be focusing on as well. Chloe Melly's got the details of that.
Good morning, guys. So actually, Anglo-American did open a little bit higher this morning, but is now currently down almost 2% after rejecting an unexpected bid from BHP over the weekend. So this was an attempt by BHP to thwart the ongoing tie-up that we have got between Teck Resources and Anglo-American, and it seems that investors were initially maybe happy about the outcome and now perhaps are asking some questions about it. So we'll see how this evolves throughout the day. Moving on to Bayern, the pharmaceutical company is up this morning. Oh, no, the Julius Baer, sorry, the private bank is down this morning after saying that the profit will be lower in 2025 because of a loan loss provisions related to real estate lending. Moving on now to defense, and defense this morning is down as well across the board. We've got Rheinmetall, Thales, Leonardo, and Hensoldt. They are reacting to the upcoming meeting that we have got between the Ukraine and the US to discuss Ukraine's NATO membership and the exchange of territories. So we are moving perhaps closer to peace, and that is leading to some negative movements across the defense industry in Europe. And finally, we have got some movement in two banks in Europe. Standard Chartered and Bank of Ireland are both up this morning after Morgan Stanley upgraded both of them to an overweight rating, saying that they have above consensus revenue growth to look forward to, and therefore we are up quite strongly this morning for those two.
All right, Chloe Melly from our equities team walking us through some of those early movers. We should talk about Bayer as well. It is one of the major movers that we are seeing today. They have reached a specific endpoint study on one of their experimental drugs. It's moving the market in a really big way. In fact, it's your biggest index contributor to the DAX. You can see those shares at the bottom of your screen down higher by over 8%. Coming up on the program, we go right back to the M&A story, or the M&A that wasn't. BHP walking away from Anglo again, as Chloe just mentioned, no longer considering a combination of the two companies, but two stocks that are very much moving this morning. We're going to bring you the details and the drama behind the scenes coming up next. This is Bloomberg.
coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Welcome back. You're watching the opening trade. We're 17 minutes into a session which looks fairly positive at the moment. I think we've probably got John Williams to thank for that, the New York Fed president, giving the market a lift Friday, and that is rolling into Monday here in Europe. There's a bunch of other stories, though, that we're folding into the market, too, that I think are worth paying attention to. You've got an oil story this morning. You've also got a mining story as well, which I think is front and center. Now, the story over the weekend was very much about BHP, once again trying to have another fresh look at Anglo American. We've seen this movie before. We thought we might get a little bit of a sequel, but it doesn't look like it's going to go anywhere in a hurry. We've seen the deal that maybe was proposed by Mike Henry not being received well over at Anglo, and it looks like the deal we are going to see ongoing is the deal with the smaller rival Teck out of Canada, Teck Resources. Dinesh Nair joins us now out of Dubai to talk about this. Dinesh, why did Mike Henry have another go? I thought the idea was that he was comfortable, confident in the organic outlook, but it looks like he's decided that actually at the last minute he was going to try and still crash the Teck party. He walked away, but kind of just talk me through the significance of all of this.
Yeah, no, thanks for having me. It's quite fascinating, this whole, as you said, the movie between BHP and Anglo. So if you remember, BHP approached Anglo American last year with a bit of a complicated structured deal, which didn't go through. Anglo said no. Anglo then restructured its business. It's been doing quite a lot of asset disposals and spin-offs, etc. as part of that. And then they went really bold and, with a merger plan with Teck Resources. And the last thing probably Anglo, what they want to do is to engage again with BHP and get bought by BHP. In the Teck deal, Anglo is, even though they call it a merger of equals, they do get an upper hand. In theory, they are buying Teck. So they probably are not very keen to engage with BHP. And now it also depends on what terms BHP offered. We don't have a lot of details into that. We know that it was a mix of cash and stock, but it wasn't appealing enough to engage Anglo and get them on the table. So this was a pretty short-lived affair, and BHP's probably walked away, which means they can't come back for a few months now.
Well, Dinesh, that's the deal structure. Just talk to us about the value that Anglo would have provided to BHP. How much of this is really all about copper access?
it is pretty much all about copper. So what we're seeing in the mining world today is that there are few copper assets of size. Copper is in incredible demand, as we all know, and it takes a long time to mine copper. So the opportunity here for some of the larger players is to, like BHP and Rio Tinto, is to go after some of the available assets, which is what they did with Anglo American last year. But when they see a company like Anglo and another potential target, Teck, merging, that kind of takes away a lot of the opportunity set in the copper space. That is why, despite a lot of people expecting that BHP has moved on after the last year's saga, they come back because they know that once the merger between Anglo and Teck goes through, it becomes very difficult to do anything in copper. Now, again, like this is again a consolidation play for copper in the industry. Everyone wants a piece of it. There aren't many assets available.
In terms of what we should expect now, what happens next? Are we going to see more M&A? What does 2026 deliver? Is the Anglo deal with Teck going to go through? Kind of just give us a sense of kind of the next moves that we're going to see.
Yeah, I mean, it's anyone's game what is going to happen next, but there are a lot of moving parts here. You would assume that Anglo now really focused on Teck merger, will hope to close it. It's not going to be very easy. I mean, we've already heard that the Canadian government has still some reservations about it, but they will try and get that done. Teck also is not completely immune from someone looking at them. There are rumors in the market that, say, someone like a Rio Tinto could look at Teck. So they're not completely away from being a target as well. So so this just continues to raise this question: what does BHP do? What does Rio Tinto do? And what does Glencore do? Probably. So there's more to come in this. It's quite, as I said, it's quite fascinating what's happening. It kind of really started when Glencore approached Teck a few years back, and then the Anglo-American approach by BHP. So we think there is more to come here. But for now, I think Anglo-American will be looking to close the Teck deal as early as possible.
An exciting space for sure. It feels like M&A is back on the table, and then we get these kind of false starts like we did over the weekend. Bloomberg's Dinesh Nair joining us from Dubai, of course, all over this deal story. We thank you so much. Another conversation that we're continuing to follow this morning is trade talks. Kind of a little bit of a blast from the past. The EU and the United States having that conversation in Brussels today as sticking points on the July tariff deal still remain. Politico reporting that the European Union set to request tariff exemptions for what I think are the right priorities: alcohol, pasta, and cheese, among others. Bloomberg's Brussels Bureau's chief, Suzanne Lynch, joins us now. Suzanne, just walk us through the conversations that are actually being had on the table. We had a framework deal. What are the details that need to be figured out now?
Yeah, this is a very significant meeting here in Brussels today. EU trade ministers from across the EU are gathering for a meeting, and very significantly, they're being joined by the US Commerce Secretary, Howard Lutnick, and the US TR Greer here for that meeting. They're joining around lunchtime. So very significant moment. That doesn't usually happen with these EU meetings, that you get these heavy hitters from the US administration attending. Now, in terms of what they're looking for, as you said there, we remember over the summer the EU and the US struck that trade deal with a 15% ceiling. However, that 15% tariff ceiling didn't apply to absolutely everything, and the EU has been looking for some wiggle room on this, some exemptions. So, for example, wine and spirits, that's a big ask for some countries like France and Italy, big exporters of those products. Also, Italian pasta has been hit, and Donald Trump has threatened to hit pasta even more so, accusing the Italians of dumping their pasta in the United States. Italy has pushed back on that. But I think really the big one is steel and aluminium. The EU is still being hit by 50% tariffs in this field. And significantly, this also impacts derivative products that are made from these. So I think there's a big push, a real wish from the European side that they can strike some kind of deal on this. But the US has said from the beginning, over the last few months, that this is part of a kind of a more of a global approach as the US and other trading partners try to look at the issue of steel overcapacity.
How much leverage does Europe have right now in these talks?
Well, you know what? The timing of this is very interesting because this meeting today is happening just at a crunch moment for the peace talks in Ukraine. And I think what's happening in Geneva, what's been happening over the weekend about Ukraine is weighing on this meeting, no matter what ministers say about the two issues being different. At the end of the day, the Europeans are trying to keep the United States engaged productively in Ukraine, and they're trying to shape and come up with a better, as they see it, a peace plan for Ukraine. So yes, how much leverage does Europe have when it's trying to keep the US on board? It's trying to get the US over to its side at the moment in these highly important talks in Ukraine. So that's a big issue. I don't know if we're going to get huge breakthroughs today, but I do think that it's significant that the conversations are happening. So let's see what Lutnick and the USTR Greer says when they arrive for these meetings at lunchtime here.
Fascinating that these two conversations in Brussels and Geneva may actually be related when it comes to the United States' relationship with Europe. Suzanne, just a final question to you. Talk to us a little bit, though, about how this might change some of the investment promises that Ursula von der Leyen had made back in July. Things like LNG, things like technology. Are those investment promises under threat right now?
I don't think so. I think you're right. A big part of the deal that was signed by Ursula von der Leyen and Donald Trump in Scotland in July was that the EU would commit to buying about $750 billion worth of US energy. Now, as a lot of analysts pointed out afterwards, the EU itself cannot go in and buy energy. That it doesn't have the remit to do that. That's done by individual member states. But I think, you know, the European member states, European businesses are still on track. They're saying they're going to do that. How people are going to quantify that? Is there going to be somebody at the end of the first Donald Trump presidency totting up how much people have spent? Let's see. But I do think we may hear a bit as well today in these meetings the frustration that the US has expressed about certain EU legislation, particularly when it comes to the regulation of big tech, for example, and environmental legislation. Now, the EU has already kind of simplified, as they put it, some of these laws over the last few weeks and months. Yeah. They would say it was happening anyway. The European Union itself was hearing that pushback from Europe, not just the US.
Yep. Suzanne, great stuff. Thank you for the update. Suzanne Lynch, Bloomberg's Brussels Bureau Chief, on the latest on the trade talks. Remember, we're going to be talking to Howard Lutnick a little bit later on. Look forward to that conversation right here on Bloomberg.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome back to the opening trade. 30 minutes into today's session, green on the screen across the board. But it feels like the index story tells you kind of what's driving this market. Let me walk you through it. The outperformer this morning is the DAX, despite the fact that we are seeing some of the defense take a hiccup. Guy's going to walk you through it in a minute. But it's interesting that the outperformer is the German index due to several different sectors that are helping it higher by 1%. Your underperformer is the CAC 40. There might be a little bit of a political overhang here. That seems to be where the underperformer is. A mining conversation happening in the UK, but net, green on the screen, some of that guy might be coming from over there in the States.
Bunch of things I want to point out, Critty. We'll get into the details of what you've just been talking about in just a moment. Volume is very light this morning. Pay attention to that. Thanksgiving week, is that going to be a significant factor? Is it going to tell you something about the confidence around the moves that we're seeing? In terms of the ratio, look, you've got 4-to-1 in terms of ups and downs. That, I think, is significant as well. The market feels like it's on the front foot. Is that just a hangover from what we've seen in the States Friday into Monday? I think there's an element of that too. Let's talk a little bit about the kind of the gainers and where we're seeing some of the lead coming from this morning. Siemens Energy, that's one of the reasons why the German market is as strong as it is this morning. Look at that, up by 5.5%. You've also got some of the tech names doing relatively well in Europe as well. That's a factor that is helping out the German market, as is, take a look at this, Bayer. Bayer is up by 11%. Some decent drug news coming through, giving that stock a significant lift. German stocks doing well, so it's not just the defense laggards that are holding back the German market. HSBC had a strong session out in Asia, in the Hong Kong market. It's having a good session in the London market as well. So banks, a positive story for the UK market. Let's talk about the defense names, though. Let's talk about where we're seeing the weakness today. Rheinmetall is down again. It had a terrible week last week. That is continuing. It's off its lows this morning, but the defense sector is definitely under pressure. But the German market has enough positives to outweigh the negatives this morning. National Grid is down by 1.41%, so the kind of yielding stocks, the utility stocks, are underperforming today. No real surprise. Roche is also giving back a little bit of ground as well. Feels like a more risk-on kind of a market this morning, but not backed critically by decent volume, which I think is a significant tell on what we're seeing in this market this morning.
Everyone's bracing for Thanksgiving. Everyone's putting their Christmas tree up. Very exciting stuff in these markets. Certainly red and green. Very on theme for the holidays. Let's talk about what else you need to know this morning. Alibaba shares have jumped after the strong debut of the company's new AI app, boding well for a longer-term effort to build a rival to OpenAI's ChatGPT. The app, called Qwen, was downloaded more than 10 million times in the week after its relaunch. Follows a move this month to rename and freshen up the Chinese e-commerce giant's pre-existing apps, unifying the services under the Qwen banner. Let's go from Asia right here in Europe. Italy has achieved its first upgrade from Moody's ratings, and get this, more than 23 years. It marks a win for Premier Giorgia Meloni. Moody's lifting the country's credit score to Baa2, with the outlook now viewed as stable. Moody's was the last holdout among rating assessors, having waited for Meloni to enter her 4th year in office, before finally raising its credit score and recognizing Rome's campaign to repair its public finances. Let's bring it even more local right back here to the UK, where CEOs are bracing for Chancellor Rachel Reeves to pile further costs on their businesses in this week's budget. Bloomberg has spoken to some who are warning they'll stop investing in the country altogether. The government pushes ahead with some of the mooted tax hikes. The managing director of UK airports for Vansea and GIP says plans for a second runway at Gatwick could be jeopardized if a proposed rise in business rates goes ahead. Guy?
Well, it's news this morning that maybe follows on from this talk, maybe that actually energy costs could be a factor to offset some of that. But the complication around UK taxes is getting greater and greater. It's a tough one to see through, to understand. There's also a report out this morning of UK media that the OBR, the Office of Budget Responsibility, is going to lower its forecast for growth in 26 and the remainder of the Parliament as well. So just kind of bear that in mind. How do you trade this, though? What is it we're going to be looking for in this budget? Is it going to be the effects of the budget on taxation and what happens with the economy, or is it going to be a kind of almost derivative of that, what does it mean for Rachel Reeves' political career going forward, and by extension her bosses as well, the Prime Minister? How stable are they in terms of their grip on this party, and how critical will this budget be? So I think there's a number of different ways of reading this. The gilt market had a really bumpy week last week. It's going to have a bumpy week this week, I suspect, as well.
Absolutely. It's fascinating. And I think the clearest read of that, you saw it in the pound, when you saw actually the pound weaken more on those political jitters than it did on the actual U-turn on some of the budget. Let's talk a little bit how investors are positioning ahead of that risk event. I'm pleased to say Chris Rose, president of ICE Futures Europe at Intercontinental Exchange, joins us around the table. Chris, you're the perfect guest to talk about this. How are investors positioning? What are they thinking?
Well, I think it's worth sort of stepping back slightly and looking at where we are relative to the spring statement. It was 5 months ago where we got a little bit of a hint of what may come this week. And I think fundamentally coming into the week, it's about fine-tuning rather than a fundamental change, is how the market is positioned. And I think if you look at maybe the market signal or the wisdom of the crowd, the aggregate expectation in the market is really for one of sort of steady as she goes in terms of market positioning. If you look at cable, it's relatively trapped within a range. If you look at gilts, even though it was a bumpy week, it's still within the 440, 460 range, which is consistent with where it's been this year. I think the more interesting picture is really the short rates and what the Bank of England might do in terms of delivering a cut in the December meeting, which is priced for 85% if you look at...
So you think the gilt market's trading off the Bank of England, not the politics, not the budget?
I think we actually picked this up earlier from one of your earlier guests. The central bank positioning in terms of the Fed, the Bank of England, what the ECB have already done, is really underpinning valuation across equities and in fixed income. And I think that is not the most important thing this week, but it is a reassuring underpinning to what valuations are in the bond market at the moment.
Does that show up in the equity market too?
Well, equities had a pretty good run in year to date. Volatility is relatively stable and fairly low based on historical standards. So I think yeah, to some degree, it's clearly not going to be a really strong start to the week because of the risk events that we see this week. But clearly there is an underpinning, and there's been a positive performance this year in equities.
Just coming back to the UK story, just more broadly, just to get an understanding of what happens next. If the budget does not deliver politically, if Rachel Reeves' position is questioned off the back of this, and by extension Keir Starmer's, is that more significant than the Bank of England? Isn't the Bank of England just going to react to that? Isn't the Bank of England reactive to the politics and the fiscal story rather than being the lead here? I'm just trying to understand how the sequencing works.
Yeah, I think what delivers politically is what's right for the economy. And clearly there's got to be a balance between business and growth, which there's clearly an agenda there the Labour Party have been very clear on, and some tough choices. And those tough choices are a result of the fiscal backdrop and where pricing is at the moment. But I think, what would be success? Success would be fine-tuning. It would be delivering within the mandate, within the fiscal rules, and ensuring that the market is calm and that's well received. And I think that's generally what the market is set up for this week.
So walk us through what is a credible indicator of success here? From the investors you speak to, what would they say is, okay, it's 4 p.m. on Wednesday, Rachel Reeves has said her spiel, this is a win. What would that look like?
Market pricing around where it is at the moment. I think that's the key. If you look at 10-year gilts.
But what do they need to hear?
I think they need to hear that some modifications have been made that are proportionate, that are not too radical, that deliver both on the growth agenda as well as making tough choices and fine-tuning. I think if we get that outcome, market pricing is consistent with that. Of course, there are markets that are used for hedging that risk, and that's maybe something we can get to in a second. But overall, I think success looks like pricing currently where it is.
Let's talk about that. You guys let's talk about kind of event risk. Got the Polymarket story now developing with you guys. You're partnering up. I'm curious to know how you see events like the budget developing and what products are going to be available, and kind of how events like this are going to change as a result of my ability maybe to look at risk events differently now that I can kind of bet on single events almost. Bet is the wrong word, but I can take a position on a single event.
Yeah, well, I think derivative contracts in general are based on events. They're driven by pricing and risk events. And, you know, if you look at the futures and options market, which has had a tremendous growth at ICE in recent years, it really connects small, medium, and large investors in one single market with one price signal. To my point, the wisdom of the crowd. And I think if you look at, say, the ICE SONIA market, which is really the benchmark for interest rates.
These aren't specific event contracts, which it feels like we're moving towards.
Yeah, I mean, there is a natural evolution, particularly on the retail side, towards those very specific bets. But really in the institutional space, the bit of the business that I represent, we have seen tremendous growth in SONIA. We're up 73% year over year in terms of open interest. In gilts, we're up 50% year over year in terms of open interest. And that's a signal that investors, both small, medium, and large, are turning to the derivatives market to lock in those price risks and look to those markets to allocate their portfolio. And that's really what's been driving the business. A wider trend, actually, that's been going on across equities and in fixed income is the role of the option market. Yeah. That's really been the driver of the growth this year in the ICE interest rate business. We're up 96% in terms of open interest this year. We're on track for a record year in terms of transactions in UK markets. So I think that picture is a sign of market health, a sign that our customers are turning to us to hedge these price events, these risk events coming this week. And I think from there you can extract an even richer signal and think about how the market is set up.
And you can see those jitters really showing up in the equity markets around the world. This was a conversation we're having about the United States earlier, that some of these rollovers are ultimately driven by hedges that are getting piled up. Chris Rose, president of ICE Futures Europe over at Intercontinental Exchange, walking us through some of that positioning story ahead, of course, of the UK budget. Speaking of that budget, UK Chancellor Rachel Reeves expected to deliver at 12:30 p.m. London time on Wednesday. We, of course, will have full coverage right here on Bloomberg Television, not only on Wednesday, but, of course, on the day after as well. The opening trade will break down the numbers. We've got key businesses and political voices walking us through what they heard and how they feel the day after that Thursday right here in the opening trade.
Okay, let's talk about what is happening in French politics. We'll move over from the UK and talk about what is happening on the other side of the channel. We are closely watching the OAT Bund spread this morning. France's National Assembly rejecting part of the 26 budget. Did so in the early hours of Saturday morning or weekend. Joining us now for more on what this all means for Prime Minister Sébastien Lecornu's plans to tackle France's big deficit is Caroline Conan, live from Paris. Caro, what happened and what does it tell us about what happened next?
The National Assembly rejected the revenue chapter of the French budget, and that was almost unanimous. 404 votes against it, 84 abstentions, and only one MP in favor of this revenue chapter of the budget. So that kind of shows you the amount of rejection of the budget, including within Macron's camp, after opposition parties, especially the far left and the far right, have added hundreds of amendments, billion and billion of euros of new taxes, as much as 40 billion euros of new taxes, making this revenue chapter of the budget unacceptable even for Macron's party. Now, what happens next is that the initial text of the government will go to the Senate, which has a center-right majority, so is very unlikely to put back all these new taxes, which of course could be a relief for some multinationals, for some of the wealthy individuals who were targeted by all these new taxes. But of course, this really puts Lecornu right in the middle again of this political crisis in France, because he had promised to give Parliament the upper hand in these budget negotiations. So clearly, his future still hangs by a thread. Even the budget minister, Montchalin, said we could see the beginning again of a new financial crisis in France.
Here we go again. Caroline, thank you very much indeed for updating us. We're going to pay a lot of attention to this. Caroline Conan joining us out of Paris. Coming up, we're going to turn our attention to what is happening with the Ukrainian peace talks underway. We're going to bring you a conversation with Igor Brazilo, Deputy Head of the Office of the President of Ukraine. That conversation with Oliver Krug next in Brussels. This is Bloomberg.
younger people today are not as happy as their parents were. That's in part because of social media and things like that makes people isolated.
So it's a complicated thing, but there's basically a climate and weather problem that we find, and I don't mean that literally. The climate of happiness is all about faith and philosophy in life, about family life, about friendship, and about seeing your life as a calling, your work as a calling that is meaningful and serves other people. And all of those have been in decline. That's the climate of happiness has been ticking down since about 1990. Then the weather, the hurricanes in happiness have been really threefold. Number one was the advent of social media and screens in everybody's lives in 2008, 2009, 2010, which has just raised absolute havoc in the brains of everybody under 35 years old. That's what my new meaning book is about. It's about how we use our brains differently, and it's vacating the parts of our brain that we need to assess questions of meaning. The second is polarization, where baby boomers have tried to conscript young adults into their culture war, particularly on campuses. You should feel aggrieved. You're a victim. Everybody's trying to ruin the world. You need to be angry and afraid. And last but not least, of course, is what happened with the really misbegotten reaction to the coronavirus epidemic, which is to send everybody home, make sure that people don't interact socially, and that was catastrophic for happiness.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Bonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
European defence stocks under pressure this morning as we watch what is developing in and around Ukraine. The Europeans and the Ukrainians very much pushing for the US to make changes to its peace plan following the talks we've seen over the weekend in Geneva. Bloomberg now understands the controversial 28-point plan was the result of several weeks of negotiations between Steve Witkoff and his Russian counterpart. They excluded Ukraine and its allies. US Secretary of State Marco Rubio says Ukrainian peace talks in Geneva were productive. Let's get more on this. Let's go to Brussels and join our Europe correspondent, Oliver Crook.
That's right, Guy. The focus over the last 24 hours after that real sort of bombshell of that 28-point plan that arrived in the laps of the Ukrainians, the Europeans, and the world alike has basically been trying to hash out what the details of this plan are going to be going forward. And we're very pleased to be joined now by Ihor Brusilo, who is the deputy head of Zelensky's office. Mr. Brusilo, thank you so much for taking the time in what has no doubt been a very, very complicated last few days for you. I'd like to begin, if we can, by talking about what we've seen in Geneva. We've heard from Marco Rubio. He says that there's been significant progress. In the context of the negotiations, what does significant progress mean?
Yes, thank you. Good morning to all of you. Thank you for giving this opportunity to talk today. Indeed, yesterday, that was a very heavy workload of diplomacy engaged by Ukraine and the United States. And first of all, we appreciate all the efforts done by the current administration, by President Trump himself, and by Marco Rubio as a negotiator, determined by him to hash out the plan that is reliable, robust, and acceptable for both parties. The peace cannot be done at the cost of Ukraine. We shall keep in mind and remember that Ukraine became the victim of this aggression from the Russian side, and to make this peace at the cost of Ukraine will be at least not fair. So the teams engaged in heavy diplomacy yesterday, and they discussed point by point the plan that has to be presented both to the president of Ukraine, to the president of the United States, and of course there is the third stakeholder in this process, and this is the Russian Federation. So the first thing for our chief of staff, which is the main negotiator determined by President Zelensky, who has a very good track record of dealing with these issues, and a main negotiator from Ukraine to deliver the fair peace, is that we need to present our position in a manner that would accommodate and would explain why we choose this path on this road to peace.
And the questions about more of the specifics. At this stage, the document that has gone back and forth between the hands of the Russians, the Americans, and now the Ukrainians, with the last document that is now back in the Americans' hands, are you satisfied that the document that you have given after that 24 hours of negotiation, is that an agreement that Ukraine can live with?
This is the process and diplomatic process. And first of all, before saying that some final outcomes have been reached, we need to see that the other party accepts all the positions that our delegation presented to them. We cannot just cherry pick or pluck some of the provisions and say this is okay for us and this is not okay for us. You have to look at it as a whole picture. A comprehensive approach should be applied, and I believe that negotiations will continue. This is not yet the end. And when the top negotiators finish their work, there will be some work done by the expert teams, because the main thing is in the details. And when you manage to deal with the details, then you can see the comprehensive picture. Of course, we are talking about the need of the ceasefire, first of all, to start a really reliable and good negotiations to follow from that. Without the ceasefire, you know, it's a little bit useless to talk about peace, because when the barrage of missiles continue to fly over your heads and into the civilian objects, it's very difficult to continue this way. So it's first of all, the idea was to present the positions and then to touch base on them at a later stage. Maybe in these couple of days, the negotiations will continue, but more on a working level.
I'd like to get into some of the specifics that this plan laid out. There is the question, of course, and this is point number 5 from the original document, Ukraine will receive reliable security guarantees. That is the end of that sentence. What do reliable security guarantees look like for Ukraine? It's an easy and it's a simple idea. It's a very complicated thing to put into effect.
First of all, the main security guarantee for Ukraine for many years to come will be the air defense shield. And this is what we stem from. And the insurance that these systems, which are needed to protect our skies and meaning to protect the lives of our people, will be delivered in time. And it's also about the size of the Ukrainian army. So we cannot say that we will agree to downsize the Ukrainian army without any other hefty contribution from the guarantors of this security. This is what we need to look at very soberly, and to keep in mind that Ukrainian army is the only thing that can the only force that can ensure the protection for Ukraine. So this is two principal things that we need from the starting point.
We understand that the Europeans are also pushing for an Article 5-like construction for Ukraine, maybe an Article 5 light. Is that something that is being actively negotiated? And in that context, is also NATO membership for Ukraine now officially off the table?
Well, I think that, first of all, this is for NATO to decide who can become the member of this organization, of this alliance. But for Ukraine, well, it's important not to enshrine the provision of remaining neutral for all the time. Again, this is the alliance of countries who make the organization. So it's up to them to say whether they agree to leave the door open to Ukraine. For Ukraine, it's not off the table completely. We are still in the negotiation process, and we need to work out as robust security guarantees as possible. And this is one of the provisions that can be a security guarantee for Ukraine. So this is still on the table.
Are there plans for President Zelensky and President Trump to speak in the coming days?
Yes, this plan was from the beginning when Secretary of the Army Driscoll came to Ukraine 4 days ago presenting this plan. The American initiative, and the idea was that the teams will work in stages, first of all on the expert level and then on the working level, and when all the issues have been settled and some of them remain mooted, I mean the territorial issues, for example, then the presidents will get in touch to talk over them and probably set the stage for the meeting for them to finalize the idea.
And then a final question on the corruption scandal that is ongoing within Ukraine, obviously something that has concerned allies and something that your adversaries and enemies will be exploiting. Can you give us an update on the investigation? When will we expect the outcome of the audits? Do you expect any other resignations within the government?
The main thing for the law enforcement agencies and for the anti-graft agencies to continue their investigations. That has been the case from the very beginning, and understanding that, well, everyone has to do their job, and without any media coverage or media or commercial posture, this should be done in a proper manner on a legal basis, and these investigations and indictments should end up in the court and file all the cases that will bring to the prosecution prosecution. This is the main idea. So we are monitoring the situation carefully and believe that this will be done in a proper manner on a legal basis, as should be.
Ihor Brusilo, thank you so much for taking the time today. That is the deputy head of President Zelensky's office as we reach that sort of high moment of a negotiation between the United States, between Ukraine and in Russia that will hopefully yield a discussion and a potentially outcome that is livable for both Ukraine, Russia, and the United States, and hopefully ending this war. Thank you so much for your time today. Kriti, with that, I'll hand it back to you.
Thank you.
Oliver Crook, of course, joining us in Brussels with a member of Vladimir Zelensky's cabinet. We thank you so much. It's fascinating. This is the story that is driving parts of the market today. We've seen that real unwind in the defense story. We've seen it in the oil market as well, amid a backdrop of green on the screen.
Absolutely. Defence stocks got hit hard last week. They are continuing that trend this morning. Is that a market signal that the market believes that actually there is the possibility of a deal coming out of this, and defence stocks, therefore, will be hit? I think the nat gas story is also interesting this morning. European gas below 30 for the first time since May 2024 was the headline a little bit earlier on. It's getting warmer as well, so just bear that in mind. So that's a factor in that as well. So I think energy is reacting to this. I think defence stocks are reacting to this, and you can certainly see the effects of that in the market this morning.
Yeah, and this is something that has moved, and even in the bond market as well. You've seen some of the spreads move on some of those defence promises as well. So any sort of changes on whether or not that's undermined will move both the equity, the commodity, and the bond market as well. There's lots going on. There's green across the screen. There's a tech rally happening here. There's a pharma rally happening here. There's lots moving this market upwards amid a very light volume day. That does it for the opening trade. The Pulse is up next. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
We're coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Stocks extend their Friday rebound as traders increase bets of a Fed's rate cut by the Fed next month. Secretary of State Marco Rubio says talks with Kyiv for a U.S.-backed peace plan with Russia could extend beyond Trump's deadline of Thursday. A potential breakthrough is pulling oil and European gas lower, with Ukrainian dollar bonds rallying. Plus, BHP backs off. The world's largest miner ditches another attempt at taking over Anglo American, ending efforts to thwart a planned tie-up between its smaller rival and Canada's Teck Resources. And to look at how some of these key cross-asset indices are trading, take a look at the S&P futures. They are up 0.7%, some green on the screen, perhaps in anticipation of a Fed pivot, with some dovish commentary coming through from John Williams on Friday, suggesting a rate cut is still on the table for December. Brent pushing lower, $62.20 is where we're at, 0.6% lower, keeping a close eye on a potential breakthrough between Russia and Ukraine. Gold also hanging in around the 4,064 levels, so a bit of an anchor around $4,000. We're going to be talking more about gold on the show. And then the pound heading into a pivotal week for the UK budget, just shy of 131. This is the picture for broader Europe. Most of these markets are trading in the green, with the exception of some of the peripheries, including Italy. But as we speak about Europe, we have just got some breaking numbers coming through from Germany. Let me bring you the key figures from IFO. IFO Business Confidence Index has come in at 88.1. That is a miss versus estimates of 88.5. As to the current assessment index, it's come in at 85.6, slightly above estimates of 85.5. As for the expectations index, it is a miss, 90.6 versus estimates of 91.6. So it's worth noting that the business confidence number has come in lower than expectations and also lower than the prior months, and the other figures have also disappointed relative to estimates. This is a picture of where the euro is trading slightly firmer versus the USD. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse.
Good morning and welcome to The Pulse. I'm Joanna Bersecci in Dubai. One of our top stories today, U.S. Secretary of State says President Trump's Thursday deadline to secure Ukraine's support for a U.S. peace plan could drift into the following week. Despite a note of caution following talks between the U.S. and Ukraine in Geneva, Marco Rubio says good progress is being made.
It is in my personal view that we've had probably the most productive and meaningful meeting so far in this entire process since we've been involved in from the beginning. We have a very good work product that was already built on a foundation of input from all the relative parties involved here, and we were able to go through some of those items now point by point, and I think we've made good progress.
Bloomberg's managing editor for European economy and government, Ben Sills, joins me now. Ben, well, we just heard from Secretary of State Marco Rubio there suggesting that the talks had actually been constructive, although we know that there is significant pushback coming through from Europe and from Ukraine. Do we have more details?
Yeah, that's right. I think the Europeans and the Ukrainians are trying quite hard, really, to tap the brakes a little bit on this plan, which was really conceived with a lot of input from the Russian side, and there was a lot of alarm in Kyiv and in European capitals late last week when it seemed like the US was keen to try and ram that plan through, you know, perhaps as soon as before Thanksgiving. That timeline seems to have shifted now quite clearly, and also the Ukrainians are now engaging directly with the US and have pulled together a revised version of that plan.
I mean, there is considerable pressure coming through on Ukraine from the United States. Are they actually likely to reach an agreement anytime soon because of the amount of diplomatic pressure that Zelensky is under at this point?
Never say never. I think that it's difficult to make firm, predictions about what Trump might manage. You saw with the Gaza deal and with a number of his trade deals that he does push through deals on a time frame that really nobody else would conceive of doing things. Having said that, there's still a way apart the Russians and the Ukrainians on any sort of peace deal here, and I think that certainly the Russian plan that we were looking at last week has got a number of conditions that would be extremely difficult for the Ukrainians to sign up to, at the same time, the Ukrainian version of that plan is going to be difficult for Putin. So my best guess would be that this is going to run for a long time, but you can never kind of rule out the fact that Trump might be able to twist arms and force things through.
Yeah, most definitely. Ben Sills, Bloomberg's managing editor for European economy and government. Thank you so much. Well, global stocks gaining after a volatile week as optimism rises about potential Fed rate cuts. Joining us now is Ursula Marchioni, EMEA Head of Investment Portfolio Solutions at BlackRock. Good to have you with us on the show. I want to zoom in more and talk more about the European equity trade, because there was a lot of optimism, some momentum around investor appetite to own European equities in the first half of the year. It feels as though since then things have started to stall. Why do you think momentum has slowed down in the last couple of months?
So good morning. First of all, Joanna, thanks for having me. I think the question on Europe is one that is particularly important for our clients domiciled in the region and therefore having large home biases in portfolios. I would slightly characterize it slightly differently, though. I still believe there's a significant desire from investors to diversify their equity sleeves and their risk allocations away from, trades that might have become very concentrated in their portfolios. So to your point, we've seen a great story globally unfolding this year of repatriation, European clients going back into European equities, similar behavior in Asia. And I believe this has still legs to grow and continue. To your point, Europe has structural challenges, which we won't deny, but the momentum around structural shifts and desire to change policy approaches is real, Jumana, and I believe it will carry through 2026.
So one of the darling trades of this year has been defense stocks, and you just have to look at the performance of some of these stocks to reflect some of the optimism in that space. I do wonder, though, given the news over the past 24 hours, if there is a breakthrough between Russia and Ukraine, what does that do to the upside, the outlook in that space?
Yeah, that's a great question. It is, though, I believe, a structural shift that we have seen happening and that will continue to play out. So defense is one of the areas that we continue to like in Europe. Taking a step back, the European trade this year hasn't been one where the tide has lifted all boats. It's been very much concentrated. And so as we think about 2026, we need to continue to focus on companies with strong fundamentals. And in terms of sectors, defense and banks continue to be, in our opinion, an interesting space to watch. To your point, defense is now quite expensive, yet if you think about the new stance taken from Germany starting to filter through and impact earnings, those valuations can see support. Similarly, the NATO 3.5 GDP target for 2035 is very ambitious, but again, even if we were to hit a 3%, you would see deployment come in. So despite the levels that we're starting at, there's still, from a structural perspective, an opportunity. And then, Jumana, I think
it's interesting.
Is also the other area.
Yeah, I was going to actually pick you up on banks. I wanted to drill down into that because those are the two areas that I think have done the best in European markets this year. And if you look at the relative valuations, this is per your latest report, you have the defense segment of the market trading at 32 times forward 12-month multiple. Compare that to around 10 for banks. Would you say that there's still a value opportunity in banks that doesn't exist in defense stocks here?
So it's a very different starting point. I completely agree with you. And the story for banks, again, is one where we might see opportunities. There's a lot of M&A discussion, so further boost to profitability at the back of efficiencies that can be gained. But also what I would point is, to your point, an entry point that is interesting to the stats that you quoted, and the fact that the EMEA wealth market is one very much dominated and intermediated by banks. And so as we look at the region and the big wave of savers moving into investments, we talk about 14 trillion waiting to be deployed. Banks are at the very center of that, unlike in the US where, for example, the advisory space is way more developed. And so again, we see an opportunity there for banks to be part of that revolution and benefit from it.
Yeah, and yet banks tend to be quite cyclical. The most recent macro signals coming through from the European economy haven't been that supportive. I mean, even just this morning, we had the IFO numbers come through, a miss versus expectations. The ECB themselves aren't forecasting growth north of 1% for next year. Can banks actually outperform in that environment?
I think it's a great question. And it, again, depends on the investment horizon that people will want to see playing out in their portfolios. And again, is it a 3, a 6, a 12-month trade? What I believe is happening in markets, and there's been a lot of discussions last week in your opening just now around what is happening around the AI trade. What I observe is that investors continue to want to hold risk, but are certainly reducing incremental position as we approach year end. They're taking profits, particularly in certain areas. And so, for example, for AI in the US, we have seen through exchange-traded products some buying last week, so buying on deep, but again, tempered by desire to diversify the risky exposure in the portfolio with also an additional allocation to, for example, US healthcare to build some defensiveness. And I think, Jumana, banks and Europe as a whole, and can be positioned in this broader picture where investors want to take profit in the big trades that have played out in their portfolios as we approach year-end rebalancing, but also remain invested in a way that diversify their portfolios, either through sectors or through regions. And so Europe fits that picture.
So interesting. Ursula Marchioni, EMEA Head of Investment and Portfolio Solutions at BlackRock, thank you so much for joining us on The Pulse today. Well, switching to some corporate news, the world's largest miner, BHP, has walked away from a fresh takeover bid for Anglo American. For more, let's bring in Bloomberg's deals reporter, Dinesh Nair, who's with me in the Dubai studio. Good to be sitting next to you, Dinesh. Well, it looked as though over the weekend that this deal was going to be back on again. It had gone silent for 12 months or so, over a year. And now you fast forward, BHP have made another potential takeover attempt, but seem to be walking away once more. Walk us through the details. What went down this weekend? Yeah, it was a pretty busy weekend for us, but the excitement was a bit short-lived. So as we understand, BHP made a renewed approach to Anglo American, an offer which we think was a mix of cash and stock, probably a bit more cleaner than what they offered last year, pretty much the same time. However, Anglo American seems to have rejected that proposal, as we reported, and hence BHP walked away, which means they probably are, as per UK takeover rules, are not going to come back for a few months, actually. What were the main challenges in getting this deal across the line? Was it just economics, or were there other things to think about as well? I think there were a few factors last time. I think the key factor was that Anglo American was probably not willing to be sold to BHP, but there were also other political factors coming to it. BHP's offer, when they came in 2024, was contingent on Anglo American doing several things. In a way, BHP was the activist that kind of triggered Anglo American, whose shares were down, trading much below last year, to kind of go out and really restructure their business and do a lot of things. So they've done the cleanup act over the last 1 year. They spun off the platinum business. They tried to sell the coal business. They had an agreement. Unfortunately, they couldn't get through with that with Peabody, but their shares have re-rated considerably. But Dinesh, the crown jewel is the copper business, right? So what does BHP do from here? I mean, like every major miner in the industry today, everyone is scrambling for copper assets. The sad reality is that there aren't that many copper assets of size available. The ones who have copper assets don't see any rationale in selling it, so they're hanging on to it with everything possible, as we see in the case of Anglo American.
So BHP is probably left with not many other choices to do inorganically, probably why they said in the statement that they believe in organic growth. Having said that, the commitment to the second approach is a bit questionable. Normally, when you are one of the largest miners in the world, you come back for the second time, you go in all in, which they seem to have walked away quite swiftly, probably because they didn't get any engagement. But I think the mining industry will continue to look at opportunities to acquire corporate assets.
Well, exciting weekend in the mining world. Dinesh, thank you so much. That was Bloomberg's Dinesh Nair. Well, coming up, it is finally budget week in the UK, and Chancellor Rachel Reeves is under pressure from CEOs threatening to cut investments. More details next. This is Bloomberg.
up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise.
With some fun along the way.
This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars.
Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Wednesday. Chancellor of the Exchequer, Rachel Reeves, delivers the UK's autumn budget. Can she boost growth and productivity by unlocking investment? How will the Treasury raise revenue without breaking tax promises? And will the budget prove that a fairer economy can reward working people? Bloomberg Television brings you special coverage starting with the Chancellor's Statement to Parliament at 12:30 p.m. UK time. And tune in Thursday for the opening trade budget special at 7 a.m. Bloomberg. Context changes everything.
This is The Pulse. I'm Joanna Versace in Dubai. UK CEOs are bracing for Chancellor Rachel Reeves to pile further costs on their businesses in this week's budget. Bloomberg has spoken to some who are warning they will stop investing in the country altogether if the government pushes ahead with some of the mooted tax hikes. Anna Andrade from Bloomberg Economics joins me now. Well, Anna, I guess the question is, should we take these CEOs at their word that they'll cut investments in the UK as a consequence of this budget?
Hi, good morning. I think in understanding the context here is important. We're coming out of the year where businesses have been particularly hurt by last year's investment when Rachel Reeves decided to increase taxes on business by more than 20 billion for the private sector. And that obviously had, consequent impacts on the whole economy. We've seen sort of the labor market cooling. We've seen a bit of prices rising because it's very rare that businesses sort of take this hit in taxes fully into their profit margins. So they need to sort of adjust the headcount, adjust prices, and we've seen sort of the repercussions of that happening over the past year in the economy. So another hit to businesses now wouldn't be great, but what I would say is that usually, typically, businesses make business decisions on a longer term horizon, not sort of on a one-year basis, and Rachel Reeves, I would say, and the Labour government in general, haven't really been contributing to sort of policy stability and to sort of stable interest rates. So the fact that they didn't sort of made very resilient fiscal plans 1 year ago has contributed to a lot of uncertainty and a lot of volatility in rates. And if Rachel Reeves now in this budget manages to build plans that are resilient enough to sort of stop these two, factors from dragging on the economy, that will also be beneficial for businesses sort of in the longer term.
Yeah. And Andrade from Bloomberg Economics, thank you so much. And tomorrow we will be giving you a full preview of what Bloomberg Economics are expecting into that UK budget. Well, there's been a lot of talk recently about cracks in the private credit markets following the failures of Tricolor and First Brands. Nevertheless, private credit remains a growing financing method both in Europe and the US. So what are the world's biggest banks doing to ensure that they're still seen as desirable lenders, whilst also being selective about only investing in quality companies? Joining us now is Jerry Keefe, Head of Banking for Europe and Americas at HSBC. Good morning to you, Jerry. Good to have you with us. Before we delve into private credit, I just want to zoom out for a little bit and talk about the sheer number of news headlines that we've had this year, and yet a remarkable outperformance for global equities. It actually has been a very strong year for U.S. equities, European equities, Asian equities as well. How has that translated into your business?
Well, one of the things that you see is when you talk about the performance of the equity markets feeding into banking activity, there's almost always an increase in M&A incentive for companies that have market caps that have grown over the course of the year. People who are at the helm of large public companies see those currencies as rising in value and therefore will look to make acquisitions on the back of that. We're certainly seeing an uptick in our M&A financing pipeline. And the credit markets are highly accommodating at this point for most acquisitions that are of high quality, where there's a clear strategic rationale and financeable business.
And in the introduction out to you, I was talking about the huge growth that we've seen in private credit. How is HSBC capitalizing on that? And what edge do you have in what's becoming a very competitive market?
Sure. Well, look, private credit has fundamentally changed the structure of credit markets, and this has happened over the course of the past decade, but with increasing speed over just the last few years. We have since, call it 2015, seen the size of the private credit markets quadruple from roughly, let's call it 450 billion to around 1.7 trillion today. It's still a relatively small proportion of the aggregate credit outstanding, particularly around corporates, but it is increasingly a very relevant source of capital for companies small and large. In fact, the biggest area of growth that we see right now in private credit is around investment-grade companies as opposed to small and mid-sized companies, which is really where the market began.
Yeah, just as you were speaking now, I'm not sure if you saw, but we put up a screen talking about some of the little credit cracks that are beginning to emerge. There was the regional bank exposure about a month ago, Blue Owl scrapping their plans to merge public and private credit funds. Given how much spreads in this space have compressed, are investors getting adequately compensated for the risks that they're underwriting?
Yeah, look, I think that one of the biggest risks in private credit is really just around the persistence of returns. I think the kind of high-profile blow-ups that you've highlighted are really the sorts of things at the fundamental credit level that happen when you get into a situation where you have very rapid growth in a market, as we have here, a real sort of competitive situation on the part of lenders to deploy capital. And what that creates is sometimes a rush for deals. And what that means when we look at these situations in hindsight, we see oftentimes at the deal level, you see kind of breakdowns in due diligence, breakdowns in transaction structuring, breakdowns in transaction controls that we would consider to be the sorts of things that as a regulated bank institution we would consider par for the course, but some with more flexibility maybe are free to pursue alternative methods. Now, the fundamental point, though, Jumana, is that just because something is private credit does not make it more risky. This market is populated by, there's a handful to a dozen names who have been in this business for over 20 or 25 years. The business itself has existed since the 90s, and the recent growth has brought in a lot of additional capital and a lot of additional platforms who had not historically been trafficking in the space, and that's where you start to see a little bit more of the pressure to deploy.
Yeah, Jerry, people often forget that 99% of the market in Europe is comprised of SMEs. Would you say it is therefore incumbent on investors to participate more in this space for Europe's ultimate competitiveness in the long run?
So I would agree with that. And I think to think about why private credit became the force that it has, this was initially almost a creation of a regulatory construct that pushed a lot of lending out of banks, that kind of caused banks to need to reconsider lending into small and medium-sized enterprises and lending into longer-dated exposures. HSBC, for its part, we're essentially the largest mid-market bank in the world. We have the client base that private credit funds would like to have access to, and so we're very much active in lending to SMEs, particularly around our innovation banking proposition.
Yeah. Jerry, I'm going to round up asking you a question. There was a major restructuring that was announced at HSBC on the macro side of the business, a streamlining of credit and macro. Can we expect something similar, a restructuring of a similar magnitude in your line as well?
Look, I think all the changes that have happened over the course of the year have been sort of led from the top, with Georges Elhedery trying to cause HSBC to become a simple organization and one that's straightforward and easy for our clients to manage and navigate, and where kind of the personnel and the assets and the funding of the business are very closely aligned to strategy. I think last week's announcement were another example of that. So we'll carry on.
Jerry, thank you so much. A real pleasure to talk to you. Jerry Keefe, Head of Banking for Europe and Americas at HSBC. Well, coming up, we'll be talking to Lithuania's foreign minister about the latest on the U.S. peace plan for Ukraine. That's next. This is Bloomberg.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. I'm not here to say what I would and wouldn't do in the future. But the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. But that's where I'm at today.
morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
This is The Pulse. I'm Joanna Bersecci in Dubai. Now, stocks extend their Friday rebound as traders increase bets of a rate cut by the Fed next month. Secretary of State Marco Rubio says talks with Kyiv for a U.S.-backed peace plan with Russia could extend beyond Trump's deadline of Thursday. A potential breakthrough is pulling oil and European gas lower, with Ukrainian dollar bonds rallying. Plus, BHP backs off. The world's largest miner ditches another attempt at taking over Anglo American, ending efforts to thwart a planned tie-up between its smaller rival and Canada's Teck Resources. Now let's get straight to the G20, where Bloomberg's chief Africa correspondent Jennifer Zabazaja is in Johannesburg. I guess, this was a G20 summit that was mired in a lot of challenges. A lot of criticism came through from the U.S. president. Many world leaders didn't attend. But as we look back over the weekend, Jennifer, is it being perceived to have been a success?
Jumana, good morning to you. For the most part, I think if we take a look at what we're hearing from a number of leaders who were in fact in attendance, they're touting this G20 by President Ramaphosa in South Africa as quite a success, especially if you consider what you were just mentioning there. Many of the issues that were overshadowing it, most especially probably the U.S. and President Trump boycotting the official meetings. But still, we saw a number of leaders throughout the world congratulating President Ramaphosa, including Ursula von der Leyen, Brazil's Lula da Silva, Kristalina Georgieva. And really the early win for him came with this declaration that was threatened by the U.S. Prior to the summit, which included many of the things that South Africa actually set out for in this G20, which is a focus on bolstering multilateralism, a focus on debt sustainability, and also climate relief. But still, there was quite a bit of silos, I guess is the best way I would call it. If you take a look at this summit, there was a lot of groupings of many nations on issues that are pertaining to them specifically. We saw European leaders surprised by that 28-point plan on Ukraine that the U.S. put out, meeting on Saturday about that. We also saw some BRICS leaders that were meeting about debt relief. And so despite what seems like a consensus on, the importance of multilateralism, there was clearly a showing of still schisms in the multipolar world. And the question is, what does that mean for any of these agreements and the consensus that we did see over the weekend?
Yeah. And yet, despite some of those obstacles, there appears to have been a joint framework announced on critical minerals, I should say. The first time that critical minerals have got such an amount of exposure at a G20 summit. What was in that framework?
Right, and Jumana, we should mention this obviously comes off the back of what they put in this declaration as what we've been seeing over the past few months as some unilateral actions taken on critical minerals, which many analysts are taking that as potentially a veiled swipe at China, who was also present. But we did see China agreeing to a new green minerals deal with a number of nations, including Zimbabwe and Myanmar, and also a bit of an agreement about protecting the sovereignty, really, of these nations that are resource strong. So many in the global south, many on the African continent. And if you think about it from various perspectives, which of course investors are going to, China holds a number of rare earth minerals. And if we think about the EV transition, of course, there's industrialization and military tools that are keenly, these minerals are keenly needed. And so it seemed like leaders wanted to focus in on how they can all benefit from the minerals trade, despite some geopolitical tensions that still ensue, despite trade tensions that pursue. And so that really seemed to be the focus. But again, the question is, this declaration is non-binding. And so the impetus is really on these countries taking a lot of these recommendations and implementing some policies that still protect their own national interests, but as they say, aid in the global collective to enhance the mineral trade.
Bloomberg's chief Africa correspondent Jennifer Zavazaja, and thank you for the reporting around the G20 the last few days. Now, Israel says it has killed Hezbollah's military chief in an airstrike on Beirut as an almost year-old ceasefire deal with the Lebanese government wavers. The IDF says the attack killed Hezbollah's chief of general staff, who was the militant group's second in command. Lebanon's health ministry says the strike killed 5 people and injured 28 others. Japan is planning to deploy missiles to a southern military base close to Taiwan. It comes amid tensions between Japan and China over comments Sanae Takaishi made about the island. The deployment is part of a broader military buildup on Japan's southern island chain, reflecting concerns about China's growing military power and the potential for a clash over Taiwan. And President Trump's formal designation of Venezuela's Cartel de los Soles as a foreign terrorist organization will go into effect today, escalating tensions between Washington and Caracas. The U.S. government explicitly accuses the group, whose name translates to Cartel of the Suns, of being led by Venezuelan President Nicolas Maduro. Maduro denies the accusation. It comes amid a massive U.S. military buildup and intensified operations in the Caribbean and Pacific, targeting alleged drug trafficking organizations. And moving over to markets now, investor expectations for December Fed rate cuts have been stoked again after comments from the New York Fed president. John Williams says he sees room to lower interest rates again in the near term as the labor market softens.
I view monetary policy as being modestly restrictive, although somewhat less so than before our recent actions. Therefore, I still see room for a further adjustment in the near term to the target range for the federal funds rate to move the stance of policy closer to the range of neutral, thereby maintaining the balance between the achievement of our 2 goals.
New York Fed President John Williams. Well, gold prices have been moving on these Fed lines and are now beginning to edge slightly higher. And you can see over the last couple of days, not doing a whole lot, but this morning moving a little bit in the positive direction. Over the course of the year, of course, gold has been a massive outperformer, up around 50%. Joining us now is John McCluskey, CEO and president of Alamos Gold. Given in the introduction out to you, we just played a little bit of commentary that's been driving the markets from John Williams, suggesting that a rate cut for December perhaps is still on the table. To what extent do you think the fortune of gold is actually underpinned by the Fed rate cutting cycle throughout 2026?
Well, there's been a fairly long relationship between what the Fed does with its rates and the gold price, and as the Fed lowers rates, obviously the opportunity cost of putting your money into gold improves. So that it has always been a key indicator for gold and for investors to move into gold. So I think it's going to be positive, but gold has been trading in a positive direction for quite a long time. I mean, certainly for the last 10 years, we've seen it move from $1,100 an ounce up to $4,000 an ounce. So it's had more to do with it has had something to do with Fed rates, but it's had to do with many other factors as well.
Yeah, a couple of months ago, we were talking about the great debasement trade that was going on, and that investors were looking for alternatives to the USD as safe havens. One of them, of course, was gold. Now, with the dollar stabilizing, do you think that we're going to stop seeing those types of flows, at least sort of the hot money that's going into gold?
You know, I pay less attention to what's going on in the short term, and I take a longer term point of view, and that's what we've done in order to build this company. You know, we've been building it over the last 20 years from virtually nothing into, you know, a $20 billion company today. And the view we had on gold when we started, gold was under $300 an ounce, is that that gold was going to ultimately strengthen, and we've seen it, you know, trade up and down in a very cyclical fashion as it does over that 20-year period. But you know, right now, I don't think anything that happens in the short term is going to stop this very powerful bull market that we're in right now with gold. I think gold is ultimately going to trade substantially higher than where it is today, and that's really the I think that's really the key factor that's drawing investors to look at gold equities right now.
Okay, so you talk about the bullish thesis underpinning gold. What is it exactly? I mean, over the course of the last couple of months, I've been referencing more central bank buying. Is that the catalyst that's going to keep gold moving higher, or do you see it more structural than that, beyond central bank buying?
I think there's more to it, but frankly, for years, the main driver behind the gold price has been central bank buying. And, you know, we've seen gold for a number of years outpace gold equities because the central banks weren't buying shares, they were buying the commodity itself. And so that's a key indicator that that gold itself has led, and the commodities have ultimately followed. So to some extent, you would typically see gold equities trading at much higher multiples to their net asset value in a bull market, but we're not really seeing that up until now. There's just a few cases where gold stocks are trading at premiums to their net asset value. I think that's going to change. But what's driving gold? Certainly central bank buying has been a key factor, but going forward, I think it has to do more with the instability in the world, the de-dollarization that's been going on. It's been led by China, and that's been going on for many years as China has been selling U.S. treasuries and buying gold. But other countries right around the world have been doing the same. And I think it has something to do with the fact that the leadership in the world of the United States right now is not as readily as accepted as it once was. And along with that has been a weakening of the U.S. dollar. I think that's been largely due to the fact that you know, the U.S. has taken on a substantial amount of debt, and that doesn't seem to be going away. It seems to continue to grow. I think all those factors are coming into play.
Yeah, okay. So gold is up, spot gold is up more than 50% this year, 55%. Are we likely to get a repeat performance of that in 2026? Do you have a target of where spot gold could get to by the end of next year?
Well, it's easy to project, but that's where mistakes are often made. I think it's very difficult to make specific predictions on, you know, where gold will be over specific time frames. But I do see gold very clearly making its way much higher than you know, this $5,000 target that some of the major U.S. banks have been mentioning. But I think that's certainly that's a decent target to pick for 2026. But I think that we're in a multi-year bull market for gold right now, and I think gold will trade right through that $5,000 an ounce level. I think it's on its way much higher than that. You know, the gold miners are doing extremely well. I mean, as a sector, you know, we produce gold for roughly $1,400-$1,500 per ounce in terms of all-in sustaining costs, and then, you know, everything above that is that's profit. So at $4,000 gold, the gold equities are doing extremely well. Imagine how much better they're going to do.
Okay, so as it pertains to your own business, as you look ahead to next year, are you prioritizing growth or return of capital to shareholders in 2026?
Well, we've always tried to maintain both, but primarily, you know, we're not a Barrick or a Newmont. You know, we're not one of these companies that are sort of almost ex-growth. They can grow through acquisition, but trying to grow through their existing assets, it's quite difficult when you're already at that scale. You know, Alamos is a company that's producing just over 500,000 ounces right now, and we're on our way to producing 1 million ounces a year, and we're getting there by growing our existing asset base. We're not getting there through acquisitions. We're taking the mines that we have now, and we're expanding operations at those mines, and that's going to take us effectively from this. We're going to do about 560,000 ounces this year. We're heading to about 1 million ounces, 1.1 million by the end of the decade. That's amazing growth for this sector, and we've been essentially building on that over quite a number of years. We've made a number of acquisitions while the gold price was quite a bit lower, and now we're in effect able to capitalize on that by investing the capital to grow the mines.
Yeah. John McCluskey, CEO and President of Alamos Gold, thank you so much for joining us today on the show. Well, coming up, we'll be talking to Lithuania's foreign minister about the latest on the U.S. peace plan for Ukraine. That's next. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
We're coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can't be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
This is The Pulse. I'm Joanna Versace in Dubai. Well, for more on the wider trends in markets and how investors have been pricing in the AI trade, I'm joined by Bloomberg's Neil Campling. We're seeing a bit of love once again go back into the AI space. We had NVIDIA earnings, and then, of course, our own Bloomberg scoop on Friday suggesting that the U.S. officials are open to the idea of NVIDIA selling those H200 chips to China. What are we seeing in the market?
Yeah, it's certainly interesting times. I think the broader AI market, there's definitely still appetite and interest in a lot of these products. I think that you've seen, obviously, the news around the potential reopening for the Chinese market to NVIDIA is a positive, as is the Alibaba news of the uptake of their new product over the weekend. I suppose one of the things that there's a lot of two-way arguments around the AI trade, clearly, in terms of the rates of adoption are not up for question. One of the biggest questions, though, is whether this massive increase in the hyperscaler capex which has more than doubled since the beginning of the ChatGPT, is whether we will see, or when we will see, decent returns on that invested capital. And that's one of the questions I think the market has at the moment.
Yeah, watching out for China tech earnings tomorrow, Alibaba. I want to ask you about ChatGPT's main rival, Qwen. It seems to have drawn 10 million downloads. How is that going to affect the company's valuation?
Yeah, I think it'll be too early for those downloads to affect the valuation today in terms of earnings, but certainly if the message from the earnings call is one of re-accelerating growth, then that could certainly lead to a higher valuation. The same has been happening for the US tech stocks for some time. Whilst many people are looking at US tech and being worried about some of the valuations, I think we also need to remember that much of the growth that has been enjoyed by the tech leaders thanks to AI has meant that really we've not had multiple expansion because it's been growth expansion that these companies have enjoyed. If the Chinese tech heavyweights such as Alibaba and Tencent can enjoy similar types of growth characteristics, then that's got to be a positive for AI adoption and the AI thematic.
Bloomberg's Neil Campling, thank you so much for joining us on the show today. Well, the deputy head of the Office of Ukraine's President has told Bloomberg it was, quote, a little useless talking about peace when they face daily missile bombardments. In recent months, Lithuania has accused Russia of violating its airspace and sabotaging Poland's railway. Let's bring in Oliver Crook, our chief European correspondent, who's in Brussels now with a guest.
That's right, Jemana. I mean, I think everybody here in Brussels and really the United States and certainly in Kyiv are trying to digest what the 28-point plan looks like now after those 24 hours of negotiations we saw in Geneva between the Ukrainian and the American delegations. And I'm very pleased right now to be joined by the Lithuanian Foreign Minister, Minister Budrys. Thank you so much for taking the time, speaking to us at the sideline of this meeting that's supposed to focus on trade. I'd like to begin first with your reaction to this 28-point plan and what Europe's strategy is to get their voice heard in this conversation.
Of course, that's the first priority for Europe, to get at the table with our interests being protected during the conversations and the negotiations. And the fact that Europe is not there, it is a problem. And what we have to do, we have to get the ticket to the table, number one. And number two, also to get some leverage. And those two things that provides the Europe the access to negotiations are frozen assets, number one, and number two, that is EU accession for Ukraine. We have to instrumentalize those elements, and as soon as it is possible, because it is needed right now. Frozen assets, we have to give it as a loan to EU first, and then a circulation loan to Ukraine, because that would provide the something credible.
But there is this sort of concern because those Russian assets were explicitly referenced in the 28-point plan, and the United States has different kind of ambitions for what to do with it. So are those assets now off the table, or on the contrary, is now the moment that Europe needs to act?
After last week, the very context in which we assess the options has changed. So now there is more urgency in the very decisions. So now it's the time to make a decision that we are proceeding with it. We are still waiting for the proposal, legal proposal from European Commission, and let's do it. Let's act. Otherwise, it will be a lost opportunity for Europe to play the relevant role in it. And the very fact that they are mentioned in those points, it shows that it is important. And it is in our hands, in Europe's hands.
So there's a question of getting to the table. Once Europe is at the table, what are the red lines for Europeans from what you saw from that 28 proposal? What are non-starters?
We need a working, credible security structure that wouldn't be based on some promises not to invade anymore. We have seen it in 1994 in Budapest and 20 years after Ukraine first time was invaded by Russia. So we cannot build our security on the hope that Russia will keep the promises. They never did, and they do not respect the international law. Why they should, in the upcoming 5, 10, or 20 years? They won't. So that's why we need the credible working deterrence system, and that it is building the European security with Ukraine. And it's for us to decide how we will do it. It's not for the others, and especially not for Russia.
The other thing that I'd like to discuss is also we have not really seen a proposal from the European side. We get these proposals that we don't know exactly how this 28-point plan was put together. There's lots of questions about it, but I don't see a comprehensive, clear proposal for what the Europeans would put together and put to the table. What would that proposal include, and what do those security guarantees look like? Are we talking about an Article 5 light? What are we talking about specifically?
it doesn't mean that Europe doesn't have what to say. Of course, we start to talk about the fundamentals, but this is the very beginning and the very guarantee for the peace to last. Talk about fundamentals, territorial integrity, sovereignty of Ukraine, independence of Ukraine, and also accountability for all the crimes that were committed. If we are not getting this, if we are really talking about amnesty to everything that was done in Ukraine, for the children being abducted, for the civilians being also kidnapped, so we cannot talk about anything that would last. And those elements that Europe already agreed on, as Lithuania is part of the coalition of the willing, we will be part of the securing and supporting Ukrainian forces after the ceasefire. So there are other elements also. EU membership, that's one of the also elements of the security guarantee.
One of the other issues you need to tackle today, you'll be meeting with Jameson Greer, Howard Lutnick from the United States. What would the Europeans like to get out of those trade negotiations? Is that what that would be considered a victory? And added to that, how much leverage does Europe has, given how dependent they are right now on the United States buy-in for Ukraine? Do they have any leverage to throw around on trade?
Of course we have. There are so many common challenges that we all face, and that is China, first of all. Overproduction, unfair trade practices, and all of these. So this is the common challenge for us. And during my visit to Washington, we were talking about the economic security that unites us, that we shouldn't work against each other, be it steel and aluminum. That's not Europe that is causing the problems for the United States. That's China that does. And there are many, many other areas. So I'm looking forward for the discussion on our positive agenda where we can and must cooperate on it. And we should take to the, we have to finish with everything that we talked and agreed upon in August negotiations and proceed with the broad agenda.
And on the question of China, Lithuania has been one of the more outspoken member states from the European Union, talking about some of those issues that were sort of pushed away by many other member states now, I think, are being more openly acknowledged. Do you think that there could be a sort of more concrete framework that the Europeans and the United States could work with together to get the U.S. on board to deal with China?
Yeah, first of all, we have to reduce our vulnerabilities. That is the lesson number one and the largest one from Lithuania. If there is vulnerability, and knowing that China has the intent to use it for political purposes, they will do it. Yeah. So no one should be surprised that they instrumentalize the export controls of the rare earth minerals. That's what they promised to do, and that's what they did for Lithuania in other areas. Yeah. So for us, reduce the vulnerability, diversify the trade, build a stronger transatlantic agenda for economic security, and be very strict and straightforward with China what concerns their investment policies and trade policies in Europe. We cannot be the area for the dumped imports and for the subsidized materials destroying our industries.
Well, Minister, thank you so much for your time here, speaking at the sidelines of this meeting with the U.S. delegation that will begin in just a couple hours' time. Some thoughts there on trade with China, but also the key movement here for the Europeans. They must move now on the frozen assets. That's the message.
Such a timely interview, Bloomberg's Oliver Crook in Brussels. Thank you so much. And later, U.S. Commerce Secretary Howard Lutnick joins us live from Brussels, where U.S. and EU teams are hammering out the details around their own trade deal. You can catch that at 11:45 a.m. London time. But up next, Bloomberg Brief. This is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's 5 a.m. in New York City. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. December in the balance. Stock futures getting a lift as traders increase their bets on a Fed cut in 2 weeks. A Thanksgiving deadline. European officials racing to buy Ukraine more time with a counterproposal to the US's 28-point peace plan. And no deal. BHP is walking away from Anglo American again after a fresh takeover approach. Let's take a look at how we are entering this shortened trading week. Futures higher, continuing the lift that we got on Friday. Of course, the S&P 500 still end of the week down 2%. The Nasdaq 100 still end of the week down more than 3%, even with those gains in Friday's session. It does appear, though, that the sentiment continues. John Williams has a lot to answer for. Let's look at the bond market because we're not seeing too much movement in pricing there, but odds of a December rate cut are now around 75%. That's a far cry from where they were before Williams spoke. So will we get more Williams speak, more clarification on what he meant when he said near term? Will other voices join him in potentially putting a December rate cut back on the table? I do also want to point to Bitcoin as well. We were up about 7% from its low last week, but we're now just below $87,000 again. And once again, just on the stock market, we have a couple of strategists out today, including Citi Wealth head Andy Sieg, saying that he's seeing record inflows and that this bull market has more to run. Mike Wilson saying we're closer to the end of the correction than the beginning. So a couple of positive voices out there for what it's worth. Let's get to some individual movers now this Monday morning. Over to London and Chloe Melly. Chloe.
Good morning, Bonnie. Let's start with Alibaba's shares today, and they are up after the company's AI app Qwen debuted very strongly with more than 10 million downloads in the first week since its relaunch. So that means that Alibaba might be able to rival OpenAI's ChatGPT at some point, and that now puts the question on how the company can leverage this app to drive people to its consumer business. Moving on to Alphabet, which is also up this morning after Salesforce CEO Mark Benioff praised Google's Gemini 3, saying it was a major breakthrough, that performance was faster, reasoning was sharper, and that he would not be going back to ChatGPT. And we can see that praise reflected in those Alphabet shares this morning. And finally, Tesla is also up after Elon Musk said over the weekend that the company had finalized design on its AI 5 chips and would start work on the AI 6 chips. Those are chips that will be used in the data centers and cars. And it seems that is a development that is received very warmly by the market, and we are up almost 2% for Tesla.
All right, Chloe, thank you so much. A good roundup there as we head into the Monday trading session. And later in the hour, we'll push ahead to a busy week of economic data. We'll be speaking with Lauren Van Bulgen of Allspring. Productive talks then on the Ukraine peace plan.
It is in my personal view that we've had probably the most productive and meaningful meeting so far in this entire process since we've been involved in from the beginning. We have a very good work product that was already built on a foundation of input from all the relative parties involved here, and we were able to go through some of those items now point by point, and I think we've made good progress.
Joining us now is Bloomberg's Oliver Crook, Chief European Correspondent. So productive, according to U.S. Secretary of State Marco Rubio. Productive for everybody, Ollie?
Well, that's the big question, Vonnie, and that's the question I put to the deputy head of Zelensky's office when I spoke to him about an hour ago, asking him what the status of the talks are, where are we on these negotiations, and I think there's a lot more work to be done than the United States would like, and certainly at the sort of timeline that they laid out with wanting to get a proposal through by Thanksgiving, that is this Thursday, which seems pretty unlikely just given the complexity of the issues ahead. I think, Vonnie, the real difficulty with these negotiations is that under the Trump administration, the geopolitics in 2025, basically none of American allies, whether it's the Europeans or the Ukrainians, can speak too honestly about what they actually think about what's in this proposal. So until we actually see the text to see how much of an edit there has been made, how much of it has shifted, it is going to be hard to say how happy each of these sides are. That being said, the Ukrainians have made positive indications from the discussions over the last 24 hours in Geneva. So too have the Americans, and now it has to get to into European hands. We just spoke with the Lithuanian foreign minister who's bemoaning the fact that basically the Europeans have been completely cut out, but he also said they need to earn their place at the table. And one of the ways that the Europeans can earn their place at the table in the conversation about the future of Ukraine is by going after those Russian assets, 140 billion euros of them stuck here in Belgium that the European leaders just cannot agree upon.
Yeah, it was a great and timely interview, Ollie, but what about this counter proposal that Europe seems to want to come up with to give Ukraine at least more time than the Thursday deadline? Is there something on the table? What can they propose?
I think that what is on the table at this stage is not very clear from the European side. I mean, this has been from the very beginning. This is part of the questions I put to the foreign ministers. We've heard a lot of the European positions, but we haven't heard really a comprehensive plan. We haven't at least seen a comprehensive plan when it comes to Europe. And again, and the one place where they did have a way to exert leverage is on these Russian assets, and they were unable to move with that. And so, Vonnie, I think that this dawns yet again that realization within Europe that, the Europeans want to talk like a geopolitical superpower, but they are not acting like one. And as time goes on under the Trump administration, something needs to change. Either they need to step up and start acting like one, or they need to stop talking like one. And I think that is the policy issue for many of the Europeans. And Vonnie, I'll fold in another thing. Here today, Jameson Greer, Howard Lutnick, in this very building to talk with trade representatives from the European Union. How much leverage do they have to put pressure on the United States on trade when they're so dependent on them for so many things, including them keeping them on side for Ukraine? That is part of the difficulty here the Europeans have under the Trump administration have had for the last year or so.
Exactly, and the EU saying no deal is expected today or anything like that. This is a quote-unquote stock-taking exercise, according to the trade chief in the EU. But just one more question on the Ukraine plan, Ollie. Putin hasn't shown any flexibility, not from day one, not from, the pre-war days, in fact. Is there anything that would get him to move on the US side?
Well, listen, I think that is the big question also from the Russian side of this thing. I mean, there are questions about whether or not even that plan that we saw at the end of last week that is seen pretty universally, certainly in Europe, certainly within Ukraine, and among many even of the lawmakers on the Republican side in the United States as really favoring Russia. There were questions about if even that proposal would be okay with the Russians. The thing is with the Ukrainians, what Zelensky learned really the hard way back in February after that catastrophic meeting with President Trump is never be the obstacle. Never be the obstacle to peace. Never say that the United States has had a bad idea. Be constructive. Say, yes, this is a good framework, but this is where we need to evolve. And again, the method for the Ukrainians has been to try to demonstrate again and again that Putin is in point of fact the obstacle to peace. That seems to work sometimes, and then suddenly this 28-point plan comes out, and that sort of whole theory is shot to pieces. So this will continue to be the Ukrainian method. Whether or not they're going to be able to demonstrate that Russia is still the obstacle is the big question. I think as it stands, the proposal that we saw at least last week, we don't know what it looks like today, is certainly favoring Russia, and in many ways dealing with many of the key demands that the Russian have. And much of the text, they even say, from some analysis, might have been translated from Russian. So again, a lot of questions about this proposal, how it came into being, and what it looks like today after 24 hours of negotiations in Geneva.
Certainly a tense week, Oliver. Thank you so much. That is Bloomberg's Oliver Crook. Well, the G20 summit in Johannesburg has wrapped up. South African President Cyril Ramaphosa struck a final agreement with G20 countries at their summit, despite American threats and false claims of white genocide by President Donald Trump. Speaking on the US's boycott, Canadian Prime Minister Mark Carney said the world can make progress on a range of issues without the US. Joining us now with the latest from Johannesburg is Bloomberg's Chief Africa correspondent, Jennifer Sapasaja. So, Jen, multilateral organizations continue to try to do their work, even without some major players, and it wasn't just the US this time around either. But we do have a joint declaration. So what did the G20 agree upon?
That's right, Vonnie. And especially as you mentioned, of course, we didn't have the U.S. leader who was here at the G20. Also, China's Xi Jinping was not there. And there's even some reports potentially that Argentina was not happy with this eventual declaration. We didn't see Argentina's leader here either. But still, many people are seeing the ability of President Ramaphosa and the G20 to come up with a declaration at the beginning of the summit, despite some of the threats from the U.S. president, is seen as somewhat of a success. And if you take a look at some of the recommendations that were included in it, many of the priorities of this summit and this G20 presidency, which for President Ramaphosa was focused on the global south and Africa at its heart, did make it into the final text. So bolstering multilateralism, increasing climate finance, and also debt sustainability. But if you dig into some of the details of what we were witnessing throughout the weekend, there still seems to be some fracturing and some silos that exist throughout the world order. We saw European leaders obviously dealing with what you were just speaking to Oliver about, the issue of the 28-point plan in Ukraine. We also saw BRICS leaders meeting about debt relief. And so despite this declaration coming at the beginning of the summit, something that many people did not expect, the question is, what, if anything, do we see moving forward from this grouping? And what exactly does this convening and this unified grouping of countries look like moving forward, especially as the U.S. takes on the presidency next?
And interestingly, Jen, we had the Chinese premier there, Li Qiang, defending his country's rare earth curves at the summit. It was a bit of a charm offensive, really, wasn't it?
Yeah, and I mean, I think that's a great way to put it, Vonnie, especially if you consider what we saw in the declaration. There were multiple instances of critical minerals throughout this document. Counter that with what we saw just a year ago, and it was just barely mentioned. And so, yes, we did hear the Chinese premier defending some of the export controls that we've been seeing from China, but still in the declaration, there seemed to be a bit of a veiled swipe at some of the actions that we've seen from China, speaking specifically about defending some unilateral actions that have been taken place. And it seemed like some of these leaders were wanting to at least create some more protection for some of these resource and mineral exporting countries, and also give them more of an ability to withstand some of the geopolitical and the trade shocks that we've seen over the past few months. But again, despite all of this, none of this text is actually binding. And so it's incumbent on many of these leaders to take some of these recommendations in the declaration and impose some policies, or at least inform what the negotiations look like moving forward. We saw President Trump and Xi Jinping meeting just a month ago. And so the question will be, how does this now potentially inform some of the investment flows into the mining sector? And also, how does this potentially change the behavior, if it were, based on China and some of the export controls that they've put on? Because, of course, we know a number of these minerals are needed for industry and military in Europe and elsewhere, and, of course, the EV transition. So quite a packed weekend, but the question will be, what does this really look like moving forward?
All right, Jen, thank you so much. That is Jennifer Zapasaccia there in Johannesburg. Now to other top stories trending on the terminal this morning. U.S. Treasury Secretary Scott Bessent said an announcement regarding healthcare for Americans is coming this week. President Trump has said he opposes congressional efforts to extend expanded Affordable Care Act subsidies and favors sending aid, quote, directly to Americans.
We believe health care is going to come down. We will see an announcement this coming week on that. And so across the board, prices are starting to come down.
Japan's defense minister Shinjiro Koizumi says plans to deploy missiles to a military base on a southern Japanese island will move forward. Koizumi says the deployment is intended to help lower the chance of an armed attack on Japan. He also said the view it will heighten regional tensions is not accurate. And Alibaba shares are jumping after the strong debut of its new AI app. This bodes well for a longer-term effort to build a rival to OpenAI's ChatGPT. Qwen was downloaded more than 10 billion times in the week after its relaunch. Alibaba says it plans to integrate services from food delivery to travel booking and even office tools directly into Qwen. Well, coming up, BHP walks away from Anglo. More on the latest twist in the mining industry next. This is Bloomberg.
Used to be one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something. Now though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. BHP is walking away again. A fresh takeover bid for Anglo American. The mining giant confirmed that it held preliminary talks with Anglo, but said it was now, quote, no longer considering a combination of the two companies. This all comes after Bloomberg's Sunday report of BHP's newest approach, which Anglo has said to have decided was not superior to a combination with Canada's Teck Resources. For more, let's bring in Bloomberg's Dinesh Nair. So, Dinesh, why such a quick exit? We only just reported that there was a fresh approach, and now Anglo seems to have said no thanks, and it's going its own way again.
Thanks for having me. So BHP, if you remember, made an attempt to buy Anglo American last year, almost the same time, and which was rebuffed. And then they went quiet after that. In the meanwhile, Anglo American has gone and agreed on a merger of what they call a merger of equals with Teck Resources in Canada. And that merger is soon to be heading towards a shareholder vote. So I guess BHP, for the time, BHP sees one last opportunity to create a big miner with a significant global copper operation by going after Anglo American again. But that approach was a bit short-lived, as we reported yesterday, that Anglo American rejected that approach, following which BHP has decided to walk away again for the second time.
And of course, it's all a bit of a jigsaw puzzle, and now we're shifting it and making a different kind of a puzzle. So how significant would the strategic upside for BHP have been in acquiring Anglo, especially in terms of copper? Are they missing something now because the deal is off?
Yeah, I mean, it is not just for BHP. Like every mining major in the world today wants to really beef up and bolster their copper operations. A lot of them have significant copper operations, but it's the most sought after mining asset in the world today. There is a lot of demand, and the supply is not meeting the demand, which means mining majors are looking for opportunities to buy copper assets whenever possible. And the two big companies which were target for the big miners were Anglo American and Teck Resources. They having merged kind of takes away a lot of the opportunities to grow inorganically for some of the mergers, some of the bigger majors, and the other copper companies who have available resources are pretty reluctant to part with it. So it'll be interesting to see what happens going forward. I mean, even Teck Resources is not completely immune from an interloper coming in, trying to outbid Anglo American. There are rumors always in the market that someone could come in for Teck. The combined Anglo and Teck Resources could also be interesting for some of the miners who have the appetite and the capability to do large deals. So it's a very interesting time in mining. There's a lot of consolidation play, but it's all driven by the need to acquire copper assets.
Yeah, and shareholders going to vote on that December 9th. Glass Lewis saying, yes, it should go ahead for what that's worth at the moment. Now, what does the bid and the pullback, what does it mean for the broader M&A environment, particularly in mining? As you said, there are other players out there that might, at some point bid for a combined Anglo with something else or a combined tech with something else.
Yeah, I mean, there's going to be more action. I mean, there are 3 or 4 very large miners who are looking, as I said, to acquire more copper assets. There is consolidation, and scale is increasingly getting very important in the industry. Most of the miners in the last few years didn't deploy too much of capex, which means that the ability to mine a resource like copper is limited. So there is going to be more inorganic opportunities. And M&A is pretty hot now. So not just in the mining industry, we are across the M&A world. We are seeing situations where, be it healthcare or tech, we are seeing situations where large M&A processes are getting increasingly contested. So we'd expect to see more of that across the M&A world going forward into next year. But in mining, it's particularly going to be interesting to see what the chessboard looks like and who's going to make the move next. As I said, a combined Anglo tech could also be interesting for some of the large miners, large majors out there. So there's more to come there, and we will hopefully get more scoops from what is going to come out of the industry.
Yes, I'm sure we absolutely will. Dinesh, thank you so much. That is Dinesh Nair in Dubai there. Let's take a look at these commodity markets then, because we have oil dropping today after, of course, that run-up on Friday. Prospects for a Ukraine peace deal dominating this market. Investors protecting on the downside. We have New York crude there at $57.61. Gold, though, back above $4,000. And we'll be keeping an eye on other commodities throughout the morning. Coming up, FBI Director Kash Patel is under scrutiny for using SWAT teams to protect his girlfriend. That and a look at what else is making headlines in your front page news. This is Bloomberg.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
You can't spend wealth. You have to sell wealth in order to get money to go buy things, okay? And so how do the bubbles happen? Okay, the bubbles happen in the way that you create these needs for money, and then the wealth rises, and then there's a need to sell it. For example, let's imagine that we put in wealth taxes, okay? Okay, what's gonna happen? Those are gonna need to sell some of that stock to be able to get up the cash, to be able to pay taxes, right? Whether it, for whatever reason, the need for cash happens and you want to make a conversion from wealth to money to be able to come up with the money.
Bridgewater founder Ray Dalio there speaking on the latest episode of the Odd Lots podcast, released today and celebrating 10 years. Time now for your front page news. The Financial Times reporting the European Union is planning to tighten its foreign investment rules to ensure Chinese companies do not gain advantage from the bloc's open market without generating benefits for local workers and sharing technology. The FT says the rules are part of a series of proposals to bolster Europe's ailing industrial base. And the New York Times reporting FBI Director Kash Patel is under scrutiny for using SWAT teams to protect his girlfriend. The incident in question was at the National Rifle Association's annual convention, an already secured site. The Times says Mr. Patel's heavy use of taxpayer-funded resources has the administration questioning whether he's exceeding the bounds of standard practice. Well, coming up, we'll look ahead to this week's data and, of course, the market action with Allspring's Lauren Van Bilgen. That's next. This is Bloomberg.
So I know from owning a sports team that only one team takes a lot of energy and time.
Tell me about it, yeah.
So you decided after you bought the Washington Spirits to buy some other soccer teams. So you bought stakes in a team in England, is that right?
Yes. I bought a team called London City Lionesses, and that is the only one of the two teams in the entire, potentially Great Britain, that are independent. 99% of the teams in Europe are part of the men's team. But this is one of the only two teams that was independent.
So now you have two soccer teams, one in England and one in the United States. So I would think for most people that might be enough, but you decide to buy a team in France as well?
Yes. Olympique Lyonnais Féminin is actually the best women's team in the history of women's football. In terms of how many trophies the team has won, they are the 8 times champions of the Pan-European League. And I can't even count how many times they won the French domestic league, the most successful team. I want to professionalize women's sports, right? I don't want people to think that somehow women's sports is a charity or a corporate DEI project. This is a legitimate entertainment product, and it is a business.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. December in the balance. Stock futures getting a lift as traders increase their bets on a Fed cut in 2 weeks. A Thanksgiving deadline, a top aide for President Zelensky says progress on a peace deal as negotiators from Ukraine and the U.S. prepare an updated framework. And healthcare announcement incoming. Treasury Secretary Scott Bessent says a plan to bring down U.S. healthcare costs is coming this week. Let's take a look at those markets because we're off our highs of the morning, but we are pointed into a green session today for a holiday-shortened trading week with Thanksgiving on Thursday, of course. The back and forth on a December rate cut, the background here with odds now around 75% for a cut in December. Now, you'll remember the S&P did rise 1% Friday, but that left a decline of 2% on the week. The Nasdaq 100 also up Friday by about 0.75%. That left it more than 3% in the red last week. So it was a difficult last week for many traders. But there's plenty out there that see good news. Mike Wilson, for example, saying the end of whatever correction this is closer than the beginning. There are plenty of questions leaving investors a little edgy, though. Let's take a look at the bond market as we are thinking about those. Of course, we have still the question of tariffs, the state of private credit markets, the AI trade, and fresh batches of data potentially awaiting us. Look at that 10-year yield below 4.05%. Well, let's get to some individual movers now from some stocks to watch. Over to London and Chloe Melly. Chloe.
Good morning, Bonnie. Alibaba shares are up this morning after its AI app, Qwen, debuted very strongly with more than 10 million downloads in the first week since its relaunch. So that is boosting Alibaba's efforts to rival OpenAI's ChatGPT, and it poses the question of whether or not it will be able to leverage this app to drive people to its consumer business. Moving on to another rival to ChatGPT, and that is Alphabet. Alphabet is also up this morning after Salesforce CEO Mark Benioff praised Google's Gemini 3, saying it was ahead of its rivals, that it was a breakthrough performance with sharper reasoning, and that he would not be going back to ChatGPT. And we can see that praise going into the Alphabet shares this morning, and we're up at 2% there. And finally, Bayer over in Germany is up quite strongly after saying that its experimental stroke prevention drug yielded very positive results in a clinical trial. That is a definite boost for a company that's been dealing with quite a lot of legal troubles, as well as growing generic competition for its blockbuster drugs.
All right, Chloe, thank you for that rundown. That is Chloe Melly there in London. Well, Friday's upturn in global risk sentiment set to continue, it seems, today after dovish Fed speak from New York Fed President John Williams. Allspring's Lauren Van Biljon says every position in a portfolio must be earning its place, but calculated risks require data. Lauren Van Biljon is a senior portfolio manager specializing in rates and FX at Allspring, and she joins us now. So, Lauren, without data, you can't calculate anything, but this market seems to think you can because it's very much pricing in now the potential for a cut in 2 weeks' time, where it wasn't just a couple of days ago. Is this market reading things right?
Yeah, that is the question, isn't it? And we've had this back and forth on interest rate pricing a couple of times now, right? All the way into December, nothing in December. Now we're sort of most of the way back to December. I think the key point for me is that what's not changing at all is that projection of terminal rate, right? That seems very solid around that 3% level, given what we know currently. But there's plenty of space to argue sort of on a meeting-by-meeting basis.
So we've seen quite the move in stocks. We haven't seen as much of a move in bonds. I mean, yes, the 10-year now is, below 4.05, but I mean, we've seen it in pretty much of a range, 390 to maybe 415 for a long time now. Is it pricing in reality, or is it just pricing in confusion since we don't have any labor market data to speak of?
Probably a little bit of both, if that's possible. We know that right now the labor market is key to the pace of interest rate cuts from the Federal Reserve. And so the last couple of weeks of silence have been difficult. There's a limit to what alternative data can tell us. Obviously looking forward into this week, we know claims data on Wednesday is going to be probably definitive for the Fed, given that they don't have a lot else to work from going into that December meeting. But again, also, you talk about that sort of limited range of the 10-year. Again, is that not down to the fact that those longer-term projections have been pretty stable?
Yes, and the MOVE index has been very, very low and so forth. Do you imagine that the Fed chair is okay with having said that, look, when you're in fog, you slow down, and that the market took that to mean, okay, December is off the table? Or does he regret that a little bit now?
Well, we know this is a Fed that has been very data dependent. So, perhaps a reminder of that is not a bad thing for the markets. And it is true as well, right? For a while, it didn't seem that there was any hurry to get the US shutdown sort of ended and over, and data flowing again. So probably at the time he was saying that, right, he wasn't quite sure how long they'd be operating in that fog. And I think it's good to acknowledge that with less data comes sort of less reliable forecasting and more difficult decisions.
Yeah, and again, we could have something similar at the end of January, although if we do get some kind of an announcement on healthcare, maybe that changes the equation and so forth. What are you doing with your portfolios now? We're heading into year end. We don't really know what the Supreme Court is going to decide on tariffs or how much of an impact that will have on markets either way. We're not sure about another shutdown at the end of January. And of course, we're going into a new year. Bitcoin seems to be off the rails at the moment, and gold is still above 4,000. So what do you do in the fixed income universe?
Yeah, it's an interesting mix, isn't it? And it really does speak to a market that is, can be liable to trade on a bit of a hair trigger. We certainly are seeing a very headline-driven trading environment, which creates risks, but also does create opportunities. We like to think about, at Allspring, we like to think about sort of our 6-month outlook, and that's sort of a lot of how we sort of allocate our capital. Obviously, there's shorter-term tactical trades, but we don't want to lose sight of that longer-term picture. What the current environment says to us is that you need to be really diversified in terms of your sources of alpha. So really considering, what different sectors can we use to earn our clients the return that they need. So it's being very careful with our risk management. And right now in the corporate space, we still like securitized debt. I think that offers a lot of value. Probably looking more sort of towards the higher yield, higher rated or higher quality end of the corporate credit market. But again, making sure that the yield you're getting is compensating you for all that sort of swirling headline risk, which is certainly not going to be abating anytime soon.
And I imagine you think of a lot of that as noise. If you think, look, we're headed for the same terminal rate at some point anyway, it doesn't matter if it's maybe a month or two later or a month or two sooner. So where are you looking at maybe that higher rated debt, in the United States or in Europe or elsewhere?
We like to have that global diversification. Again, right, if you've got the sort of the global reach, make full use of those global markets. And like you say, there is a fair amount of noise, and that can, so if they're shooting, that can sort of really sort of juice a position when it comes to either taking profits or sort of offering a better entry point. But it does mean that you need a kind of laser focus on where you think value is, so if you think it's overshooting in either direction. So a lot of fundamental work, a lot of sort of careful thought, and again, right, diversification, just bringing on as many
sovereigns then, Lauren, and of course the UK budget is coming this week. I imagine you're positioning ahead of that, or maybe waiting to see what happens there. But what parts of the curve, both in the United States and in the United Kingdom, look attractive right now?
I think it's all year, it's been a story of that sort of 2 to 5 year area of the curve, I think has been the most interesting. And I think that's still true. Very long dated bonds are still struggling around fiscal responsibility and sort of longer term fiscal outlooks. But I think that 2 to 5 year, you can sort of express an interesting view on monetary policy. You can kind of capture some of the noise that's coming from sort of shifts in employment data. So I think in the UK and the US, both of those markets, that's an area that's interesting to us. The UK is just a ball of noise at the moment. I don't think that's going to change anytime soon.
It's going to be a fascinating Thanksgiving, let's say, for those who are keeping their eye on the United Kingdom as well. Thank you, Lauren, for joining us this morning. That is Lauren Van Million of Allspring Global Investments. Coming up, President Donald Trump posting on Truth Social moments ago about the Ukraine talks, quote, something good may be happening. More on that next. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
We believe healthcare is going to come down. We will see an announcement this coming week on that. And so across the board, prices are starting to come down.
The Trump administration looking to address an impending surge in health insurance premiums after the president said he hoped to secure a plan by January 30th. Joining us now from Washington is Bloomberg's Kasia Kimashinska. Kasia, what do we know about what this plan might entail?
We know that the name of the game is affordability and the cost of living. The White House is focused on that, and we expect an announcement perhaps as early as today on the healthcare and the healthcare costs. We know that that was the reason actually the government shut down, and Democrats were pointing to the healthcare insurance costs going up next year for millions of Americans, and so President Trump is about to take action. We don't know exactly what that will be. Trump has said before that he wants dollars to go directly to people and for people to make the decisions how they want to spend them to increase their health insurance. But now Politico is reporting that perhaps the White House is considering extending the healthcare subsidies that Democrats wanted to be extended. So there could be an extension for additional 2 years, but maybe coming with some caps on income and some mandatory minimum premiums.
Yeah, we might get some kind of clarity as well this week if Scott Bessent to be believed. Elsewhere, we have Secretary of State Marco Rubio speaking after talks in Geneva, obviously on Russia-Ukraine and the peace plan. He was optimistic, at least. Take a listen.
It is in my personal view that we've had probably the most productive and meaningful meeting so far in this entire process since we've been involved in from the beginning. We have a very good work product that was already built on a foundation of input from all the relative parties involved here, and we were able to go through some of those items now, point by point, and I think we've made good progress.
So, Kasia, it seems that the Thursday deadline, the Thanksgiving deadline that Donald Trump had put out to Ukraine might even be pushed back into next week if this progress continues. What do we know about what this progress actually entails?
There was a flurry of activity over the weekend in Geneva, and we just had a post from President Trump himself on Truth Social saying that perhaps some progress has been made. So maybe this deadline that was for this Thursday, the Thanksgiving holiday here in the U.S., will be extended. Marco Rubio said that maybe into next week, and President Trump himself said that when the sides are talking and when there is progress made, he can extend those deadlines. And indeed, there was a lot of talks between the U.S. and Ukraine, also some conversations between the U.S. and the EU. And Secretary of State Marco Rubio and Ukraine both signaled that some changes have already been made to this initial 28-point plan that Ukraine really didn't like. So we expect to hear more on that, especially from the U.S. side today, about where exactly the changes have been made.
And then in terms of Venezuela, because obviously we have to keep an eye on what's happening down there as well, we have U.S. Joint Chiefs, the chair of the Joint Chiefs, Dan Kane, meeting members of the U.S. Southern Command today, ostensibly in Puerto Rico. The military presence obviously has swelled there as the U.S. weighs more military action off Venezuela and in its waters. What do we know about, this kind of meeting and what it might portend?
This is a situation that we are watching very closely for potential escalation, as President Trump said that Venezuela is on his mind, that he will continue to target this country. He believes that this is where the narcotics are coming from into the U.S., killing millions of Americans. So the U.S. has been attacking boats, allegedly carrying narcotics into the U.S., shooting them down. And now we have this visit in Puerto Rico with a very high-level Army general talking to service members, and President Trump himself said there will be more action taken. Also, over the weekend, the U.S. FAA warned airlines against flying over Venezuela, and as a result, several airlines canceled flights to and from Venezuela.
All right, Kasia, thank you so much. We will keep our eye on all of the geopolitical moves. That is Bloomberg's Kasia Klimashinska. On the trade front, the U.S. and China continue talks over rare earths.
Our hope is still that the deal that was made is a solid deal that they'll continue to adhere to. But don't forget that the rare earths problem is being solved rapidly by President Trump's policy, which is basically almost like a warp speed policy for rare earths. And you might have seen on TV this week that Secretary Bessent actually held a magnet made in the U.S. He said it might have been the first one that's already being produced because we recognize that we don't want to be held hostage again.
Joining us now is Bloomberg's Brendan Murray. Brendan, where are we in this whole process? Because we're reporting that, total exports to the U.S. this year to October are down more than 20%, but we did have the highest month of exports from China to the U.S. last month.
Yeah, there's still not a whole lot of clarity coming out of China on where exactly its export licensing program sits, because the U.S. And the Chinese side are supposed to sit down and figure out some of those details that they agreed to several weeks ago, to finally get some of those rare earth minerals, things like magnets, flowing again. China has set up this dual-use program for commercial purposes and also for military use. So it's very hard to distinguish sometimes which companies are in just commercial businesses or military as well. So there's a lot of fine print that needs to be looked over. And at least the U.S. side, the officials in Washington think that they can wrap this up by Thanksgiving or late September is what they've said. But we don't know yet whether they're going to be able to do that.
Yeah, and China at the G20, touting its rare earth expertise as well with its charm offensive. Meanwhile, in Europe, we obviously have officials pressing U.S. officials today. But the EU is warning Howard Lutnick, for example, against expanding the U.S. steel tariff scope. How likely is it that he might do that?
Yeah, exactly. So two U.S. officials, the U.S. Trade Representative Jamieson Greer and Commerce Secretary Howard Lutnick, are in Europe today to advance some of those talks in a similar way to the Chinese deal. All the details of the EU-U.S. framework have not been worked out, and the U.S. has in the past criticized Europe for dragging their feet. And so this is another opportunity before the end of the year for the two sides to get together and say, all right, what are our loose ends we need to tie up The European Parliament needs to move on some of the pledges that Brussels has put forth. And so the U.S. Officials who are there are going to want a status report on the concessions that the Europeans made, and the Europeans are going to want some insight into how long they're going to suffer under these extremely high steel tariffs that they're facing that are doing a fair amount of damage to the European industry.
And then, Brendan, we're obviously waiting for the Supreme Court decision on tariffs as well. The President truth socialing about it in the last few hours, saying that the full benefit of the tariffs has not yet been calculated, and he's looking forward to the Supreme Court's decision on this urgent and time-sensitive matter. There are some calculations out there, but there's a lot of conflict as well as to what the tariffs would mean, and if they were to come off, what that would mean as well for the purse, right?
Yeah, exactly. I mean, there's a huge question about the fiscal consequences of this. If that revenue stream goes away, how would the government pay its bills? What would you do with the refunds if you gave it to consumers or you gave it back to the importers? How would that affect the economy in the months ahead? There is a report that Bloomberg has out over the weekend that they really are coming up with a plan B in case they do lose that Supreme Court.
All right, Brendan, thank you so much. Another busy week in trade. That is our trade czar, Bloomberg's Brendan Murray. Turning to tech, shares of Alibaba getting a boost after a strong debut of its new AI app, Qwen. It was downloaded more than 10 million times in the week after its relaunch. Alibaba says it plans to integrate services from food delivery to travel booking, office tools, and lots more. Joining us now is Bloomberg's Neil Campling. So, Neil, I mean, ChatGPT isn't available in China anyway, so how important is it to China that Qwen gets downloaded? Does it really matter? Does it have a sort of a rivalry with ChatGPT in this regard?
Yeah, I think so. I think what's important is that the download speed, if you like, just reinforces the appetite and interest there are for AI apps globally across the world. And so you would expect in an app-led economy like China that this is certainly a boost for domestic sentiment for the AI trade. And it just goes to show, I think, that there's a huge amount of interest in AI as a thematic. And this is another positive step for China, for China's progress in that regard.
Now, it's talking about, gradually adding agentic AI features to its Taobao marketplace, for example. Is it doing that faster than US models? Is it able to, incorporate these agentic AI tools better and faster? And is it going to show us the way?
I think certainly what we have to consider that for a company like this, they have a moat. And that sort of reinforces that moat, if you like. And I think we're beginning to see similar things in the US. There's been a huge turnaround in sentiment towards Alphabet, towards Google, in the last 6 months, actually, in terms of what their AI moat is. And I think at the moment we are in that potential phase of working out which of the AI haves and AI have-nots. And that's something we're going to see coming through in adoption curves, in the use of these particular AI apps, and as it flows through, importantly, into earnings and growth for the companies that have deployed huge amounts of CapEx and hyperscaler CapEx into the AI vertical.
Well, certainly Alibaba is benefiting this morning in this morning's trade anyway. Bloomberg's Neil Campling, thank you so much for joining. Coming up, we're going to get you set up for your shortened trading week this Monday. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities. It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays, only on Bloomberg.
We're coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Jumana Versace in Vienna, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead for the week. A holiday shortened trading week, obviously. Well, we do get some data, retail sales and PPI kicking off the week's data on Tuesday. Then we still do have some stragglers on the earnings front. Earnings from Dell, HP, Best Buy and Kohl's also coming on Tuesday. And U.S. markets obviously are closed on Thursday for the Thanksgiving holiday, but you do get the UK budget on Thursday, so something to look out for if you're not too hungry. Let's put it that way. Let's take a look at where we stand, because futures are pointed higher, though we're well off our highs of the session. We have the dollar with really no movement to it. Same for the 10-year yield, but certainly the pricing for a December cut has gone up massively, about 75% chance now of a September cut. Let's take a look at some other asset classes that are reflecting that. Gold is back above $4,000 an ounce. And then we have a little softness in crude, also Bitcoin, although it did rise from its 7% low last week.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
We don't think AI is a bubble, but we want to now expand our investment universe of how to capitalize on this new technology.
You should stay risk on, but also thinking about which other parts of the market to be dipping into.
We are not hitting a wall. These things happen in a hyper-growth capex cycle.
How do we get a Europe rally? You just get volatility to calm down a little bit?
The narratives will get even scarier, but that's an even greater opportunity to be able to put capital to work.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome to Bloomberg Surveillance. Stocks trying to rally for a second straight session with futures adding to Friday's gains on hopes of a December Fed rate cut. You can see those futures up 0.2%. Oil easing amid ongoing negotiations to end the Russia-Ukraine war, with the U.S. pushing a 28-point peace plan. And all eyes now turning to a drip feed of data trickling out of the federal government post-shutdown, with retail sales and inflation data due out tomorrow. Danny, a real question here about how much they can fortify some of the bets that came into place on Friday.
Plenty to keep us busy heading into the holiday shortened week. But yes, it was last week. The kind of 3 bears come to realize it was the Fed, it was AI, and it was credit. It's hard to see how the AI and credit thing resolve itself one week. The thing that saved us at the end of last week that could continue this week is the Fed, and those dreams of a cut come to realize.
What's so interesting is, and I'm sure you've been reading all of the next full year ahead kinds of outlooks that we've been getting dripping into our inboxes. I feel bad for people trying to come up with a crystal ball, because good luck with that, but they all seem really positive. There is a buy the dip kind of moment. So where is that optimism coming from, if it isn't coming from some resolution to what you're saying of the AI and credit? Does it all sort of get predicated on the Federal Reserve?
And earnings. Everyone is pointing to earnings just to point out how strong they are, how resilient corporate America has been. April this time this year, it could not be further from the truth. So we're getting into this place again, end of 2025. Things look rosy for 2026, but again, we were very wrong at this time last year. So who's to say we're not wrong again?
We probably will be. Nonetheless, it's good to get a read of the temperature. You talk about the corporate earnings scene, and there have been a number of stories written recently about how little companies really have been impacted by tariffs, how it has sort of fallen back as some sort of issue that they really are focused on this morning. President Trump truthing, active truthing at 6 a.m. Eastern. The full benefit of tariffs has not yet been calculated, and that many of the buyers of goods and products, in order to avoid paying tariffs in the short term, stock up by purchasing far more inventory. The benefit will come to fruition. How much is this getting reintroduced in terms of an issue that could potentially come to the fore and be a note of uncertainty once again?
I gotta say, this almost feels like a warning for corporate America, saying, you stocked up and you avoided my tariffs. That's going to end soon, and you won't be able to end it. He also ends the truth talking about the Supreme Court. This is on his mind. The Supreme Court has been really negative on the IEEPA case coming before them, as he's saying, it doesn't matter what happens at the Supreme Court. This is important for us. There's a benefit for America, and corporate America, pay attention, because you too are going to have to pay.
Yeah, and we're going to be catching up with Commerce Secretary Howard Lutnick later this hour. A real question around the European-U.S. relationship, not only from a trade perspective, but also when it comes to Ukraine, Russia, and how those negotiations continue. That 28-point plan very much in focus this morning.
It's going to take a mammoth task to get that passed, to get the Europeans and the Ukrainians to agree to something like that, just because it is kind of the worst fear come to fruition, that you had a plan talked between the U.S. and Russia and kind of shoved upon Ukraine. It complicates the task of Howard Lutnick as he goes to negotiate with the Europeans.
Right now, we are seeing that optimistic tone, although just building on Friday's gains, which you can see across the board. A lift to S&P futures, an even bigger lift to NASDAQ futures, up 0.2% on the S&P. Euro gaining just about 0.25% versus the dollar, 115.42. 10-year yields just dipping by 2 basis points. Crude significantly lower. And last week, we saw crude traded on the NYMEX down 3.4% in anticipation of some of these peace negotiations between Ukraine and Russia. Coming up this hour, Katrina Dudley of Franklin Templeton as stocks look to find their footing. Marissa Adams of HSBC and why companies see increasing global trade in the years ahead. And don't miss this, U.S. Commerce Secretary Howard Lutnick with trade talks underway between the U.S. and the European Union. We begin this hour with stocks pushing higher as markets await a key week of data. Katrina Dudley of Franklin Templeton writing, we see the recent market volatility as a chance to reassess portfolios. Strategic reallocations could be especially rewarding as volatility often precedes periods of renewed growth. Katrina joins us now. Katrina, thank you so much for being here.
Great, thank you.
Seems like you fit in the category of buy the dip, and that last week and the week before's volatility was simply a buying opportunity in select areas. Am I getting that right?
Yes, you are. Have a look at the market. Have a look at how bearish and neutral the market is. It's like 68% of investors are in either that bearish or neutral camp. So you're buying these dips, but you're also buying into what we call this wall of skepticism. It's not necessarily a wall of worry, but the skepticism, and that skepticism is predicated on concerns, as Danny just said, about your AI, about private credit, and obviously what's going to happen with the Fed at their December meeting. So those 3 things are kind of weighing on investors' minds, but we actually see going into 2026 a very optimistic scenario playing out.
So we're going to get to AI and some of the questions around the debt build-out in a minute. I am curious, though, just about the state of the consumer and how important that is heading into next year to determine whether you can see this melt up, the 7,800 predictions for the S&P at the end of next year. How crucial is this season of retail spending?
I think we're going to have 3 earnings reports this week, which will give us a little bit of kind of the feel of where the consumer is at. So you want to watch those earnings reports carefully. The second thing, though, is we're watching into the Christmas season and what is happening during that holiday season in spending, because we do need to have a baseline consumer that is continuing to spend. Now, from a perspective of the tariffs, you're right. A lot of companies have forward bought inventory, so we don't think there's going to be quite as much sticker shock as people walk into retailers. And I think finally, we are talking about a shortened week from a trading perspective, but let's be clear, it's Black Friday. So we're going to have people on the ground, and we're really going to get that data so much quicker this time around. So we're going to have a real temperature check on the consumer, and I think that is going to be the underpinnings and the start of addressing some of this reticence we've seen in the market.
But we've known that the consumer has continued to spend. How do you weigh up if you get some of that strong data from Black Friday versus the AI and credit parts of the narrative? If that continues to look shaky, can the consumer kind of supplant that and win out and allow a rally to continue?
I think what's the shakiness is people are just wondering about how are we going to fund all of this AI CapEx. But let's take a look at what the real arbiter of how markets work, and it's earnings growth. And going into the third quarter, the expectations for earnings growth was 6.5%, and we came in at 15. So companies are really starting to earn. And yes, we do hear the narrative about concerns on debt leverage and AI, but I look at the breadth of where AI spending is happening. I look at a company like ourselves. We have a pristine balance sheet, and we're investing significant amounts of money into AI in various parts of our business, and we're not using leverage to do that.
Well, is it fair to argue, though, that we've at least shifted? We're not saying this is a bubble bursting, but we've at least shifted into a phase where it's cautious evaluation for AI companies. And if that's the phase that we're in now, what does that mean about how much more juice can be squeezed out of the AI trade and have these mega cap companies really support the overall market?
Look, you've gone in terms of AI from having this kind of use cases and 400 use cases what we started, we then narrowed it down, and now we're starting at that phase of we need to get those use cases into production. And that's the part of AI that you're really talking about. And I do think it's so important. It's taking use cases into production and then seeing the returns from that production. And we're now actually starting to see the ability to calculate some of those returns in areas where it was a little more difficult. So how many hours of time saved for a high, an expensive executive do we get from using an AI summarization or an agentic AI tool to generate information for them? So we're now actually starting to see calculations of time saving. We're also starting to see, calculations calculations of are there cost savings associated with this. And it's the ROI and the need for ROI that I think is going to be the next underpinning of what is a bullish AI narrative.
Meanwhile, with AI definitely on the back burner and a question of how much patience investors have, there's also a question of how much stimulus there will be pumped into the market early next year. I'm watching the headlines drop about President Trump clearly very focused on cost of living. We've seen certain tariffs rolled back. A real question of what happens if the Supreme Court overturns the existing tariffs. How much are you looking to both the Federal Reserve to cut rates, but also to some sort of fiscal impetus at the beginning of 2026 to fuel some sort of upside across the board?
I think as we look into December and I look at rate cut expectations just a few weeks ago, I mean, the market's really telling you that December we're not likely to see a cut. And the reason is that the Fed has been so much behind that. We are data dependent. And one of the unfortunate consequences of the shutdown is some of this data is going to be delayed. And the most important piece of data on the jobs front is actually going to be delayed until after that meeting. So I think that from a Fed perspective, with a degree of caution, they're likely to enter into that December meeting with the data is not here. We don't want to cut too much more, and they're going to punt that into next year. So that increases the likelihood that next year we may have a small cut. But the fact is, let's go back to the inflation number, and that's really the part of this equation we are focused on. You know, inflation continues to not be contained. And so we need to be cautious because if we don't get inflation, you're back with a 2 handle on it on a long-term basis. The ability of the Fed to cut, we think, is really hamstrung given some of the employment numbers.
So highest conviction, long stocks, short bonds, or long stocks, neutral bonds?
My conviction is continuing to be long in the market, and I think that what we keep going back to is the fact that there's skepticism. There's really this idea that we're seeing a skeptic investor, so we think it is an opportunity to add. And then finally, we like the breadth. I mean, that's the real thing that I think is even during this year has been clouded, is we went into this year saying we wanted to have breadth in the market. We started to see it, but then the Mag 7, with all of this AI rhetoric, accelerated again. And I think going into 26, our call is for a continued expansion of breadth in the market. So it's focusing on the 493 stocks, as we talk about, that really are going to drive the market.
The great hopes and dreams of the equal 493, or the equal weight S&P 500. Katrina Dudley, great to see you. Thank you so much for being here. Katrina Dudley of Franklin Templeton. We are getting some headlines reported by Politico that Trump's health care plan sees a 2-year ACA subsidy extension. Danny, really interesting to see how this narrative has flipped after the reopening of the government and a clear focus after the midterms on cost of living concerns.
I say, because it's not just health care, it's also been trying to bring down tariffs with Brazil. It's been the administration going out there and talking about the need to cut to help housing. It's a Trump and a Bessent and a Hassett. Everyone is concentrated on this issue of affordability. It's underscoring everything. And again, healthcare, this was the sticking point for reopening the government. It was a GOP that said, we'll vote on it again in December to allow the Dems to come around and vote. So it's interesting to see the president come out and say something like this. Of course, he hasn't said it, it's reporting, but allow for that 2-year extension to ACA.
Yeah, and we're expecting more details. Treasury Secretary Scott Bessent over the weekend saying that he was going to unveil some more details on healthcare. This is perhaps some of that. We'll bring more to you as we get it. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. Well, as you've been saying, Treasury Secretary Scott Bessent saying the Trump administration is planning a healthcare announcement this week. Bessent is urging Republicans to come up with a plan by January 30th to address health insurance premiums. The premiums are set to spike when subsidies expire at the end of the year. Several airlines are cancelling flights to and from Venezuela after the U.S. issued an advisory urging operators to exercise caution amid an escalating standoff between the two countries. The FAA has also reported rising interference with navigation systems in Venezuelan airspace. President Donald Trump active on social media this morning, posting on Truth Social. Despite the massive amount of money being made by the U.S. as a direct result of tariffs being charged to other countries, the full benefit has not yet been calculated. Trump also weighing in on yesterday's New York Giants football game, writing, quote, "Why did the New York football Giants not kick that field goal? Who would have done such a thing? It was crazy." Well, that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. Up next, Peace Talk Progress.
I think we've made good progress. So we're working through making some changes, getting closer to something that both Ukraine and obviously the United States are very comfortable with.
Terry Haynes of Pangea Policy joining us next. This is Bloomberg Surveillance.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance. Welcome back to Bloomberg Surveillance. Futures trying to take that lift from Friday and extend it with a little bit of a rebound with all the year ahead forecasts talking about some sort of buy the dip moment, sort of a tepid buy the dip moment. Futures up only 0.1% for the S&P. Euro gaining just a bit. 10-year yields just a touch lower, 2 basis points. Crude very much in focus with the ongoing talks between Ukraine and Russia. Crude down 0.4% today. Last week, crude traded on the NYMEX down 3.4%, some of the lowest levels since October. Under surveillance this morning, peace talk progress.
It is in my personal view that we've had probably the most productive and meaningful meeting so far, and I think we've made good progress. So we're working through making some changes, some adjustments, in the hopes of furthering narrowing the differences and getting closer to something that both Ukraine and obviously the United States are very comfortable with.
Here's the latest. U.S. and Ukrainian officials making progress on a new version of a peace plan ahead of President Trump's Thanksgiving deadline. Bloomberg's Oliver Crook joining us now from Brussels. Ollie, how close are we to some sort of agreement between the U.S. and Ukraine on a 28-point peace plan that they can get behind?
Yeah, I think at least it's going to be very difficult to see until we actually see the text of this plan and the latest iteration of it after those 24 hours of kind of frenzied negotiations over in Geneva, led by Andrei Yermak from the Ukrainian side and Marco Rubio with his whole delegation from the United States. There is apparently now a new text that is circulating. We have not yet seen it. But again, it's very hard to tell what these kind of Ukrainian and the European position is on this, because this is the sort of golden rule of diplomacy under the Trump administration, is no one can be completely candid about how they feel exactly about the text. Everyone has to say, yes, this is a great framework. We're going to work on it a little bit, and we're going to go send some input. So until we actually see the text itself, it's going to be very difficult to determine how close either side is for the Ukrainians and the Americans. And of course, it still needs to get another pass by the Russians. And that is going to be another point of this conversation that is by no means a sort of secured and done deal. But that is the sort of state of play now, 24 hours. I just spoke to some foreign ministers from the European side here, who we should say notably have been iced out of all of these discussions, yet yet again the diplomacy train leaving the station with the Europeans not aboard. The question is, how do they get their seat at the table? And I think that the main way that they can do that, the main lever they can pull, is to start to act on those Russian assets that they still hold here in Belgium. They've been bickering about it for the last couple of years, 140 billion euros that are still sitting here in the Belgian accounts, about what they're going to do with that, whether they're going to get a loan, because that will make a complete difference in terms of the calculus and the negotiating position for the Ukrainians, not having that money in the account versus having that money in the account, and basically saying, we can wage this war, the Ukrainians, for the next 2 years. We have the money. We'll make all the difference. The Europeans at this point have still failed to do that.
Ollie, just quickly here, how realistic is it that the Europeans are going to take those assets that are from Russia, co-opt them, and give them to Ukraine?
Well, this has been the perennial debate, so they wouldn't really take the assets. That is really the red line, but they have some financial engineering where they would basically put up a loan of 140 billion euros and then use the assets as sort of collateral, and they have this sort of a way of financial engineering to try to get those to the Ukrainians. But the other point we should make here, Lisa, is part of the 28-point plan, there were ideas for the American side about what to do with those Russian assets. So the real question is, are those still even on the table? I think for the Europeans, what they need to decide is, are we going to make an action on this? Are we going to take this action, or are we going to stop talking like we are a geopolitical superpower? Either the rhetoric needs to change or the behavior needs to change. Both can't go on like this in Europe.
Ollie Crook in Brussels, thank you so much for being with us and all your reporting. Joining us now, Terry Haynes of Pangea Policy. Terry, why the push before Thanksgiving, albeit with a flexible date from the Trump administration?
I think, frankly, you get to the situation where the president is tired of the lack of progress. The president has been saying since the beginning of the year that he's interested in ending the Ukraine invasion and bringing peace into that region. And now it's been what, three and a half months since the Alaska summit. Nothing's happened. As Ollie pointed out at the end of his talk, the Europeans continue to spout rhetoric without results or an additional push. As I've been saying since the Alaska summit, the two most important parties in this negotiation really aren't the United States, aren't Ukraine, aren't Russia. It's the Europeans and the Chinese. It's what are the Europeans willing to do to push, and what are the Chinese willing to let Russia do in order to end the thing. And so I think what the president's doing is trying to hotfoot Europe yet again.
So where are those lines that can be drawn, Terry, between the Europeans, between China? Where do you think things like ceding territory in Donbass, making Ukraine be okay with less troops, having them not accept NATO membership, can any of those lines be moved?
I'm sure. In what you get from the parties in the last 24, 48 hours is that none of that stuff is set in stone at all. So this is much more a matter of, the president also has said over the past few months that he looks at himself as a mediator more than anything else. He's a mediator and he's not, since he's going to be involved in a security guarantee. But at the same time, what this is about, I think, is about putting together the strongest position that the United States can agree to, that the Europeans can agree to, and the Ukrainians can agree to, and see what they can get out of Russia. I mean, the worst case scenario here is that all those parties are together. Russia, which has never endorsed this proposed deal anyway, says no to it. The best case is it's grounds for continued negotiations. So I think those are the two alternatives.
Well, Terry, you write about that setting that Thanksgiving deadline, as squishy as it is or not, is a whopper of an optics misfire. Not being able to meet that deadline, how does it in turn impact Trump's push on domestic policy?
Well, there are two things. One is that I think the president, I did criticize the U.S. Thanksgiving deadline as being bad optics, and I think the administration partially understands that, because they're willing to sacrifice it. Rubio has said that he's not interested in a hard deadline there, and that's a good thing. How it affects the domestic. That's going to depend on how unified Trump and Republicans are on domestic policy, so far they continue to be, and how unified they're going to be on foreign policy. And the signals that the Trump administration was getting from the Senate over the weekend were not positive signals on whatever the original plan was. So what you're going to see, I think, is a position that is much more indicative of Republican unity across the board, and probably a lot of Democrats will support it as well.
We're getting a lot of truths this morning from President Trump, talking about everything from tariffs to the giants. And there's a real question here going forward about what is behind some of the recent pushes and some of the impetus that he's had, whether it comes to dropping tariffs on bananas and coffee, or whether it comes to some of the push between Ukraine and Russia. How much do you see a real pivot in the Trump administration after the midterm elections to some sort of pro-consumer friendly policies, whether it's dropping tariffs or whether it's those $2,000 checks, the tariff rebates early next year?
I don't see a pivot. I see a change in emphasis to some extent. They're not going to change their policies, certainly. And and dropping tariffs on coffee, for example, isn't a pivot on tariffs. Besson's been very clear about that, and I think that's obvious. What they're doing on tariffs at root doesn't have much to do with foodstuffs. But and that's not the most important part of that policy. But what I do think they're doing is being practical and emphasizing practical results. It's a mistake to think about to Trump as a Democrat, a Republican, an ideologue of some kind. At root, I think the president is interested in solving problems. If he can solve problems without federal involvement, that's great. If he can solve problems with a lot of federal involvement, that's great. He's much more interested in solving problems, and I'm not cheerleading by saying so. I'm just talking about his orientation since day one in office. And they'll continue to do that, and that's been a more successful policy for them than the adherence of either party to ideology.
Terry Haynes of Pangea Policy, thank you so much. And have a wonderful Thanksgiving. Coming up, HSBC Regional Trade Head Marissa Adams as U.S. negotiations heat up with two major partners. You're watching Bloomberg Surveillance.
Crises, two essential crises, And for both, it's now or never, democracy and climate. And they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
It was a bruising week last week with a decline of 1.9% on the S&P 500 for the full week. Even with a rally staged on Friday, the Nasdaq was down almost 3%, led by those mega tech names, with the one exception being Alphabet, Google, with the support potentially of Berkshire Hathaway. This morning, trying to continue some sort of rebound up to 0.1% on S&P futures. Nasdaq also continuing to recover 0.4% gain, with a real question here about whether certain key names have been oversold. Russell 2000 flat. A real question here about how the U.S. consumer is going to weather through the storm. Meanwhile, if you take a look at the bond space, you can see yields slightly lower across the board as people look to a Fed that at least New York Fed President John Williams seemed ready to cut rates as soon as next month. A real question here about what this would do to the long end. 30-year yields lower. We do have a 7-year auction on Wednesday right before you head out on Thanksgiving weekend, so do not miss that excitement. Meanwhile, what you can see in the oil patch is oil continuing to lose value in the face of potentially some positive reconciliation between Ukraine and Russia, potentially those peace talks continuing between U.S. and Ukraine this morning. We are seeing crude traded on the NYMEX down 0.3% following last week's decline of some 3.4%, which brings us to under our radar this morning. U.S. and Ukraine preparing an updated version of a Russian peace plan ahead of President Trump's Thanksgiving deadline. Despite mounting contention over the 28-point proposal, both sides reporting they're advancing toward a deal.
I don't know how Ukraine does anything but use this, at least for a basis, even if it's really unsavory, because their options are kind of completely reject this, get cut off of U.S. aid, which even though a lot of U.S. aid has been pulled back, it would really hurt for them, or just kind of push it down the road and continue to fight. Can Ukraine, do they have that potential to keep fighting? I think, though, that this is kind of the worst fear for the Europeans, though, the idea that you would get the White House and Russia together deciding a plan without the Europeans, without the Ukrainians, and shoving it down Kyiv's throat. I mean, this is what happened. You had the head of the Sovereign Wealth Fund and Steve Witkoff. They developed this 28-point plan, at least that's what the reporting suggests, to the point where some of the sentences in it were like direct translations from Russian, where some of the sentences and word structure was really awkward. So it's not ideal, but it's kind of all the Ukrainians in Europe have to work with at the moment.
And it seems like at least the U.S. administration is split between Steve Witkoff on the Russian side and Marco Rubio on the Europe and Ukrainian side, who will win out. Meanwhile, Treasury Secretary Scott Bessent confirming that the Trump administration is finalizing plans to significantly reduce the costs of health care across the United States. Bessent saying an announcement to address the issue is planned for this week, which is a reason why both of us got our antenna up when we saw that Political report talking about a potential extension to the ACA subsidies.
It's interesting that both these stories have this bend of affordability and the affordability crisis to it. On one hand, yes, Trump wants to solve Ukraine because he promised he would, but you pointed out, Lisa, it's been lowering oil prices. This is also a part of affordability. After those losses in the gubernatorial races in New York City, Mamdani was just in the White House. It is a real focus from this Trump administration to find different things to try to bring affordability down. It's a careful needle to thread, though. How do you extend the ACA subsidies without embracing ACA, and that's what the conservatives in Congress don't want to see.
So some details from Politico on exactly that point. The health policy framework that the White House soon is expected to unveil, this according to Politico, would include a 2-year extension of Obamacare subsidies due to expire at the end of next month. However, there also will be new limits on eligibility, so possibly creating that kind of stick to cater to some conservative worries. Nonetheless, the fact that you point out that Mayor-elect Mamdani and President Trump met together, the discussion was about how a lot of them have the same priorities. The real question now is, how do you get there?
Exactly. Greg Ip of the Wall Street Journal was writing about this over the weekend, and I thought he was right on point. The idea is it's really easy to campaign on affordability because everybody feels it. It really hurts. How do you fix it? It's not one solution because it's food prices, it's housing, it's wages that aren't keeping up as much with inflation. There's not one policy that fixes all those things. So sure, you can campaign on it, and maybe that's what the mayor-elect will find. But actually solving it, that's incredibly difficult.
Well, maybe the Fed can do it, because that seems to be what everyone is hoping for, at least in markets. White House advisor Kevin Hassett, who is a top contender to become the next Fed chair, saying President Trump will interview finalists over the next 2 months, targeting New Year's for appointing the next head of the central bank. I thought this was already over. I thought we were already supposed to have somebody in mind. Now we're getting sort of flipped to the beginning of January. I don't understand what's taking so long, given how long the speculation has been ongoing about who will be the next
Just
Fed chair.
in August, they said they already narrowed it down to 3 candidates. I'm looking at 4 candidates up there. So apparently it's grown and shrunken and grown. Maybe the good news is that, like, the big fear of the market that we'd have a shadow Fed chair who would come in and say the opposite of whatever Powell would say and create confusion in the market. That didn't happen, right? Because they can't decide who it will be. I guess the flip side is there's confusion without that, because this is such a divided Fed. You don't need a shadow Fed chair to have opposing voices right now.
You can, though, have someone who's just sort of the poster child for it's your fault in Jay Powell. Keep him there for as long as possible, not have a new person to really take the blame, and then push that as long as you possibly can. Meanwhile, a lot of us have been talking about how trade was such a huge issue just in April, and now where is it? Where has it gone in terms of being the dominant issue on earnings? The big questions remain on the outlook for global trade, with negotiations still underway among top trading partners. HSBC publishing its Global Trade Pulse survey, finding 94% of U.S. companies believe they will increase international trade over the next 2 years. That is above the global average. Joining us now is Marissa Adams, HSBC's Europe and America's regional head of Global Trade Solutions. Marissa, can you riddle me this? We were talking about how the U.S. is becoming increasingly isolationist, and instead it is the leader when it comes to plans for international trade. Can you square the circle?
Absolutely, and thanks, Lisa, for having me on again. What's really interesting, and we've just surveyed over 6,500 companies globally, 1,000 here in the United States, and U.S. companies, as you said, are more optimistic than their global counterparts about growing international trade. 3 key reasons that we see for that. One is that I think for U.S. corporates, they've been really close to the tariffs, and particularly the policy, and so this is something that's become almost second nature to them in terms of how they look at their businesses. Secondly, they are being really innovative around how they invest in AI, in other cost efficiency type efforts, and I think because of that fact of that closeness, it's really meant that they've doubled down on it. And thirdly, what we've seen is a real sense of diversification for U.S. corporates, both in their supply lines, but also demand markets. And I think when we talk about tariffs, we often talk about supply chains, but actually it's been a great opportunity for U.S. corporates to look at other markets to sell their products. We've seen a great increase through our survey of companies looking to Australia, Japan, the European Union, perhaps markets they hadn't focused on before. So that's where we see that optimism coming from those U.S. corporates that we surveyed.
What about outside of the U.S., Marissa? We saw reports this morning about how Canada is getting closer to China, to even other areas that the U.S. is a little bit more adversarial with. How much do you see the rest of the world moving away from the United States in terms of trade?
So I think it really depends industry by industry. And so if we look at the consumer sector, certainly there is a focus for certain corridors, a huge focus on Europe to Asia, Europe to the Middle East. But the U.S. still remains the largest demand market in the world. What I would say is in certain sectors like the tech sector, healthcare, where the U.S. is a leader, there isn't really a pivot away from that. And so what we're seeing is how corporates are able to absorb those costs, look at different diversification strategies. But ultimately, the rest of the world, whilst they are looking at new corridors, will still remain incredibly dependent on the U.S., particularly because of that large consumer market, as well as the advanced sectors where very much the United States leads in.
Well, Marissa, to the point of cost, you say in your survey, 48% are revising their pricing strategies. They're absorbing the cost for now, Marissa, but going forward, what do those pricing strategies look like?
So really interesting sector by sector. If we look at the consumer sector, they have tried as much as possible to hold those costs back, but they are starting to pass those on to consumers. We've also seen that some of those consumer retail companies are actually looking to move up the value chain. Not all consumers are equal, so looking at where there's actually more opportunity perhaps in the higher end consumer where we've seen less pressure. In the industrial sector as well, we see renegotiations with suppliers in an effort to really amend those pricing terms. So that's what we're seeing across the board. I'd also want to come back to the tech sector, who have really been, and our report shows this, have been, I suppose, the most innovative and also the most aggressive in terms of their supply chain management. Some of that obviously to do with tariffs, but I'd say also in terms of the AI race is something that's driving them to really diversify across the board.
Marissa, how much of the shift do you think is permanent? And I ask because IEEPA, in the case around tariffs, is in front of the Supreme Court now. If that were to be struck down, is this a global supply chain that would be looking to get back into places like China? Or are these shifts here, now, and forever?
So I can't comment on what may or may not happen from a Supreme Court judgment, but I would say that some of these are permanent shifts. And I think some of that has actually been a result of the fact that there has been a little bit less focus on expanding new demand markets, as we mentioned. There's been this push towards supply chain resilience, and we've seen over the past 4 or 5 years reshoring or regionalization. This has accelerated it. So regardless of where the ultimate tariff landscape lands, I do think this is actually a fundamental shift, and we think about the geometry of where it goes through to of the tariff landscape, and actually a positive one, I'd say, for a lot of corporates. One thing they are also looking at is working capital, and our survey was really clear on this, that even corporates at the top end are feeling a liquidity squeeze. 1 in 5 corporates are saying that liquidity is becoming a challenge. So we're looking to see how we can support those companies, both from a bank financial perspective, but they're also looking to alternative credit to finance those supply chains and that expansion globally.
Marissa, we saw an active Truth Social feed this morning from President Trump, and one of the issues on his agenda had to do with tariffs and how a lot of companies have been front-loading all of their inventories in order to sideswipe some of these tariffs, but that certainly does seem to be wearing thin, as he said. And soon tariffs will be paid on everything they apply to without avoidance, and the amounts payable to the USA will skyrocket over and above the already historic levels of dollars received. On one hand, from the U.S. budget, that could be positive in terms of filling the coffers. For these companies, does that mean that there is likely a higher bill to have going forward than is currently being realized? In other words, the effects really have not fully been felt.
So if you look at what the tariffs have achieved so far, and to that revenue point, they have achieved revenue. U.S. Customs and Border Protection is estimated to collect approximately $200 billion in tariff revenue this year. That's $77 million at the year end of last year, so significantly larger. So those tariffs are already coming through, and a tariff is paid at the point of import. So even when goods have been front-loaded, they have paid for those goods coming through. Could we see more coming through in the future? Potentially. But I'd say also you look at the fact that not only have you had that revenue from a tariff perspective, you also had a bit of reciprocity. So if you look back pre-April 1st or April 2nd, a lot of countries actually did have higher tariffs for U.S. products going into those nations, the European Union, Japan, and as a result, as a couple examples, as a result of the tariff initiatives, a number of those tariffs have actually come down, so it's cheaper for those U.S. goods to go abroad as well. So you're seeing a real rebalancing across the board that, again, hasn't quite come through the numbers yet, but we're certainly starting to see from a sentiment perspective, but also from the trade corridor perspective as well.
Marissa, when it comes to stockpiling and inventories, for this Black Friday shopping season, how is the consumer sector set up? Have they been building up stockpiles? Have they been more reticent this time around?
It really depends on the goods. So obviously certain goods, and I think one of the best examples is a banana. It's really hard to stockpile a banana given the shelf life of it. So we have seen in certain sectors, I'd say particularly in the consumer retail, if we look in fast fashion, if we look in some of the other core goods, there was a drive to have inventory. This is not also new to the tariff regime at the moment. We saw that around potential supply chain disruptions, and what you'll see obviously in our report is that any conglomerates and consumer goods, they've actually seen that some of the increasing costs costs and shipping have been a reason that they've tried to figure out how to bring more inventory into the country sooner. What this does do is put pressure on their working capital and their cash. So the longer you're holding inventory, the longer you don't have that cash to release for new investment, for new product development. So it's been a bit of a fine balance industry by industry, but certainly there has been a desire, and I think some of this even comes from the disruptions of COVID, that you don't want to not have that inventory ready for when those sales are coming through. So it's been a balance for companies on how they balance that working capital need with also the security of having that inventory in the country ready for, as you say, the Black Friday season, as well as Christmas coming through in a few weeks.
Marissa Adams of HSBC, thank you so much for being with us, and have a wonderful weekend if you are heading out early. Right now, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Bonnie Quinn. Bonnie.
Lisa, thank you. Israel is saying it killed Hezbollah's military chief in a rare airstrike on Beirut as an almost year-old ceasefire deal with the Lebanese government wavers. The IDF says the attack killed Hezbollah's chief of general staff, the group's second in command. According to Lebanon's health ministry, the strike killed 5 people and injured 28 others. BHP is ending a fresh attempt to acquire Anglo-American. Anglo-American rejecting BHP's new approach, saying a proposed combination with Teck Resources is superior. BHP's decision comes before Anglo and Teck shareholders are scheduled to vote on their planned tie-up. That would create a company worth more than $60 billion. Shares of Novo Nordisk sinking in the pre-market after studies showed a pill version of Ozempic failed to slow the progression of Alzheimer's disease. The trial's coming as a long-shot effort to open up a new use for blockbuster obesity drugs. Novo will discontinue a planned 1-year extension of the studies. And that is your Bloomberg Brief. Lisa.
Thank you so much, Bonnie. Up next, reshaping global trade.
We've started to reshape the global trade system in a way that we think is better for America.
We must also act decisively to defend Europe's interests.
Trade talks are underway in Europe. U.S. Commerce Secretary Howard Lutnick joining us next. This is Bloomberg Surveillance.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now that these 2 fingers, top to the bottom, make the sushi shape more beautiful. 3. Then, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1 to 6.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
A lift to start the week, potentially, although just in terms of building on the rally that we saw from Friday. Futures up pretty much across the board, led by the NASDAQ, the tech giants in particular. One company I want to point out, Google. Alphabet shares up almost 3%. They have been the outperformer based on Berkshire Hathaway. But Danny, this one's coming with a little bit of additional news over the weekend.
Yeah, the information reporting that Gemini's latest update was so good that Sam Altman, the guru of AI, the one everybody looks up to, sent out a memo saying, the vibes, they are rough. That's like literally not me paraphrasing. He said it is rough vibes and revenue could collapse to 5% as they race to catch up to Google. Not what you want to hear from like the beacon of AI hope.
Yeah, the rough vibes, especially painful given the fact that they have borrowed so much money and leveraged so much of the AI ecosystem to their success, given the fact that potentially they could get beaten out by Gemini, the latest reiteration. So to me, this really goes to the question of, are we seeing the winners and the losers really playing out in markets in real time? And does it lead to an overall bet one way or another? Or are you seeing this dispersion increasingly in terms of market performance?
It's such a good point because at one point we were trading that all of the hyperscalers, all of the AI-related names, that they would all do really well. And it's because the way this market traded was an idea of super intelligence, was agentic AI, and that was the thing that was going to lift all boats. Instead, the market has started to be more discerning and saying, okay, that thing out in the future, we care less about that. What we care about now is turning profitability for AI. It's that near-term thing. It's that less like squishy future that we've all been promised and what's happening here in the now.
Right now, what you are seeing in the now, you are seeing stocks get that lift, particularly led by the NASDAQ, by big tech, by Alphabet in particular. Given some of the latest news, you are seeing a little bit of a bid into bonds, yields lower across the curve, 2s, 10s, and 30s. You are seeing just a couple basis points lower on the 10-year. Meanwhile, crude prices are lower as people look to Europe and see potentially some sort of agreement between the Ukraine and Russia, a sense that maybe oil prices could keep pushing some of the lowest levels that we've seen going back to October. A real question here about how much this is reshaping the landscape, Danny.
Yeah, I mean, lower oil prices also certainly helping for 10-year yields too. And maybe it's part of the reason that President Trump has been pushing for this before Thanksgiving. Because not only is it something he promised in the campaign that he could end very quickly, but it's also something that has an implication for inflation. It's a very multi-pronged approach that it feels like this administration is taking to say we're going to try to lower the price on coffee coming from Brazil. We're going to try to lower the price on bananas. Why not throw oil in there too if you can? And at least that's what we saw last week of a steady drop in oil prices.
And there have been these ongoing trade negotiations between Europe and the U.S., between China and the U.S., between the U.S. and the rest of the world. And a real question has been how much these new cost of living or re-emphasized cost of living concerns will hamper or potentially feature in some of these discussions in terms of where you get deals, where you don't get deals. We've seen that with respect to bananas and coffee. We've seen that with respect also to other commodities in South America and the relationship between Argentina and the United States. A question here about how much the U.S. is going to seek strategic relationships with key allies in order to solidify some of the resources that the U.S. doesn't produce at home.
It's this confusing time because it's also a Trump administration realizing that a lot of this matters for the market. And I go to the discussions with China over NVIDIA chips too. There was also some reporting that they would allow some H200 chips into China. It's this question of what's the trade-off between economic security and at the same time providing a populace with prices that aren't too high. Again, we were just talking with HSBC, the fact that a lot of companies have made different pricing plans, that they've been absorbing the prices. And then you get President Trump this morning. We've been talking about his Truth Social post warning that the stockpiling was going to end and that companies would start to be paying the tariff price. So on one hand, you have him trying to lower prices on things like coffee, on bananas. On the other hand, he's warning corporations, you're going to have to pay more. It's a push and pull right now.
Which really goes to the point that the Wall Street Journal highlighted over the weekend. We saw this article where they talked about analyzing 5,000 calls of certain earnings reports, and they found fewer and fewer references to tariffs, talking about how the actual price paid by a lot of these companies was about 12% on average, blended. About 3/4 of it was passed through to the consumers versus 100% during Trump 1.0, when there were fewer items that were really put into place. This is really important heading into holiday season when people are wondering about the elasticity, how much consumers are going to be potentially absorbing the costs and how much tolerance they'll have of them. But we have been hearing pretty positive news from a lot of retailers, which I find absolutely fascinating.
I thought one of a really good quote, just to remind everybody of in the Wall Street Journal story, was in February, where Jim Farley at Ford said that the proposals at the time would have a huge impact on our industry, with billions of dollars of industry profits wiped out. And at the time, you saw those auto companies trading really negatively. Instead, what did we get from the earnings? Everyone's buying heavy trucks. Everyone's buying really expensive cars. Things did not play out the way we expected them to. It was a really humbling year, and maybe a good reminder as everyone's putting together the 2026 forecast.
Well, and some people have noted, and I know that Eddie Ardeni is coming up, and one thing that he has talked about is that the stock market's not the economy, but kind of it is, because increasingly the stock market gains have really fueled a lot of the consumption at the upper end. And so if the stock market does decline materially, you could see the one ballast of the consumer economy lose some steam, and how problematic that could potentially be. And so you wonder at this point how much the Fed is between a rock and a hard place. On one hand, they want to support people who are on the lower end who could lose their jobs. On the other hand, you're dealing with the potential for a stock market shock that would eliminate one of the bastions of this particular economy.
That's part of the reason why last week's sell-off, I mean, I hate to use the word ironic because obviously it was very painful for a lot of people, but there was some irony behind it. Because part of the reason you got the sell-off, or at least that initial shove to get the sell-off happening, was a hawkish Fed. So you had fears that the cut's not coming. The market sells off. The market sold off badly enough that people started assuming that a cut would come, that the Fed put would come back and would rescue the market. We heard from Williams, that was the thing that saved us all. So yes, it was AI, it was credit concerns, but the real thing that's allowed the market to sell off or to recover has been expectations for a cut, and if they would save the market were it to sell off.
Meanwhile, what you are seeing is this expectation that the Fed will be able to cut rates. We are getting retail sales tomorrow from September, so a little bit stale, but nonetheless some data. We're also going to be getting PPI, a very big focus on Wednesday with the jobless claims. They are early, as well as the beige book afterwards, based on the fact that that is the reference period that a lot of people would be looking to for the jobs report. So a lot of people thinking there will be a greater emphasis on that going forward.
Does it help clear up any of the fog that Chair Powell is driving through? I don't know if it does. It's still not a lot. You can only sort of go on what we've heard from corporate America, from these little bits coming out. Again, we're also going to get delayed retail sales for September, but is that out of touch as we're about to get a big Black Friday spending period?
Coming up, we're going to be speaking with Commerce Secretary Howard Lutnick. That conversation on trade coming at the top of the hour. Also, Ed Yardeni of Yardeni Research, Lorraine Hutchinson of Bank of America, Neil Dutta of Renaissance Macro, and Noor Christiani of JP Morgan Private Bank. This is Bloomberg Surveillance.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
We just don't have a real clear picture of what's happening in the economy. Economic data has been middling.
The labor side is soft, not yet, weakening in a more scary way.
Consumer sentiment is decidedly negative.
There may be one more rate cut in the books for December.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance as we see stocks trying to make it day two of some sort of rally. Optimism of a Fed rate cut. We are seeing across the board a sense of calm after a pretty volatile 2 weeks. We do see a sense that even in bond markets, there is a bid with yields down just about 2 basis points, 4.05%. Meanwhile, crude prices lower yet again after declining almost 4% last week. Crude traded on the NYMEX down now just 0.3%. And this comes as trade talks between the U.S. and the European Union are underway in Europe. The EU sharing it doesn't expect a deal to lower tariffs on steel and other products. Joining us now from Brussels is U.S. Commerce Secretary Howard Lutnick. Secretary Lutnick, thank you so much for being with us. I want to start on your discussions with the European Union. We were hearing some noise that it doesn't necessarily include reducing steel and aluminum tariffs from 50% to 15%. Is that off the table for now?
No, what we're talking about, everything is on the table when you have such a great partner as the European Union. They have 450 million people and a $20 trillion economy. So the opportunity is great. They would like to have steel and aluminum as part of this package. And we think it is very, very important that they understand our digital companies and they reconsider their digital regulations to be more inviting to our big companies. They tend to tax our big companies and attack our big companies, and they're not getting the investment that we're getting, right? You're seeing trillions of dollars of our tech companies investing in building data centers in America, and they're not getting them here. So we're talking to them about take your foot off the regulatory statement, build those data centers in America, and in exchange for that, we'll come up with a cool steel and aluminum deal that will all be together. So it's all trading. These are trade deals. You're talking about opportunities together. Let's bring it all on the table. Let's see what we can accomplish.
Secretary Lutnick, what's the threshold in terms of reducing certain regulations in Europe on U.S. tech companies that's required in order to create some sort of framework for this deal?
Well, what the European Union does is they say, well, our digital rules, they only touch companies above a certain threshold. Of course, the only companies above those thresholds are all American companies. So come on, that can't be the rule. Let's take it off. Let's settle the outstanding cases against Google and against Microsoft and against Amazon. Let's put them behind us. Let's come up with a reasonable framework where these companies can grow and build, and then those companies will agree to invest hundreds of billions of dollars of data centers here. So the idea is if they take their foot off this regulatory framework and make it more inviting for our companies, they can get the benefit of hundreds of billions, possibly $1 trillion of investment a year. So the idea is I'm trying to convince them that winning the way Donald Trump is winning in America is the way to go. Look at America. Look at these growth rates. Come on. Do you realize our investment in AI CapEx last quarter exceeded consumer spending in America? We had 3.8% GDP growth. We're going to grow over 4%. And next year, we can grow over 5%. You got to embrace what's coming. The AI world is coming. Come on, embrace it. That's what we're here doing, trying to bring and make our deal with Europe, which was a great deal done by Donald Trump. Let's make that deal better.
Secretary Lutnick, just on that point, and point taken on what you see as the benefit to embracing that tech, but the EU over and over again has insisted that its digital laws are not up for discussion. Are you seeing any sort of relenting from them as you've been pushing it? Does it seem like they would agree to you on this point?
Well, you know, I see a lot of ministers. Remember, there's 27 countries, so some are more open-minded than others. But, you know, it's a process, which is talking to them and telling them that if they want to get that kind of investment here, they've got to change the model. So there's the carrot and the stick. You know, if you keep taxing these companies, they're not going to give you the investment. So that's my job, to sort of talk about it, help those American companies find their way clear to invest here and to grow here. And another example for them, I show them that, you know, they're ruling out clean diesel for batteries. And I try to remind them, you don't make batteries in Europe. Come on, guys. Don't make rules that harm yourself. You don't make batteries. That's not a good idea. Stick with clean diesel. Stick with combustion engines. Come on, be clever about yourselves. And just common sense. This is the common sense Trump administration here in Europe, trying to remind them that they have an amazing economy that can grow and build. We'll help them grow and build with great trade with America, but you can't be silly and sort of embrace just batteries, which you don't make in Europe. So these are the kind of conversations I have. They're pretty fun, if you ask me, because I get to point to the growth in America and say, come on, follow our lead, and we will have a bigger, better, stronger trade deal. We'll add to it. We'll add excitement to it, but you've got to come along with us.
Secretary, in terms of that big growth we've been seeing, because the AI has been contributing a lot to this American economy, and as a lot has been said about the two-speed nature of it, that on one hand, AI is doing well, and on the other hand, you have consumers that are still feeling high prices. You saw that play out through the most recent elections. There's been a renewed concentration from this Trump administration to try to reduce tariffs, especially on things like food goods. Are you and the rest of this administration, as you negotiate tariffs, specifically looking at that, trying to find tariffs to bring down to lower the cost of everyday household items for American consumers?
Exactly. The Trump administration is exactly about affordability. We are going through every line item to try to make sure we can drive affordability across the American consumer landscape. Two things, though. American earnings are growing, right? The average earnings of America, their income is growing. So as that grows and we drive prices down, you're going to feel that golden age coming. So it's the combination of earnings growing, and we are razor focused on bringing down prices. That's one of the things we're doing here today, working together to try to bring down prices on average daily products. We are working on it. The Trump administration is on it. We have a clear direction from the president. We are going to lower prices and make things more affordable.
Just to build on what Danny's
we're also going to raising income as well.
Just to build on what Danny's talking about, though, there is a feeling that there is a limit to how much tariffs can go up or how much the Trump administration may have to reduce tariffs going forward in order to address some concerns about cost of living. Has that affected your negotiations at all?
No, I think it's pretty easy. The world understands that there's give and take in these trade deals, and the benefits are clear that the Trump administration has created the greatest set of trade deals. You know, the president has talked about a $2,000 tariff dividend coming back to the American people. He got the one big beautiful bill, which is going to cut, and there's going to be significant income growth from people next year as that bill comes into play. And we are going to focus on the affordability. You saw coffee and cocoa and bananas and all those kind of things. Those prices came down. You're going to see prices continuously come down, energy prices down. Yeah. You're going to see affordability across the board here. Trump administration is going to win in affordability and income. Two sides of the coin, we're going to win.
Secretary Lutnick, there's been a huge focus, and you've been talking about how U.S. tech has definitely been the bastion of the economic growth over the past couple of years. Has the Trump administration decided whether or not to allow NVIDIA to sell the H200 chips into China? That's been a discussion and something that increasingly people are speculating about.
Well, I've seen that speculation. That kind of decision sits right on the desk of Donald Trump, right? He's got Jensen from NVIDIA, who really wants to sell those chips, and he's got a good reasons for it. There's an enormous number of other people who think that that's something that should be deeply considered. And the benefit that we have is we have Donald Trump in the Oval Office. He is going to weigh those decisions. He understands President Xi the best. He will decide whether we go forward with that or not. That's on his desk with lots of different advisors. The president loves to hear lots of different voices to make those kind of decisions, and he'll decide whether we sell those chips or not, and then we will go execute it however he decides to go forward.
There's a bigger question here, Secretary Lutnick, about what national security is. Is it more of a national security risk to give China some of these high-powered chips, or is it more of a national security risk to not have U.S. tech in China? Has your view on that changed?
Well, that's the question, exactly as well put and in front of the president, which is, do you want to sell China some chips and keep them using our tech and our tech stack? Or do you say to them, look, we're not going to sell you our best chips. We're just going to hold off on that, and we're going to compete in the AI race ourselves. So that is the question. It's in front of the president. He's going to decide. It's a really, really interesting question. He's got all the information. He's got lots and lots of experts talking to him, and he's going to decide which way he wants to go forward.
Secretary Lutnick, meanwhile, use of IEEPA for tariffs is in front of the Supreme Court. The feedback has been skepticism so far from many of the justices, conservative ones included. As this plays out, can you walk us through how you'd prioritize the different alternatives should the administration's use of tariffs via IEEPA get struck down?
So I was in the Supreme Court. I sat through the whole argument. The justices were tough on the beginning on the Department of Justice's, our person. But then they were much tougher on the other side. Much, much tougher. So I left that day feeling very confident that we and the president was going to prevail on these IEEPA tariffs. So I think, you're hearing it from me, I think I was there in the courtroom. I heard it all the way through. I didn't sort of write my story halfway through. I sat all the way through to the end. The president's going to win that case because that makes sense for him to win. But I want to remind you, the president has lots of other authorities. He has 232s, he has 301s, he has 338s, he has a whole variety, 112, 122. He's got all sorts of other powers. And tariffs are going to be part of this administration going forward, but I don't think they're going to be necessary because the president's going to win the IEEPA case in front of the Supreme Court.
Secretary Lutnick, theoretically, if the U.S. did lose that court in front of the Supreme Court in terms of IEEPA as justification, how quickly could you roll out that package of additional measures, whether it's Section 301 or Section 232?
I think many of them could come very, very quickly. I don't think most of the big deals, I don't think are in jeopardy. I think the people who did those deals, they don't want their tariffs to go up. They want their auto tariffs. That's durable. That was in a 9-0 at the Supreme Court. You have auto tariffs. You have semiconductors. You have pharmaceuticals. You have steel and aluminum. You have lumber. All of those are durable tariffs. They're not going anywhere. I think our big trade deals are here to stay the way they are now, right? And the others, I think we're going to win the case. But I think it would be relatively straightforward for the president to replace it with other means. But it's not going to be necessary because the president has used IEEPA correctly, and he's going to win that case.
Secretary Lutnick, we know you've got a really busy morning, but before we let you go, has the Supreme Court case influenced any of your discussions at all with trade partners in terms of what the potential limits are to your ability to negotiate or potentially keep some of the ongoing negotiations that have been already struck?
So that's exactly the point. I'm here in Europe. It hasn't come up at all. The fact is, we've made a great deal with Europe. They think it's important to them. It's important to us. Right? It includes semiconductors. It includes pharmaceuticals. It includes autos. These are things that are important to the European Union, and they're important. The whole trade deal is important to America. I think this deal stands. I think the question that we are negotiating is how to make the deal bigger, how to make it stronger, how to make it more inclusive, how to bring in these digital Markets Act and try to improve that for digital America, how to maybe do steel and aluminum and how to include that, how to do things bigger and better together between our two great economies. I think they're going to do it standards, make sure they take U.S. autos here, and make sure we are working together to extend both the European Union standards and American standards throughout the world. I don't feel that the IEEPA case is here at all. I think the opportunity is for us to grow and do business together. People want to have their trade deals with America, and I think these deals are durable.
U.S. Commerce Secretary Howard Lutnick, thank you so much for your time, and good luck over there in Europe. Coming up just shortly, Ed Yardeni of Yardeni Research on the Roaring '20s and how far we are into it. This is Bloomberg Surveillance.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You have high levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Good morning. Welcome back to Bloomberg Surveillance. We are seeing a bit of a lift to equity futures. You are seeing a bit of a bid into bonds. It is the glorious reprisal from what we saw maybe last week where everything sold off. S&P futures lower by 0.3%. Bonds actually did catch a bid last week. I should correct myself there. And they are continuing to decline. Yields lower now by 2 basis points to 4.05%. Stocks pushing higher to start the shortened holiday week. Eddie Ardeni of Ardeni Research sees a continuation of this year's remarkable earnings strength into 2026. He writes, there are some legitimate concerns regarding AI-related companies' accounting practices that call into question the quality of S&P 500 earnings more generally. Ed joins us now for more. Ed, wonderful to see you. Thank you so much for being here. So you have been the one dubbing this period the Roaring '20s, yes. And now you seem to be at least a little bit less positive than some other people. Am I getting that right?
Well, yeah, I think for now, the market has had one heck of a move here, and it has been the Roaring 2020s so far. I think we're seeing some profit taking. I think we're seeing some questioning of the AI situation. People have called it an AI bubble, which is great. The more that people worry about that being a bubble, the more that they slowly take some air out of it, the better. The worst case scenario would be kind of like 1999, when just about nobody saw it as a bubble and everybody was very excited about it. So having some caution actually is a positive development.
Can you see the overall S&P 500 continue to mount this kind of double-digit gains that people are expecting without the participation of big tech as the main driver?
Well, I think the answer is it's possible. And we've been waiting for the S&P 493. You got the Magnificent Seven, and then I call them the impressive 493. Nobody's been impressed by them because the Magnificent Seven have kind of hogged all the oxygen in the room. But I think it's time for the 493 to really show off, because they're the ones that are going to benefit from the productivity gains that are available, not just from AI, but from automation, robotics, humanoids, and autonomous driving. All these technologies, they're going to be impacting the productivity of those kind of companies. And so I think that's where the earnings are going to really shine. People have been saying that there's been no earnings outside of the Magnificent Seven when you look at the S&P 500. That's not true at all. The rest of the companies have actually done quite well. Just by comparison, they haven't. So, yeah, I think, the Magnificent Seven are right now selling at a 27 times forward PE. The rest of the market's selling for about 19 to 20 forward PE. I think you could have a situation where the Magnificent Seven become a little less valuable and the rest of the market becomes more valuable.
Isn't it a problem, though, that part of the thesis of why the rest of the market becomes valuable is because of the contribution of AI and the productivity behind it?
Absolutely.
Doesn't it make everything just incredibly correlated, where you think you've hit out on a name that has nothing to do with AI, but all of a sudden Caterpillar's like, oh, a bunch of our earnings are coming from AI, and now they sell off with the rest of the market?
Look, at the end of the day, I think it's going to be up to quarterly earnings reports. The quarterly earnings reports we've had this year have been phenomenal. I mean, we went into these earnings reports first, second, third quarter with kind of mid-single-digit expectations for the growth rate on a year-over-year basis. Instead, it was double that. I mean, we had 10 to 15%. The third quarter's coming in at 14% on a year-over-year basis, and I think we're going to continue to see that earnings surprises because of the impact of technology and boosting productivity. And yeah, I'm very concerned about the slowdown in payroll employment, but on the other hand, GDP continues to be very strong. So the implication is, and I think we're going to see it in the numbers now that the government's open and they do some collecting of data, I think we're going to see some very powerful productivity numbers.
Can we get back to another set of math that Lisa started this on, this idea of depreciation, depreciating assets within these companies and the costs with it? Yeah. The issue that Michael Burry and you've raised this too, this idea that the life cycle of tech is becoming shorter. Yeah. So these assets are depreciating faster, costs rack up quicker, and it's not something that the companies have accounted for in their own figures.
Correct.
How do you sort of solve that equation?
Well, the companies themselves really don't know. I mean, this is one of the big known unknowns. And that is, how long are these chips going to be valuable? How long are they going to work? Some of the NVIDIA chips are pretty hot, and they kind of self-destruct after a while. But look, I think the important thing to recall is that a couple of years ago, when you looked at the number of data centers in the United States, there were 4,000 of them. In other words, this is not like a new, surge in data centers. And the reason that we're building all these data centers is because we need the capacity. I'm using AI all day as a research assistant. And everybody I talk to is looking to see how they can use AI. But there's lots of other technologies that are being used now to increase productivity because we have to, because there's a shortage of labor for all sorts of different reasons.
So that's one side of it, of how useful is this stuff? Can you get the return on it? The other side, do funding markets remain open for these companies to continue to tap, to do the incredible amount of spending that they're doing? You have seen some nerves there, be it in CDS spreads of Oracle, be it in the ability of private credit players to keep funding it if you have wobbles in their publicly traded stocks. Is that a concern for you, that credit markets don't absorb some of the spending as well as they have been?
It's a concern, but at the same time, I'm glad to see that the markets are disciplining the whole process. I mean, again, the fact that people are so nervous about an AI bubble, the fact that some of these risk spreads for the bonds being issued by those who are trying to raise money for AI, the fact that the market is onto the notion that, let's not overdo it, that's a good thing. That's a discipline on the fact that we might be prone to excess, but maybe the markets will diminish that.
Does that mean that the melt-up risk, which you put it at 30% probability earlier, is a lot lower now?
Yeah, actually, a week ago, I lowered it to 15% because I think the fact that the hype is sort of, let's put it this way, that the air is coming out of the bubble rather than the bubble bursting is, in my mind, a very positive development.
Do you think that the sell-off that we've seen actually gives the Fed more room to cut rates? Because there is already that skepticism embedded in that AI trade that goes beyond just, cheap money, let's go into it.
Yeah, well, I've for the past year, I've been opposed to the Fed cutting rates, but they just won't listen to me. Last year, when they cut rates by 100 basis points from September to December, I said, you got to be careful what you're doing here because the bond market may not agree with you. And sure enough, bond yields went up 100 basis points. So did they really lower interest rates when, in fact, the bond yield, which probably matters a lot more than the Fed funds rate, and the same thing seems to be happening now, though, we are down to 4%, but the Fed has already cut twice. And I think a third might rattle the bond vigilantes again.
You think they exist? They still exist.
They're still out there.
They seem pretty dead right now.
Well, they're not the only players. There's certainly central banks, there's the Treasury, there's this new invention, stablecoin, is creating a lot of demand for Treasury bills, and certainly that's an important development. But all I'm saying is, at the end of the day, when we're looking at the 10-year in terms of its relevance to the economy, a lot of it has to do with the mortgage rate. And the mortgage rate really hasn't come down much in the face of what the Fed has done, namely cutting rates by 150 basis points. As a matter of fact, Fed Chair Powell said, hey, look, we've already done 150 basis points. Let's give it a shot here, a chance, before we cut again. But then again, you're getting a mixed message from the Fed officials.
Yeah, and from potentially political influence, although some people would argue about how much that's on the table. Ed Yardeni, would love to see you again sometime soon. Ed Yardeni of Yardeni Research, wonderful to catch up with you. This is Bloomberg Surveillance.
to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can't be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
We're seeing a bit of a lift to start this week after last week ended on a more positive note after a pretty brutal thrashing, particularly of big tech. What you are seeing today is that lift build as the session grows older. Futures up 0.5%, 66.52. You are seeing a bit of dollar weakness as people gauge what's going on. The euro 115.43. A bid into bonds, yields lower by about 2 basis points, 4.05%. Crude lower. What we are focusing on is also Alphabet, given the fact that we heard that report over the weekend about OpenAI and potentially a catch-up coming from Alphabet with Google's Gemini, really posing, Danny, some significant competition.
Yeah, the information reporting that Gemini has been so positively received that Sam Altman wrote a memo to his staff warning of, in his words, rough vibes, and saying that it could lead to a potential revenue growth collapse to 5%. It's an issue because even if AI is this beacon of hope, if not all companies are going to be benefiting from it, what does it mean with OpenAI's commitments to spend over $1 trillion? If all of a sudden they're thinking, I don't know, maybe we don't spend as much because this is getting more difficult and we're not going to have as many users as we think, that enough could unravel some of the AI trade, even if the promise is there with Gemini, for example.
The weak hands, how much are all of the AI entire ecosystem really leveraged to a couple of hands that could potentially be a lot weaker, considering that they have less revenue, let alone profitability, to really fortify some of those bets? It's the reason why this morning we see Amazon potentially having more data center capacity than people previously believed. There is this feeling of data capacity hoarding in order to prevent your competitors from getting control over it. And how much is that fueling some of the arrangements that we've been seeing?
I love that aspect to it. It also sort of echoes when Meta was hiring every single AI expert that they could, not necessarily because they needed all of them, but almost to say, well, we own all the AI geniuses. Sorry, Apple, you're not getting any of these. It's that sort of arms race, but at what point does it go too far? And that's a question the market has started to address.
I'm going to dress up like an AI genius for Thanksgiving. And meanwhile, on our radar this morning, Treasury Secretary Scott Bessent saying the U.S. is not at risk of a recession in 2026. Bessent acknowledging that some parts of the economy are under stress, including the housing market, and claiming that President Trump's tariffs are not impacting inflation. Elsewhere, New York City Mayor-elect Zoran Mamdani saying he's open to alternatives to increasing taxes on the wealthy to fund his proposals.
I believe that these are two tax proposals that make sense, increasing the personal income taxes on New Yorkers making $1 million or more by just 2%, increasing the top corporate tax rate to match that of New Jersey. More important than how we fund something is that we fund something. And if there are additional or alternate revenue streams to do so, I will accept them and I will celebrate them.
Mamdani's comments coming after his meeting with President Trump at the White House on Friday. And Danny, that was not the meeting a lot of people expected. They were expecting fireworks, pugilistic kind of displays of machismo, but instead it was a love fest with one person saying, oh, you can call me a fascist, and the other person's like, yeah, I'm a communist. And essentially, you know, we love each other because we're both New York fans.
And it was literally like a get out of jail free card. Like, no, don't answer the question on fascism. And then he does an interview after that, Mamdani, the mayor-elect, saying, yeah, well, Trump said that I called him a fascist. Like, my opinions haven't changed. It's, okay, something we've seen play out. If you go in person to the president, the opinions tend to be different as if you haven't been, but it also underscores the fact that they're both trying to address affordability. They want the American populace to see them tackling it. Of course, they both come from very different sides. Not all of it is coming from different sides. Taxes certainly is one of them, but they have the same goal. So on that front, they had a big agreement.
Yeah, and they both have very strong presences on social media, and this only added to that. Meanwhile, the White House preparing a contingency plan if the Supreme Court strikes down President Trump's sweeping tariff powers. The president posting on social media earlier this morning that the full benefit of his tariff policies would take effect soon. And we spoke with Commerce Secretary Howard Lutnick earlier this morning about some of the ongoing proposals, a real question about how much more is going to go into effect and what could potentially happen should these be overturned.
He really talked about the EU's digital taxes and digital scrutiny, saying that this is the thing that they need to come around to. He seemed positive, saying essentially, look at the wealth of America and how much AI has done for us, and why don't you want that, Europe? They don't want that because this is where they really can have sovereignty. Are there rules around digital companies? I don't think Europe is just going to give that up. Maybe it sees some of the lines being moved if it means they can get relief on tariffs, things like steel that they really want. But again, this is a question of sovereignty for them. It is not something they're just going to cede to the Trump administration.
And it's not a new debate, and it's not a new negotiation. Let's turn to the Federal Reserve. Wall Street watching for a slew of data this week, hoping for a signal on future rate policy ahead of the Fed's next meeting. Neil Dutta of RedMac writing, odds for December should be sub 50. That daily is saying December is an open question, means it's probably kaput. No December means no January. Neil joins us now. He is grumpy. He wants the rate cuts. He doesn't see them. Why do you put this off so much, given the fact that New York Fed President John Williams seemed to really open the door to a rate cut next month, and we do have that closeness between him and Fed Chair Jay Powell?
Well, you're doing me not a solid there. I mean, I wrote that before Williams came out.
Let's do this again. Neil Dutta is positive for a December rate cut because of John Williams.
I think the sort of, I think the bigger problem is that we're even debating whether it is or isn't, really, right? I mean, if they don't go in December, maybe they wait for the data. We know that the employment and the inflation numbers come out actually after the Fed meeting, so perhaps they come up with some consensus where they pause, they want to see the data, then they go in January. I mean, that's possible too. But to me, the bigger issue is what's really there to debate? And why are we having this debate? I mean, unemployment has been climbing. It's actually been rising for 3 consecutive months. It wasn't, we were very close to going to 4.5%. Everything that's come out since September, in October, we saw that WAR notices, the worker adjustment retraining notices, rose. We saw layoff announcements rise. So what makes anyone think that unemployment is going to stabilize here? My sense is that it's much easier to tell a story for why unemployment is going up than why inflation is going to reaccelerate. And so the fact that we're having this big debate about whether or not we can go 25 in December or January, to me is a bit ridiculous. I mean, it almost feels like, I don't want to be fatalistic, but it does feel like the train has already kind of left the station. I mean, even if they are able to cobble together a consensus, Lisa, the likelihood is that that's probably going to be it. They're not going to signal a path of easing going forward.
So the train has left the station implies that you see a greater chance of recession. Is that correct?
I do.
So for next year, you see actually a greater chance of recession next year, which is completely counter what we're hearing from every company and every Wall Street strategist, which is often how it happens, but that's what you see.
Yeah, I do. I mean, I think if you go like sort of industry by industry, like what area do you think is going to look better going forward? I mean, with respect to employment, right? I mean, so, I've talked about residential construction. Home builders are sitting on more unsold inventory. So which way do we think residential construction jobs will go? The freight sector is in recession. It's in recession going into the holidays. As capacity comes out of the freight industry, which way do we think trucking and rail and employment is going to go? What about restaurants? I mean, if you pull up a chart of restaurants, I mean, their margins are being squeezed. They're telling us that they're holding the line on price. If their margins are being squeezed, which way do we think employment's going to go for them? Look at lumber prices, oil prices. If you're a sawmill, can you actually make a profit with lumber prices where they are? Probably not. So if you're in the woods product employment, which way do we think that's going? How about people working on oil rigs? Also probably down. So, there's a lot of this sort of myopic fixation on initial jobless claims. And, initial claims have to go up. We haven't seen initial claims. Well, initial claims aren't really a leading indicator, right? They're just an indicator that comes out every week. What we know about how businesses behave is they shut hiring off first. They've done that. And then they lay people off as a last resort. And so if you have to ask me, like, which is the direction of layoffs over the next 6 to 12 months, my argument would be it's probably higher.
This is an economy, though, that defied a lot of the worst expectations for a downturn after COVID, and a lot of it was attributed to the government giving out more stimulus. If we don't get cuts from the Fed, but what we do get is Washington, D.C. handing out $2,000 tariff rebate checks. You get tax rebates, too, from the One Big Beautiful Bill. Could that be enough to save a recession from this economy?
Well, I mean, I've never in my career been able to figure out a way to make tax refunds useful in terms of predicting what happens with consumption, because it doesn't actually change permanent income. That's what ultimately drives consumer spending. So to me, it's probable that people save the refunds that they get because they're worried about job loss, right? So to me, it's that income constraint that matters, that's more binding than whatever people get with the refunds. I don't really have an opinion on $2,000 rebates. Treasury Secretary Bessent has said that they probably need Congress for that. So, the president can say what he wants, but ultimately, to me, this is really about monetary policy being too tight, and that's kind of setting in motion a slowing in the economy.
So then there's a question about the 5 speakers, voting speakers we've heard from that don't want cuts. What do they see that you don't? Lisa pointed to one of the possibilities, corporate America is really strong. Another possibility, and this was raised a few weeks ago by Evercore, was that it is FOMC members digging their heels in ahead of what they see as a Trump-appointed chair who will want cuts, and them setting the groundwork now for fighting back against that. Do you think there is some politics to play behind what these officials are saying?
I mean, it's possible, but you take them at their word. I mean, their basic argument seems to be that inflation has been high for a while, and that as a result, that expectations can become unanchored. I really see very little evidence for that. I mean, if you look at business inflation expectations just from the Atlanta Fed released last week, I mean, it's basically where it was last year, even before all the tariffs started going. So if the price setters in the economy don't see higher inflation expectations, it's really challenging to see where it comes from.
Neil, I'm old enough to remember when I was feeling bearish and you were yelling at me, like, things are going so well. What are you talking about? And now I'm saying, companies are doing really well, and you're saying it's not going to work. The train has left the station without rate cuts. When was the last time you were so negative on the state of the economy?
I mean, I'm a pretty young guy, so it's been a while. I mean, probably when I started my career, I worked for someone who was very bearish. So maybe that was the last time, like back in 2006 maybe. But yeah, I mean, look, you can't say I'm a perma anything, right? So yeah, I mean, I think that there's more reasons to be cautious than bullish right now. That's sort of the way I'm looking at it.
Going forward, who do you expect the next Fed chair to be? Evidently, we were supposed to get a pick now, then it was going to be next month, now evidently January. Is there an indication to you, based on the timeline, that keeps getting moved, depending on the moment?
I think the longer the process goes on, the more likely it is that Secretary Bessent becomes the Fed chair. That's my view. I mean, I just think that what do we know? I mean, we know that President Trump wants Secretary. Could you imagine being one of these other people, like Kevin Hassett? Like, it's so obvious that you're number 2, because every chance he gets to talk about the Fed chair, he's like, well, I wish this guy over here would do it, and he's pointing to Scott Bessent.
And so, number 1 doesn't want it.
Right, and he keeps saying no. I don't know. I mean, to me, it's almost like a bet on, do you think that President Trump gets to make his personnel decisions or not? And if you do, then you have to assume that Secretary Bessent is the one that takes the seat. The longer the process goes on, I think the more likely it is he's the one in that seat.
Neil Dutta, always wonderful to catch up with you. Neil Dutta, a Renaissance macro here, and he is not always bearish, just to be very clear. Usually that's my moniker. And this time around, not feeling very positive. Right now, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Bonnie Quinn. Bonnie.
Lisa, thank you. Billionaire hedge fund manager Bill Ackman is getting ready to seek an IPO for Pershing Square next year. The Financial Times reporting Ackman is speaking with advisors and has informed some investors that a listing may come as soon as the first quarter. Alibaba shares surging in pre-market trading. This after the company said its Pen AI tool hit 10 million downloads in the first week after becoming publicly available. Alibaba plans to add agentic AI, shopping and other capabilities to the app and launch it overseas. Wicked for Good scoring the second best opening weekend sales of the year. The second film in a two-part series based on the Broadway musical brought in $150 million in ticket sales in its first weekend in U.S. theaters. The spike in ticket sales was welcome relief for theaters, ending a recent box office drought that included the worst Halloween weekend for cinemas in 31 years. And that is your Bloomberg Brief. Lisa.
Thank you so much, Bonnie. Up next, the AI revolution.
There is some AI fatigue. You cannot get away from the comparisons to the late 1990s.
The narratives will get even scarier, but that's an even greater opportunity to be able to put capital to work.
Noor Christiani of JP Morgan Private Bank joins us next. This is Bloomberg Surveillance.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Coming into a week where we have a lot going on, even though it is a holiday-shortened week. Tomorrow we've got retail sales as well as PPI. On Wednesday we get the Beige Book, which will actually carry greater import due to the dearth of other data, as well as initial jobless claims. which comes at a key survey week. So a lot of people digging into that right now. You are seeing that rally continue to build. 0.5% gain on S&P futures. You are seeing a bid into bonds continue to develop as the session grows older. 10-year yields now down 3 basis points to 4.04%. Crude rebounding. We'll take a look at what's going on with those negotiations between Ukraine and Russia and whether there was something to spur that. Under surveillance this morning, the AI revolution.
There is some AI fatigue. You cannot get away from the comparisons to the late 1990s.
The narratives will get even scarier, but that's an even greater opportunity to be able to put capital to work.
We don't think AI is a bubble. The technology is not a bubble.
The market is, is still going to keep wanting some kind of proof.
Here's the latest. The sustainability of the AI spending boom whipsawing tech stocks as bubble fears reemerge. Noor Christiani of JP Morgan Private Bank writing this. Simply bringing modernizing energy infrastructure to meet current demand needs would entail trillions of dollars of investments, which means we are a very long way from an energy capex bubble. Noor joins us now. Noor, thank you so much for being with us.
No, thank you for having me.
It's fascinating to take a look not just at the big tech names in the United States, but the ramifications of the entire ecosystem to build out around AI and what opportunities there may be around that. How does Latin America fit into this in a way that you're seeing with both clients as well as just in terms of the international landscape?
I think that you point out a really important thing. So one of the things that we have been discussing the most with clients is that we are still positive on the AI trend theme, that it underlines one of our key pillars in the 2026 outlook that we published only last week. But it goes beyond just the traditional Mag 7. And that is something that we want to make sure that our clients see. The ramifications of AI go way beyond just the hyperscalers or a certain set of companies, both in the private and the public space. They also permeate into sectors such as infrastructure or industries such as energy. And in that specific role is that where Latin America comes in. Latin America has an amazing wealth of natural resources. And we have clearly seen it being more and more in the news, given precisely the opportunity not only for these companies, but for countries in general, developed countries, to also leverage some of the opportunities on trading those natural resources with the countries in the region.
And this is clearly something that I'm hearing more from a lot of investors. We're hearing from portfolio managers who are looking to other places. I wonder how much this is complicated by the deal that the U.S. made with Argentina, a question of who's the next Argentina? Who is the next region or country that is going to create some sort of alliance with either the U.S. or with China and get some incoming capital?
I don't really know if we can say that it's going to be the next Argentina or not. I think it's the region as a whole. The opportunities that underline the potential for the region are massive. 40% of the world's global copper reserves lie in Latin America. Only Chile itself represents 27% of those resources. Argentina together, number 1 and number 3 in terms of lithium resources. Venezuela has the largest oil reserves in the world. Still, Brazil, for example, is the country with the largest producer in Latin America. Agricultural commodities, everything, silver in Mexico as well, and Peru. So any important resource for this transformation, especially on the industrial energy side, lies in Latin America. So it goes beyond just who's the next Argentina. There can be a renaissance for the entire region, especially as we move into greater openness towards private investments, towards developing not only drawing in external or foreign direct investment into a region, but also developing the internal investment sources.
It does feel like there's two sides to this, because one, it's an incredible opportunity, right, for all these precious metals and other industrial metals, which already had uses, now being fueled into a new AI economy. But what does it mean then to find true diversification for portfolios if increasingly different parts of the economy are being fueled by AI?
At the end of the day, the way that we think about, let me take you a step back. The way that we think about internet right now is everything. You cannot do anything without internet. Certainly my children would definitely not survive without their iPads if we went anywhere, right? So I think we are thinking right now about AI sort of in a box. So this is the AI theme. But in reality, it will eventually permeate into every single sector in the economy. So it goes beyond, as I said in the beginning, it goes beyond just thinking about AI in these sort of 4 little walls, and understanding that it is a technology that is going to disrupt every single process of our day-to-day livelihoods, from the way that we get coffee, from the way that we interact with each other, from the way that we do online shopping. So I think that when we understand that, diversification comes naturally into our portfolios. Right now, what we're talking about, and it's part of our outlook again, is how can you leverage this team through the private side, through the public side, but also expanding into other areas such as barbelling, to some extent, the risk of exploring new ventures on the private side in your portfolio with something in which you have a little bit more visibility, such as infrastructure and real assets.
Have any of the recent high-profile blow-ups in private credit markets, as idiosyncratic as they might be, has that stopped clients or at least sort of hamstrung some of the interest that clients have had in private assets?
Great question. I don't think that it has hamstrung interest. I think that it's definitely raising doubts. I think that it's definitely raising some question marks over there in the back of their minds. One of the questions that we get the most often is precisely the risks around private credit and all the scandals that we've heard of so far. We don't think that that's the case. On the contrary, we believe that there's value and the opportunity for AI to continue to finance expansion through not only private markets, but public markets as well, is massive. Our colleagues in the investment bank, for example, have called for $5 trillion of spare leverage capacity in markets to finance this expansion, which is exactly the number that we foresee in the next few years for infrastructure developments. So there's definitely some signs of exuberance, but we're not at a point in which that would be our biggest concern now.
How much does the opportunity in Latin America really hinge on the elections that are coming up also? This idea of creating a little bit more fiscal discipline in order to create an investing framework that seems a little bit more reliable.
Latin America has had natural resources forever. Mexico has had the border since it was Mexico, pretty much. So the argument about these being powerful for Latin America could have been the same argument that we were talking about 20, 30, 50 years ago. The juncture in which we're right now, I think that you put the nail on you hit the nail, the head.
Nail on the head.
Nail on the head.
I always get everything
yes,
wrong.
Exactly. No, there you go. So why? Because we're coming into a key election year for the region. And beyond just elections have always been a thing for Latin America and for emerging markets in general. What we are seeing right now is the possibility of the pendulum swinging from the extreme left to maybe something a little bit more center-right, or at least open to private investments. And that could be something that is extremely powerful for the region in catapulting the potential that we see. We've already seen it happen in Bolivia, for example. That was a surprise. We've already seen it happen in Ecuador. We saw it happen as well in Argentina. So those are examples that tell us that there is some openness to this potential that could, together in the mix, finally bring that possibility to fruition.
Nora Cristiania, thank you so much for being with us today. Nora Cristiania of JP Morgan Private Bank. Right now, we're looking at a market that is feeling a lift as people reprise their hopes and dreams of AI. Coming up next hour, we'll speak about that $7,800 price target that so many different investors have for next year's S&P targets. And Mike Wilson of Morgan Stanley is one of them. Lorraine Hutchinson also joining us of Bank of America, James Egoloff of BNP Paribas, and Osan Kwan of Wells Fargo. This is Bloomberg Surveillance. Good morning.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety, and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bringing you up to them in the news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
We don't think AI is a bubble, but we want to now expand our investment universe of how to capitalize on this new technology.
You should stay risk on, but also thinking about which other parts of the market to be dipping into.
We are not hitting a wall. These things happen in a hyper-growth capex cycle.
How do we get a year in rally? You just get volatility to calm down a little bit?
The narratives will get even scarier, but that's an even greater opportunity to be able to put capital to work.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. Futures building on Friday's gains with hopes of a Fed rate cut gaining steam. Traders focusing on the U.S. consumer to power equities higher in 2026 with a key tell in this week's kickoff to holiday shopping plus retail sales out tomorrow from September. The year ahead outlooks are pouring in and there's a clear message. Danny, it is to buy the dip.
It's hard to look at last week and the week before and say that this is anything other than the machines taking over, that it was systematic strategies, just looking at how much the momentum trade was being killed. And I think that's given people a lot of confidence to say, this is a sell-off you want to buy. But market narratives are incredibly important. So it's not only who was doing the selling, but it's has the narrative changed? Are the gurus and Sam Altman and Mark Zuckerberg, are we going to look at them differently and not take their grand prognostications of where AI goes at face value anymore? Are we becoming more discerning? So sure, maybe we can go higher, but maybe not at the speed that we were.
There's a sense that there needs to be some reconciliation between the AI boom and the rest of the world. The idea that consumers have been feeling the pinch and that the economic data has been coming in, raising questions about the state and the resilience of the U.S. consumer. If you do see a participation with the consumer actually feeling better, how much does that fuel this idea? It's not just AI, but the adopters that are really going to drive this rally higher.
I think that's what you would need to get someone like Anil Dutta to get on board with the idea that this economy is okay. Because it's fascinating to be able to have this conversation. I mean, we heard it from Secretary Lutnick of how AI is powering this economy. And on the same time, have an economist come on and say, if the Fed doesn't cut, we're going to be in a recession. It is quite remarkable to come away with those two very different views from the very same economy.
Yeah, and just to give you a sense of where we're focused on, and that particular economist is saying the train's already left the station. This week, we are looking for retail sales and PPI tomorrow. We've got the Beige Book coming out on Wednesday, as well as jobless claims. Look out for that. Right now, you are seeing that lift continue in markets after last week really ended with a more positive note, yet still down about 3% for the NASDAQ this morning, up 0.6% on S&P futures, building on gains at session highs. You are seeing a bid into bonds, although we're tracing some of the earlier fervor, 4.05%. And crude has rebounded after being lower earlier in the session. Coming up this hour, Mike Wilson of Morgan Stanley with stocks edging higher. Lorraine Hutchinson of Bank of America on the state of the consumer heading into the holiday shopping season. And James Egelhoff of BNP Paribas as traders await the release of key economic data, albeit highly stale. We begin this hour with stocks eyeing a rebound as we head into that shortened Thanksgiving trading weekend. The team at Morgan Stanley releasing their outlook for 2026, writing, "We raise our S&P 500 price target to 7,800, driven by strong earnings growth. We believe that we're in the midst of a new bull market and earnings cycle, especially for many of the lagging areas." Mike Wilson of Morgan Stanley joins now. Wonderful to see you, Mike.
Thanks, Lisa.
So let's start on the optimism. You have been optimistic for quite a while, talking about the rotation into the adopters, not just the AI tech behemoths. Why are you getting even more optimistic as the year goes on?
Well, I would say it's just a changing, it's an evolving narrative we've had, which is that we think that, the policy is still misunderstood, right? That they essentially came in this year, did the growth negative stuff first, and now we're looking at the growth positive stuff. I'm not worried about the economy. What I am a little bit worried about is that the Fed is kind of dragging its feet. So I would agree with Neil's comment, like the Fed needs to cut, but not to save the economy, but to see the full rotation into these lagging parts of the market, the interest rate sensitive parts of the market, which is really our story for 2028 or 2026. We think the 7,800 is dependent on the earnings cycle broadening out.
So there's a lot to unpack there. I want to start with you agreeing with Neil, because Neil had a pretty negative assessment of the overall economy, saying he suspects the train's already left the station with respect to the pain from the Fed keeping rates where they are for as long as they have, and that we could be looking at a recession. You seem to disagree on that. So where's the nuance here? What's the difference between preventing recession and really allowing the rotation into some of these other names?
Yeah, I mean, I think our view has been differentiated, that we think we have had a recession. We went through a rolling recession in the private economy. So I would agree with Neil that the economy is weak, but it's rebalancing now towards the private economy. I mean, many parts of the economy have been suffering: housing, all the interest rates, durable goods, consumer goods, which have been under pressure, commodity sectors, transportation. There's been no volume going through the economy, no velocity in the real economy. And the way that the administration is changing the policy, in addition to the Fed now cutting hopefully next year, you'll see the private economy now doing much better, the government no longer crowding out these areas that have been under pressure. But we do need to get that trend. The Fed needs to do more. The Fed needs to cut rates, and they need to probably provide some balance sheet.
I'd say one of the things that Neil talked about was his fear that even if they cut in December, they're not going to lay out a path for continuous cuts. And Fed Governor Waller seemingly enforcing that, speaking on Fox moments ago, saying you might see more of a meeting-by-meeting approach once you get to January. If you do get that posturing from the Fed that maybe they cut in December, but it's a meeting-by-meeting approach, they're not necessarily going to cut in every single one, is that enough to allow for that rotation, or do you need a clear path of cuts to get it?
No, we need the latter, and I think we're going to get there one of two ways. Either the data, the labor data is going to basically support our view, or my view, that we had a rate of change trough in the labor markets in April, okay, and so that data then will allow the Fed to cut more or signal they're going to cut more. The second one is that we get more financial stress, okay? That's what's been going on. We think the market, we wrote about this back in September, early October. We thought the market was going to have a 10 to 15% correction because the liquidity wasn't there, that the balance sheet was tightening. And we think there's evidence that correction is well advanced, okay? All the momentum stocks, crypto obviously is the topic of the day, down 30% for Bitcoin. I mean, these things are telling you that the market is worried about this liquidity. So as usual, the markets will dictate the Fed's timing. So if the market really wants, and look, markets are like children, right? They'll have a little temper tantrum, and then the Fed will respond to that. So is this like a mini 2018 in that regard, right? You have that, you kind of go into end of the year, and then there's stress in some of these financial metrics that the Fed cares about, and then they provide more balance sheets. So we think there's a sort of this tug of war going back and forth, but ultimately it resolves in a more dovish policy path.
On the point of crypto, a lot was made, I mean, even from Bill Ackman basically saying things that he thought weren't correlated all of a sudden were, that Fannie and Freddie were selling off because the people who were buying crypto were the same people in those names. Did last week and the week before's episode, given how much crypto falls, show some vulnerability within the market structure, within who owns these stocks and how fragile and weak some of those hands are?
I don't think it's showing anything new. I think this has been there whole time, right? I mean, I don't, people waking up to the idea that liquidity is important for the market. I mean, obviously, I don't know what they're doing. I mean, like, that's kind of crazy. I mean, of course liquidity matters. I mean, liquidity is, and especially the last 10 years or so. I think that the hard part about liquidity is it's sort of this sort of nebulous thing. It's hard to measure. And I've spent a lot, like the last 2 or 3 years, trying to develop a better skill set around that, and I think we've got a better handle. But I would say it still is one of these things that's sort of the invisible hand. And so what you have to do is you have to look at the market to tell you when liquidity is tight or not.
So you kept mentioning the balance sheet. Are you saying QE is going to start again?
Well, they may not call it QE, but yeah, the balance sheet needs to expand, not only to support financial markets, but to support the better growth that I think is coming next year, right? So if CapEx really picks up for the first time in 10 years, okay, let's be honest, we haven't seen much capital spending, but the big beautiful bill is incenting that. That's a usage of capital that needs to be supplied by somebody. So the balance sheet needs to grow just to help the economy and the markets. And so we can call it QE, call it not QE, but generally they need to expand that.
How much is a 7,800 target predicated on the idea of the Fed cutting rates and using its balance sheet to help support liquidity?
It's very important. I mean, I would say if we don't get at least one of those items surprising the markets, meaning more than 3 cuts, or we get more balance sheet expansion, call it QE, call it something else, okay, yield curve control, whatever you want to call it. Okay, if we don't get some combination of that, then we're not going to reach our target. So I'm assuming that we get there either through the labor data or through some financial stress.
So it has been so far that the AI trade has maintained any kind of equity valuation, despite the fact that people are getting increasingly worried about an economy that you think already has gone through recession. I just wonder, do you think that ship sailed in terms of AI leadership propping things up? Do you think that if we don't get the real economy re-accelerating, you cannot get the multiples that we currently have been seeing on the big tech names?
Yeah, I think it's one and the same. I mean, obviously the investment in AI is on the premise that it will lead to higher productivity, adoption, and all of that works. I mean, that's the way technology investment works. So you're not going to, these stocks are not going to work. The leaders aren't going to work if the foundation itself isn't being supported by the technology investment. We assume that is going to happen in 2026. That is part of our thesis. Okay, but it's not without risk. So our job is to lay out our narrative, which we have conviction in, but then to highlight these risks in the short term or in the medium term that could throw that narrative off.
Eddie Ardeni also joined us earlier, just saying that some of the air is being taken out of the AI bubble, and to him that meant that the melt-up that we've been seeing is going to be harder to come by. Has something changed, at least with that blind willingness to continue to buy AI-related stocks, regardless of how much they're spending and what the return on that spend is?
Well, I mean, this is a natural evolution of any capital spending cycle. There's always going to be a challenge on the return you're going to get. And this is, we've seen this multiple times. We saw it a year ago. We've talked about this, multiple times. In July of 2024, that was the peak in sort of an AI CapEx deceleration. So this is an ebb and flow. What I like to look at is the AI spenders. How are those stocks reacting? Is the market enforcing discipline on the AI spenders, which then trickles down into the CapEx beneficiaries? But we think this is going to happen. I mean, the money's been raised now, so like the debt markets are now involved, and so that money's not going to sit on these balance sheets. It's going to be spent. The question is, what's the payoff look like, and what's the timing of that payoff? We think we'll see some of that in 2026, 2027. And so now it's just this transition. You're kind of trading back and forth. So I want to make it clear, we think there's a broadening out. That doesn't mean that all the AI stuff gets killed and everything else does really, really well. It can work in harmony. In fact, it needs to work in harmony to some degree.
If you do get a scenario, though, where, let's say, I don't know, Meta, that seems to be one of the poster children for not getting that return, doesn't get it as much, and they need to pull back on their spending, but everybody else is still spending, do you only need one pillar to fall to really hurt this trade, or can just any sort of spending happening within this trade, regardless of who the winner is, continue to lift all the boats?
Well, look what's been going on, right? So we've seen a massive bifurcation or dispersion in the performance of not only the hyperscalers, but names within that. To me, that's healthy. That's like, not everybody's going to win. Like, there's no trophies here. I mean, you have to actually win the game. but all of these companies are competing for the trophy. So in that competition, I think we continue to see this velocity of spend, and then we're going to see, the most exciting part about this AI spend to me is we don't even know yet, okay, these new businesses that are going to be created, these new industries that are going to be created, the efficiencies we're going to get in areas like healthcare or education or manufacturing, that's on the come. That's where the real wealth creation is going to be coming from.
So next year, or maybe the end of this year, when we find out who the next Fed chair is going to be, how much will that matter to you in terms of whether your bull case will get realized? I mean, who will necessarily be good for that and who might be a little more problematic for that?
You're probably not going to like my answer, but it doesn't matter to me because ultimately the market's going to tell the Fed what to do. I mean, that's that's always been my view. People hate it, but like I'm a markets person, okay? The market's dominant. The markets tell investors what to do. Right, so the markets will, kind of force their hand. If the markets believe they need more liquidity, they will force the Fed's hand. If the market believes it needs more rate cuts, it will force their hand because we become so financialized at this point, right? The Fed now is basically obligated to make sure that we have financial stability to some degree, and they have an obligation to help Treasury fund the government. So I don't believe the Fed is independent. I believe they're trying to work, in the best interest of Americans. Okay, I'm not saying they're dictated by the White House. But they are not independent of the markets. They are not independent of the funding requirements of the U.S. government. Okay, so the Treasury and the Fed will work together to do the best they can to solve those issues.
Mike Wilson, wonderful to speak with you. Mike Wilson of Morgan Stanley, have a wonderful Thanksgiving, and thank you for being here. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief. Boston Fed President Susan Collins saying she hasn't made up her mind on how she'll vote at central bank's next policy meeting. Collins saying she would like to see more data before making a call. Some on the Fed are preparing for an unusual level of disagreement at the meeting. Fed Governor Chris Waller saying you might see the least groupthink you've seen in a long time. The next Fed rate decision is on December 10th. Meanwhile, the former president of Brazil, Jair Bolsonaro, has been arrested after a judge deemed a flight risk. Police detained Bolsonaro after he took a soldering iron to a court-mandated ankle monitor. It sparked fears that he planned to flee. And in sports, the New England Patriots won their 9th straight game, beating the Cincinnati Bengals to move into the AFC's top seed. Elsewhere, the Baltimore Ravens moved into first place in the AFC North after beating the Jets and the Pittsburgh Steelers loss into Chicago. In the NFC, the Eagles lost to Dallas and the Rams won their 6th straight game over the skidding Buccaneers. And that is your Bloomberg Brief. Up next, the morning calls, plus Lorraine Hutchinson of Bank of America with a consumer check ahead of the holiday. That next, you're watching Bloomberg Surveillance.
Day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Making money isn't about drowning in emotions. It's about understanding what's actually happening.
Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
The average earnings of America, their income is growing. So as that grows and we drive prices down, you're going to feel that golden age coming. You're going to see affordability across the board here. Trump administration is going to win in affordability and income, two sides of the coin.
That was U.S. Commerce Secretary Howard Lutnick earlier this morning from Europe as he negotiated some sort of trade agreement that called for loosening some of the tariffs on steel and aluminum for Europe in response to or in return for maybe lightening up some of the regulations around U.S. tech. Right now, in markets, you do see that rebound continuing to gain steam. 0.7% gain on S&P futures, session highs. You are seeing that bid into treasuries wane as you do see that risk on field take hold, almost flat on the 10-year, 4.05%. Time now for the morning calls. First up, Wolfe Research upgrading Morgan Stanley to outperform, citing accelerating revenues and attractive valuation. Next up, JP Morgan initiating Hyatt with an overweight rating, saying the company has the potential to close a valuation gap with Marriott and Hilton. And finally, BNP Paribas Exane rating Meta new outperform, noting its ability to aggressively invest in artificial intelligence. Let's turn to retail. The strength of Black Friday shopping this week set to provide a key reading on consumer health. B of A senior retail analyst Lorraine Hutchinson joins us now. Lorraine, thank you so much for being with us. What are you expecting? What are you hearing in the initial phases as everybody heads to the stores, or should I say heads to their keyboards?
Sure, yeah, good morning. It's go time today, right? We're kicking off the holiday season with, we call it Black Friday week. If you check your inbox this morning, there's a ton of deals. So everybody is looking for value right now. And I think the key for this holiday season for the retailers is many of them have raised prices. So you'll still get great deals on Black Friday, Cyber Monday, but those deals will be based on a higher price. And the culprit, of course, is tariffs.
How are inventory levels heading into this? Is there excess inventory that they're trying to work through with these Black Friday sales?
Not really, no. I mean, once Liberation Day hit, they all took a more cautious stance on units. The reason is because they know they have to charge higher prices to offset the tariffs. So inventory is actually quite healthy. Black Friday is all about trying to attract customers with holiday deals. So I feel really comfortable with the way inventory is shaping up into holiday. I think the real question will be, what does the consumer do with these higher prices? Will they accept them? Will they look for cheaper options? How much will they spend this Christmas?
Well, it's a good point because, sure, deals, but to your point, from a higher level. What is your read on the consumer, whether they are still going to play up or pay up for those, or if this is just a period of a lot of bargain shopping and only a few will win?
You know, Black Friday is always a period of a lot of bargain shopping, so you will get the real bargain hunters in there. One thing that I can say pretty clearly about Christmas is Santa always comes. We always see a lot of maybe even extra or above plan spending during holiday. So I worry a little bit less about the Christmas gift shopping, and I worry a bit more about self-purchase, right? If you do want to get that must-have item for your kids, you may not buy a new holiday outfit for yourself. So I think there are going to be trade-offs with these higher prices, and I think consumers are looking for the best value, and that doesn't always mean the lowest price. It means where can they get something that's really high quality or a really hot brand for the best deal.
How difficult is it to really get a gauge when you look at overall retail sales? So we're going to get the retail sales number for September, and I understand it's stale data, et cetera, et cetera. How hard is it, though, to get a clean read given the fact that there is an inflationary component of this? That retail sales look good on a headline number, but might actually be really negative when it comes to just the inflation aspect. In other words, most of it is higher simply because prices are that much higher.
It's we think that is the case. If you look at our BAC proprietary debit and credit card data, it would tell you that a lot of the growth in consumer spending is coming from higher prices. So we don't really see a lot of unit growth, and that's why I think the lean inventory levels are important in my sector specifically, because they have been pretty cautious about the number of things they'll sell, knowing that they do need to charge higher prices.
How much are you seeing a lot of retailers cater increasingly to upper income consumers, just because that's where the money is and that's where the consistent stream has been? And we see that from Gap with the idea of leaning into a higher price point in certain parts of their business, which has helped support their business. You see that even at Walmart, increasingly focus on higher and middle income consumers and not just the low end. Is this the new strategy?
Absolutely, and there's no way where you see it more. I'm going to surprise you when I say this, but off-price, TJ Maxx, Ross stores, their comps are surging. If you look at the numbers they put up last week, who would expect TJX to put up a 6 at their core concept or Ross to put up a 7? They are starting to cater to a slightly higher income customer by getting better brands, but at great discounts. So if you can get that treasure hunt really going, a slightly higher end consumer will come in and elevate your prices sold across the store, and that's what's happening with off-price. It's actually a really exciting place to be right now because with those higher prices come better margins for the off-pricers.
I thought a lot of these brands, though, don't want to be in these types of locations because you get more saturation. It's bad for the things they sell at wholesale. So how are these off-price retailers able to do this and able to bring in a strategy that appeals to higher income people and getting brands that are willing to do that with them?
A lot of times it's fixing mistakes. Nobody's perfect. You know, there are certain styles or certain sizes that they can't sell, and off-price does it very efficiently. One of the reasons why there's not a big online business for off-price is because you can't search it, right? It's a little bit of a secret from some of the higher-end brands, and then some of the higher-end brands just need the volumes and the throughput associated with off-price. They're opening stores, they're growing traffic. They're some of the few retail concepts with strong brick-and-mortar sales growth.
Something about it feels a little bit depressing because it's already a K-shaped economy, and then you had these retailers who were exposed to lower income, increasingly trying to become less exposed to them. What about retailers catering towards lower income people? Do they still even exist anymore, and how are they behaving right now?
Well, they do, and I guess don't get me wrong, off-price is not abandoning their lower income consumer. I think one thing that's very clear is they are trying to service the customer really well at the good, better, and best price points. So what they're also doing is trying to elevate the value that you get at a good price point. So it's actually a great shopping environment for the consumer, but I think also what you've seen, the numbers out of Walmart last week were also excellent, and things like fashion stood out, right? So I think everybody's trying to get a little bit better and provide a better product for same price or more of a value price point.
Lorraine, does anyone actually go to the store, or is everyone just in front of their computer or on their phones? I mean, honestly, does anyone actually do the lining up and running in and pushing people down? Please don't do that. But, is that sort of still a thing or not really?
Not as much. I mean, Black Friday, over COVID, actually, they all started matching the Black Friday deals online to avoid the crowds, and then it sort of lost its luster. So people do go. But they don't have to be there at 5 a.m. when the doors open. And I think that creates kind of a nicer environment for everybody.
I would think so, but maybe that's like people's recreational activity after eating so much.
Over like poor people trying to get in there, stampedes. I hope that's not their recreation.
The beginning of my career.
I like that it's like instead of a turkey trot, you storm Walmart.
Lorraine Hutchinson of Bank of America, thank you so much for being with us. I guess it is exercise if you're pushing people out of the way, running in. Coming up, James Ageloff of BNP Paribas. Traders await the release of key economic data this week. Plus, we'll check in on some of your morning movers. Oscar Health soaring on reports of a potential plan to extend Obamacare subsidies. That news broken earlier this morning from Politico. This is Bloomberg Surveillance.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bercecci in Vienna, and this is Bloomberg. The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Joanna Bercecci. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
We are 1 hour away from the cash open, and what we are seeing in markets is that lift continuing to grind into the open. Just about an hour to go, and now we're up 0.7% on the S&P. NASDAQ higher by even more as people pile back into some of the trades they abandoned over the past few weeks. We are also seeing that haven bid into treasuries fade as the session grows older, nearly flat now, 4.06%, even though we did get commentary from New York Fed President John Williams talking about how he could see the near term maybe cutting rates, meaning maybe next month. At least that's how it was interpreted by markets. We are seeing some other things move. Your morning movers include, of course, Alphabet shares, which we were talking about earlier. I am very focused on Alphabet, given the fact that we heard from the information, the fact that maybe OpenAI was losing some clout to Alphabet based on their Gemini model, given the fact that their AI tools are turning out to be nearly as good as OpenAI. Those shares higher by 4.2%.
So nearly as good, if not better, because Sam Altman saying that the vibes were rough because of how good Gemini was, and it meant that their revenue wouldn't be as strong as they expected. It fights against this model that the stock market has been pricing in, where everybody is a winner. Maybe it's a winner takes all. And what happens in that case? Is OpenAI still going to spend $1.4 trillion going forward? Is Sam Altman still the guru and you're going to buy and trade based on whether he says that super intelligence is coming? It's a market that's more discerning because it's an environment that is more discerning, that not everybody is doing as well as the others.
Yeah, and does cash flow matter, right? I mean, the idea that OpenAI is not making money and the idea that Alphabet has a steady, very profitable machine underway, how much does that give them in the upper hand to really develop what they want to, get the data centers they want to, and not have to rely on the debt market to be nice to them, and frankly, on everybody under the sun to give them money, give them handouts, give them shares, give them chips, and whatever else so that they can grow into their dreams?
It's so true, because the question is increasingly turning to, will debt markets fund this going forward? Because so much of this company spending has been pushed to the debt markets. What happens if you get a Fed that doesn't cut as much and allow easy conditions? You have private capital players who are starting to get under scrutiny from their shareholders and maybe don't raise as much or maybe don't take as much risk. And when you start to see spreads widen out, we haven't seen that play out yet. If it is playing out, it's ever so slightly, but does it change the whole calculus if they can't turn to the debt markets as much as they had?
Yeah, meanwhile, we did get some earnings, or particularly a release from Novo Nordisk earlier this morning talking about Alzheimer's and a trial that they had tied to their Ozempic release, that it didn't actually solve Alzheimer's, and you're seeing Novo Nordisk shares lower by almost 11%. The early trials not showing success. Eli Lilly down almost 1%. Eli Lilly also has an Alzheimer's drug, although this really is centered around what the other uses are of some of these weight loss drugs. They cure addiction, they cure overweight, they cure heart disease. The question around Alzheimer's, yet another benefit, but perhaps some of these studies throwing some shade on that.
And I also think this is where Novo was hoping that it had the lead, because because it has been falling behind to Lilly. You can see that reflected in the share price. You can see that reflected in the effectiveness of their medicine. So for Novo, this could have been something that would have given them the edge. It's been taken away from them, and that's why you're seeing Novo react so much more than the share price of Eli Lilly.
Meanwhile, Oscar Health shares climbing in pre-market after Politico reported that potentially the Trump administration is considering extending the Obamacare subsidies, the premium subsidies, for 2 years. The caveat being they reduce some of the applied pool of people who are eligible for these benefits. We're seeing these shares up almost 23%. We'll keep you posted on that story as it does develop. Turning to the economy, investors preparing for a key week of data. Bloomberg's Enda Curran joins us now. Enda, the stale September data that we're getting tomorrow, how excited are you?
Well, that's all we have to go on, so pretty excited for now, Lisa. But as you mentioned, the September retail sales data will come out tomorrow. Expected to show a moderation in consumer spending in that month, maybe around a 0.4% gain from a month earlier compared to a 0.6% gain in that month of August. You know, we're getting mixed messages on in retail spending at the moment. Big retail chains are saying customers are spending well. They're broadly speaking saying money continues to tick into their tills. But obviously we're also getting pockets of warnings from some retailers. We had that consumer sentiment, that big dive in consumer confidence in the sentiment index last week. And of course we have economists debating just how real the retail spending story is. Is it really being driven by higher income earners, lower and moderate income earners spending much less, much more worried about jobs, job security and inflation and high prices and the like. So it's mixed signals, but the point of tomorrow's data for September is expected to show that, broadly speaking, on an aggregate level, consumer spending remains robust.
And can you just give us a sense of what we're hearing from additional Fed speak in terms of whether John Williams truly was the base of the committee and the idea that a December rate cut very much still is on the table?
Very divided interpretation on that, Lisa, as you say. I mean, on the one hand, you have a camp making the point that, look, this was a quasi-signal from the leadership of the Federal Reserve that at the very least a rate cut is on the table in a serious way in December. You know, the president of New York Fed is a permanent voter, seeing as part of the top leadership. As of right now, as far as I know, the Fed chair is not due to speak, for example. So people are saying maybe this was the proxy for what the head of the Fed is thinking about a rate cut in December. But of course, there are lots of others who also make the point, Lisa, that, hang on, you know, it's clearly a very divided committee right now. We know there's a significant group who are more worried about inflation than jobs. We're not going to get new jobs or inflation numbers ahead of that Fed meeting in December. So that side argues, broadly speaking, there's a case for staying on hold and maybe seeing where things are in January. So I'd have to say it's a very, very divided, very mixed interpretation on it. Lisa, there's a classic read that this was an important signal from the Fed, but plenty of Fed watchers aren't looking at it that way at the moment.
Enda Curran, thank you so much for being with us. Sticking with the Fed, James Egelhoff of BNP Paribas writing, we maintain our call for a Fed rate cut in December as we think the rising unemployment rate should ease concerns about inadvertently overheating the labor market over the short run. James joins us now. James, how hard was it to maintain that call after we heard from John Williams on Friday?
Well, it's great to be here. It's certainly a much more rowdy and disorderly process from the Fed than what we're accustomed to. We're having to count votes, which is something we're not accustomed to doing with the Fed. At the same time, we think that Powell wants to keep cutting. We think he has the votes to do that. And we think the data that we got last week is giving a little bit of cover to him to deliver one last rate cut, to protect the labor market from some gradual deterioration, and to protect the Fed from a resurgence in this political tension they've had between them and the White House. We think that Powell prefers to do that. Now, there are risks that are increasingly appearing that the economy might pick up speed next year. And if the Fed continues to cut rates, it might find itself wrong-footed going into that. We think that's a risk that the hawks on the committee are increasingly vocal about. But there's enough room in this data release, in our view, to keep going one more time.
Can we just play out that scenario? If we do get a reacceleration, that suggests that cuts would be an issue because maybe it reaccelerates inflation. And that happens at the time that you have a new Fed chair put in, regardless of who it is, Hassett, Waller, maybe even Bassett himself, who is pounding the drum for more cuts. How does that play out?
So look, when we think about next year, we take President Trump seriously, and literally we put his economic plan into our baseline. It's why we were so early to expect tariffs and tight immigration policy. He's increasingly talking about fiscal stimulus, about sending people checks to help them with the cost of living through the middle of next year. So for us, it's a really close call about whether we should put those in our forecast. If that happens, and it's big, and President Trump tends to do things big, you could easily see a pickup in growth, a pickup in inflation, and a pickup in hiring. And if that happened and the Fed had moved to a stimulative stance, which is what they seem to be on course to unless they pull back, that could leave the Fed in the wrong, having to take back the cuts that they've already delivered. And that would be a very messy process politically and for the market. And having that happen at the same time as the Fed chair transition would be very difficult for them.
Does that also mean it's your assumption, and kind of given your first answer, if we're counting votes now, is it your assumption that this era of consensus building led by a Fed chair, that's effectively over?
Well, we don't know, but I think we're increasingly moving to an era where the Fed is more divided internally, where there are a lot of different perspectives. Ultimately, if the data breaks either way, so if we get clarity from the data that the economy is reaccelerating or that it's slowing more in a more nonlinear way, we think that unity would be reestablished very quickly, and the Fed could move with great decisiveness one direction or the other. But right now, with so much ambiguity in the data and with the data coming in with such a long lag due to the shutdown, there's a lot of room for different interpretations, and that's what's feeding into this environment that we're in right now.
Neil Dutta of Renaissance Macro was on earlier, and he said that he's really worried that the Fed's already missed the train, and that actually the U.S. consumer is weakening quite considerably. That's what they're telling you in their sentiment. That's what you're seeing when it comes to home sales, when it comes to certain auto loan performances. What do you make of that? Do you think that there is some validity in that?
Well, I love Neil's work. I think when we look at the consumer over the past year or two, the consumer tells us that they're depressed, but then they keep spending. And so ultimately, we're reasonably confident with where consumer spending is. We're on consensus for tomorrow's retail sales print. When we look at the labor market, which ultimately is where everything comes from for the consumer, we think the labor market is cruising at a comfortable cruising altitude. All the signs we look at are pointing green there. So we continue to look for resilience in the consumer that could be backstopped with fiscal spending, and that's continuing to be backstopped by strong equity market gains.
You know, people might be saying that they feel terrible and not spending, but the people who feel pretty good are the people who are wealthier and they keep spending. And so there's this question of how much the wealthier cohorts of the economy are continuing to spend because of the stock market. In other words, the sort of closer tie for the stock market and the economy than traditionally is the case, just simply because that upper echelon of income earners has been the one that has been supporting all of the consumption that we have seen so far. Do you think that there is a greater connection right now for the stock market continuing to go up and the U.S. economy continuing to gain, despite the fact that there are a lot of people that are being left behind?
Look, we think that K-shaped dynamic that you're referring to is part of the story for the U.S., that the high-end consumer, buoyed by gains in NVIDIA and other high-flying tech names, that they're continuing to spend. The lower income consumer that's more reliant on their labor income is more anxious, is pulling back a bit. We do think that if you were to see the equity market correct, which is not our base case view, we think that could be recessionary for the U.S. economy, and the Fed would react with great aggression in that scenario. Again, not our base case, but yes, we do think the economy is more keyed to the AI theme than it has been to tech in the past, and that the Fed would have to respond to that.
So just to be clear, a Fed put would very much so be in play in this scenario.
Well, I mean, I don't think the Fed is necessarily there to protect you in your equity investments, but the Fed is there to protect the economy. So I think the Fed would readily read through to the idea that if you were to see a big decline in the equity market, that the consumer could pull back, and that may mean that there's more room for rate cuts. So we think that read across would be straightforward.
Well, on the other side of things, of concern about financial conditions being too loose, it's hard to look at the spending the hyperscalers have been able to push through this bond market and argue that these are very tight financial conditions. How do you think the Fed sees that in this economy that's increasingly being geared to AI players and the spending that they're doing?
So look, we think AI has kept the economy out of recession this year. It's not just about the AI CapEx, it's also about the consumer, as we discussed, and it's about broader business sentiment, where businesses expect a big productivity boom just over the horizon coming from AI being commercialized and applied more broadly in the economy. And this is something that came up in the Fed minutes last week, that if there was to be a moment of disillusionment about AI from whatever source, that could have fairly large and quick effects on the economy. So we think that they're starting to take note of this. It was in the minutes. Powell's talked about it a few times at the press conferences. And as far as we're concerned, for the moment, steady as we go. But if there was to be a bump along the road in the AI transition, we think the Fed would take note of it very quickly.
So just going forward, we do get retail sales as well as PPI tomorrow. A lot of people are saying it's not going to really tip the needle, considering it's old. At the same time, we do get jobless claims. We do get the Beige Book on Wednesday. And then fast forwarding, we get things like the JOLT survey as well as ADP. Which data points do you think are going to be most instrumental for the Fed heading into their December 10th meeting?
You're not going to like my answer, but really none of them are going to be all that helpful. They're all old. They're all second-order data. The data I think Powell was hoping would resolve the debate on further easing was payrolls last week. It could be read both ways. We have a gradually rising unemployment rate that suggests there might be a little bit more room for easing, but then headline job gains came in quite strong. That's just the economy is doing great, and the argument that the labor market's at stall speed is not panning out. So this data is not going to resolve the tensions and the disagreement at the Fed. It's going to be a rowdy and disorderly debate all the way through the end. Ultimately, we think it's Powell's call. I think he has the votes to go either way, and the data is not going to ultimately make everyone move to the same page.
In other words, if you're looking for clarity, keep looking. James Eichelhoff of BNP Paribas, thank you so much for being with us today. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief. Treasury Secretary Scott Bessent saying the Trump administration is planning a health care announcement this week. Bessent urging Republicans to come up with a plan by January 30th to address health insurance premiums. The premiums are set to spike when subsidies expire at the end of the year. President Donald Trump is pushing back on the possibility of television networks being allowed to expand, responding to a Newsmax report that the FCC is considering a merger of Nexstar Media and Tegna. Trump writing on social media, if this would also allow the radical left networks to enlarge, I would not be happy. ABC and NBC in particular are a disaster, a virtual arm of the Democrat Party. Meanwhile, Harvard is confirming it's the latest victim in a string of Ivy League cyber attacks. Following similar breaches at Princeton and Penn, a database containing alumni and donor contact and donation details was accessed via a phishing scam. The university has since locked down its system and is working with law enforcement. That is your Bloomberg Brief. Up next, setting you up for the day ahead, plus Oh-Sun Kwon of Wells Fargo with a bullish outlook on equities heading into the new year. Hint, it sounds like the figure that we heard from Mike Wilson as well. This is Bloomberg Surveillance.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
We're coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
I'm not worried about the economy. What I am a little bit worried about is that the Fed is kind of dragging its feet. The Fed needs to cut, but not to save the economy, but to see the full rotation into these lagging parts of the market, the interest rate sensitive parts of the market. We think the 7,800 is dependent on the earnings cycle broadening out.
That was Mike Wilson of Morgan Stanley talking about a 7,800 call in the S&P 500 for the end of next year, and talking about how it is predicated on the idea of Fed rate cuts and responding to a lack of liquidity potentially with the Fed's balance sheet. Counting down to the opening bell, what we do see right now in markets is a lift to equities pretty much across the board. You can see that particularly outperforming with the NASDAQ 100 futures up 0.9%. The Russell getting a bid as well, up 0.3%. Meanwhile, what you can see in bonds is a little bit of the bid to safety, the Haven rally, fading just a touch, some pushback to the idea that John Williams was signaling a December rate cut. You are seeing yields marginally higher on the front end. 2-year yields up just a basis point to 351. A rally into the long end, though, with 30-year yields at 4.69%. Here is the trading diary for the week ahead at 4 p.m. Eastern. President Donald Trump signing an executive order. Tuesday, PPI and retail sales. Wednesday, another round of jobless claims, durable goods, and the Federal Reserve releases its beige book. Fascinating reading. Do it. Thursday, U.S. markets are closed for Thanksgiving. Finally, Black Friday, the unofficial start of the holiday shopping season, kicks off. Turning back to markets, Oh-Sung Kwon of Wells Fargo is looking ahead to next year, expecting the S&P 500 to reach, guess what, 7,800 by year-end 2026, writing, valuation is rich, but it's only half the equation. The other half is EPS growth. Oh-Sung joins us now. Thank you so much for being with us, and it's going to be a really interesting period into year end. You talk about 7,800. You have a slightly different take than what Mike Wilson was talking about. How much is this predicated on a rotation out of the Magnificent Seven into the rest of the universe? How much is this predicated on overall earnings per share growth?
Yeah, so I think 2026 is going to be a year of two halves. I think the first half of the year is going to be reflation. We call it the hope trade. Because I don't think it's going to be the one that actually sticks. I think the second half of the year, we're actually calling for an AI bubble trade as the Fed starts to expand its balance sheet. And I think over the past few weeks, the market sell-off was more driven by liquidity than anything else. So our liquidity indicator actually saw the sharpest contraction since 2022. And that's been a leading indicator of S&P multiples. And with SOFR spread blowing up, funding market stress and all those things, that's essentially what happens. When liquidity drains up, everyone's risk curve shifts to the left, and the assets, the most speculative assets that's far out the risk curve, those assets get sold off the most. So things like Bitcoin, quantum, and all those things, and that basically speaks to the lack of liquidity in the market. And I think that's going to turn around going forward, which is bullish for equities.
Well, to that point, Howard Marks gave a really interesting interview to the FT this morning, where he said the people who are buying in this market have been traders and not investors. So it's not long-term holders that have really been participating in the melt-up that we've seen until last week and the week before. Do you see that same contour of the market? And does that fragility carry on into 2026?
Yeah, so it's really been traders and retail investors. And the latter is probably going to stick for longer term. I think it's a secular bull market that we're starting to see more participation from retail investors. And over the past few weeks during the sell-off too, we have seen retail investors buying the dip. So I think that's the big support for the market going forward as well.
You also write that value stocks are abundant, that over 50% of this market trades at a discount versus the 5-year average. We've seen so many false dawns with value as a factor doing well. What reinvigorates it this time around?
Yeah, I mean, I don't think value is going to do better in 2026. I think it's really the first half of the year, the reflation hope trade that we talked about, because there's a lot of physical tailwind that's coming in the first half of the year. So we're estimating about 80 basis point of tailwind from physical in 2026 for the full year. And most of that is actually in Q1 through the tax return. That's going to be bigger because of OBBB. And because of that, I think we're going to see reflation hope trade going forward. So we actually double upgraded energy and materials. I think retail is going to do well. I think some of the short cycle industrials that have really been beaten down over the past few years, I think those are going to do well. I don't think it's going to stick, though, because reflation means rates are probably going to be elevated. And surprisingly, this actually has been the most rate-sensitive manufacturing downturn in history. And I think for a sustained rotation out of AI, we need the manufacturing PMI to really recover. And for that to happen, this actually has been very rate sensitive, and this actually has been a housing-driven downturn in manufacturing. So I think housing ultimately has to come back. So for that to happen, we need lower rates.
So this is really interesting because actually you and Mike Wilson are saying something very similar, which is that there was a complete withdrawal of liquidity or a complete backtrack of liquidity that caused this recent sell-off. It's going to force the Fed's hand. Ultimately, if this continues, the Fed is going to have to cut rates and potentially use their balance sheet. Do you agree with the balance sheet point as well?
Yeah, so our house view is the Fed starting to expand this balance sheet in April, buying the T-bills. And I think that, so more liquidity basically means better for speculative assets and long duration assets, which is basically AI. So I don't think we have yet seen the real bubble trade in AI. So far, the Nasdaq's outperformance, essentially since the end of the tech bubble, has been driven by better fundamentals and better earnings. It wasn't necessarily multiple driven. And I think we could potentially see a real AI bubble trade in the second half of next year with the Fed expanding its balance sheet.
Why did liquidity get so poor? We're talking about how anyone under the sun can borrow money until, the record scratch of, the hundreds of billions of dollars being sold in AI suddenly. Why now?
Yeah, it was kind of like a perfect storm, a combination of a lot of things. So first, there was QT, which is going to end in like 5 days now. And there was the debt ceiling resolution, so there was a lot of debt issuance to refill TGA, and the government shut down. So the government was collecting taxes, but not distributing back to the economy. So there was a liquidity suck. Also, a lot of those cockroaches that we saw. So the banks were getting more conservative when it comes to lending. So we saw the funding market really being stressed. We saw the SOFR spread really blowing up back in October. So it was kind of like a combination of all those things. Looking forward, the government is now reopened. QT is ending. We're probably going to see the Fed starting to talk more about the funding market, and they already have started, and potentially increasing its balance sheet in April next year. And I think the risk is sooner. So if that happens, I think the liquidity issues are going to get resolved.
Oh-Sung Kwon, wonderful to hear your thoughts. Thank you so much. Come back again soon. Oh-Sung Kwon of Wells Fargo on those funding conditions. The idea of lack of liquidity kind of flies in the face of what we'd heard for earlier this year, but certainly a consistent theme this morning.
Yeah, that everyone could go to these debt markets and be okay. How long does that last? Do people allow the AI giants to continue to pour that level of debt into these funding markets?
Yeah, a real question though, funding markets versus corporate debt issuance, very different. A lot of things to think through. Coming up tomorrow, we can discuss it all with Peter Scheer of Academy Securities, John Bilton of JP Morgan Asset Management, Samantha Dart of Goldman Sachs, and Pooja Sriram of Barclays. This was Bloomberg Surveillance on this Monday. Good morning.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
So I know from owning a sports team that owning one team takes a lot of energy and time.
Tell me about it, yeah.
So you decided after you bought the Washington Spirits to buy some other soccer teams. So you bought stakes in a team in England, is that right?
Yes. I bought a team called London City Lionesses, and that is the only one of the 2 teams in the entire, potentially Great Britain, that are independent. 99% of the teams in Europe are part of the men's team. But this is one of the only 2 teams that was independent.
So now you have 2 soccer teams, one in England and one in the United States. So I would think for most people that might be enough, but you decide to buy a team in France as well?
Yes. Olympic Lire Feminine is actually the best women's team in the history of women's football. In terms of how many trophies the team has won, they are the 8 times champions of the Pan-European League. And I can't even count how many times they won the French domestic league, the most successful team. I want to professionalize women's sports, right? I don't want people to think that somehow women's sports is a charity or a corporate DEI project. This is a legitimate entertainment product, and it is a business.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a little ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top to the bottom, make the sushi shape more beautiful. 3. Then, I'm not, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1 to 6.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
All right, we are risk on to start a shortened holiday week. 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, big tech makes a cautious comeback as concerns over debt-fueled investment spree lingered.
And retailers hope for a holiday miracle. We're going to get another read on the American consumer as more earnings roll in ahead of Black Friday.
And Novo Nordisk shares are on track for their worst year of all time. The stock sinking today as its Alzheimer's drug fails trials.
Matt, on my mind this morning is whether the AI-related stocks have a week like last week or whether they can rebound. Let's look at what some of them are doing pre-market, because documents have shown that Amazon's data center operation is much larger than commonly understood. There are also hints of a looser U.S. export rules, reviving hopes of NVIDIA's China comeback, and Alibaba's main AI app drew more than 10 million downloads in the week after its relaunch. Obviously, Alibaba the winner in the pre-market trade, Matt. But the good news is at least someone's buying the dip that we saw last week.
Yeah, absolutely. I mean, Friday actually ended well. Yeah. I think on hopes that the Fed will cut rates. Novo Nordisk doesn't have a dog in either fight. They're obviously concerned about getting back dominance of the weight loss drug market. And they tried to do it, I guess, buy a lottery ticket with a different use of Ozempic. They were attempting to use it for Alzheimer's. It failed tests for Alzheimer's. They were going to extend this test another year, but had decided not to. So the shares are off 10%.
All right, Matt, let's return to the AI optimism trade following a report that U.S. officials are holding early talks to let NVIDIA sell its H200 chips to China. I spoke with Commerce Secretary Howard Lutnick earlier this morning.
Do you want to sell China some chips and keep them using our tech and our tech stack? Or do you say to them, look, we're not going to sell you our best chips. We're just going to hold off on that, and we're going to compete in the AI race ourselves. So that is the question. It's in front of the president. He's going to decide. It's a really, really interesting question. He's got all the information. He's got lots and lots of experts talking to him, and he's going to decide which way he wants to go forward.
For more, we're joined by Bloomberg Tech co-host Caroline Hyde. Caroline, a lot of moving pieces here, and we've heard from the Trump administration before that they would allow more chips being sold into China. There was that report earlier in the year that they'd take some revenue in trade for it. Howard Lutnick himself has had to kind of not issue a mea culpa, but has had to soften his tone when he said before, we want China addicted to our best technology. So are they going to allow these sales to go through?
Well,
we're wondering whether it ends up being a moot point because there's also Congress trying to work out whether they just stop any sort of NVIDIA chips eventually going into China. But thus far, it seems to be this hawks versus non-hawks that have got the president's ear. Now, remember, Howard Lutnick, but a month or so ago, was saying, we don't want them having our best, our second best, or our third best. Remember, even Trump himself was saying, we're only going to ship basically obsolete chips to China. And of course, China then decided, no, thank you. We don't want your H20s. We don't want you getting 15% of that cut. I might remind you that that hasn't even gone through and been passed into law yet. So H20s can't be shipped without a license thus far for NVIDIA or AMD's equivalent. But it does feel as though there's this tension going on. Will we allow Grace Hopper, in fact, underlying technology to be shipped out from NVIDIA's perspective? This isn't Blackwell yet, and this is something we'd heard Trump talk about before. Would we even let a more dumbed-down version of the Blackwell architecture get into China's hands? At the moment, it's still just the previous iteration, and this is something that's just going to go on as this narrative continues to butt heads over in the administration. Of course, NVIDIA is desperate to get back into China. At the moment, it's able to win over and beat analysts' expectations on its earnings with 0% of sales going to China, but they are really keen on getting back into that particular market.
Let's talk for a moment about Amazon, because Bloomberg has a story out today showing that they actually have more than 900 data centers, more than maybe we previously thought. Is this an overbuild, or is this, table stakes for the top competitors?
Well, they are the #1 provider of cloud, and they would like to remain the #1. It's interesting, back in 2023, Adam Selipsky at that point was the head of AWS. He hinted at this. He said, we have 3 times the number of data centers or data center capacity than our nearest rival. That was Microsoft at the time, and we knew Microsoft had 300 locations. So now we understand, due to all the documents that Matt Day's gone through, there are 900. But what's interesting is how many are co-locations. Overall, the majority are owned and operated by Amazon themselves. But they are depending more and more on third parties because they have to. They need to be at the edge. They need to be in metropolitan edges. And they have to, therefore, use other users, like maybe big telecoms companies, let them have access to certain servers. And they can, therefore, offer the training data that is necessary for all of these companies right now. Look, AI demand, we understand, is insatiable. No wonder AWS wants to be at the forefront and keep on building out. But just extraordinary, the numbers that you're looking at. What was it, 420 co-location data centers in 2024, 220 additional rented edge locations. It's vast, totally vast.
Can I ask about Alphabet? Because it did well last week as many things were selling off. First about Berkshire Hathaway, and then this report from The Information that Gemini's advances were so great that Sam Altman himself was worried that he'd issued a memo to staff saying that the vibes were rough or something along those lines. Kelly, it doesn't seem very good when sort of the guru of AI, the person we're supposed to be turning to, is all of a sudden talking about rough vibes because the competition is beating them out.
Well, Sam Altman actually quite publicly said, well done, guys. This is doing incredibly well out there in terms of your model capacity. Even Elon Musk went out there to congratulate the head of DeepMind as well. So clearly, Alphabet has shaken up the market with the dominance of Gemini 3. Many had sort of put Google off for dust, sort of thinking that, yeah, they helped come up with the transformer, but then they lost their leading edge. No, this is a company that continues to be able to innovate at the very highest ends of generative AI. People are blown away by Gemini 3, but this is where we get the Alibaba story that you hinted at. We keep getting more models. They keep being more sophisticated. At what point do they become commoditized more broadly? And I think there's a story that you really pointed out a little bit earlier, the KKR version of this, the worry that maybe they're having to be really specific about which model developers they're going to lend their data center capacity to and build out to. Yeah. They want to ensure that they have an end user, because what if this does end up becoming commoditized more broadly?
Right. They want to make sure they have an end user. They want to be in the top markets. They want to also provide power. KKR working on all these things. The whole private credit story within AI is amazing, but also the fact that Google makes its own chips for Gemini 3. So
vertical integration.
Not only competition for Sam Altman and OpenAI, but also for Jensen Huang and NVIDIA. Caroline Hyde, thanks so much for joining us. A lot to talk about, obviously, in tech today, as every day. But retail still remains in focus, because this week we have earnings from Best Buy, Dick's, Kohl's. They all report tomorrow, giving an insight into the U.S. consumer as we head into the holiday shopping season. We also get retail sales data out tomorrow. Joining us now is Bloomberg retail reporter Lily Meyer. So, Lily, it's not all about tech. We still have to be spending money. And how's it going to look at these stores that we're looking at tomorrow?
Yeah, I think these stores reporting will be a really interesting window into the consumer and how the consumer is doing, especially as we head into the holiday season.
And how much of it is what we're going to hear from these companies is that they're trying to appeal to more higher income consumers? The Kohl's of the world that maybe was a more mass market type product, have they started to change their strategy?
That's a great question. I don't know if they've explicitly changed their strategy, but with Gap, for example, they reported last week, and one thing they shared was that higher income shoppers were heading there. So it'll be interesting to see if, you know, with these other companies, they're seeing higher income shoppers trading down and switching to Kohl's rather than a department store or something like that.
And quickly, Lily, Kohl's this morning announcing that they have appointed a new CEO after an interim role. What changes could that mean?
Yeah, so I think it will be really interesting to see. You know, he's been in the role since their last CEO, Ashley Buchanan, was fired, and he's largely been putting Ashley's strategy in, and it seems to be working so far. So I think tomorrow will be another check to see, you know, how is this going? Are they able to kind of get back? Because they've really been struggling over the past few years.
All right, Lily, thank you so much. We'll see what those earnings and the retail sales report brings. That is Bloomberg's Lily Meyer. Now, in pharma news, Novo Nordisk's pill version of Ozempic has failed to slow Alzheimer's disease in a pair of large studies. Despite being a long shot, the shares are plummeting, down nearly 10% on the news. Joining us now is Bloomberg senior healthcare reporter Naomi Kresge. Naomi, how important was this for Novo in order to get results that showed that it was improving on the fight against Alzheimer's, in order for them to improve against the fight with Eli Lilly and their market dominance?
Yeah, so I mean, we've seen a massive share plunge on this today, and I think that it's really down to two reasons. The first is that this trial many investors saw it as Novo's way to show some differentiation in the short term, like Novo's way to kind of come out of the doldrums in the short term, and that did not happen in the study. It was a failure. And the second is that often, you know, in a study like this, pharma will point, if there's a failure, they might point to some subgroup or some small thing in the study that showed some signs of being beneficial, and there really wasn't any language like that in the statement today. They were very straightforward about it having not worked, and they're in fact going to halt an extension of the study and just stop the trial.
Naomi, is there a concern that, you know, Novo has kind of fallen behind in the weight loss battle? It's got the semaglutide, Ozempic, and of course Wegovy, whereas Eli Lilly has this tirzepatide. I don't know the difference, but it seems like, and maybe that's just marketing, a more advanced drug. Zepbound gets, you know, better results reportedly. Are they losing you know, ground in this battle?
Yeah, they're definitely losing ground. And I mean, there was a head-to-head study that Eli Lilly ran last year in which Zepbound beat Wegovy. And, you know, it has shown, Zepbound has shown higher levels of weight loss in trials. And this is something that that Novo has just, you know, struggled to overcome.
All right, Naomi Kresge in Berlin, thanks very much for joining us. She covers healthcare and Novo Nordisk out of Europe. Check on what's going on in futures this morning. We have gains of 0.7% on the S&P. NASDAQ futures with tech stocks climbing up more than 1%, and Bitcoin continues to fall. A little bit of a rebound now at $86,000 even.
Yeah, is that a problem though? If Bitcoin continues to fall, does that act as a leading indicator for retail that's going to, at some point, sell the overall market? Coming up, we turn not to retail, but to the professionals. Ray Dalio says that the hedge fund model that's taken Wall Street by storm may not stand the test of time. Meanwhile, Bill Ackman readies his own big play with a possible Pershing Square IPO. We're going to have all the latest for you next on Bloomberg Open Interest.
Technology is embedded in every aspect of our lives.
And laying the vision for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Get your fixed income fix. Watch Bloomberg Real Yield around the world here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Let's get to high interest now. Look at what's making headlines around the world. Ukraine's president, Volodymyr Zelensky, says his country risks losing its key ally after Washington threatened to cut off weapons and intelligence unless Kiev accepts a U.S.-Russia peace plan. The proposal would force Ukraine to give up territory, slash its army, and abandon NATO hopes. Zelensky's European allies, including France, Germany, and the U.K., backed him in rejecting the plan, calling it a de facto surrender to Putin and Moscow. BHP Group has abandoned a fresh takeover attempt for Anglo American after the smaller miner rejected its offer, saying it wasn't better than its planned $60 billion merger with Teck Resources. The move ends BHP's surprise effort to disrupt that deal and shifts its focus back to major copper projects in Chile, Argentina, and Australia. You can see BHP Group shares actually moving lower, and although both are very little changed. Watch out, pod shops. Ray Dalio is not buying the hype. The billionaire Bridgewater founder says the multi-strat hedge fund model dominating Wall Street won't stand the test of time. He spoke on Bloomberg's Odd Lots earlier.
I think it's not going to last. There's different ways to play the game. That's a totally valid way to play the game. Maybe it's a totally fine way for the investment management, but it's not a fine way for building a 50-year-old. I did this. I built a 50-year-old organization.
For more on this story, we're joined now by Bloomberg's chief Wall Street correspondent, Sri Natarajan. I mean, Sri, it's been around for 35 years. That's not too bad.
It's like the difference between me and Danny, you know? Citadel and Bridgewater.
And you'd be much better at 50 than Matt Miller.
Oh, that's very kind of you to say.
But look, I mean, if you had to think about it, his point here is, and again, you have to look at where Ray Dalio is coming from. He built Bridgewater from a 2-bedroom apartment in New York in 1975 to one of the world's largest hedge funds. It's been around for 50 years, and it is known for its, shall we say, unusual culture, radical transparency, open disagreements, recording meetings, asking people to rank colleagues based on their attributes. So when you build a culture like that, everything else does seem a little different and a little weird. And his point seems to be that a lot of these multi-strats, so-called pod shops, they might be great at making money, but they don't necessarily build a fantastic business legacy. Ken Griffin would perhaps beg to differ.
Is the Englander
Is the Englander would beg to differ, and investors might beg to differ because the investors in these firms don't really care about Ken or Izzy's legacy. What they care about is, are they making a good return on their investment? Which means if these firms are performing, irrespective of how the broader markets are doing, they're happy. Having said that, you have to realize not all pod shops are made the same. There are enough variations. Yes, they all pool out money to these traders that almost operate as these independent shops. But the way it's done at different places is different. Some people pool their risks together. Some people just let them off on their own, give them strict risk limits, ask them to operate that way. At the end of the day, the differentiation is on December 31st, year after year, you look at how the performance has been. And if over 5, 10, 15 years you continue to perform well, that means you have a model that works and that will succeed. And there will be some pod shops that won't work.
And it means your employees are getting paid, right? Because I get his point, which is the broad point that if they're not working together, they can't build a collegial, sort of collaborative sense of school spirit, right? And I understand that. But the main thing that these women and men want is to get paid a lot of money, right? So if they get paid a lot, they're going to stay, and they're going to have real school spirit. And if they perform well, that'll happen. If they don't perform well, they won't get paid, and they're going to leave.
Right, so we touched it from the investor perspective, but Ray Dalio also talked about the point of whether it will be psychologically rewarding for employees to operate in a structure like this. And I think your point is valid. Making $5, $6, $10 million a year, year after year, is plenty psychologically rewarding, at least on Wall Street.
It doesn't go further than just making money, but it's like actually touching investments. Because you could be a researcher at Bridgewater and come up with all these theses and have no idea as to whether or not it actually gets implemented. But if you're in a pod shop, you actually get to invest money. Isn't there a huge lure for that, for talent, to go to a pod shop versus just a huge research operation?
Yes, there is great risk and reward, but I mean, that's the kind of talent that Wall Street normally attracts. People who are confident in their own ability. And if you tell them, here, I'm giving you a massive pool of money, do with it what you want, you have strict risk limits. As long as you're within that, we will keep backing you and you can keep making money. Yes, that is quite the motivation.
By the way, that's a great point. And I think it counters my cynicism, right, about just wanting to make money. Like,
No,
they
I think-
actually
but I
want
think
to affect
the two go
what they're
hand
working on.
The two go hand in hand, though, right? Because money becomes the sort of gold star in your ability to manage money. So you can't have one without the
Right,
other.
but it's not as shallow, so I commend you on that
could be
point.
shallow, too.
I mean, the difference also is silly, as we pointed out, right? Citadel and Millennium have been around for a long time. Like 3.5 decades is a pretty decent amount of time, and it's almost as long as Bridgewater's been around.
And investors have been flocking to them. Millennium, $81 billion. Citadel, about $71 billion. Those models have proven themselves to be good, successful, and able to attract investors for the long term.
All right, Sri, great having you on the program. Really fantastic story. Reading high on the Bloomberg terminal, needless to say. Coming up, Lori Calvasina of RBC Capital Markets joins us to discuss whether the pullback has run its course. Have we seen enough with a 5% drawdown from peak to trough? We'll put that question to Lori next. This is Bloomberg Open Interest.
Coming to you live from Kuala Lumpur, the whole world is
The
here.
APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today. and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
I'm not worried about the economy. What I am a little bit worried about is that the Fed is kind of dragging its feet. So I would agree with Neil's comment, like the Fed needs to cut, but not to save the economy, but to see the full rotation into these lagging parts of the market, the interest rate sensitive parts of the market, which is really our story for 2028 or 2026. We think the 7,800 is dependent on the earnings cycle broadening out.
That was Mike Wilson of Morgan Stanley speaking with Bloomberg TV on his outlook for equities, with the capital markets head of U.S. equity strategy writes, quote, a short-term pullback in the broader U.S. equity market has been long overdue for a number of reasons, in our opinion, despite our constructive view on the year ahead. And Lori joins us now. Lori, you've also been sort of looking through the wreckage, I mean, if you can even call it a wreckage of last week, and trying to discern whether the pullback has run its course. What are you looking to figure that out?
Yeah, look, and I think it's TBD, and I know nobody likes that answer, but that is intellectual honesty. Look, we're watching valuations, which on an FY2 basis have been kind of bumping up against ceilings since August, right? And we've seen some improvement there. We haven't seen a ton. I don't know that valuations are going to give you sort of the magic bullet to tell you to get in or get out. We are going to cycle into a new year of earnings relatively soon. I'm watching AAII net bulls very closely, and I think what I'm seeing there really summarizes how I'm thinking about the broad market generally right now. We saw net bulls fall to about minus 11% last week, and the 4-week average is a little less than minus 5%. If you look at where that 4-week average is, it could absolutely have more room to fall, right? We haven't even hit one standard deviation below the long-term average yet. But if you take, sort of the levels we're at, and you look at what they typically signal about 12-month forward performance in the market, you tend to get about a 10.8% forward return. So, short term, are we out of the woods yet? Hard to say. But on a longer term basis, I do think the good news is sentiment's already been pretty bearish.
I mean, what is, you think, the main driver? Because before Friday morning at 7:30, it looked like the AI concern was the main driver, or AI optimism. Yeah. And then John Williams came out and said, like, near term, we still need cuts. And now it looks like the Fed is the main driver again.
So I think all of these things have been contributing. And when you have extended valuations, lots of little things, I hate to use the word cockroaches, right? But I think lots of little problems get magnified. And I think if we look at the Fed specifically, we've seen for several years that if you look at how many Fed cuts are priced in over the course of the next year, and you compare that to S&P 500 performance, or if you compare that, frankly, to small versus large, and Russell 2000 tends to be a rate cut bet a lot of people like to make, both of those, you can see the reaction, just in the real time, right? When we're putting more cuts in, small caps tend to do well, market tends to go up. When you take those cuts out, small cap tends to lag and the broader market tends to stumble a bit. And so we reverse that. I wouldn't ignore what's going on with Bitcoin, and it's not my area of expertise. I don't know why it's going down, but it does tend to be a good leading indicator as well.
All right, Lori, we're going to keep you with us through the opening bell. We have futures ahead of the opening bell that are up, although as you see, Bitcoin right now pointing down 2.25%.
such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You said they ask interesting questions.
Bloomberg Television. Top experts, great questions. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
We are moments away from the start of trading on this Monday morning. This is Bloomberg Open Interest. I'm Matt Miller. We're looking at green on the screen after we did not turn around and sell off into the close on Friday. We ended higher because of optimism that the Fed is going to cut rates in December or swinging in that direction. S&P futures up 0.6%, NASDAQ futures up 0.9%. The small caps doing a whole lot of nothing. You've got an IPO at the New York Stock Exchange, XEO ringing the bell there. So this kind of animal spirits is still alive. And then we have I think it's a REIT, VERT, a real estate fund there, trading at the NASDAQ, ringing the opening bell. We are really focused on, continue to be focused, obviously, on the tech story. It rules, and the AI, the Gemini 3 announcement last week really, I think, has changed the way a lot of people feel.
You told me in the break you're going to switch from ChatGPT to you're actually going to do that.
The Gemini 3, well, for my personal account, because I have a work ChatGPT account. So I still have my feet in both camps.
Okay, I think you're an interesting case study, because the question in this market, and Sam Altman said this in a memo to his employees, that the vibes are rough for them because Gemini, their update, was so good. You can see the impact in the stock market. Alphabet shares up 3.6%. It was up all of last week despite some of the bigger ruptures. Is it going to be eating everybody else's lunch? Is this not everybody is a winner? Is it a winner takes on? Is that winner increasingly becoming Google? Amazon, those shares also up 1.5%. There's some documents that Bloomberg analyzed showing that their data center operation is much larger than commonly understood. Does it mean that they get all the capacity? And worth just checking on NVIDIA. That is struggling to hold a bid. There are hopes that the U.S. will loosen some of their export rules for NVIDIA into China. Maybe troubling, though, that those shares aren't gaining this morning, Matt.
Yeah, well, I think the most interesting takeaway from the Alphabet story isn't that Gemini 3 may be better. I'm sure that it's a horse race where someone's always going to be pulling ahead. But the fact that they use their own chips to train this model, and they are cheaper and use less energy than NVIDIA's chips. So this is the same thing we hear about the Chinese AI, that it's less energy intensive, and that has to be a good thing. Novo Nordisk shares are plunging after the drug maker said a pill version of its Ozempic drug for weight loss failed to slow the progression of Alzheimer's disease in 2 large studies. They didn't tell us if those people got a lot skinnier, but apparently they didn't improve with this horrible disease. I think more and more people are coming in contact with as the population ages. So struggling to find some relief there, and also a new use for their pill. Lori Calvasina, RBC Capital Markets head of U.S. equity strategy, is back with us. And, you know, it's the consumer that we're thinking about this week, as well as the tech private credit and Fed stories, because you have Best Buy tomorrow, because we have Dick's Sporting Goods, there's some other retailers coming out.
And retail sales.
And retail sales as well. How strong is the link between the consumer and the S&P as retail investors play a much bigger role in investing? And, you know, I think that's what we're seeing in Bitcoin as well.
I think you sort of hit the nail on the head, Matt. Like, you know, we talk about the K-shaped economy, weakness at the lower end income consumer, and that not, you know, sort of filtering into GDP as much. But I think the sentiment link has probably grown. And one of the things we've pointed out, you know, a number of times in recent years is that if you look at the year-over-year price in the S&P 500, or frankly even the Russell 2000, and the University of Michigan Consumer Sentiment Survey, there has been a very strong link between those two things post-COVID, and I think that's just an expression of how, you know, maybe retail investors are having a bigger influence, or frankly, even how institutional investors are acting a bit more on sentiment. So I think that's very important. One of the things we said in our weekly this morning about that University of Michigan consumer sentiment data is it's really bad, but from a strategist perspective, it's so bad you do have to be on guard for reversions. And I know those are always sort of tough, you know, to think about, you know, when you're looking at this data point, right, that's kind of hit this new low and gone below, you know, sort of important lows that it's made in the past. But you have to keep a clear head when these things, you know, are pretty lousy, frankly.
I do wonder, though, if the increased participation of retail goes back to a point that you were making before the break, that the AAII survey, you've seen a lot of those individual investors be outright bearish, that maybe institutions are more sort of on the bearish side. Howard Marks gave an interview to the FT this morning that basically said the buyers of this market have been traders and not investors. Do you think that a lot of the melt up that we've seen so far this year has been that? It means that there is more fragility in this market.
So, you know, if I go back to the summer when I feel like the institutional community was pretty bullish, you know, I was hearing a lot of excitement over the tax bill and CapEx is coming. I was hearing a lot about rate cuts are coming. You know, I was hearing a lot of just sort of general excitement about the economy. And as we look here, right, and we're in sort of this data, I don't exactly want to call it a data blackout, right, because we're starting to get the information in, and we actually have had a lot of good alternative data. But I think, you know, there are some questions of, okay, maybe, you know, I'm not really hearing the R word being used, but maybe things are a bit more wobbly than we thought on labor in particular.
Neil Dutta was using the recession word earlier, just a couple hours ago, saying that if we don't get rate cuts, there will be a recession, that he thinks things are that fragile. Would you agree with that?
You know, it's not what I've been hearing from institutional investors. We may be talking to different people, to be honest. But I would say, you know, it's certainly not on our economists' radar. I mean, they're looking for, I think, 1.6% real GDP growth next year. So they do think that sort of the impact of a lot of policy things we've gone through this year are maybe having a bit more of an impact on growth than, you know, some in the consensus, frankly.
Well, but maybe because we are going to get rate cuts, right? I mean, President Trump is not going to put somebody in charge of the Fed who isn't going to deliver rate cuts, and he gets to replace a few different people on the FOMC. So he's going to get his wish, right?
Well, if you look back over the history of rate cuts over time, at least since they've been announced, it is really hard to fight the Fed. The only time we really tend to see stocks go down on a 12-month forward basis after you get some kind of cut is if those cuts are associated with the recession, either a pre-recession cut or a during a recession cut. If you're not associated with a recession or it's coming after a recession, you tend to have, you know, pretty powerful returns, to be honest.
But don't fight the Fed. Like, who are we fighting at this point? Because at the moment, sure, even if Trump puts in a pick who wants cuts, you've already heard from 5 members on the FOMC who have said that they don't want to cut in December. Who are you fighting? Who do you listen to when you don't have consensus building on the Fed anymore?
Well, I think this goes back to, you know, valuations are sitting where they are, right? And so if you go back to the summer and people were pretty certain that these cuts were coming, and now you've got some doubts, well, maybe it's not going to be quite as many as we thought. I had one investor tell me, frankly, you know, who had been pretty bullish on rate cuts over the summer, tell me, you know, not too long ago, well, this is all kind of baked into the market, and we've pulled all this good news forward. So I think there's that dynamic as well. And I think the reality is if you weren't sitting at these valuations that were bumping up against ceilings, you know, this kind of debate wouldn't necessarily take as much of a toll on the market.
By the way, you know, there is a theory that the president could arrange a dismissal of all the 12 regional Fed presidents and put his own people in place there as well. I only know this because I spend 2 hours a day listening to Balance of Power. Like every single day I'm listening to our politics coverage, which is fantastic, by the way, and I recommend that you do as well. But how much do politics matter to this market? I mean, how important are, you mentioned one big beautiful bill, right? We have the midterm elections not too far away. How key is it to pay close attention?
So what we've said on the CapEx issue is that this is a show me story, right? There's some good stuff in the bill from a CapEx CapEx perspective. We haven't heard companies saying a ton about CapEx plans outside of sort of the tech space. But, you know, we are getting a little bit more than we were, so it feels like it's headed in the right direction.
It's free money, right?
It's free money, you know, and look, there was one bank early on in this past reporting season that said they were seeing some customers who had been renting. I think they were talking about equipment, I'm not totally sure, but they were saying kind of moving from a rent to an own mentality. So that's a good step in the right direction, right? We heard another bank that said they were seeing an interest in CapEx, but a lot of that was tech focused, right? As opposed to like building factories. So there are a lot of nuances to this. I tell people, you know, just watch ISM new orders. It tends to lead actual CapEx spend by about a year, and that's been sort of meandering along at very weak levels. You know, I do think just more broadly, midterm election years do tend to be sort of a weak spot for the equity market. I think that's a risk factor you consider for next year. And, you know, it's funny, we haven't gotten a whole lot of questions about midterm elections recently. It's all been about AI, a little bit about Bitcoin earnings. But I've been sort of curious as to when those election questions are going to start popping up.
We can only focus on like one horrible or disruptive thing at a time, Lori. I think maybe that's why. Lori, thank you so much for joining. Always a pleasure to have you on. Lori Calvasina of RBC Capital Markets. A check on your equity market about 9 minutes into your trading day so far. We are positive, but some pretty bad breath. We're up 0.8%, but only 177 companies are leading us there. The reason that we can get up there despite bad breath is that it's a lot of these big tech players that are doing well today. Broadcom, the biggest gainer, up by 11.7 points is how much it's lifting this index, followed by Alphabet. We've been talking about how that new Gemini model has been so good that Sam Altman is warning about bad vibes for OpenAI, followed by the other big Mag 7, Apple, Tesla, Amazon, NVIDIA also flipping into the green after a little change to start the day. To the downside, you do have Oracle that's not been able to catch a bid. They've been the poster child for spending on debt in this debt market without a clear return. You also have oil not doing well. PNG, not a clear reason that they're down this morning, but it is, as Matt's been pointing out, an important week for the retailer. If you look at the overall indexes and the different sectors within them, oil, energy, that is at the bottom. Oil prices have been falling. It's down 1% so far this morning. Potential hopes for a peace plan in Ukraine has meant that oil prices have come in. There's also a report that she will be speaking with Trump by phone on Monday. Will they talk about Ukraine? Will they ask them to push Russia in a certain direction? Meanwhile, the best performing sector are communication services. That's a lot of Alphabet in there, Matt.
Yeah, a lot going on in Google today, and we're going to keep talking about that. Coming up, Amazon quietly expands its data center operation to more than 900 spots. We'll have details on all that is tech next. This is Bloomberg Open Interest.
At what point do you say, we made a mistake and we're getting out? How long do you give it before you say, this isn't working?
That's one of the most critical differentiators between great investors and just mediocre investors. Because on one hand, you have to have confidence and conviction in all the work you've done, the decision you've made, that if you have a little stumble here and there, if you immediately are selling out, you're never really going to fully realize the depth of potential long-term success. And yet, on the other hand, if you're stubborn and you refuse to admit I'm wrong, you continue to think the market's wrong and I'm always right, then you'll get caught in some very, very difficult positions over time. So that ability to have a fresh perspective, take in the new information, even when things aren't going the way that you'd expect or to hope, and to really understand from this price point today, is this still going to be one of the most compelling investments or not?
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burden in Florence, Italy, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
About 15 minutes into your trading day, here's where we stand, and it is a tech market that is leading us higher by 1.4% in the NASDAQ 100, with Broadcom, Alphabet, those shares outperforming this morning. Some of your other top calls, the analyst action that we are looking at, Wolfe Research, they have raised Morgan Stanley to a buy, saying that accelerating investment banking growth and strong wealth management is helping to support higher earnings. The analyst there also set a street high price target of 198. They're just below 160, higher by 0.7%. Next up, Goldman Sachs kicking off coverage of European automakers with a buy rating on Ferrari, BMW, and Mercedes, citing strong balance sheets, robust cash flow, and resilience against Chinese competition. Analysts said that the luxury trio are best positioned in what they call tumultuous times for European automakers. Ferrari shares listed in the U.S. little change this morning. Finally, BNP Paribas initiating coverage of Alphabet with an outperform rating and a price target of $355. Analysts cite the company's strong AI leadership, resilient ad trends, and cloud profitability as key drivers of growth. Does that imply that BNP didn't have a price target on Alphabet before? I find that hard to believe considering they're huge, but there you go, those shares up 5.8% mad.
All right, maybe they suspended for a little bit, but let's stay in the tech sector right now because Bloomberg Research has found Amazon has quietly expanded its data center operation. Its footprint now includes over 900 facilities in over 50 countries. For more on all things AI, and believe me, we're going to talk Google and NVIDIA as well. We're joined by Mandeep Singh. He's Global Head of Technology Research for Bloomberg Intelligence. Let's kick it off with the Amazon story, although I think it's fair to say that we're both more interested in Alphabet today. So they have a bazillion data centers. Like, I'm actually not moved by that. I could have guessed it, and I don't think it really matters, right? How many actual places they have, does it?
I mean, right now, when you compare them to a CoreWeave, which is a pure play data center play on the GPU side, CoreWeave has about 32 to 35 data centers. It's got 250 plus 100,000 GPUs, and they have a $5 billion revenue run rate. Amazon is like 130 billion plus run rate, so almost 30 times. So it doesn't surprise me they're around that 900 mark when you look at CoreWeave's footprint. But the real challenge for Amazon is they don't have the GPU capacity that some of these neoclouds have, which is why their backlog has trailed the likes of Microsoft and Google, and now they are being more strategic about it.
So this is where I'll be the one who asks the dumb question, right, for the guys in the back row here. Why does it matter if you have data centers all around the world with lightning fast fiber? Can't you just have one that has like 50 gigawatts of compute? Why do you need these edge centers like near New York or near LA?
So Matt, you're serving a large language model with 1 trillion parameters to over, let's say, 1 billion users. And not all the billion users are in that location. They're opening a data center, but that's where these models need so much compute. They require, 1 trillion parameters to be loaded in that server or the GPU.
But it has to be regionally accessible? I thought the idea was...
That's how you minimize the latency. Anyways, these models take a lot of time. That's the biggest criticism, that they are slow. So how do you serve that traffic, which it could be billions of users, and that's why you need these edge locations to really cache and make sure your users have a good experience with the LLM.
Okay, I thought I was more interested in Google, but now I have more questions on this, Mandeep. Okay, if you are building this out and you have all these data centers, you have 900, does that also kneecap your competitors? Is it also harder for them to find the land to get the data centers if Amazon is buying up so many?
Right now, they are in land grab mode because there are very few facilities with the kind of power requirements that these GPU centers have. And look, I mean, everyone is trying to make sure they get a hold of them because earlier it used to be 3 players. Now you have got 10 different neoclouds that are also scrambling to get a piece of that data center pie.
By the way, it's not just latency, right? The other big problem is hallucination. And you point out that Gemini 3, Google's new advancement, has a greater ability to curb AI hallucinations. And they do it using their own chips that need to be powered by less energy. So it's like a win-win-win here for Google and a loss, in a sense, for OpenAI and for NVIDIA.
I mean, look, vertical integration has always proven to be a better strategy. The question was, in this case, could the TPUs from Google match up to NVIDIA GPUs in terms of performance and tokens per watt, which is the key metric? And in this case, TPUs are in their 7th generation. So Google has been doing this for more than
the Tensor.
The Tensor processing unit. And that's where other custom silicon efforts have still not caught up to NVIDIA because they're in their 2nd or 3rd generation. So, I mean, look, Google has the search index, which is where I think it's their other big differentiator that no one, even OpenAI, doesn't have the search index for the web that Google has. So their results are grounded a lot better than any of the other LLMs out there.
So when Sam Altman warns of rough vibes and warns of revenue that will take a hit because of the competition, because of Gemini edging ahead, how does that change OpenAI's behavior in the race?
I think they will be more product-centric and more application-focused now. So whether it's e-commerce, which is where they can really hurt Google, because let's say OpenAI really doubles down on e-commerce with ads and integrating with a lot of marketplaces. That's where bulk of Google's search ad revenue comes from. The $200+ billion in search ads are tied to e-commerce. So that's where I feel OpenAI is really going to either release a new model, new functionality, because e-commerce is the place where you can hurt an Amazon and a Google and all these incumbent players.
And notably a place that delivers revenue, which is something everybody wants to see right now. Mandeep, thank you so much for joining us. Mandeep Singh of Bloomberg Intelligence. Coming up, the financial version of a deboned turkey stuffed with a duck that's been stuffed with a chicken. We'll explain the rise of the turducken investment trend that's coming up next on your Thanksgiving Day week. This is Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up to them in the news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
One of the biggest fads of the COVID retail trading era is making a comeback. SPACs are now launching onto crypto companies and quantum computing, much like a financial turducken. Bloomberg's Bailey Lipschultz joins us to explain and explain you're going to have to do. How does this look like what I'm sure is a delicious food item of the turducken?
So the way that the visual does it perfectly, I would say. So basically, SPACs or blank checks, they partner up with a private company, take the private company public. But in this new iteration, in the era that we saw of the digital asset treasury kind of taking off, you take the crypto and you put it in the treasury company. And then you take that company and you merge it with the SPAC. So I think that's crypto's your chicken, treasury companies, your duck, and then the SPAC is your turkey.
I mean, to me, it seems like greater fool theory cubed, right? Because the only thing holding up the price of Bitcoin is the fact that you can later sell it on to the greater fool. The same is true, really, of treasury companies. I mean, what's the growth in treasury companies, right? And then a SPAC is just another version of that. So,
well, the main critique of these DATs is that your whole process to that point is you're going to be able to sell shares or convertible debt at a premium. As long as you trade above net asset value, something that Michael Saylor had kind of latched onto and was executing quite well, that's the whole vision, and that keeps driving up Bitcoin. Does it drive a circle? I let other people debate that. But the thing with a SPAC merging with a DAT is that not only do you have kind of the issues of the DAT hoping that it trades at a premium, you also have the founder shares coming from the SPAC.
By the way, why do you say merging? I'm from an old school Bloomberg journalism perspective. Isn't the SPAC buying the DAT?
See, people say that, and I think it's a little bit of a misinterpretation because that implies that the SPAC is outright taking over the DAT, whereas it's only getting a portion of it. So when you look at the Cantor deal, only about 3 to 4% of that ultimate company is going to be held by the SPAC. So it's really a vehicle to take it public, but it's not taking over in the sense that it's majority held.
By the way, did we show the stock of the Cantor SPAC? Because it's amazing how it just jumps up right when they make the announcement. And then, I guess, the smarter investors sell out over time.
You're kind of regressing
Leaving
to
the retail investors holding the bag. Is that the case?
Talk about greater fool theory. This is essentially a trading vehicle. And if you talk to most fundamental investors, they'd say, okay, well, if you're buying maybe a SPAC that's taking a quantum computing company public, okay, maybe it's worth $11. But when it trades, I don't know, $50, you're kind of just using it as a trading sardine, as they said back in the day.
Just quickly, Bailey, though, if we keep getting weeks like last week, surely this isn't sustainable.
I don't think it's sustainable. We will get the Cantor Fitzgerald vote December 3rd. We will get the Columbus Circle vote December 3rd. So we will actually see a couple of these companies cross this finish line, from the SPAC finish line. So it'll be interesting to see if they immediately trade below NAV. Do they trade down to NAV? But for all intents and purposes, I can promise you, Cantor right now trades at about $14. There's not $14 worth of Bitcoin in that company.
By the way, I thought of you when I was reading John Author's column. He says, meme stocks proxied through the Roundhill meme stock ETF that relaunched last month in what now appears to be a spectacular signal that the top has been reached. Bailey Lipschultz covers SPACs for us. Coming up next hour, Caterina Simonetti of Morgan Stanley, and what sectors will perform best in 2026. And we'll tell you about an anti-anxiety beverage.
cidade estava sitiada.
Isso, ao começo, eu também não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money. Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
CBS News on the Hour, sponsored by Eggland's Best.
I'm Deborah Rodriguez. Both the White House and President Volodymyr Zelensky are reporting progress after weekend talks in Geneva on President Trump's peace plan for Ukraine. Zelensky spoke today in Sweden.
We are at a critical moment, and we are working closely with the United States, with European partners, with many others to define steps that can end Russia's war against us.
The 28-point plan demands Ukraine give up portions of the country to Russia permanently. New move by the U.S. as the Trump administration considers military action against Venezuela. Correspondent Charlie Daggett is in Puerto Rico, where thousands of U.S. troops are stationed.
Cartel de los Soles, which is what the United States has indicted Venezuelan President Nicolas Maduro of being linked to that drug organization. As of today, it becomes a foreign terrorist organization. That does change the rules, and Defense Secretary Pete Hegseth said this gives President Trump more options.
Venezuela is rejecting the designation as a, quote, ridiculous lie. The CBS News poll finds 70% of Americans oppose any U.S. military action in Venezuela. A Wisconsin woman who nearly stabbed a classmate to death 11 years ago to please the fictional character Slender Man is back in custody after she ran away. CBS's Jennifer Kuiper has details from Chicago.
23-year-old Morgan Geyser cut off a monitoring bracelet and left a group home sometime Saturday night and was found Sunday night with a 42-year-old man at a south suburban Chicago truck stop. Geyser had been living in a group home after she was released earlier this year from a psychiatric hospital.
Geyser stabbed her classmate 19 times while a friend egged her on. They said they were trying to earn the right to be Slender Man's servants. An expensive robbery in Northern California. CBS's Jim Krasula has the story.
An armed thief posing as a delivery man broke into a San Francisco home, tied up the homeowner with duct tape, and stole that person's cell phone, laptop, and $11 million worth of cryptocurrency. That was apparently done through the victim's computer. It's unclear if the victim was hurt or if anyone has been arrested in the case.
They were practicing for New Year's Eve in Times Square this morning. Organizers unveiled a sparkling new ball. CBS's Michael Toscano.
It's covered in 5,280 Waterford crystals, nearly twice the amount of the old one, and with circular crystals for the first time in 3 sizes, each with their own design, which will change every year.
Dow's up 3 points, Nas ahead 318. This is CBS News. It's a club no one wants to join, and its membership is growing.
Nearly 1 in 10 Americans has faced a cancer diagnosis, up significantly since 2009. That's largely because more Americans are living longer after their diagnosis. The overall number of new cases has fallen slightly. That said, breast cancer in women under 50 is on the rise, and though there's been a decrease among 19 different cancer types in people under 50, there's been an increase in 14 other cancers in that age group. Vicki Barker, CBS News.
The Consumer Product Safety Commission is raising a red flag over Anna Queen's P700 play yard made in China, sold on Amazon. The CPSC says they're being recalled because of a potential risk of suffocation for infants. The playpens come with black mesh panels and white fabric top rails, decorated with bare faces and paws. No injuries reported. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming as well on YouTube. Head over to youtube.com and search Bloomberg Podcasts, and that's where you'll find us. Coming up, it is Scarlett Fu and Paul Sweeney. Coming up, we're going to bring you the Mike McGlone. He's got to talk to us about crypto. I mean, I got Bitcoin at $86,000 per token. That's down more than 30% from the recent high, so we're going to figure out what's going on there. Emily Lavelle, Chief Investment Officer at New Mexico Climate Investment Center, discuss our outlook for the markets and the green energy policy. Brendan Murray, Bloomberg News Global Trade Editor. He's going to recap Howard Lutnick's comments on U.S. trade with the European Union and China. And Thomas Paulson's going to join us. He's Advent's head of market insights. They look at the gaming industry, the theme park business, the hotel business. I don't know, it seems like all those businesses are doing pretty well, so we'll check in with Mr. Paulson coming up in this hour as well. So let's kick things off with Alexis Christophers with a Bloomberg Business Flash. Alexis.
Thank you, Paul. Tech stocks fueling the gains here in this holiday-shortened week. We've got the Dow Jones Industrial Average up 87 points at 46,328. The S&P 500 up 63 at 6666. That's the level right now on the S&P. I don't know what that means, but I'm just the messenger. The Nasdaq Composite up 417 points now at 22,694. Oil holding steady here. We've got WTI at $58 a barrel as traders weigh prospects for a potential Ukraine-Russia peace deal. We've also got a mixed picture in the Treasury market for yields. The 10-year yield at 4.05%, the 2-year yield at 3.5%. Bitcoin down another 1.5%, but holding above 86,000. That's after a weekend rebound, but Bitcoin is still on track for its worst month since 2022. Shares of Alibaba jumping today after a strong debut for its AI app QN. Shares of Baba now up better than 5%. And shares of Novo Nordisk, ADRs of Novo Nordisk, also higher today. That's after studies, or lower, I should say, after studies showed an Ozempic pill failed to slow Alzheimer's progression. Shares of Novo Nordisk down now 7.6%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash. Back to Scarlett and Paul.
All right, Alexis, thank you so much. We appreciate it. As Alexis just reporting, we got stocks moving higher today. Let's take a look at some of the stocks on the move. I'm Paul Sweeney alongside Scarlett Fu. We're joined by Bloomberg's Christina Kino. Christine, what are you looking at?
Well, we got to take a look at Oracle, Paul, because that was at the epicenter of last week's very turmoil in stocks in general. But yeah, today it's doing quite well. So ticker ORCL, those shares are up nearly 2% at the moment, just keeping along with the rally in the rest of the equity complex here. But all is not in the clear, because looking at the credit space for Oracle, their credit default swap, so this is the cost of protecting against the potential default in Oracle, that rose to the highest in more than 3 years. So that means that people are still demanding that protection. And, you know, it really is still all about the questions over how are these companies going to fund their AI deals. And for Oracle specifically, its credit rating is actually weaker than Microsoft or Alphabet. And this is why it's becoming a bit of a barometer for just risk in the market, at least when it comes to all these credit questions. Yeah. And by the way, the slump last week, that caused Larry Ellison's net worth to go down $130 billion. So, you know, he was briefly the world's richest person in September. But yeah, not anymore.
Fairly or unfairly, the credit market has picked on Oracle as the way to perhaps hedge against or maybe even bet against the whole AI trade.
Well, I think the reason, I just looked at the FA function on the Bloomberg Terminal, financial analysis. The net debt to EBITDA is about 4 times on a trailing basis, maybe 3.8 on a forward basis. That's very high for tech standards. It's rare to see something north of 1 or 2. So to be at that level, that's kind of what I think.
And it stands in contrast to the rest of the tech industry that is borrowing money.
Exactly.
Let's talk about Alphabet.
Yeah, Alphabet. So that is on the positive end of the tech spectrum, of course, leading those gains. Those shares, ticker GOOGL, up now 5.9% and really leading the rally. Also hit a record high earlier today. And, you know, still very much coasting off of the rave reviews for its latest Gemini AI model. And also remember last week, so the information was reporting that OpenAI CEO Sam Altman was apparently telling recent colleagues that their progress, or Alphabet's progress in the AI space, could actually, quote, create some temporary economic headwinds for our companies. So OpenAI feeling a little bit of competition from Alphabet here. And, you know, very interesting, though, because Bloomberg Intelligence did some analysis, and they found that regardless, you know, despite of all these positives for Alphabet, the company, their excess returns year to date are still the weakest among investment-grade tech peers. But perhaps, given the reviews for their new Gemini model, that could change the tide a little bit here.
I think Gemini is basically the only way I really deal with AI. But it's good, though.
Because you rely on Google searches and it pops up right away.
And it's very good. But what I do notice is I don't click on many links.
Right.
So the ad model for them, I would think, would be a risk. But people like Mandeep Singh saying, no, it's not. It's okay. And the stock's at an all-time high. So
talk to the advertisers. They're not happy about it.
I know. But, I mean, Google stock, all-time high. So I guess they're figuring it out.
Yeah. Investors are happy, at least.
I'm a Gemini guy. Sorry.
I can
One
do
more
a Gemini.
quickly. We got Centene.
Centene, yeah. So ticker CNC. Those shares also doing well this morning, up more than 7% now. So this is a health insurer, right? And of course, we got that report from Politico saying that the White House is apparently expected to propose a 2-year extension of Obamacare subsidies with new limits on eligibility. And is now also reporting that President Donald Trump is expected to announce a general framework to address healthcare costs and spikes in ACA insurance premiums. Centene, of course, offering healthcare plans under the ACA marketplace. So potentially good news for them there.
All right, Christina Kino, thank you so much. We appreciate that. Christina Kino, managing editor for Markets Live. That's Bloomberg News. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Bitcoin, and gets your attention, folks. It is down another 1.8% today, $86,000. The high just, a month and a half ago was 125,000. So we got north of a 30% drawdown in Bitcoin. It's a commodity to me. I don't know, more sellers and buyers. So let's check in with Mike McGlone. He covers this stuff because he's a commodity strategist for Bloomberg Intelligence. Mike, you've seen commodities trade up and down for decades here. Put this Bitcoin move in context for us.
Well, Paul, I like the way you started. It's a commodity to you, and I used to think that too. Now, to me, it's actually less of a commodity, because in all commodities, you have an underlying basis, and you have supply and demand fundamentals. In Bitcoin, there's millions of competitors, and there's no underlying to it. So I'm worried, and it doesn't have a practical value other than to trade and hold value. At least gold looks pretty and things. So I'm afraid what's happening in Bitcoin is we're seeing that overdue purge and those millions of cryptocurrencies that track nothing. It's pulling down Bitcoin. They're probably going to have to head towards zero. And the key question is, what do we do for the end of the year? Can we recover from these levels? And I think it's unlikely we do, which means the whole system might be coming down into maybe a Grinch is going to win Christmas.
Wow.
That's quite a call, Mike McGlone. Yeah, the whole system coming down. I mean, for now, people are saying that there's we're shaping up to be the worst November for Bitcoin since 2022, right, which was around the time that Sam Bankman-Fried and his company, basically fell apart. Talk a little bit about the Bitcoin ETFs and how demand and inflows into those products drove a lot of the rally in spot Bitcoin overall, and perhaps are removing a big source of support right now.
Well, I'm glad you went there, Scarlett, because my primary goal the last few years when we launched the Bloomberg Galaxy Crypto Index, the idea was eventually for the whole space to be tracked widely by ETFs, including that index. And once we got there, I figured to put in a plateau. Now, we've gotten there, and I think it's a plateau. So basically, we've gone from the geeks and the insiders who made a lot of money, pushing it over to retail in the big picture, people who want to catch up and chase the performance, and they're finding out it's poor performance, near a peak. They're piling on to the biggest ETFs ever. It's classic peak bubble. So if you want a bubble in all markets, it starts with cryptos. Maybe not equities, but it's as bad as it was for dot-com bubble in 1999. Now the whole thing is going back downward. And by the end of the year, should it recover? I look at it as we need to just purge millions of these things that track nothing that are worth billions of dollars. One good example is number 9 on the Bitcoin CRYP page is Dogecoin. It's worth $21 billion. It tracks nothing. It was launched as a joke.
Wow. So we had Eric Balchunas on just earlier, and he said most of the ETF buyers are still in it. They haven't sold. About 5 or 6% have sold or seen outflows out of the ETF. So the ETF flows are kind of hanging in there at this point. So we'll have to see. Do we know who is selling, Mike?
Yeah, well, certainly some of the OGs. People have been in for a long time. Once they heard that Trump was so involved, they wanted to get out. But Eric has been on top of this. He nailed it at the very beginning with the launching the ETFs. The problem is, I hear the average price for all ETFs since they've been launched for Bitcoin is around $89,000. We're below that. So we're getting below there. And also, they've got double the volatility of what they left. They left the stock market to get better performance. They're getting worse. This is classic peak stuff, Paul. I'm worried that it's just going to, I'm worried about that Grinch effect into the end of the year when everybody expects, oh, Santa Claus is going to come, but Grinch Grinch shows up.
Okay, maybe, Mike, but the president and his family are very much invested in Bitcoin, in the crypto industry at large. Is there not a Trump put here?
Well, that's a key thing. What are they going to do to make a difference? Strategic Bitcoin Reserve, though, that was floated last year, didn't work out. We have the president's son calling for it to go much higher. In the future, we might have laws against those kind of things because there's a vested interest. I don't know how it's going to work out, but it was that Faustian bargain. I'm worried about that just imploding now. And the key question is, what stops it? What are they going to do to make it change? The bottom line is there's so many millions of these things that are just pie-in-the-sky speculative digital assets. They just need to purge, and then we'll go back. And I'm afraid that means Bitcoin's first stop on this move is really towards 50,000. It's got to really end the year up on the year to show anything other than that. I'm afraid 50,000 is the next key level, which means dominoes tumble. And the question is, what can they do to make a difference? Maybe get the Fed to ease, which means more inflation, which means they're not going to get elected.
Right. Well, all of that, the macro headwinds are the same as for any other asset class, I guess, in many ways. Yes. Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist, joining us on Bitcoin. And Paul, I was just looking at it. The value of a Trump-branded meme coin has fallen by about a quarter since August. The Trump family's fortune, according to the Bloomberg Billionaires Index, has fallen to about $6.7 billion from $7.7 billion in early September.
Okay. Well, still a good run there. And but they got the exposure to the crypto space is definitely an issue for them and for a lot of other folks as well. But again, we had Eric Balchunas on from Bloomberg Intelligence, ETF analyst, and he said, boy, the Bitcoin ETF, most of the buyers are still in the fund in terms of the flows.
Well, Bitcoin has seen big drawdowns and come roaring back in the past. So, you know, for someone who's been watching Bitcoin for a while, this happens.
Yep, this happens. And so, again, a lot of folks probably feel like at 125,000, you know, it was certainly overvalued, certainly in hindsight. So we'll see where it plays from here, but certainly gets your attention here. But we've got the equity markets trading up, the big boys marketplace.
Second straight day.
Yep, absolutely. We'll take it. S&P up about 1% here. The NASDAQ up 1.8%. Yields, 10-year Treasury, 4.05%. We'll have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
10:21 on Wall Street. I'm Alexis Christoforous, and this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses, Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with a minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. And stocks are holding on to those early gains in this holiday-shortened week that will bring, by the way, a bunch of economic data, including the September retail sales report. We're also going to get earnings from big retailers, including Best Buy, Kohl's, and Dick's Sporting Goods. The Dow Jones Industrial Average up 162 points now at its best level of the day. The S&P 500 up 66, and the NASDAQ Composite is up now about 400 points. Novo Nordisk is canceling an extension of studies on its pill version of Ozempic. That's because it failed to slow the progression of Alzheimer's disease in a pair of large studies. This was seen as a long-shot effort to open up a new use for blockbuster obesity drugs. ADRs of Novo Nordisk now down 7.4%. No deal for Performance Food Group and U.S. Food Holdings. They've called off talks to merge in a deal that would have created a food distribution giant rivaling top player Cisco. And Saudi Aramco considering plans to raise billions of dollars by selling a range of assets, including a stake in its oil export and storage terminals. The company is also considering selling part of its real estate portfolio. Discussions are said to be at an early stage. No final decisions have been made on these potential sales, which could fetch more than $10 billion. Shares of Aramco now down about 1.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash. Back over to Scarlett and Paul.
All right, good stuff. Thank you so much, Alexis Christoforous. All right, let's take a look at the markets right now. We are seeing a second day of gains in equities, at least. The S&P gaining 1%. The NASDAQ doing even better, up 1.8%. Yields are kind of all over the place right now, Paul. I mean, we're looking at Treasuries trading in a range right now because we're not going to get a whole lot of data between now and the FOMC on December 10th. And it's a toss-up whether the Fed cuts rates in December or not.
Exactly. Got the 10-year Treasury at 4.05%. That seems to be kind of in that high threes to low fours range here.
All right, let's bring in our next guest. She is Emily Lavelle, Chief Investment Officer at New Mexico Climate Investment Center, to talk a little bit about the markets. But Emily, before we get started on your take on the markets, just tell us a little bit more about New Mexico Climate Investment Center. What is your focus there?
Hi, good morning. Nice to see you guys. Yeah, so New Mexico Climate Investment Center is New Mexico's green bank. And, you know, big picture, we know we need about $3.5 trillion of investment to decarbonize the energy sector over the next 10 to 15 years globally. And green banks really help try to accelerate that transition by investing into those projects in their local states. So at MCIC, we're really focused on investing in decarbonization projects that also have local community impacts. So we're really focused on investing in LIDAC communities. And what's really interesting about New Mexico is we are second in solar potential, third in wind potential, and sixth in geothermal potential. So there's a lot of really interesting activity going on right now, especially with some of the data center build out.
Emily, talk to us about kind of how your world of financing the clean energy policy, how that changed with this administration here. It doesn't seem to be getting near the focus as it did under prior administrations.
It's definitely not getting the same focus at a national level, though I will say, you know, it really depends on the state level. States are really moving ahead with a lot of their transition projects, particularly here in New Mexico. And as I said, you know, we happen to have this structural advantage in that we have a lot of clean energy sources that are becoming more and more economical. The OB3 bill, the reconciliation bill, was a headwind for some of the tax credits that we're going to see starting to expire. And I do think that is going to make the cost of energy more expensive. But, you know, solar plus storage is now on par in many places with the cost of building natural gas. That is going to continue to get cheaper with technological innovation. Same with geothermal, nuclear. You know, the two latter ones are areas the administration is focused on. And I do think that we will see, as a result of that, a fall in the cost of the cost per kilowatt to produce some of those baseload renewable powers over time. So I'm actually still really optimistic about the way that we can build out renewable power in this country, both, you know, sort of traditional wind, solar plus storage, and then some of the newer, you know, sort of unconventional renewables like geothermal and nuclear.
What is the role of renewable energy when it comes to powering data centers? Because that is the story right now. And New Mexico has plenty of space available, but I'd like to hear more about the power and whether there's enough power to generate some of that activity.
That is absolutely the story right now. And we see it here in New Mexico. We have a lot of space. We have a state government that's actually really pro-business right now, really pro trying to get some of these data centers into the state in a way that makes sense, that's sustainable. solar plus storage is part of this all of the above strategy that we're seeing, I think, nationwide, and that can certainly help power data centers. And what you're seeing right now is sort of a mix, developers coming in and looking for how can we combine solar plus storage, maybe with a little bit of gas. Some players, some big off-takers like Meta are being really innovative and really pushing for some of the enhanced geothermal technology coming in. So we saw Meta sign a big power agreement with PNM and XGS, which is a startup enhanced geothermal producer. And the first phase of that project is 150 megawatts. So it's a big project. It could grow to be much bigger. So we're definitely seeing sort of an all of the above creative strategy here. And, I think that that's really the way that this is going to play out and these projects are going to get developed. And like I said before, that just helps scale these technologies. And over time, that's going to mean, they're going to get more affordable for everyone. In the short term, I think we're going to continue to see price pressure on power because rates are still high, so capital costs are still high. And a lot of the pressure on supply is not actually the source of generation, but it's the lack of capacity on the grid. So it's the transmission and the distribution component. And that's a challenge here in New Mexico where it is, all over the country. So you've got people trying to do behind the meter deals and be creative, but in the end, you really just need to invest in some of that grid infrastructure.
How do we do that? Because that's kind of my understanding. I think we have a sense of we're going to need a lot of energy going forward, a lot of power going forward. We're probably going to need all types of sources. But do we have a grid that can even deal with it? How do we think about that?
I think at this point, we don't necessarily have a grid that can deal with that. And we're going to have to use, again, an all of the above strategy. We've got some permitting reform coming out, which could ease some of the bottlenecks in getting new projects and getting transmission and distribution out. We've also got grid enhancing technologies. These are software and other technologies that sort of make the existing grid more efficient. I think those are getting a lot of support by the current administration, and those are all really positive things. But yeah, we're going to need to continue to build out, and these are, physical assets on the ground. They don't grow exponentially. It's a linear process, and decarbonization is linear. And the demand for power is going to be linear too. And so I think that it could be a real constraint on the build out of some of these data centers, which, to be honest, isn't necessarily a bad thing. I think there's probably some speculative building going on right now. And so it'll be good to have that as sort of a buffering effect so that we don't, go crazy and build too many data centers and have this real inventory cycle, which I think is probably going to happen anyways. But yeah, it's going to be an all of the above strategy, and I think we're going to see a lot of grid stress in certain parts of the country here in the next decade.
Emily, great to get some time with you. Emily Lavelle is the Chief Investment Officer at New Mexico Climate Investment Center, giving us her take on the green energy policy. Certainly a lot different today than it was just over a year ago when President Biden was kind of spearheading a lot of the green energy revolution that has now dissipated.
Yep, absolutely.
All right, U.S. Commerce Secretary Howard Lutnick making the rounds right now. He says the European Union needs to change its digital regulations in order for the region to get a deal to lower their steel and aluminum tariffs. And he spoke this morning with Bloomberg's Lisa Bromwitz and Danny Berger. Let's take a listen.
Everything is on the table when you have such a great partner as the European Union. They have 450 million people and a $20 trillion economy. So the opportunity is great. They would like to have steel and aluminum as part of this package. And we think it is very, very important that they understand our digital companies and they reconsider their digital regulations.
That was Howard Lutnick, the U.S. Commerce Secretary, speaking to Bloomberg Surveillance this morning. Let's bring in Brendan Murray now. He is Bloomberg News' global trade editor, our trade czar, joining us from London. And Brendan, we know that Howard Lutnick and the U.S. Trade Representative, Jameson Greer, they are in Brussels right now, making their first official visit to the region since reaching that trade deal with the EU back in July. There's still a lot of I's to be crossed and I's to be dotted, T's to be crossed. There we go. When it comes to that trade deal, and I guess, at least for the Europeans, the thing that is their priority right now is bringing down those steel and aluminum tariffs.
Yeah, exactly. It's not only bringing those down, but it's making sure that the list of those products that are hit with the steel and aluminum tariffs isn't widened. So after the U.S. and the European Union shook hands back in Scotland in late July. The Trump administration put out a list of more products, these so-called derivative products that are made from steel and aluminum, something like 400 of the products, and added the tariff to those. So the Europeans are looking at this going, well, where does this stop? And that's what their main worry is right now, is how many products could wind up being on that 50% list if we don't sit down, talk about it, and figure that out now.
Brendan, President Trump, he's shown time and time again that he is transactional in nature. And I think most parties, whether you're a CEO or a mayor of a city or the representatives of a trading bloc, they've kind of figured that out now. What can the EU really get here at these negotiations? Because as you said, it seems like once you make a deal, it's not necessarily the full deal here. What are they really expecting here?
Yeah, I mean, I think we have to remember that the situation with Ukraine and Russia is wrapped into all the geopolitics of this, and so the Europeans, need the U.S. to sort of stick with them behind Ukraine at the moment, and so the ask list from Brussels. You wouldn't think would be too long, because you want to play the long game here, and the broader issue is national security stability across Europe. So this isn't the round of talks that was going to wind up with big results, but it's a moment for the two sides to come together and say, here's what we promised, here's what we've done since then, and we're largely on track, and we don't need to go back and escalate things, and we can kind of keep moving in the direction of implementation of what we agreed upon, as opposed to raising new issues or making new threats. We're likely not going to see that taking place this week.
All right, good stuff. Brendan, really appreciate it. Brendan Murray, Bloomberg News' Global Trades, are joining us from London as Howard Lutnick talking about not just what the EU can do to bring down the tariffs on steel and aluminum imports, but also, Paul, he was talking about how the president may allow NVIDIA to sell its H200 advanced AI chips to China, but he would be the one making that final call.
Yep, absolutely. And Mr. Lutnick making clear that any deal on steel or aluminum is contingent upon the EU rolling back some of its regulations on major American tech companies. So again, negotiations taking place. I always figure it's better to be talking than not being. We're going to have more coming up. This
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
10:40 on Wall Street. I'm Alexis Christoforous, and it looks like tech stocks are powering the advance on Wall Street in this holiday-shortened trading week. The Dow Jones Industrial Average up by triple digits, a gain there of 166 points at 46,411. In the broader market, the S&P 500 up about 75, and the Nasdaq, the star of the day, up 440 points. Bitcoin down 1.8%, but holding above $86,000. President Trump will be the one to make a final decision on whether to allow NVIDIA to sell advanced artificial intelligence chips to China. That's according to Commerce Secretary Howard Lutnick. Not moving the stock much, shares of NVIDIA down just fractionally. Toyota's largest manufacturing plant in Georgetown, Kentucky, is investing over $1.8 billion in new technology. This is a new system called K-Flex that allows the plant to build SUVs, hybrids, EVs, and sedans on a single assembly line, reducing time and cost. And UPS and FedEx are working to secure enough freighters as they grapple with a ban on a pillar of their air cargo fleets through this crucial holiday delivery season. An indefinite grounding of the MD-11 jet has drained capacity and complicated operations for both UPS and FedEx. Once again, stocks rallying with the Nasdaq up nearly 450 points. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash. Scarlett and Paul.
All right, Alexis, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we are live here in the Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube, so head over to youtube.com and search Bloomberg Podcast. That's where you'll find us. We all know about the K-shaped economy. If you own assets such as stocks, bonds, real estate, doing well relatively, and if you don't, you're not. Maybe inflation, more of an impact on the bottom line for a lot of folks out there. So we see that. How is the health of the U.S. consumer? A lot of places to look at it. We look at the restaurants. We talked to Mike Haley of Bloomberg Intelligence, but we also like to look at some of the consumer-facing businesses like theme parks, hotels, casino gaming. How are people spending their disposable income? Our next guest has a good handle on that. Thomas Paulson, he's head of market insights for Advan Research. Thomas, thanks so much for joining us here. Let's start with, just how are people doing? How are they spending some of their disposable income when you look at, say, the hotel business? How's that looking these days?
Well, I think your intro kind of captured it well, where we're in this K-shaped economy. I kind of saw the beginning of the K-shaped economy in the second half of 22, and then 23, it became more pronounced. By 24, even affluent households were feeling that price levels were too high, and so it just became more extended and pronounced. I think one of the best ways to quantify the K-shaped economy is if you look at general merchandise comp sales for Costco versus Dollar General. They're up about 80% for Costco, and they're roughly flat for Dollar General. If you looked at it from the point of 22, so that was pre-pandemic. If you looked at it from the point of 22, you're down about, call it high teens for Dollar General, and you're up about high teens for Costco. So about a 34% spread between the two on the 2-year basis. And then as we kind of go into 25, it's just becoming more pronounced and more extended. And really there was a little bit of trepidation in Q2 around obviously policy and tariffs, and everybody kind of pulled back. But then as we kind of moved into August, that top end of the K just really took off, extremely robust. And I think that was generally a wealth effect where people had excess savings to treat themselves. But the lower end, or the less affluent, I call it really the more affluent or the less affluent became more concerned that we'd have another bout of inflation and became more tight with their dollars. We saw more pronounced paycheck cycle. And so as we kind of move into this like tail end of 25, that more affluent is, spending with gusto, and the lower end is curtailing their discretionary spending or just curtailing spending. And so consumer staples companies, see that because they serve everybody. And that's becoming more pronounced, et cetera. So that's how I see it.
Okay, so with that in mind, Thomas, what does that mean for a company like Disney, which appeals to a mass audience and needs the volume, but certainly pricing has gone up, and we've learned from the CFO, Hugh Johnston, that they're going to implement a dynamic pricing model at the U.S. parks as well.
Yeah, I think, what we learned from Q3 is this K-shaped economy, really wasn't, certainly there were brands that were, fully exposed to the lower half of the K, and and thus have been challenged. The dollar stores have won trade-in, so that they haven't been really challenged this year. But what we see here in really ending the year is really a lot of kind of re-examination of pricing and margin plans, where companies are having to reinvest to try to drive volume or market share. So this K-shaped economy is kind of generally wasn't too much of a problem for kind of consumer servicing brands, but that's really no longer the case. And so like in, QSR, limited serve, it was a tough year. And then finally, as we kind of ended Q3, really a commitment to try to regenerate volume by adding more marketing, add more loyalty benefits, and more price promotions or discounts or permutations of the menu. We heard that from parks and from Cedar Fair. Their results, they had to spend a lot in pricing, promotions, discounts, et cetera, to try to drive the volume that they got. When we looked at Disney, they've fared better. I call it the premium of all of the destination theme park brands. And so they're more exposed to that top part of the K than a Universal, or certainly the more regional theme parks. But I think it's just like this whole dynamic of the K-shaped economy is starting to really undermine volume and revenue and price realization for multiple brands. And then they're going to go back to Disney. Their, from memory serves, their per cap spending, if you will, was up about 6-7%, which I thought was surprising. So that was a pretty aggressive rate at a time.
Imagine you're a startup founder.
Clearly, the competition from Epic and from Universal, and Universal, in terms of our data, had a very strong Florida business. Obviously, California, not so much. Disney was able to hold in there. Parks, did what they could to have a favorable story around Orlando and the Orlando market overall, but that cost them in rate. I'm sorry, I lost you guys.
Just saying, are people still going to casinos?
Casinos is a mix. So if you're like that on the top end of the K, you're like Wynn. Wynn had a better Q3 than Q2, and they indicated that November and going into the holidays was strong. If we looked at MGM, their premium brands did well, but the moderate ones, New York, Excalibur, Circus, etc., all those moderate brands, they spoke very forcefully that they were spending to try to attract visitation into their moderate properties.
Thomas, thanks so much for joining us. Appreciate it. Thomas Paulson, Head of Market Insights at Advan Research, joining us, talking about the consumer and where the consumer is spending money. Again, the K-shaped economy, you see it in the hotel spend, you see it in the theme park spend, you see it in the gaming spend, and you see it in the restaurant business as well. So it's there. It feels more pronounced, I guess.
It definitely does, because companies are actively choosing the higher end of that K to chase business.
Yep. So we'll see how that plays out. Looking at the markets here, a strong start to this holiday week with S&P up 1.26%.
Yeah, session highs.
NASDAQ at 2%. How about that? This is Bloomberg. Good morning.
listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Let's talk to Sam Fazeli because it's Monday, and that's what we do. We talk healthcare. When you want to talk healthcare, talk to Sam Fazeli. He's over there in London, I think. I haven't checked if he's badged. I mean, who the heck knows with these people over there in London? But he's the best there is out there, folks, on global healthcare, and we appreciate getting a few minutes of his time. Sam, this obesity story is become the story for your world. I mean, it's almost like forget about some of these other issues you guys have been dealing with, whether about other diseases and therapeutics and so on. It's all about obesity drugs. Talk to us about Novo Nordisk stock taking it on the chin here.
Yeah, hi Paul, and just for the actuality, I'm in France at the minute. So,
see, told you.
But only another 12 hours.
Okay.
So. Now, today's news from Novo Nordisk is not about obesity. It's about a drug, semaglutide, in a pill form that they've tested in Alzheimer's disease. And the theory was, and there was some evidence that people who were taking the very first version of the GLP-1 drug, so Victoza or liraglutide, they had a lower risk of developing Alzheimer's when you looked at historic or retrospective data. And there's animal models, etc. So they thought, well, it's worth a try. And it didn't work out. They said that they're seeing some impacts in some biomarkers, etc. And we'll find out next week what biomarkers, but the trial didn't work out. And the question here is, was the theory wrong, or is the drug not good enough? Is the pill enough? And we know the pill doesn't do as well in obesity as the injection. Should they have tested the injection?
That's a good question. And you mentioned that the ingredient here that we're paying attention to is semaglutide, which I hope I'm pronouncing correctly there. Does that mean that this ingredient and Alzheimer's are just a no-go from here on out, or does there need to be more testing before we can determine that?
Yeah, there needs to be more testing, but who's going to do that? I mean, having failed now, who's going to put the money in to test it? Now, Lilly does have an Alzheimer's business in a completely different, with a different set of drugs. And they have a more punchy product once weekly with a relatively easily administered pen. That would be interesting to see whether that helps. And, sort of you get much more drug in the body, or maybe redesign it a bit. So it really does depend on how much appetite for risk these companies have. And Lilly now, with a literally just over $1 trillion market cap, maybe they should give it a go. It would be magic if this thing, it literally would be magic if this thing just helped so many different diseases.
Sam, talk to us about just the market for dementia. Alzheimer's is one part of it. I would think that's A, it's a big market, and B, it's got to be a growing market with people living longer. How do you guys think about it, and how do you play it if you're an investor?
Yeah, it is a significant societal issue, number one. And, I think there are not many families who would say that they haven't experienced it if they have older people in their extended family. So the market has humongous potential, but you need drugs that actually treat the disease. Remember, by the time you have Alzheimer's, i.e. a full-blown dementia of the Alzheimer type or other types, it's a bit late. That means there's a lot that's already happened. So you need to go early. And early means long, expensive trials. And Lilly is doing that with their assets. So fingers crossed, we'll find out in the next 2 or 3 years where they're going early with these assets. Roche is doing it too. It would be a beneficial.
Right. I mean, the tests with the pill form of Ozempic was definitely a lottery ticket. If it worked, great. If not, we're back to the drawing board.
Exactly.
Are there any effective treatments right now against dementia or Alzheimer's?
Well, by effective, I mean, it's tough to say, but there are drugs that lower this thing that is viewed as a critical part of the Alzheimer's disease, which is amyloid plaques in your brain. If they do lower it, Lilly's got that drug, Biogen's got an equivalent drug, Roche is trying a similar approach, and you do slow down the degeneration. You don't stop it, you slow it down. So what we really want is to stop people getting to that degeneration. Try and get them before they have full-blown Alzheimer's or dementia, so that's called mild cognitive impairment. Try and slow that down to give them another 10, 12, 20 years of dignified life.
So where do you think we are on a time frame for something like that, Sam? Is that measured in a couple of years or more than that?
Well, so Lilly is literally trying that, and we'll find out whether, and they have the better drug in this space. So we'll find out whether in the next 2 or 3 years. Remember, these things are trials that need to be run until you start seeing a difference. They get that to that point, and of course, then society has to decide, well, how are we going to pay for this? How many people? Because there's a large market, right? How many people are we going to want to treat with the prices of these drugs, whatever they are, even if it's $10,000 a year, right? And they are on their way to becoming worse, and we want to slow that down. You have 10 million people. I mean, this could be similar in terms of value to the obesity market, but you need the drug to do that. So let's wait and see. And Roche has got a new way of trying to do it, and they're going to go again also into phase 3 to test that out.
All right, Sam, thanks so much for joining us. Always appreciate getting a few minutes of your time. Sam Fazeli, Director of Research for Global Industries and Senior Pharmaceuticals Analyst at Bloomberg Intelligence. He is joining us from France via Zoom. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence begins in just moments with the markets moving higher towards the highs of the day. S&P's up 77 points. That's 1.2%. The Dow's up 250 points. NASDAQ's up 430 points, 1.93%. 10-year Treasury yield, 4.05%. This is Bloomberg Good Morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good morning from the Bloomberg Interactive Broker Studio. This is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu. Welcome to a holiday-shortened week, but on this Monday we have a lot going on, including in the second hour of Bloomberg Intelligence. We're going to check in with Michael Casper. He is Bloomberg Intelligence's senior U.S. equity strategist on the persistent story of AI spend. Is this a bubble? Is this not a bubble? He'll give us his take. Woo Jin Ho, who is BI's senior technology analyst, will join us to give us a holistic view of Cisco's path to growth. And we're speaking with RJ Gallo, senior portfolio manager of fixed income at Federated Hermes on these markets. Of course, bond yields not doing a whole lot. They're kind of stuck in a range at the moment before the FOMC decision on December 10th. And Matthew Schettenhelm, Bloomberg Intelligence media litigation analyst, talking a little bit on how President Trump says TV networks should not be able to enlarge. We'll get more on his take there. First, though, we want to get a wrap-up of everything that's happening, and for that, we go to Alexis Christoforous for a Bloomberg Business Flash.
And we are kicking off this holiday-shortened week, Scarlett, with a nice, big, fat rally. Traders are looking ahead to a data-packed week. We're going to get delayed reports on retail sales, producer prices, and also some fresh numbers on consumer confidence and pending home sales. Also lending some support to the market today, money markets are pricing in roughly a 70% chance of a Fed rate cut in December. We've also got Fed Governor Chris Waller indicating his support for a rate cut. All of that means the Dow Jones Industrial Average is up about 270 points. The S&P 500 up about 80. The NASDAQ Composite racing ahead 2%, a gain there of 447 points. Chip stocks in the spotlight today. President Trump is going to make a final decision soon on whether to allow NVIDIA to sell advanced artificial intelligence chips to China. And also Centene and Oscar Health shares climbing today. In fact, Centene is one of the biggest gainers in the S&P 500. That's after Politico reported that the White House is expected to propose a 2-year extension of Obamacare subsidies with new limits on eligibility. Now, Treasury Secretary Scott Bessent not offering details here, but he did say over the weekend that a big health announcement is coming this week. And a gold pocket watch that stopped ticking just as the Titanic sank has sold for $2.3 million. That's a record for Titanic memorabilia. It belonged to Isidore Strauss, a co-owner of Macy's, who was seen on deck with his wife as the ship went down. Once again, stocks rallying across the board. NASDAQ up 470 points. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's the Bloomberg Business Flash. Paul and Scarlett.
That's a good story there.
The Titanic.
Yeah,
it
never gets old with me. Any story with Titanic, I'm
You're
down.
there.
Yeah, because it was just a snapshot
you better
in
have
time.
the money if you want some of the memorabilia.
Yes, exactly right. Just a snapshot in time and place back there. So really interesting. All right, Alexis, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Boy, green on the screen, that's for sure. Let's take a look at some of the stocks on the move today. We're joined by Bloomberg's Christina Aquino. Christine, what are you looking at?
Well, Paul, it's not just tech that is leading this rally today. We have a rally in a lot of other companies as well, including Bristol Myers. So ticker BMY. Those shares are up more than 4% at the moment. So interestingly, it's actually benefiting not necessarily from its own news, but because of news from its competitor Bayer, but has positive read across for this company. So Bayer's experimental stroke prevention drug saw some positive results, and Cantor Fitzgerald analysts saying that Bayer's data supports confidence in BMY's own program in secondary stroke prevention. And so very interesting, especially because in the context of earlier declines earlier this month, because BMY's most important experimental medicines appeared unlikely to benefit patients who suffered a heart complication. So that was a setback earlier this month, but now looks like they're benefiting from this positive results from Bayer's stroke prevention drug. So there you go.
All right, good stuff. Second stock you're watching?
We're looking at Cooper Companies today. So ticker COO. Those shares up just slightly, 0.4% now. So Cooper Companies, it's a maker of medical devices and surgical instruments. It's getting a little bit of activist action, actually. So investors, Brandon West, writing a letter to its board saying that its, quote, inadequate oversight has led the company to significantly underperform and miss financial guidance. So apparently Brandon West is recommending director candidates and is urging the company to pause any restructuring efforts. So clearly, maybe something that could be weighing on a stock today. That's why it's not rallying as much as the rest of the complex.
All right, one more. Warner Brothers Discovery?
Warner Brothers Discovery.
What's going on there? Any news yet?
Well, no news yet. The news is that there's no news, which is evidently weighing on the stock today. So ticker WVD, those shares are down 1.6%. We did get bids from Netflix, Comcast, Paramount, Skydance, all within the November 20th deadline. But now investors are really just wondering, when are we going to get the news? Because if they don't reach a deal, then they might just continue their plan to separate their cable networks from the rest of the businesses. They're hoping to make a decision by Christmas, but doesn't seem like, we're getting anywhere close. I mean, the bids are interesting, right? So Comcast and Netflix primarily interested in a film and TV library, and Paramount is willing to buy the entire company. But I think the uncertainty just really comes from the fact that this is potentially going to be its fourth owner in 7 years. And so you can imagine investors not really liking the lack of certainty around its ownership moving forward.
And ownership all started with us back in 2000 when we used AOL's paper to buy Time Warner.
Yeah.
It was a glorious
Back
transaction.
in the day.
Yeah, it was bad for the seller. It was great for us as the buyer at America Online. We used a little piece of paper to buy $80 billion of some of the best media assets in the world. It was
And
a
look
glorious
what's
time.
happened since.
And look what happened since.
Yeah.
Jeez, what a disaster. All right. Very good, Christina Aquino. We appreciate that. Christina Aquino with that, giving us the latest there on what's happening in the markets on the move. So some good stuff there. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Scarlett, one of the, I think the questions we get, or maybe the discussion points we have over the last month or so, month and a half, has been, is this a bubble? Is this an AI bubble? And I don't know, but I mean, the people who are supposed to know about this stuff. After the fact, exactly right. So, but somebody who's supposed to talk about it like present tense is Michael Casper, Senior U.S. Equity Strategist for Bloomberg Intelligence. So, Michael, I know you're having these conversations with your clients here. What are you saying? Bubble, no bubble, as it relates to AI?
Yeah, pretty much all the signposts for a bubble that we have identified so far are pointing towards no bubble, right? Okay. So if you look at the valuation picture of, say, the Mag 7, so the hottest stocks today versus the hottest stocks in 2000, we're talking they're trading at about half the multiple Microsoft, Cisco, Intel, and Dell, the four horsemen of the internet bubble, were trading at back at the top in 2000. And in fact, the Mag 7's multiple has come down since 2021. So they're growing into their multiple. And you've obviously got a ton of fundamental support here. Earnings running well faster than normal at the end of these melt-up periods. So it's really pointing towards no bubble at the moment.
Okay, that might be the case for the Mag 7, for the companies at the heart of the whole AI revolution. But what about the ones that are kind of on the periphery, on the side, and the profitless tech companies that we talk about that are getting wrapped up in everything?
Yeah, so it's actually interesting you bring up profitless tech. My colleague in BI, Bree Doherty, she does thematics for us. She has a thematics AI universe, and we've actually scanned that entire universe, and we're talking large caps, small caps, micro caps. There's 3 companies in there that are unprofitable in the entire AI universe of, nearly 50 companies. So there's really not a lot of unprofitability, especially within the core AI themes. And that's another just feather in the cap for this not being a bubble.
How about the big tech companies using debt to fund a lot of this?
Question.
Does that raise the radar at all?
Yeah, so it's interesting that they might start dipping into debt markets. That was something that I read this morning on the terminal, actually. But so far, if you look at leverage ratios, right, so total debt to market cap or total debt to EBITDA, those are actually significantly lower than where they were in 2000. And we've frankly been delevering pretty consistently throughout the post-Great Financial Crisis period. So leverage is actually below norms for the S&P 500. For the Russell 2000s, it's pretty much closer to norms. So I'm not that worried about debt financing yet, right? So there's plenty of room for companies to take on debt here.
Why are investors still so worried then? Why are they convinced that this is not sustainable?
Yeah, I think it's a bit of a paranoia, right? We've gone up very far, very fast, and we did look at some previous melt-ups. So we're talking the end of the lead up to the Great Depression cycle, the internet bubble. Those are the classic melt-ups. Our returns have been pretty fast, but they're still falling well short of that. So I think investors are a little bit worried that the returns have been so violent and so quick, and that's adding to a little bit of worry. And of course, worry is a good thing, right? So bubbles usually happen when nobody's worried about them. I like to think about 2000, and people always talk about, yeah, my taxi driver was telling me about some internet stock. We're just really not having that right now. There's still plenty of worry in the system, and that's a good thing for a bull market.
Earnings pretty much done with the third quarter here. Are they enough to support this marketplace, do you think?
Yeah, I think earnings were phenomenal, right? There were some obviously bumps in the road on a company-by-company basis, but again, we pretty much doubled the pace of what consensus expectations were. If you look at 2026 expectations, those are holding pretty firm. We're looking at about 13% earnings growth for the year ahead. Again, comparing that to previous bubbles even, that's significantly higher than what we saw at the end. Bubbles are driven by FOMO, not fundamentals. And certainly consensus expectations are strong. And they're actually even strengthening in the Russell 2000, which has been an unloved group for quite some time. So things on the fundamental side looking pretty decent here.
What about on the technical side? I keep reading about how the S&P 500 is still below its 50-day moving average, its short-term trend line, and it briefly fell below the 100-day moving average on Thursday. And because we are not going to get any fundamental data on the economy until after the FOMC decision, earnings season is over, there aren't a whole lot of catalysts from here on out until maybe next year.
Yeah, so one catalyst I'm looking at pretty intently is going to be the holiday spend, right? Like if that comes in a little bit better than we expect, that could be another catalyst for stocks. But certainly you mentioned the FOMC decision. I think a lot of this pullback has to do with Powell's hawkish comments about 2 weeks ago. People just expecting a little more on the rate cut side than what we're going to get. And again, this just looks like a textbook pullback, right? We're down maybe 4 or 5% from all-time highs on the S&P 500. On the Russell, it's approaching correction territory, but still nothing really going as far as a bubble bursting.
Are you looking at Bitcoin and crypto at all insofar as whether it's influencing equities or whether equities are influencing Bitcoin? Because there's a lot of talk about the linkage between tech stocks and Bitcoin.
Yeah, I think Bitcoin is a good gauge of risk tolerance. I don't know about necessarily a fundamental linkage between Bitcoin and stocks outside of maybe, the AI names.
Who's leading who?
Miners. I think, stocks are the dog that wags the tail, right? And crypto is the tail here. But I think crypto is really kind of showing where the concerns lie in the equity markets and the risk is in the equity markets. And again, that seems to be more with the Fed. What is the Fed going to do? Obviously, Fed rate cuts would be good for Bitcoin. Everybody thinks it's pretty stable. So I think that's really showing where the pressure points are for stocks.
All right, Mike, appreciate it. As always, Michael Casper, Bloomberg Intelligence Senior U.S. Equity Research Strategist, giving us thoughts on these markets here. AI bubble? He doesn't think so. So we'll keep an eye on that. The market's certainly trading higher today with the S&P up 1.4% and the NASDAQ up 2.3%. Cisco, talk about a stock that's working. Stock's up 29% year to date. One analyst thinks it can go even a little bit higher. Woo Jin Ho, Senior Technology Analyst for Bloomberg Intelligence, joins us here. He's based down there in Princeton. Cisco, talk to us about, Woo Jin, talk to us about Cisco here. What's the story here? The stock's had a good run this year. What's driving it?
Yeah, hey, Paul. So there's a couple things driving it. They're actually a massive $43 billion product upgrade cycle that Cisco will potentially benefit from, which is going to give them outsized growth in their core networking business. But their AI story has actually been a lot better than I thought. AI is going to be about $3 billion of sales, tripling, or $3 billion of sales in fiscal 2026, tripling that of 2025. So they're in this Goldilocks of good AI story as well as an upgrade cycle tailwind.
Paul was asking Michael Casper earlier about a lot of the tech companies issuing debt to pay for their AI build-out. What does Cisco's debt profile look like, and will it also need to sell bonds to fund everything it's doing?
Yeah, hey Scarlett. So that's one of the great stories about Cisco. I mean, they have roughly about $20 billion in debt and roughly $30 billion in cash. So look, they're net cash positive. They don't need to take on debt. If anything, they've been very active buyers of their stock, very good stewards of the cash, strong cash flow profile. And if anything, they're using their cash as leverage to build up the inventory for the AI opportunity that's ahead of them.
So talk to us about just kind of the growth drivers for this company, Wooj. What, as you looked at 2026, what kind of underpins their top line growth?
Yeah, so they guided to roughly the top end of their 4 to 6% growth. I think they're going to do roughly about 7 to 8% growth for this year. So if we think about the AI story itself, tripling from 1 billion to 3 billion, that's going to be the incremental growth that gets you above to the top end of their revenue growth guidance. The way I have networking flashed out right now, the networking business, ex-AI is growing roughly around 4%, and that's probably towards the low end. And quite frankly, if the upgrades come in stronger, then a lot better than we think, there's a little bit of upside. Now, there is a little bit of drag. The security business hasn't panned out as strongly as they hoped, primarily because it is going through this business model transition. But, it would have been a story at another time, but the two stories, AI as well as a core networking upgrade cycle, I mean, that's doing very, very well in 26. And if anything, I would argue it would probably be better in 2027.
Is Cisco part of this whole circular deal-making, circular funding concern that has investors worried that if one company in this link stops spending or maybe slows down spending, everyone else will get affected? To some degree, yes, Scarlett.
And that's why I think if you look at some of the AI stories there, it's one of the safe bets, right? They are exposed to some of the, I would say, the hyperscale names, but a very small exposure to it, as well as some of the neo clouds. They do sell some routing products and some of the sovereigns. Now, if that business disappears, the cash flow story is still well intact, right? If I calculate the amount of AI revenue relative to total revenue base, we're only talking about 6 to 7% of total sales, right? So if the AI story collapses, I mean, AI evaporates, they're still in very good standing.
Not to mention the fact that they pay out a dividend too. I mean, it's not a huge one, but a tech company with a 2% dividend yield is something.
It used
and they've
to be
been
3
steadily
when the stock was lower.
Yeah.
When the stock was lower, it used to be 3. So yeah,
there you go.
I mean, what's not to like? Stock buybacks and a dividend yield and an AI story if it works out.
All right, Woojin, thank you so much. Woojin Ho is our senior technology analyst at Bloomberg Intelligence, giving us his take on Cisco and how it's certainly benefiting from the AI story. He's looking at the cash flow as something that supports its membership in this elite club of companies.
Yep, absolutely. I mean, if you can get the AI tailwind, even some of these, what we kind of call maybe first-generation technology companies are certainly getting the benefit.
Yeah.
So keep an eye on that. The market's moving higher. S&P up 1.4%. The NASDAQ up 2.3%. The Russell up 1.4%. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. I'm Alexis Christoforous, and this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses, Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. Well, stocks were higher right out of the gate gate this morning and really never looked back. The Dow Jones Industrial Average up now 300 points, best level of the session in this holiday shortened week. The S&P 500 up nearly 100 points, a gain there about 1.5%. The NASDAQ Composite now up better than 526 points, a gain there of 2.33%. Shares of Merck helping to lead the Dow higher. That's after Wells Fargo upgraded the drug maker to overweight from equal weight. The analyst there sees a future for Merck beyond its blockbuster cancer drug Keytruda. Elon Musk posting on X over the weekend that Tesla is close to finalizing the design of its AI 5 chip, and it started work on a new AI 6 chip that's to be deployed in Tesla cars and data centers. And shares of Copart falling today after the online vehicle salvage auction company reported first quarter revenue that missed the estimate, also as U.S. service revenue was softer than expected. And Wicked for Good smashed box office records this weekend, raking in $150 million in ticket sales. This, of course, was its opening weekend. It raked in $226 million globally. It is the biggest debut ever for a Broadway adaptation, and the second biggest opening weekend of the year behind a Minecraft movie. By the way, the actor Jonathan Bailey, who's in Wicked for Good, the highest grossing actor of the year. Scarlett Johansson, not to be confused with Scarlett Fu, the highest grossing actress of the year.
If only we could confuse the two.
You know what? In your mind, you can. That's your Bloomberg Business Flash. I'm Alexis Christoforous. Scarlett Fu and Paul Sweeney, back to you.
Thank you so much, Alexis. Are you into Wicked, the whole Wicked franchise?
No.
Yeah, I don't get it either.
No, but a ton of people do. I see, it was crazy. I saw a lot of the news stories over the weekend, lines and everything, all these things.
I know. I do like Jonathan Bailey. He was People's Sexiest Man Alive.
Really?
This year. Yes.
Okay, I'll take a look.
He was in that Jurassic
I'm a Scarlett
Park
Johansson
movie.
fan, so.
Yeah.
Oh, really?
Yeah.
We're all ScarJo fans.
Yes. Absolutely.
All right. Should we talk about the markets?
Yeah, let's go to the bond market.
Let's go to the bond market. Not a whole lot going on in terms of movement this morning. The 10-year yield basically unched at 4.05%. The 2-year yield up slightly to 3.52%. At issue, of course, is what the Fed is going to do on December 10th. There's really no straight cut answer here because the data has raised some concerns, but we know that we have a very divided Federal Reserve. RJ Gallo is Deputy CIO of the Global Fixed Income Group at Federated Hermes. RJ, what does the data tell you, the data that we have gotten?
The data that we have gotten, I think it portrays that, generally speaking, data these days has to include, during the government shutdown, the various private sector alternatives, including, for example, the weekly ADP release and some others that you've also carried on Bloomberg. I think generally, before we got the official September non-farm payroll report after the government reopening, it felt like there was a loss of momentum in an already slow job creation labor market. And then we got the employment report. Again, it was from September. Today is what, November 24th, a little dated. And it surprised to the upside on the payrolls front. Nevertheless, bond yields went down because the unemployment rate went up. And I think that is a vestige of where Chairman Powell has basically told the market to focus in on the unemployment rate. Job creation in isolation is not what the Fed is tasked with. They're looking for maximum employment. They're looking at the unemployment rate, which includes, of course, the unemployed in the economy, but relative to the labor force. And that denominator, the labor force, has been a major issue this year because immigration has slowed, to a trickle. As a result, the Fed doesn't want to just focus on job creation, the non-farm payroll headline number. They want to focus a lot on that unemployment rate, and it went up to 4.4. So we're still on the side of a bit of a softening in labor markets. That doesn't portend something more nefarious, like a recession's in the offing. But we do think it's a bit of a grind. And with that, it probably will get the Fed back into easing mode, and that's become very controversial for December, obviously.
Yeah, so how do you guys at Federated think about that, RJ? Because I guess most people are saying, boy, we'd love a cut in December, but there's certainly ample evidence that the Fed doesn't need to do anything. How do you think it's going to play out in December and then in the coming meetings after that?
Well, it's quite a divide that's emerged among the FOMC committee members. I think that when New York Fed President Williams came out late last week, seemingly embracing the idea that another ease could be coming at the December meeting, at least that was the sort of tone of his comments. He didn't literally say that. That got the markets back into sort of better than even odds, well better than even odds if you believe the different versions of WIRP on futures and the overnight index swaps, that the market is leaning now in the direction that that ease will occur. But I do think it's particularly interesting to think about the split that has emerged on the FOMC. It's been very vocal. You've had various FOMC members come out on either side of the issue. That's not par for the course. I think for the last 20 years or so, maybe even longer, we've had a very consensus-driven Fed. And it seems now that as Powell is inching up to the end of his tenure, during a time when the Fed's been under extraordinary and overt attacks from the administration, that FOMC members might be feeling more emboldened to speak out well in advance of the meeting. Yeah. And some of them seem to have an agenda. They're looking for Chairman Powell's job. So it's become pretty politicized in that sense.
Yeah, we're absolutely seeing that, and it's only going to get more intense as we get closer to May 2026. So, RJ, how are you thinking about how you want to be positioned in bonds, even with treasuries, which are on track for modest gain in November, I think up 0.3% as of Friday's close. But again, there's no real catalyst from here until after the FOMC.
Well, we're going to get, so you're referring to the fact, I think, that the next employment report, it won't be in the start of December. It's going to be, I think, December 16th. This is the remnants of the cleanup from the government shutdown. Very unfortunate timing. It's almost as if the BLS was trying to make the Fed's job harder when the Fed meets on December 9th and 10th. I'm not suggesting that there's some sort of controversy there, but it is sort of ironic that we can't get the data out before the meeting.
RJ, thanks so much for joining us there. Appreciate it. As always, RJ Gallo, he's Deputy CIO, Global Fixed Income Group, Federated Hermes. They're located out there in Pittsburgh. I loved going out to Pittsburgh, seeing Federated back in the day. Good town. 4 or 5 really good buy-side accounts, a couple of hedge funds, and it's all anchored by Federated, or the big account in Pittsburgh. I'd make a day out of it. Go to a Pirates game or a Pets
I knew you were going to bring that up.
I always do.
Yeah.
Always do. It's a great town. All right, let's go switch gears a little bit. President Trump, when he came into office, he was widely considered to be a deregulatory president, will allow a lot of industries maybe to consolidate. One of those industries is the broadcasting industry, the radio and TV business. But he was out with a tweet recently saying he maybe doesn't support that anymore. And that was a big U-turn for a lot of people, particularly in the television industry. So we want to go to the expert, Matthew Schettenhelm. He is the media litigation analyst for Bloomberg Intelligence. He's one of the best on the street, folks, but his credibility with me took a big, big hit when I found out he does not carry cash. And for an old banker like me who's got a wad of cash in his pocket all the time, that was a problem. But
people using credit cards, and therefore he's out with
It's just the younger generation. They don't have cash. They just don't do the cash thing. Hey, Matt, how much of a surprise was it that President Trump tweets out that maybe he's not behind consolidation in the TV industry?
You're never going to let me live that one down, Paul. So it's a moderate surprise. So it's not a complete surprise because Newsmax has participated before the FCC and has been one of the few voices that said, "Don't do this. Don't deregulate this space." And what you really see here is President Trump latching on to an article written on Newsmax's platform opposing the easing of this national ownership cap. What's in play here is that there's current FCC regulation says no company can reach more than 39% of U.S. households. And companies like Nexstar and Sinclair want to go way beyond 39%. In fact, Nexstar has a pending deal before the FCC. They just filed their application on Thursday or Friday last week to acquire Tegna that would take them to 80% of the country. And it depends on the FCC deregulating in this space. So Trump latching on to Newsmax's opposition because he's concerned about the TV networks growing larger is a concern. It's a real risk. I'm not convinced yet that it's going to lead to real FCC policy. I think this FCC wants to deregulate in this space, and I think there's going to be a pushback against Trump's view on this.
Okay, so the FCC is headed by Brendan Carr, who's been very active in making sure that he's out there doing the president's bidding. Are you saying that Brendan Carr is going to defy President Trump?
Yeah, so that's the big question here. the FCC used to operate as an independent agency, meaning even if the president had a view on something, the FCC could chart its own course. That's not going to work anymore. The way this FCC is operating, if the president takes a firm view on something, the FCC is not going to defy it, because effectively the president can fire the FCC chairman then, and there's no future job prospect if you defy the president. What I'm not convinced about is this was one social media post from President Trump, and talking about concerns about letting the broadcast networks, ABC, CBS, Fox, get bigger. What I think there could be now in back channels is some education from the FCC to the White House that says, hey, easing the national ownership cap, it would let Sinclair Nexstar get bigger probably, but it doesn't necessarily mean the broadcast networks will get bigger. There's still an independent check on that, even if we ease this cap. So ultimately, if Trump is against this, the FCC is not going ahead with it, in my view. But I think there's still room for Trump's position to evolve on this.
So, I mean, the reality is, this is an industry, the broadcast television industry, that is arguably on life support vis-a-vis, forget about cable television, which itself is on life support. They survived that onslaught. Now it's just all about digital and social media, and I would think the industry would have an effective argument, not just to the DOJ, but to the president as well.
Absolutely. That's the case that the National Association of Broadcasters has made to the FCC, that these ownership restrictions, which come from the 1970s or even earlier than that, really make no sense in the world we live in today, where so much video that is consumed doesn't come from broadcast. It comes over the internet. And there are no artificial caps on how much those companies can reach. And broadcasters are left to try to fight with one hand tied behind their back with these ancient FCC rules on the books. And the Republicans at the FCC, Brendan Carr included, strongly agree with that message. And so it's going to be, I think, a little bit of a communication effort that needs to happen between the FCC and the White House the real question will be, how does that play out? Does Trump's social media post actually translate to real policy? I'm not convinced that it will yet.
All right, Matt, appreciate it. As always, Matt Chettenholm, he's a media litigation analyst, Bloomberg Intelligence. He's based down there in D.C. And there's a lot of stuff going to be coming in front of the regulators in the media space. You're going to have some of these big deals with Paramount and Warner Brothers Discovery, and Comcast may be involved. And so there's a lot of work for the Federal Communication Commission and for the regulators coming up just in the media space. And so
but Paramount Skydance has an edge there because they've already gotten one of their deals through, right?
Yeah, and it's but these are big deals, so we'll see how they play out. We'll have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
11:40 on Wall Street. I'm Alexis Christoforous, and tech stocks are in the driver's seat as Wall Street kicks off a holiday-shortened trading week, but it is not short on economic data. We'll get some delayed reports on retail sales, the producer price index, and business inventories, as well as consumer confidence figures and pending home sales. Also expect earnings reports this week from some big-name retailers, including Best Buy, Dick's Sporting Goods, and Kohl's. Turning to the action on Wall Street, the Dow Industrials up 248 points, a gain of 0.5%. The S&P 500 up better than 1% or 87 points, and the NASDAQ Composite up now 2.25% or 504 points. Shares of Novo Nordisk not invited to the party on Wall Street today, down about 6% to a 4-year low. Novo is canceling an extension of studies on its pill version of Ozempic because it failed to slow the progression of Alzheimer's disease. But health insurance stocks, most of them are higher right now. Centene and Oscar Health among the biggest gainers. Treasury Secretary Scott Bessent is teasing a big healthcare announcement this week and says it's all about bringing down costs. Politico reports the White House is now expected to announce a 2-year subsidy extension for Obamacare with new income caps and minimum premium payments. And shares of Google's parent Alphabet now at an intraday record high. Google's Gemini large language model has surged past ChatGPT and other competitors to become the most capable AI chatbot. That's determined by a consensus of industry benchmark tests, and also adding to the optimism, Alphabet's Google Cloud has signed a multi-million-dollar contract today with NATO. Once again, stocks higher across the board with the Dow up 285. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash. Scarlett and Paul.
Thank you so much, Alexis. With our Bloomberg Business Flash, this is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu. And we haven't hit Thanksgiving yet, but everywhere you look, including at Bloomberg World Headquarters, the Christmas tree is up. Yep. Everyone's talking about holiday spending, the holiday shopping season. It's as if we're going to skip right over Thanksgiving.
So, yeah, we do have and Bloomberg has a great Christmas tree, by the way, in our courtyard.
Yes. Well, plus Thanksgiving is pretty late this year, so no wonder that all these retailers are moving quickly here in promoting the deals that they're offering. Let's bring in Seema Shah right now. Seema Shah is joining us from, I believe, Florida. She's Vice President of Research and Insights. She is with Sensor Towers. And Seema, you guys collect the data that tell us what retailers are seeing, how they're preparing for this busy holiday shopping season. What are you seeing out there?
So a couple of things. In the years past, what we've actually seen is that active users and downloads on Black Friday and Cyber Monday on the actual days sort of decreased year over year. But if we step that aside, and we think that's because holiday deals are being pulled forward increasingly into October, which we're aware of. We have the Amazon sale in October, Walmart has a sale, Target has a sale. So now we're seeing something a little bit different. We're seeing a pull forward of the Black Friday deals earlier. So while Amazon started its early Black Friday last Thursday, the 20th, Walmart has 2 early Black Fridays. One starts tomorrow and one was last week. So what we're seeing is that they are all trying to capitalize on getting consumers' dollars earlier and earlier and earlier. And as you noted, it's only 28 days between Thanksgiving and Christmas this year. So it's a shortened period compared to a few years ago. So they really are sort of amping up their deals to get that spend. And so that is what we are seeing. It's not to say that people aren't interested in these early deals. It's just that, there's so many of them also.
Seema, what do you think the overall dollar amount will be this year for this holiday season? Is the industry looking for growth this year?
Well, I think overall it is probably looking for growth, but I am personally, we don't have estimates on sort of the total spend that will be there. But I think based on what we've seen and with retail earnings, I think it'll probably be a little bit more mixed. I think the large retailers, particularly Amazon and Walmart, will see a pretty successful Christmas. They're the largest two. Target typically is also in that mix, but as we heard on their call a couple of weeks ago, right, they're having a little bit more of a struggle. And it's likely because, consumers are still really focused on things that they need versus things that they want, right? And Target, kind of skews towards that. kind
Where
of
does that
discretionary
leave the TJXs of the world, which owns, of course, TJ Maxx and Marshalls and Home Goods? Typically, they don't have as much offerings online because you need to go into the store for that treasure hunt aspect and find the deal that you can only find at that one store. They're positioned well given this K-shaped economy, but how much data can you really collect on a company like TJX in advance?
Right. Well, for us, given that we're very focused on the digital economy and TJX, I think in Burlington, like 2% of their sales or less than that is actually online. So we don't have the data on that. But I think that in a similar vein, the way that people are going and hunting around in TJX and Burlington, that's what we're kind of seeing with the big marketplaces like Amazon and Walmart, right? And one of the things that we are seeing, as we noted in one of our notes, is that the increase in the usage of the shopping assistants like Rufus, right? So last year, over Black Friday weekend, consumers increased their time on Rufus by 5% year over year. And we continue to see more time spent on that. And I think it's to sort of aid in that treasure hunt in the best way that you can online, right? Instead of rifling through, you talk to the chatbot and tell them what you're looking for, who you're shopping for, to sort of help narrow that down for you. So it's a little bit different than TJX, but I think it's the same concept, right? Everyone's looking for the best deal and the best gift, and the digital platforms are able to, have an assistant that can look through the inventory, look through all the products, and give you a number of suggestions for the gift that you're trying to buy.
How's the industry kind of dealing with the retail, the bricks and mortar, the e-commerce aspect, and kind of melding those two and making it one experience? What are the current trends there?
I think the trends continue to be what we've seen, and it's focused on omnichannel. And just to use myself as an example, right, consumers still want to be able to make purchases wherever they are, pick them up however they want, or get them fulfilled however they want. And so with both our mobile data and our website data, we see increased traffic during these shopping periods. So people are definitely looking and using as many different platforms as they can to interact with the retailer. But at the same time, I don't think people are not going to the physical stores. Traffic in physical stores, continues to be there. People are able to get their orders fulfilled in the store. So I think that it continues to be very integrated, and it's becoming increasingly important for all retailers to have that capability. And we're kind of used to seeing it with the big guys like Walmart and Target, but I think for the smaller retailers, that also becomes very important to maintain that connection with the customer directly.
Do Walmart and Amazon have a way on capitalizing on Gen Z's preference for experiences over things, physical goods?
I think that is a little bit more challenging for that kind of demographic in particular. But I think that given the wide breadth of the assortment that they have, that will still be able to, service those customers just with slightly different items. And then maybe those customers would pivot to, dining or travel sites to get that experience aspect. But I still think that there's still a lot that these retailers have to offer. And I think for Gen Z in particular, one site that's done really well and that we've seen in general are the secondhand retailers, right? Secondhand retailer, if you think in light of the economy, they are doing really well. Depop in particular, right? We saw their 3Q downloads up 103%. So I think that, and if I think about my own college age kids, that's where some of those, I think those consumers will go to these resale sites, some of the different more like niche sites where they can find something that seems a little bit more unique than maybe what they would find on the mass market places.
Seema, thank you so much for joining us. Appreciate it. As always, Seema Shah, she's a Vice President of Research and Insights at Sensor Towers, kind of getting some finger on the pulse of some of these retail trends here as we go into the teeth of the holiday shopping season. Are you more of an e-commerce or a bricks and mortar kind of person?
I think I'm a bricks and mortar person, but then I get delayed and I procrastinate and I end up having to become an e-commerce person. How about that?
Exactly. Well, we get tons of boxes every day. So I think the way to play that is just FedEx and UPS or whoever does all those shipping of those boxes.
But like everyone else, I don't like paying shipping fees. So
well,
I'm
who
always
pays
looking for
shipping
the
fees
deals.
these days?
I mean, if you don't buy up to like a certain amount, then you will. And
right.
If you procrastinate, then you definitely will.
Then you definitely will. Yeah. All right. Very good. S&P up 94 points here. We are pretty much right at the high of the day. That's 1.4%. And the NASDAQ's up 2.4%. How about that? This is Bloomberg. Good morning.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. We have a business here called New Energy Finance, Bloomberg NEF, and they look at all the data on a global basis, and they analyze the data about the transition to a cleaner energy infrastructure. Nobody does it better than these folks at NEF. And they've got a lot of work to do because there's a lot of mixed signals out there from the U.S. government versus rest of the world who is continuing to move forward on the transition to newer energy. Ash Wang joins us here. She's the EV charging analyst for Bloomberg NEF. She joins us live here in our studio. Ash, I mentioned to you earlier, Scarlett and I were at a Bloomberg Philanthropies conference a few months ago about climate change and some of the investments that are being made there. And what we heard from the guests that we spoke to from around the world is the rest of the world is moving forward with their transition to cleaner energy. And the message to the U.S. is, and to this administration is, if you want to come along with this, fine. If not, stay where you are, because we're going to continue to move. Is that kind of what you're seeing out there?
Yeah, I would say we're sort of echoing that here at Bloomberg NEF as well. We are seeing that the U.S. currently is only at 10% of new car sales that are electric, versus in other countries like Norway, for example, they're at 97% of new car sales this year have been electric. And in China, for example, it's 40%. And so the rest of the world is sort of speeding ahead on electrification. And we've seen with our administration, it's caused some delays here. But we do think in the long term, we're still going to be heading down that path.
What is going on in Norway? What are these people doing there? I mean, I love the Norwegians, but 97%, that shocks me.
Yeah.
What's driving that?
Quite a lot of factors driving it. I would say, and based on our analysis, we've seen that gas stations and grocery stores are actually joining the charging game. And so around 20% of gas stations and 20% of supermarkets and grocery stores in Norway now offer charging. And they're seeing a lot of like business model synergies there. So if you think about a grocery shopping trip, that's 30 to 45 minutes, and that's like a meaningful amount of time for a top-up on an electric vehicle. So they're starting to compete with some of the pure players in the space.
So what's the technology today on charging? Where are we in terms of a fast charger? How long does it take to charge it, I guess, a typical electric vehicle?
So if we're using an 100 kilowatt charger, it could take anywhere from 30 to 45 minutes. Some of the faster chargers, like 350 kilowatts, that can shorten it to 20 minutes or less.
And so where are we? So the rest of the world, are they, I mean, Norway's an outlier on the upside. Where's the rest of the world, just generally speaking? Where's Europe? Where's Asia, broadly defined? Where are those parts of the world? What are they doing?
So we're seeing in Europe, there's a lot of policy momentum sort of on electrifying passenger vehicle charging, as well as like heavy duty vehicle charging through their alternative fuel infrastructure facility funds. And so they're investing billions of dollars into charging there. And across the EU, we're seeing around 20% EV adoption. And that's going to also range a lot depending on like which country you're talking about.
Right. Where are we in the U.S. today? What's the current environment for the U.S. and charging stations? Because that, for a lot of folks, that's probably a gating issue for adoption of EVs, is that anxiety. Well, where are we in the U.S.?
Definitely. So the U.S. right now, like I mentioned earlier, is at around 10% of new car sales being electric, but that is also very variable depending on the state. In California, almost like a quarter of the vehicles are electric, and then along the West Coast, you're also seeing like 20%, versus some other markets, it's lower than 10%.
And the charging, what's the charging network like here, and what's the plan for the charging network in this country, and how much do we need the government to support that?
So we're seeing a lot of government support right now via the National Electric Vehicle Infrastructure Fund, or NEVI, on the federal level, and then we're seeing some state level programs as well. We're just, there's a bit of an issue in terms of the deployment of the funds. It's being administered through state governments, which might not have the technical know-how and the expertise to kind of oversee that procurement process. And so that's sort of delaying it. We only have like 100 to 200 like NEVI funded chargers that are out right now.
So what's I'm sure you had to take down your U.S. forecast for charging infrastructure in the U.S. What's kind of the next 4 to 5 years look like here?
We had to revise it downward quite a bit. Now I think the EV penetration rate in 2030 is around 30% of new car sales. And so, yeah, that was revised quite a bit lower after the President Trump.
So the charging stations, the charging technologies, how much of that is being done by private enterprise versus government supported versus, I don't know, government,
great question.
public, I'm not sure how that's getting done.
So in the U.S. right now, it's mostly being led by the private side. In Norway, we're seeing actually a lot of public-private coordination that's really driving it. So Oslo, for example, has a municipal charging app that coordinates payments and access to chargers across several like private operators. And then in places like China, for example, we're really seeing a lot of like state-mandated deployment of chargers via like state-owned utilities.
All right, interesting story. It's a lot of politics in the story, at least in this country. But again, the rest of the world's moving forward. Ash Wang, thank you so much for joining us. Ash Wang, she's the EV charging analyst for Bloomberg NEF. Those are the folks that collect all the data, analyze all the data on a global scale for this transition to greener, cleaner energy, I guess is the way to generically term it. It's across all industries, so we keep an eye on that. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Stay with us. Your top stories and global business headlines are coming up in just a moment. The markets are a-ripping, as they say. The S&P is up 1.3%. The NASDAQ's up 2.24%. The yen is weaker yet again. I'm calling that out for Tom on the Upper East Side. He wants his yen quote. 10-year Treasury yields 4.04%. This is Bloomberg.
is CBS News on the Hour, sponsored by Steel.
I'm Jennifer Kuiper. President Trump says he would like Ukraine to agree to a U.S.-backed peace plan by Thursday. But Ukraine's President Volodymyr Zelensky says a key sticking point is letting Russia's president keep what he has stolen. CBS's Willie James Inman with more.
Ukraine would have to give up a lot, according to that multi-point peace plan that was presented by the Americans. Now, there has been criticism on both sides of the aisle here in Washington with that peace plan because lawmakers believe that it heavily favors Russia. But, of course, things could change, and the president said over the weekend to reporters here at the White House that it wasn't his final deal.
As the Trump administration considers taking military action against Venezuela, the U.S. is planning to increase pressure on President Nicolas Maduro by naming an alleged drug cartel as a foreign terrorist organization. CBS's Charlie D'Agata.
The Trump administration was thinking about other ways, psyops, of dropping leaflets in Venezuela to sort of weaken the regime. Trump has already said that the CIA is operating inside Venezuela, and with that comes, of course, other avenues of trying to get rid of Nicolas Maduro, if not by force, other ways, because he's made that clear.
The latest CBS News poll shows 70% of Americans oppose any U.S. military action in Venezuela, saying President Trump has not explained his position clearly. AAA projects nearly 82 million people will travel at least 50 miles from home over the Thanksgiving holiday period. CBS's Chris Van Cleve.
AAA expects more than 73 million to hit the road, up a bit from last year. But as storms make their way to the eastern part of the U.S., drivers may run into delays and messy conditions.
There are just over 2,000 delays and 222 cancellations in the U.S., according to FlightAware. A football player for the University of Alabama, Birmingham, is being held without bond after allegedly stabbing two of his teammates before their game Saturday. Daniel Mincy is charged with attempted murder and assault. The two victims are stable. UAB interim head coach Alex Mortensen saying this morning,
it's really important to us that the players understand that, all the way up to game time, there's an open door for them.
In Britain, a prince-turned-commoner could be facing more legal problems.
I'm Vicky Barker in London. Scotland Yard investigators have reportedly questioned some of Andrew Mountbatten Windsor's former police bodyguards, requesting emails, phone records, and logbooks. This over reports that then Prince Andrew asked them to dig for dirt on Virginia Giuffre, the woman who claimed Jeffrey Epstein had trafficked her to Andrew when she was underage. He reportedly also provided the officers Giuffre's social security number and date of birth.
This is CBS News.
Explained at a concert in L.A. he canceled stops last year after he had a stroke midway through the New World Tour.
I had a really bad pain in my head.
42-year-old explained to fans in L.A. doctors in Houston discovered a hole in his heart. He says they performed 2 surgeries to repair it. Glover's takeaway, live life to the fullest because it's a blessing. Deborah Rodriguez, CBS News.
A new Pew Research survey showing today's high school seniors are much less interested in getting married, especially the girls. In 2023, 67% of seniors said they think they'll get married someday, down from 80% in 1993. But among girls, the shift is dramatic, dropping 22 points over the last 3 decades. Experts point to growing independence and changing attitudes about relationships. Jennifer Kuiper, CBS News.
from Washington, D.C., this is Balance of Power with Joe Matthew.
The White House goes back to the drawing board on Ukraine peace. Welcome to the Monday edition as progress comes in the form of revisions on the 28-point plan the U.S. offered that we told you about. We'll get the latest after a weekend of talks in Geneva when we sit down with Courtney McBride, our national security reporter, all over this story. 6 weeks now until Obamacare subsidies expire. We'll get the latest on this and the view from Congress when we talk to Nathan Dean at Bloomberg Intelligence. And as Marjorie Taylor Greene announces her retirement from Congress, we'll get with our political panel. Bloomberg Politics contributor, Democratic analyst Jeannie Shanzano today, alongside Lonnie Chen from the Hoover Institution at Stanford University. And it's all after a look at Wall Street. Amy Morris is spending the day with us. Her view on the markets from Washington. Amy, how's it look?
It's looking pretty good, Joe. Tech stocks powering a bounce in the markets on Wall Street at the start of this holiday-shortened trading week. We do check the markets for you all day long here at Bloomberg. The S&P 500 up 1.25%, Nasdaq up 2.25%, the Dow up 0.4%. The 10-year Treasury yield at 4.04%, the 2-year yield at 3.51%. You know, President Trump is expected to make a final decision on whether to allow NVIDIA to sell advanced artificial intelligence chips to China. Commerce Secretary Howard Lutnick says that decision involves weighing the promotion of economic expansion against protecting national security.
Do you want to sell China some chips and keep them using our tech and our tech stack? Or do you say to them, look, we're not going to sell you our best chips. We're just going to hold off on that, and we're going to compete in the AI race ourselves. So that is the question. It's in front of the president. He's going to decide. It's a really, really interesting question. He's got all the information. He's got lots and lots of experts talking to him, and he's going to decide which way he wants to go forward.
You can hear more from Commerce Secretary Howard Lutnick on the Bloomberg Surveillance podcast. A pill version of Novo Nordisk's Ozempic failed to slow the progression of Alzheimer's disease in a pair of high-risk studies. Shares of Novo Nordisk are about 6% lower, touching a 4-year low. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew.
All right, Amy, thank you so much. Amy Morris, live in Washington, just like the rest of us today on Balance of Power. Thanks for being here on the Monday edition on your Bloomberg Radio, streaming live on YouTube. Search Bloomberg Business News Live. Unless you got us on YouTube TV, you can watch Bloomberg all the time now. Same for Bloomberg Originals, where this program is proudly featured every day. And on your satellite radio, Sirius XM channel 121. Hope you had a great weekend. Thank you for being with us here to start off the holiday week. We can mention, by the way, the festivities have already begun. The big White House Christmas tree just arrived. First Lady on hand for this very moment. Of course, an important way to get things started in the holiday cycle that will consume all of Washington with cocktail parties over the next couple of weeks. This year's tree comes from Corson's Tree Farms, Sydney Township, Michigan. These towns are never an accident. About an hour northeast of Grand Rapids, I read. And this, of course, sets the stage for the turkey pardoning tomorrow. And we'll have much more on that as we make our way through the program. It was a very busy weekend, though, for the administration as the Secretary of State made a beeline for Geneva to talk about Ukraine peace. The 28-point plan we discussed last week is being revised, having first been said to have been crafted by the U.S., then we learned it was in consultation with Russia. Depends who you ask whether Ukraine had any input. But Ukraine is making changes now based on, of course, its best interests in ending the war with Russia. Secretary of State Marco Rubio is already back home, already back in Washington following what he called a very productive visit to meet with Ukrainian officials overseas while you were enjoying your weekend. Here's the Secretary of State.
It is probably the most productive day we have had on this issue, maybe in the entirety of our engagement, but certainly in a very long time. But work remains, and because this continues to be a working process, you know, I don't want to declare victory or finality.
That was from yesterday in Geneva. Officials say the draft agreement has since been revised, with Rubio saying that he had received input from both sides, a living, breathing document, as he calls it. Rubio adding, of course, Russia certainly gets a vote in this, and some of the changes will need to be aired out in Moscow. And this is where we start our conversation on a couple of important developments here with Courtney McBride, Bloomberg's national security reporter, with me here in Washington. Courtney, it's great to see you. Obviously, an important and busy weekend. You wonder if it really changes the dynamic here. Do we have a sense of what in this agreement is being revised?
Well, I mean, there are a lot of questions, as you alluded to, Joe. Different interlocutors have a different interpretation of how the document originated and where things stand. Secretary Rubio, who obviously is also wearing another hat as National Security Advisor, has signaled that a lot of progress has been made. Ukraine and European allies are certainly trying to remove a lot of the elements that would be non-starters for Ukraine. But I think it's anyone's guess exactly where things are going to land. I think we have some reporting from our colleagues that 28-point plan is now a 19-point plan. But there were certain elements I think that were particularly troubling for Kyiv and for many of its supporters on the continent.
It's like the old Mel Brooks. I come to you with these 10 commandments. Look, this could continue to change. Correct, but we've got a deadline that the president put out there on Thursday on Thanksgiving, and Secretary Rubio seems to be walking that back. Is that a real deadline or not?
Well, I mean, I think the president, as part of his art of the deal, tends to, establish a firm starting point, but there is some room for flexibility. So Secretary Rubio did indicate that Thursday deadline might be pushed back, that, were they making sufficient progress, that Thursday might not be a hard and fast deadline.
The president's got a thing for these kind of holidays and wrapping significant moments around them. We remember reopening on Easter from COVID was his desire. This one also may not be met, but this would be the idea, right? To have some sort of announcement of a Thanksgiving accord or something with Ukraine. If there's a partial announcement to be had, might we hear about it?
It's entirely possible. I mean, I think the goalposts perhaps move. Sometimes it may be a framework for an agreement rather than a formal and completed, whether it's a peace deal or ceasefire. But the president certainly has indicated his desire to have something done, and as he said repeatedly, to end the killing on both sides.
You mentioned the source of this document, and I know that he's got a couple of people he's hearing from, including his son-in-law, Jared Kushner. You've got Steve Witkoff. You've got Secretary of State Marco Rubio. The Polish Prime Minister, Donald Tusk, in a tweet on Sunday referenced this. He said they're ready to negotiate on a plan, quote, "However, before we start our work, it would be good to know for sure who is the author of the plan and where it was created," unquote. Pretty important ally here to be questioning that, isn't it?
Certainly. There's certainly been a lot of speculation, on the internet and elsewhere about the origins of the plan. The administration has said that this was jointly crafted and that it was a starting point. But there's certainly a lot of suggestion that that Russia's Kirill Dmitriev, in consultation with Special Envoy Steve Witkoff, worked to build this.
I want to get to what's happening in Venezuela with you, Courtney, but just curious what it means to have the Secretary of the Army, Dan Driscoll, over there negotiating. Does that presumably have to do with a security guarantee, or why would the Secretary be involved in these negotiations?
Well, I mean, it's our understanding, and we've reported that the Army leadership was already planning to go to Ukraine. There have been plans for some technology sharing between the countries, and that this was an opportunity to sort of leverage those conversations and try to advance a peace plan.
So Raisin Kane, General Dan Kane, the chairman of the Joint Chiefs, takes a plane to the Caribbean today. This is an important trip by the officer who's going to be thanking troops for being in harm's way on Thanksgiving, but also apparently surveying this massive armada. We've got 15,000 troops down there, and a lot of folks are wondering if we're about to go to war, of course, against Venezuela. But we've been asking this for weeks now. Courtney, how long can we remain in this crouched position, and what does it mean that Kane is there?
Right. Well, as you said, obviously the timing ahead of Thanksgiving, the chairman traveling to meet with troops and to thank them is not out of the ordinary in and of itself. But given this massive buildup and the fact that today foreign terrorist organization designation for Venezuela's Cartel de los Soles goes into effect, there are a lot of questions around the visit.
Could that hasten an attack? That designation?
It's possible. Defense Secretary Pete Hegseth indicated in an interview in the last couple of days that this, creates additional options for the U.S., but that it doesn't, in and of itself, signal that something is imminent. But he has said that lots of things are on the table, but nothing is definite at this stage.
Sure. So we wait, and then we get a phone call from China. This took place this morning. It's kind of an odd headline that we have going, and it landed on the same day that Howard Lutnick, the Commerce Secretary, joined Bloomberg Surveillance to talk about export controls when it comes to China, whether or not to sell Blackwells or other high-end AI chips, maybe the H200, which is reportedly being considered inside the White House. Here's what Lutnick said to us a bit earlier today.
Do you want to sell China some chips and keep them using our tech and our tech stack? Or do you say to them, look, we're not going to sell you our best chips. We're just going to hold off on that, and we're going to compete in the AI race ourselves. So that is the question. It's in front of the president. He's going to decide. It's a really, really interesting question. He's got all the information. He's got lots and lots of experts talking to him, and he's going to decide which way he wants to go forward.
Would be a huge deal, obviously, for NVIDIA, but President Xi apparently was pressing President Trump on the status of Taiwan, urged him to maintain improved ties, and had a conversation about China's relationship with Japan. What do we make of the timing of this call today?
As Secretary Lutnick said, you've got a couple of different elements that could be influencing the timing. The president wants to wrap up trade talks as well.
Usually there's a big drumbeat leading up to a meeting like that.
Often there is, and you'll have sort of a sequence of meetings with additional officials, at the working level, at the cabinet level, and so on. But this could signal the urgency, perhaps for Beijing, in both in addressing the status of Taiwan, trying to influence the president's conversations, perhaps with Japan as well.
Fascinating. It's great to spend some time, as always, with Courtney McBride. Courtney, thank you so much. Bloomberg's national security reporter with us here in Washington. With lawmakers out of town, we clearly turn to war and peace and turkey on this Thanksgiving week. The White House Christmas tree has arrived, and the turkeys, yes, will be arriving tomorrow. We'll talk to Nathan Dean about this at Bloomberg Intelligence next.
It's 12:21 on Wall Street. I'm Amy Morris. Tech stocks drove an advance in global equities. Alphabet and Alibaba notching gains as traders kick off a data-packed week. Alibaba and Alphabet both up right now about 5%. We do check markets for you all day long here at Bloomberg. The S&P 500 up 1.4%. NASDAQ up 2.4%. And the Dow was up about 0.5%. The 10-year Treasury yield at 4.04% and the 2-year yield at 3.52%. Weakness in Bitcoin persists after a prolonged sell-off that's put Bitcoin on track for its worst month since 2022. Right now, Bitcoin is down about 1%, hovering around $87,000. President Trump and Chinese President Xi Jinping spoke by phone earlier today to discuss trade, Taiwan, and Ukraine. China says Xi told Trump that Taiwan's return to mainland China is an important part of the post-war international order. A White House official confirmed the call happened this morning but offered no more details. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That is a Bloomberg Business Flash. We go back now to Balance of Power with Joe Matthew.
All right, Amy, we're getting that holiday feel here in the nation's capital. The White House Christmas tree rolled up about 20 minutes ago. The First Lady was on hand to welcome the tree today, delivered from Corson's Tree Farms in Sydney Township, Michigan. What happens tomorrow, though, is the big one. There's a suite at the historic Willard Hotel that's currently being lined with plastic sheeting as if it were a scene from the TV show Dexter. But this is not a murder scene. It is not for a dead body. It's not a crime scene. It is the temporary home of the next two Americans to be pardoned. And yes, they are turkeys. If you're with us on YouTube, nice job, CC. She saw me coming. CC in New York, our video producer, with the turkey beauty shots from the White House and pardons passed. So they're going to have these guys up there. You know, they do this every year. In fact, there is a bit of a contest on X to name the turkeys. The First Lady is up on Twitter with Gobble and Waddle very clearly leading the pack. We had Sugar and Spice, Pumpkin and Pie, Acorn and Squash. It does appear that Gobble and Waddle at 40.6% will carry the day. You've got till, well, sorry, the deadline's already up. So I guess they won. Now, the question, of course, is about what happens after. And I was talking to Nathan Dean. He's going to be on with us in just a moment. You might want to block the kids' ears if you're driving in the car right now, because the headline at Politico says it all. Most turkeys live only a few months after a presidential pardon. What? You thought these guys were going out to pasture like Thanos in the open field watching the sun set every night? No, their knees are buckling and their hearts are stopping, because the pardoned turkeys are made so plump and so beautiful that they're obese, and they don't tend to live that long. Yeah, Amy, really, a couple of months. They don't even get to the 1 year point. They go to live out the rest of their days at Gobbler's Rest at Virginia Tech. At least that was the case for peas and carrots. I don't think they got to the end of the season, guys. Wild turkeys generally live 3 to 5 years. These guys barely make it to 1. Now, we had Wishbone and Drumstick, Tater and Tot, Abe and Honest. Only Tater, and I'd love to know how these reporters found this, pardoned by Barack Obama in 2016, exceeded all expectations by living for 2 years. So basically, the pardoned turkeys are like middle-aged white guys, and they're all about to die of a heart attack. Nathan Dean at Bloomberg Intelligence, am I about right?
Well, I mean, I think there's a lot of our clients were actually talking about whether or not Gobble or Waddle were going to win, and I think some of the South Floridians were in here because Waddle's winning, and I think it's Jalen Waddle from the Miami Dolphins. But lots of important work going on.
Is this a done deal? Did Waddle win?
I think they're trying to figure out which one is going to be pardoned now, because one gets the official, and then the other one gets the the supplemental. Yeah. But lots of things are. It's a high risk stake at this point.
Yeah, this is really honestly. I guess you go out in a blaze of glory, either in the Friolator or at, what is it, Gobbler's Rest? Yeah, Elizabeth, quite literal name for the resting place there. Cece says this is shocking. I didn't know about it until I have to say it was Nathan. We were talking about this this whole pardon and, you know, how it's going to work out, what happens at the Willard. Nathan says, did you know these guys die in a couple of months after? Seems like it's for a good cause, though, to be honest with you.
You know, it keeps us excited this week.
Last year's pardoned turkeys, Peach and Blossom, and the ones before them, Liberty and Belle, all came from Minnesota, and I'll be curious to meet their owners tomorrow. Short of a turkey pardon, will we get a health care plan? Is the question today. How come I'm reading that's going to happen this week? Is that real?
Well, so Bloomberg is reporting that President Trump may be offering up its own plan in terms of Obamacare subsidy extensions. You know, we talked about this in the past about original take is that it was going to be extremely difficult to do. You know, the Republican desire to do this up on Capitol Hill isn't really there. But President Trump, I think, recognizes that there are a lot of voters in the Virginia, New Jersey elections that have started thinking about affordability and this idea of Obamacare premiums going up. It's not a great political message in 2026. So President Trump does float this idea. The question that I have, and I was talking to my colleague Dwayne Wright, who's writing about this for the Terminal, the biggest question we have is what are the add-ons to this deal? And are those add-ons enough to dissuade Democrats? Because, look, you are going to get the Democrats. And if President Trump comes out in here and says, here's the deal, we're okay with the Democrats here, here's the deal, we think he ultimately gets past the Hastert rule in the House and can tell the House Republicans to vote. But again, I don't think it's happening this week. I think President Trump floats the plan and pushes it out before he goes to Mar-a-Lago for Thanksgiving. And then we'll have to see in early December how this ultimately plays out.
But this is a patch, right? This isn't Trump Care, the alternative. This is a way to extend the existing plan.
This is a way to kick the issue beyond the midterm 2026 elections so that they can debate this another day.
All right. That said, John Thune promised a vote in the Senate. That's how we got the government reopened, right? Does Speaker Johnson want anything to do with this, or is it foregone that this would get a House vote?
I don't think you're going to see Speaker Johnson really opine on this until he gets direction from the White House. Because if you were to give Speaker Johnson truth serum and he talks to his base, look, I don't think the House Republicans have any desire outside of some moderates that are in more purple swing districts. I think the bulk of the Republican base of the House essentially doesn't want this to actually occur, and they're fine with the subsidies going away. But, you know, there are some Republicans out there who are thinking more about affordability and more about things getting done. Marjorie Taylor Greene just tweeted out about 5-10 minutes ago, you know, responding to a lot of news articles today about how she just wants to get things done. And it's just very difficult to do in this environment. So I think what happens here is that if President Trump comes out and says, we're good with this, this is my plan to extend it, the Democrats somehow get on board, then I think those House Republicans say, let's kick the can and let's deal with it in 2 years.
This would prevent presumably another government shutdown at the end of January, right?
Yeah, I think that's one of the biggest. There's two issues that could bring a shutdown, and we don't think there's a decent chance. We're at a 30% chance of a shutdown in January.
You got odds on this?
Yep, we've got long-term odds, but odds with two major caveats. The one is that if this issue isn't resolved, and the Democrats think that it's a winning message to fight for this again in January, and the other one is that if you see additional rescission packages coming from the White House, because I've said this before, it takes 60 votes to appropriate, it takes 50 votes in the Senate to rescind, and that equation just does not work when you're talking about making deals and then breaking those deals. But outside of that, no politician, I think, wants to shut down in January. It's an election year. They want to focus on other things.
You're running odds on the turkeys?
No, not.
There's no gobble, no waddle?
I'm going to go with
BI.
waddle.
Yeah, I can tell.
I'm going to go with waddle.
There's no official BI odds on this.
No.
Because, you know, producer James put this in front of us. Polymarket is not picking a waddle over a gobble, but we have 68% odds that a turkey will audibly gobble during the pardon tomorrow. Don't they always gobble?
Ooh, I'm not sure.
68%.
That's pretty high.
I feel like I'd go with a good 98% on that.
I'm going to be watching live go.
Yeah. Okay, so that said, we avoid a shutdown. Is there an agenda to pursue once we get through this funding fiasco, or are you going to start talking to me about the debt ceiling next?
So I think what it comes down to is that the early part of 2026 is going to be more sector-specific legislation. Crypto's the biggest one. You know, obviously, we've seen a lot of developments. We have a bipartisan discussion draft both at the Senate Banking and at the Senate Ag Committee in terms of crypto legislation. I think there's a decent chance for that. But for the rest of this big picture idea of legislation, 2026 is a story of deregulation and executive orders. It's not a story of legislation. legislation. Because when the primary season kicks off in March, all 435 members of the House and 1/3 of the Senate, they don't want to be here because every day they're here in Washington, their opponents are campaigning against them, and they're not going to be focused on legislation. Now, some stuff can happen. I think that you're going to see some headline risk about some bills and so forth. So we're not saying the store's closed.
Right, sure.
But for these big ticket items like Reconciliation 2.0, I just don't see the votes there.
How about that?
And so I think it's a story of deregulation because the regulators can continue to operate without Democrats or really the midterms impacting them all that much.
Well, I ask because it's not going to be easy for Speaker Johnson or for Republicans to maneuver. Punchbowl did some math this morning that was fascinating with a couple of decisions that are looming that might not be on a lot of people's radars. Right? We've got 219 to 213 right now, Republicans and Democrats. There's a special election in Tennessee on December 2nd to fill former Rep. Mark Green's seat. Democrats are hoping they can flip it. They'll gain a seat in Houston at the end of January when voters choose Sylvester Turner's replacement. On April 16, New Jersey voters have to replace Mikey Sherrill, of course, the new governor. And let's say that Democrats run the table here, including that seat that I mentioned in Tennessee. Johnson would have 218 members to Democrats 214. We'd be back to a sub 5. Texas and New Jersey would bring Democrats to 216. So now you're one cold or a flu away from the majority completely disappearing.
And you haven't even mentioned Punchbowl's point is that the other Republicans could be considering retirements.
That's right.
Early retirements.
So what do you do if you're Mike Johnson? I guess it's a good thing it's the midterm cycle, so you can win some seats.
I think what happens here is in the first half of this year, before people turn into election campaign mode, is you start having votes on legislation. You start having votes on things like, just various different votes that, individuals want to bring to the floor to try and say that at least they tried. Because remember, I don't think you're going to get any legislation done prior to midterm election within the 6 to 9 months. I'd say that for any election. Yeah. But at least you can allow folks to get the idea out onto the floor and you can get the idea to fester so that maybe after the midterms they can come back and actually work on this more. Okay. But if you follow the prediction markets, right now it's about a 70 to 75% chance that Democrats take the House. Yeah. We've worked with gridlock before. We may have gridlock again for the second half of the Trump administration.
Better odds than a turkey gobble tomorrow at the pardon. This is going to be another wild couple of weeks here, so you better stay close to us. You traveling or you cooking? What's the deal for Thanksgiving?
We are just hosting at home.
You are, aren't you? See, America's Dad could only be hosting on Thanksgiving. Do you carve the turkey in your house?
No, but I am forcing my kids to do another turkey trot that morning.
Is that true?
Yeah, absolutely. Okay. They are not happy about it.
When you say another,
we did one yesterday.
Okay, great. It didn't go well.
My daughter was screaming how much she disliked it the entire last.
Fantastic. All right. Lastly, you do the canned cranberry sauce with the ridges, or the homemade one that you actually spoon out of the bowl.
I'm a canned person.
You are,
and my wife is not, and so
they're
we do
both on the table at the Dean House. All right. I'll think of some others. Maybe you should file questions for Nathan Dean for Thanksgiving, and we'll have them answered for you here on the program. Multiple turkey trots. Yeah, Cece. This guy's a despot. Nathan Dean, Bloomberg Intelligence, thank you as ever. We'll assemble our panel next. We haven't even talked about Marjorie Taylor Greene. Stay with us right here on Bloomberg.
1240 on Wall Street. I'm Amy Morris. President Trump and Chinese President Xi Jinping spoke by phone earlier today to talk about trade, Taiwan, and Ukraine. China says Xi told Trump that Taiwan's return to mainland China is, quote, an important part of the post-war international order. A White House official confirmed the call happened this morning but offered no more details. Commerce Secretary Howard Lutnick said the European Union needs to change its digital regulations to get a deal to lower steel and aluminum tariffs. Meanwhile, the Supreme Court is considering whether the president overreached with those tariffs. Lutnick is confident the Trump administration will prevail.
I think we're going to win the case, but I think it would be relatively straightforward for the president to replace it with other means. But it's not going to be necessary because the president has used IEEPA correctly, and he's going to win that case.
It isn't clear when the Supreme Court will rule. We check markets for you all day long here at Bloomberg. The S&P 500 is up 1.5%. NASDAQ now up 2.6%, and the Dow up about 0.5%. The 10-year Treasury yield at 4.04%, and the 2-year yield at 3.5%. High turkey costs and low production are creating a shortage of turkeys for food banks across the country as Thanksgiving approaches. Turkey costs have soared, contributing to shortages, straining the budgets and inventories of charitable organizations. The Department of Agriculture estimates turkey production is at its lowest level in 40 years. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. That's the Bloomberg Business Flash. Let's go back to Balance of Power with Joe Matthew.
All right, Amy, thank you so much. Not a bad way to start the week here. Everybody's going to forget that sell-off day after NVIDIA earnings pretty quickly. And, of course, NVIDIA has a lot to do with China at the moment. We discussed this a little while ago with comments today from Howard Lutnick, speaking on Bloomberg Surveillance today about the decision facing President Trump when it comes to selling China high-end NVIDIA-made AI chips, not the Blackwell, but the H200. That's the current deliberation happening inside the White House. And maybe the phone call helped. If you're just joining us, they did talk today. Trump and Xi on the line. We've been waiting a couple of hours now for a readout on this. It was just a stray headline. What do you mean they talked this morning? Usually there's a big drumbeat leading up to a meeting like that. There was nothing this time except word that they had spoken. Well, here we go. Look no further than Truth Social. I just had a very good telephone call with President Xi of China. President Trump writing. We discussed many topics, including Ukraine, Russia, fentanyl, soybeans, and other farm products. We have done a good and very important deal for our great farmers, and it will only get better, he says. The call was a follow-up, he writes, to our highly successful meeting in South Korea 3 weeks ago. Since then, there's been significant progress on both sides in keeping our agreements current and accurate. Now we can set our sights on the big picture, all right? We're about 2/3 of the way through the post, and this is where we get to the news. President Xi invited me to visit Beijing in April, which I accepted. And I reciprocated, where he will be my guest for a state visit in the U.S. later in the year. We agreed that it is important we communicate often, which I look forward to doing. Thank you for your attention to this matter. Okay, hold this thought, because this is what happens here in the noontime hour on Balance of Power. Every story for the day all breaks at the same time. Producer James working overtime in the control room, feeding me the headlines. Judge has just dismissed the case against James Comey and Letitia James. We're red now? Look at that, red on the terminal. AP News alert, judge dismissing cases against James Comey, of course, the former FBI director who the president directed his attorney general to investigate and indict. Letitia James, the New York State Attorney General, after finding the prosecutor was illegally appointed. That indeed was the case here. Quite remarkable. So what, we got 3 breakers all in one here? What's the panel supposed to do with this? I don't even know where to start. Let's just bring him in. Good thing Jeannie Shanzano is with us, Bloomberg Politics contributor, Democracy Visiting Fellow at Harvard Kennedy School's Ash Center, of course, our Democratic analyst. And Lonnie Chen is with us today. I love this. Republican strategist, fellow in American Public Policy Studies at the Hoover Institution at Stanford University, former candidate, California State Controller, former advisor to Mitt Romney. Great to see you both here. Jeannie, I feel like it should be taster's choice. What to do? I think I need to start with the judge here, with the speed with which this has turned around. You remember the post on Truth Social that was actually, it was a DM that he inadvertently posted publicly. It said Pam, and he told her to go after James Comey. Letitia James was already in the crosshairs. Only weeks later, the case is dismissed. What's your read?
You know, I think it is a reflection of the fact that this administration, the president in particular, they have prized fealty to the president versus expertise. And of course, what we had here was the appointment of somebody to this office, and Lindsay Halligan, who didn't have the experience, a smart woman, a woman very capable, but hadn't had this experience before a grand jury. And the number of missteps that, by all accounts, occurred in that grand jury, I don't think this is a surprise. But again, I think it's reflective of a larger problem with this Trump White House, which is that when you are going to focus on somebody who is abiding by and most concerned of appealing to this president versus somebody who has expertise in their position, this is what you come to get. And so I don't think it's a surprise. Statute of limitations has run out. And I think James Comey has got to be celebrating very big after this. And of course, my own state attorney general, Letitia James.
Wow. Lonnie Chen, welcome back. It's great to have you. You know the old line that you can indict a ham sandwich. That's apparently not the case.
Well, I mean, you can indict a ham sandwich. Whether that ham sandwich is guilty of poor taste is a different question. I mean, look, this is. I don't know that a whole lot of people are shocked by the outcome. I mean, I think the Comey and James cases probably were a little different substantively. You know, the James case arguably had a little bit more than the Comey case did. But I don't know that anybody's surprised by the outcome here. And frankly, I think in the long run, the big question is, does this chasten the Trump White House? Does this chasten the president in how he approaches these questions? And my guess is going to be absolutely not. I think the president's going to continue to be aggressive, both in his policy agenda as well as his personal agenda. So it's one of those things, again, outcome not surprising. The bigger question I think we ought to be thinking about is what the impact will be politically and otherwise on the White House.
Well, it's really remarkable here. Jeannie, what happens to Lindsay Halligan after getting roped up in all of this? Is her job here done, or does she come back around with some new role or new indictment?
You know, I suspect she may keep on in the Trump circles, but I think this speaks volume to what a misstep this appointment or attempt to make an appointment like this when all of the experts in the department said that this was a non-starter, particularly the case against Comey. And I think if anybody has any sort of fancy idea that Donald Trump is going to be chastened at all, the answer is no. I mean, just look at how they are going out against Senator Mark Kelly in the last few minutes, accusing him of misconduct. And this is the Trump Pentagon. So, you know, I think the reality remains for Donald Trump. If you cross him, he is going to take every step he can to hit back against you. And so I think he will continue, but anybody else would be chastened by the fact as to how this has come out. And this is a big win for James Comey, somebody who was not liked by the Democrats or Republicans, as we all remember, and whom has come out of this. And I think, you know, he owes a lot to his attorneys. He had some of the best in the business.
Boy, I'll tell you what does this mean for James Comey, Lonnie? They are two different cases and two different people here. He's been writing books. What does this do to his story and his ability to operate in Washington?
I mean, look, I think he has made a brand for himself in a lot of ways, and I think that will continue. And you know, this is one of those things where it will test the axiom that there's no such thing as bad news. That the only thing that really we care about in this political environment now is exposure and more news. And you know, I think Comey will be testing that theory going forward. But I think he's largely got the same audience he's got, and those folks are going to probably find him more appealing now that he's been exonerated in some ways. So we'll see where it goes.
All right. Before we learned of this, if you were with us, we were talking about China because we just got the closest thing we'll get to a readout, and that is a Truth Social post from President Trump. He talked to President Xi this morning, Jeannie, and it looks like Donald Trump's going to be heading to China in April. He reciprocated the invitation with one to Xi for a full state visit in the U.S. later in the year. He talks about a good and very important deal for our great farmers, a successful meeting in South Korea. Now we set our sights on the big picture. What's that big picture?
I think this is a critically important development, particularly for the president now, given how he is being viewed in terms of the economy. And so, as you mentioned, the farmers issue, the issue of soybeans that they talked about, these visits, which I think are important in a continued conversation. What the bigger picture looks like, though, to your question, I'm not sure we know. And I would just add to that what we heard from the Chinese Foreign Ministry, which had to do with the president of China talking about Taiwan and the fact that they would like to bring Taiwan, as we know, back into the fold of the Chinese mainland. And this comes not long after the Japanese prime minister said Japan could get involved militarily should China try to take action against Taiwan. So, on the one hand, we have the important economic aspects of this. And on the other hand, we have the important security and military aspects of this. And for myself, I'm not sure I'm clear as to where President Trump stands on the latter, which is arguably, in some ways, more important.
Howard Lutnick this morning, Lonnie, on Bloomberg TV and radio, made the point the president's got all the information he needs to make a decision on high-end AI chips, GPUs made by NVIDIA. The H200 is apparently the model or the version they're looking at here, not the Blackwell. But if these talks continue to progress on trade and our economic relationship, isn't that inevitable that Beijing gets its hands on this technology?
Yeah, and I think if you look at how the administration's approached issues like export controls, inbound investment controls, all of these issues that have been really tricky in the last couple of administrations, it's pretty clear that the president's focus and his priority is on reaching an economic accommodation with China. And I think the recent de-escalation and in fact, the recent dialogue that we've seen between the two governments suggests that that is the president's ultimate priority. What he's willing to trade off, so to speak, what he's willing to put to the side in order to reach that economic accommodation, I think that's the big question people are asking. You raised the issue of Taiwan, which is existential for the Chinese Communist Party. The fact that the president has not pressed as hard on some of the issues that we know the Chinese are concerned about other countries pressing them on, issues like the internal governance of the CCP, democratic potential promotion of democratic norms in China. These are all issues that this administration has not introduced into the conversation, and I think deliberately so. The focus has been on reaching an economic accommodation, and I think if you'd asked people before President Trump took office, this would have been a relatively surprising place to be 1 year, almost a year into his presidency, that we would have this sort of economic accommodation with China, that we'd be de-escalating. Remember how high the tensions were with China when he first took office? So it is a remarkable turn of events in a lot of ways.
This is going to be like a state visit for President Xi at the White House. Later in the year, I believe was the language that he used, later in the year. So presumably at some point the second half of next year, Jeannie, we've got about a minute left. What will the optics be as they're building the president's new ballroom and President Xi rolls up the driveway?
Yeah, is the ballroom going to be done by that point, Joe? I expect they're going to try.
I do not believe so.
Oh, no. Okay, then they won't be there. But it's going to bump right up to a midterm. So a visit like this, you know, it can play both ways in terms of domestic politics. But I do think it speaks to a continuation in Donald Trump's approach to foreign policy, which very much to Lonnie's point is not about addressing issues of small d democracy, human rights, and those kinds of things, but about making deals. And he doesn't care who he makes those with, whether it is MBS or Xi Jinping, he is there to make deals, and he feels comfortable doing that.
Well, there's no shortage of news today. If you're with us for the balance of this hour, you don't need me to tell you. 3 breakers and 2 great panelists, Jeannie Shanzano, Lonnie Chen will be back in our second hour as we welcome our global television audience. Wait till they hear what's going on in the world. Stay with us on the fastest show in politics. I'm Joe Matthew in Washington. This is Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump could end the war in Ukraine just as he starts one in Venezuela. Welcome to the Monday edition as the Secretary of State makes revisions to the Ukraine peace plan and the chairman of the Joint Chiefs makes a beeline for the Caribbean. We're going to get the latest on all of this from Jenny Welch at Bloomberg Economics as we now get details, the first batch of details from President Trump's call with President Xi of China from earlier today. We'll have analysis from our political panel, and we'll talk as well with Republican Congressman Chuck Fleischman of Tennessee. With 6 weeks until Obamacare subsidies expire. It's all after we take a look at Wall Street. We'll start there right now with Amy Morris in Washington and her view of the markets. Amy, how's it going?
It's going green, Joe. The Bureau of Economic Analysis says the advanced estimate of third quarter GDP has been canceled. The figures were originally scheduled to be released October 30th. Those were delayed by the federal government shutdown. The September income and spending report, which includes the Federal Reserve's preferred inflation gauge, will be released December 5th. We're going to keep an eye on all of that for you as we check markets for you all day long here at Bloomberg. The S&P 500 up 1.6%, NASDAQ up 2.6%, the Dow up about 0.6%. The 10-year Treasury yield at 4.04%. The 2-year yield at 3.5%. Those stocks keep rising as we launch into this holiday-shortened trading week. Hopes are building that the Fed will cut rates at its next meeting in December. Fed Governor Christopher Waller told Fox Business he's advocating an interest rate cut in December, but after that, he says he expects a more meeting-by-meeting approach. Bitcoin began the week by continuing a prolonged sell-off, putting it on the path for the worst month it's had since 2022. The wider crypto market now in a pronounced slump despite surging institutional adoption and a series of policy wins. Bitcoin is now just a little bit higher, about 0.5% higher after being in the red all day long, still around $88,000. High turkey prices and low production creating a shortage of turkeys for food banks across the country. Turkey costs have soared, contributing to shortages, straining the budgets and inventories of charitable organizations. Now, the Department of Agriculture estimates turkey production at its lowest levels in 40 years. Wholesale prices forecast at about $1.35 a pound. Compare that with last year, it was just 94 cents a pound. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power with Joe Matthew.
Amy, thank you so much. Amy Morris will have more on the markets in just about 20 minutes' time as we keep the bead on Wall Street here, even as we talk politics in Washington with the breaker from the White House, the president himself on Truth Social, not only confirming the call earlier today with President Xi, but also at least putting his own stamp on what happened, calling it a very good telephone call with President Xi of China, one that included many topics, he says, including Ukraine, Russia, fentanyl, soybeans, and other farm products. He talked about their successful meeting in South Korea of a couple of weeks ago and made clear that he will be going to China. President Trump says he's accepted an invitation to visit Beijing in April, after which he reciprocated that President Xi will be a guest for a state visit here in the U.S. later on this year. There are questions, though, about what else was discussed, because China's version of that call is quite different than what President Trump mentioned here, and there is, of course, room for all of these to be true. But we've had a number of breaking stories over the past half hour or so, with the Associated Press first reporting that a judge has dismissed cases against James Comey and Letitia James after finding that the prosecutor was illegally appointed. We're also tracking, of course, the latest on a Ukraine peace plan, a 28-point plan we discussed last week, has now apparently been whittled down to below 20 points, with revisions coming from the Secretary of State, Marco Rubio, to help favor Ukraine in the hopes of ending the war with Russia, maybe even by Thanksgiving of this week. We'll find out as we make our way through the next couple of days. But we start with what we know, and a conversation with Jenny Welch from Bloomberg Economics. Our chief geoeconomics analyst is with us in Washington. And Jenny, it's great to see you. China had some other ideas that it said came up on this call, namely Taiwan. When the president describes this as productive and very good, how do we think the Chinese are describing it?
It sounds from Beijing's readouts of the call that they framed it in positive terms, that they felt that President Xi gave them respect on the matter, essentially recognizing that Taiwan is an issue that matters a lot to Beijing and one that is not to be trifled with, is I think how Beijing would frame that call. Now, what I think when they say Taiwan, what they're really referring to is this ongoing feud with Tokyo over statements that the prime minister there made about Taiwan soon after coming to power. And my bet is that this call was really about Beijing saying to Washington, let this play out. Don't get involved. Don't get behind your ally on this. Just let us play this out.
The anatomy of a phone call between two world leaders like this can be complex. We don't assume that President Xi just picked up the phone, or do we, knowing that there would typically be days of preparations and a drumbeat in the media leading up to that meeting.
Well, normally when things like this come together, it takes some advanced scheduling.
Yeah.
These are two leaders, obviously, with pretty busy agendas, so you have to work that out. You have to work out the time difference. So I'm sure there was something that had to be put in the works a few days ago, but this doesn't look like a planned call. This wasn't, for example, a planned check-in on status after the Busan meeting on how things are going with implementing the trade deal. This seems to be something that came out more organically, I think, in response to this ongoing feud between Beijing and Tokyo, and statements that U.S. representatives in the region made recently in support of Tokyo that might have led Beijing to think, let's say something preemptively now before Washington gets involved any further.
Really interesting. I want to ask you about one of the issues that they reportedly discussed on this call, which is Russia and Ukraine. You heard me mention the peace plan that is, as Marco Rubio describes, a living, breathing document, and it's one that's still being changed. The Secretary of State talked about this as he showed up in Geneva over the weekend for meetings with Ukrainian officials. Listen.
It is probably the most productive day we have had on this issue, maybe in the entirety of our engagement, but certainly in a very long time. But work remains, and because this continues to be a working process, you know, I don't want to declare victory or finality.
U.S. officials say the draft agreement has been revised, but we don't know exactly what has come out or what has gone in, suggesting that the Secretary of State is doing something at least more favorable for Ukraine, which had a non-starter reaction when it saw this draft that included input from Russia, apparently not from Kyiv. What do we think is changing?
Yeah, not just input. It sounds like it was co-drafted with Russia, and you can see that in some of the terms, like limiting the size of Ukraine's military. That's no-go for Kyiv. Forcing Ukraine to turn over territories that Russia doesn't currently control. That's another no-go. It's already hard for Ukraine to potentially accept the idea of ceding over territories that Russia does currently occupy, and I think that continues to be a real sticking point in these negotiations. But ultimately, I think we've seen this movie before. Washington talks to Moscow, comes out with a set of terms that Moscow agrees with, and the U.S. wanting to get peace finally done brings them to Ukraine. Ukraine and the Europeans push back. We come up with a new deal that Moscow won't accept, and the war just continues to grind on. Wow. So my prediction here is not a incredibly optimistic one, and that I don't think we're likely to see a peace deal come out of it, but I do think whatever we do get is likely to be more favorable to Ukraine, and so there's a crisis averted that they're not going to be pushed into an unfavorable deal.
It doesn't sound like you see this ending by Thanksgiving, though.
Not the war, for sure. Maybe the negotiations, because I think Moscow will very quickly say no.
What do you make of, before you leave us, the three voices the president's hearing from on this, at least in the most recent throes of negotiations? Steve Witkoff, Jared Kushner, his son-in-law, and Marco Rubio, the Secretary of State, who's being framed in the media as the angel on his shoulder, and I'm not sure what the other two are, Jenny.
I think this is what you might refer to as kind of a process foul, where there have been people having negotiations with Moscow and maybe not a full principles or cabinet level alignment on the ultimate peace plan that would be produced and negotiated out of that. And what we see here is sort of Rubio getting back involved, not only as Secretary of State, but also the National Security Advisor, and trying to structure this process a little bit more. But this is not atypical for this administration or the Trump team in general. It's something we saw a lot in the first term, and I think it's something we're likely to continue to see on this and other issues.
It's really great to talk this out with you, Jenny. Thank you so much. Jennifer Welch, Bloomberg Economics, our chief geo-economist, with us here on Balance of Power. I'm Joe Matthew in Washington with another breaker. It's just been one after the other today on this Monday in the Capitol. The White House now set to delay the health care proposal that we were told to anticipate. That's coming from I guess what we now call MS Now, the old MSNBC, which was ahead on this story about a 2-year extension with limitations when it comes to Obamacare subsidies, not a full repeal and replace as we've seen in the past. This would allow the government from shutting down, presumably at the end of January, and would have 2 years on the clock here, get through the midterms, and give lawmakers an opportunity to negotiate things. Apparently now, that's not going to be the case. And it's a good opportunity to bring in Chuck Fleischman, the Republican congressman from Tennessee, is back with us today on Bloomberg TV and radio. It's good to see you, Congressman. You're on the Appropriations Committee, and you've got your eyes, obviously, on the future health care negotiations that were promised coming out of the government shutdown. Does this make you worry that another shutdown may be around the corner?
No, not at all. The original shutdown, and thank you, Joe, for talking about me being on appropriations. I'm actually a chairman on appropriations. I chair the Energy and Water Subcommittee, so I have been involved in the appropriations process very, very closely, and that's why I was so disheartened by the Democratic shutdown over this tangential issue, the healthcare subsidies, that has nothing to do with the appropriations process. And since the Democrats caved on that because they couldn't stand on that, they're going to have to try to find another issue. They lost the shutdown because they hurt the American people. I'm going to focus on either before January 30th or by January 30th, us conferencing the remaining 9 bills. We've done 3 that are passed into law: Milk on VA, Ag Approps, and Legislative Branch Approps. To our credit, that is done. We've got 9 more to go. I'm an optimist. I think we will get it done. I do think the Democrats hurt themselves on the ACA issues with the subsidies by bringing that in extraneously to a process that had nothing to do with it. They were making more progress before this. They hurt themselves with a lot of folks, particularly on the right.
Well, I know that you see it that way, Congressman, but we're 6 weeks out from Obamacare subsidies expiring, and you've got John Thune promising next door a vote on this. And I know there are even some Republican members, I won't say the name Marjorie Taylor Greene out loud, but some Republican members who've actually made quite a fuss about rising premiums. At some point, something needs to be done, right? You either extend this or you replace it with something. What do you think it should be?
Well, bear this in mind. These were COVID era policies that were actually put in place. So this is not from the original Affordable Care Act, from the original Obamacare. And I would agree, we need as a nation to have comprehensive health care reform. But this just shows the Achilles heel of Obamacare, of the frailties. It was doomed from the inception. Many parts of it have fallen apart. It's not been what it was promised to be by President Obama and the Democrats back then. We need, as Americans, Republicans and Democrats, senators, members of the House, to really look at where we can actually fix the healthcare situation. The left has gone crazy. They want Medicare for all. They want these subsidies. But again, this was a non-issue. This was totally outside the process. Everybody in the Beltway knew this. That's why when the Democrats caved in, they had nothing to stand on. That's why so many in their base are upset. As for Ms. Greene, I respect her opinions and the like. As you see, she's going to be leaving the House, vacating her seat. She's my neighbor right to the south, right across the Georgia line. She's in my media market. I wish her well, and we look forward to the next special election, which a Republican will win with ease in March.
I suspect that that's true based on the makeup of that district. The White House plan that's just been delayed, Congressman, apparently includes a 2-year extension of the Obamacare subsidies and new limits on eligibility. There'd be some, for instance, income caps for enrollees to qualify for ACA tax credits, as well as minimum premium payments. Is that something that you could get your arms around to keep premiums from rising?
I want to look at what comes out. Excellent question. Yeah. I was willing all along to discuss this issue. If you recall, when the Democrats shut the government down, and finally now they admit they did, for whatever reason, they say over these subsidies, they hurt people on SNAP, they hurt women, infants, and children, they hurt poor people, they hurt working people, they hurt the country. The issue of these subsidies is an important issue, but as you recall, I think we need to look at the overall system for reforms. As I understand these subsidies as they exist now, they're giving it to people who are sometimes 400 times the poverty level. So if we're going to help people, let's help people who are truly needy and not those who are not in need just for some hypothetical political win for the Democrats. But I still go back to the fact Democrats hurt themselves on a tangible issue that was outside the appropriation process. If they'd have continued to negotiate with our speaker, with Republicans, you would have found a lot of Republicans coming to the table to talk about that issue, but in its proper lane, outside the appropriation process, where it's always been.
Well, I'll tell you what, when everybody comes back at some point, there's going to need to be a funding mechanism. And as the appropriations man yourself, you just ticked through some of these spending bills. Do we really believe that you can get 12 spending bills passed and a government funded before January 30, or do we need another CR in there somewhere? Because whether it's now, January 30, February 30, it would be the first time in a generation, I think, that happened, Congressman.
Well, Joe, you raise an excellent point. Let me take it backwards to forwards. We do not need a government shutdown. It is always wrong to shut the government down. That's why I'm still furious with Chuck Schumer for this blatant lie, this myth that he perpetrated on the American people. Everybody in Washington, D.C., Democrats and Republicans, knew it was wrong. They did it for whatever reason. So we need to keep it open. Now, the best way to keep it open is with a budget. Of the 12 bills, we've got 3 of the bills done. So we've got 9 left. The reality is, I think we can probably get another 6 done, maybe 7, and then those balance of bills that perhaps are going to be harder to conference. I'll be specific. State and foreign ops, homeland security, those are harder bills. My bill, the energy and water bill, is a very non-controversial bill. Tremendous bipartisan and bicameral support. The Senate is supposed to have their version out today. My version has been out and actually passed in the House for months. What I think we'll do is pass maybe 7 of the 12, maybe 8 of the 12, and then the balance of those bills work on a CR. So some type of what we call in D.C. a cromnibus. Part continuing resolution on those few bills we can't, but let's try to go for all 12 and see how many we can do. We've got 3 down, 9 to go. I'm hopeful for more.
All right. Fantastic. I need to ask you about the election that is looming, a special in your state of Tennessee, December 2nd, to fill former Representative Mark Green's seat. Democrats are putting a lot of money into this, and you might have seen some writing at Punchbowl this morning. They're crunching numbers here. In a world in which Democrats flip that seat and get a couple of others here, keep Mikey Sherrill's seat in New Jersey, not to mention the one in Houston, the late Representative Sylvester Turner's seat.
Correct.
Republicans could have something like a 2-seat margin if this does not go your way. Will Tennessee, in our remaining moment, keep that from happening?
Yes. You're absolutely right. Looking at that, Chad Pergram had a very good article on the entire situation today. Punchbowl did as well. Let me explain pretty much where this is. You're absolutely right. That
it's got to be quick, though. Sorry, sir.
Sir?
Just got to be quick. Sorry, only about 30 seconds.
The Dems will win in Houston. Van Ips will win in Tennessee, maybe not by 20 points. He'll beat Afton Bain with ease. The New Jersey seat will be Democratic. And the Marjorie Taylor Greene will be Republican. We'll be up by probably 2 to 4 narrow margins, but we can govern with narrow margins.
Political analysis from Chuck Fleischman. I love this. The Republican congressman from Tennessee with his take. Thank you, Congressman. As always, we never even got to nuclear. It's a Monday in Washington. Thanks for being with us on Bloomberg.
It's 1:21 on Wall Street. I'm Amy Morris. The Bureau of Economic Analysis says the advance estimate of third quarter GDP is canceled. The figures were originally scheduled to be released October 30th, but were delayed by the federal government shutdown. The September income and spending report, which includes the Fed's preferred inflation gauge, will be released December 5th. A pill version of Ozempic failed to slow the progression of Alzheimer's disease in a pair of high-risk studies that has led Novo Nordisk to discontinue a planned one-year extension of the studies. Shares of Novo Nordisk down about 6%. Alibaba shares about 5% higher after the e-commerce company announced the number of downloads its new app reached. Alibaba is scheduled to report its second quarter results tomorrow. The stock is up 90% this year. Tech stocks are pushing markets higher. We check the markets for you all day long here at Bloomberg. The S&P 500 up 1.6%, NASDAQ up 2.6%, the Dow up 0.7%, the 10-year Treasury yield at 4.04%, the 2-year yield at 3.5%. President Trump and Chinese President Xi Jinping spoke by phone earlier today to talk trade, Taiwan, and Ukraine. And President Trump posted on social media that Xi invited him to visit Beijing in April. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That is a Bloomberg Business Flash. We go back now to Balance of Power with Joe Matthew.
Amy, thank you so much. Amy Morris will have more on Wall Street coming up in about 20 minutes' time here as we connect the dots between Washington and Wall Street. A pretty nice way to start the week. It was looking a little shaky last week with our eyes on the chip stocks that are bouncing back nicely today. And, of course, even crypto moving modestly higher here. There's breaking news at the White House. If you were just with us, you heard us break the headline about the health care plan. Will health care be the new infrastructure in the second Trump term? Healthcare Week. This was supposed to be it, with a proposal due as early as today on a way to handle the expiration of Obamacare subsidies, the topic that led to the longest government shutdown in history, which Congressman Chuck Fleischman was just talking with us about. He still thinks it was unjust, but here we are. President Trump reportedly set to unveil details of the long-awaited proposal. Remember, concepts of a plan? In this case, a 2-year extension of Obamacare subsidies, COVID-era subsidies, along with new limits on eligibility, income caps for enrollees, minimum premium payments, dubbed the Healthcare Price Cuts Act. Rolled out as soon as today, according to morning reports. The president was going to have an announcement alongside Dr. Oz. And now MS Now, as we call the old MSNBC, which was among the first to report these details, is reporting that the announcement has been postponed with no new date in sight. This becomes a problem knowing the government funding expires on January 30th, and Democrats, at least in the Senate, are banking on a promised vote by John Thune over something. Republicans have been waiting for the president to step in. So we're kind of back to square one. And that's one thing that we're going to be talking about coming up in a moment here. Let's get into it with our panel. Jeannie Sheehan Zaino and Lonnie Chen are with us, Bloomberg Politics contributor. Jeannie Sheehan Zaino is Democracy Visiting Fellow at Harvard Kennedy School's Ash Center. Lonnie is our Republican Strategist Fellow in American Public Policy Studies at the Hoover Institution at Stanford University. Jeannie, I'll get back to where I started. Is this going to be the new infrastructure week? Because a lot of people have been waiting for a plan, not only from Donald Trump, but from the Republican Party, knowing that the ACA was passed, 15 years ago?
Yeah, Joe, God help us all if we have to go through this again. But the reality is there are so many criticisms from all sides of the Republican Party on what is being proposed, which means that nothing has changed in 15 years. This has been a conundrum for Republicans all along, and it continues to be. And you just look at some of the political reality of this. Can you really spend 15 years fighting Obamacare and then swoop in at the last minute after a bad election and a government shutdown and say, hey, you know what, we're going to prop this thing up, and you all on the right just going to have to swallow that because we need to get through the midterm? That's horrible politics to start with. And of course, you have then other criticisms of this, like where are the details about giving people money? How do you cut costs if this is your plan? Very little of this has been talked about. So they went out too early in this trial balloon of an idea without much of the specifics and a lot of pushback politically. So I don't see in this narrow House with Republicans so narrowly controlling it, how they could get this passed now. I'm not even sure they can do it in the next few weeks.
Well, it seems conservatives on Capitol Hill are upset about this or pushed back on it. To Jeannie's point, Lonnie and Number interested in how the plan would impact abortion coverage. They were blindsided at not being consulted to begin with, but you see the details here. Healthcare Price Cuts Act, right down to limiting subsidies to individuals with income up to 700% of the federal poverty line. If the White House had actually included lawmakers on this and given them a heads up, would we be seeing a plan unveiled today? What went wrong?
Well, I think some of the challenge goes to this fundamental issue that, Republicans have never voted for really any part of the Affordable Care Act or any of the subsequent expansions. So putting in front of them the idea that they would vote for enhanced subsidies, even with an income cap, even with a very good provision to potentially direct some of the excess from a downgrade in plan into a health savings account, I think those are ideas that Republicans would broadly support. I think the challenge is putting Republicans on record with respect to voting for a piece of the Affordable Care Act. By the way, a piece of the Affordable Care Act that's not even working all that well by all accounts. So I think that is part of the challenge. The other issue you have, of course, is that there's a whole suite of other ideas Republicans have talked about to enhance the supply of health care, to help lower costs, improve quality. And those ideas are nowhere to be found in this proposal that the White House has put forward. So I think they are going to have to go back to the drawing board and figure out what provisions are acceptable to congressional Republicans, where there is potentially common ground. And then let's not forget, this is a political issue as well, Joe, going into the midterm elections. Republicans do feel some pressure, I think, to put forward an idea, or at least to have their members on record in favor of an idea that can be used to push back against Democrat claims that they have no ideas on health care. So there's all sorts of different dynamics at play here, but the idea that this was going to get all the way through the process and Republicans were all going to be on board today, I think that was pretty ambitious.
So what's Democrats' posture here, or Democrats' expectation, Jeannie, knowing that this is why we shut down? There's a massive expectation for a vote in the Senate if it goes well, or if there's at least some critical mass. I guess there'll be a vote in the House. Or are you just circling January 30 on your calendar for the next shutdown?
We have it on all our calendars, Joe, and it could very well happen, unfortunately. I think Democrats have to own some of the mess that we are in with this. If you are committed to the Obamacare Act and these subsidies, then why do you sunset them after 5 years? They should have made them permanent. They should have done that and been honest with the American people about the cost. So I don't think that Democrats are on the winning side of this from a policy perspective. What Democrats feel, however, is they are on the winning side of this politically, and that matters to them an awful lot. The president and Republicans, some of their lowest numbers are on health care, and specifically health care costs. This is almost like the Republicans' version of immigration and crime. It's bad for Republicans. And what the president is trying to do is what he has done consistently with this White House, which is force Republicans to swallow something that is in his interest, but not necessarily in theirs. Because again, when you spend almost 2 decades fighting against Obamacare, are you really going to, in 24, 48, 72 hours, be able to convince Republicans, hey, just go along with it, just extend this thing so we can get through the midterm and the shutdown? That's not going to fly. And I think part of what we're seeing here is part of what we heard after Marjorie Taylor Greene resigned or announced her resignation on Friday, which is some Republicans in Congress feel that they are being run around by this White House and by leadership, and they aren't going to take it on something this sensitive to their base.
Well, this isn't getting any easier, and a great panel to talk about it. Jeannie, thank you. Jeannie Shanzano, Lonnie Chen, our Democratic analyst, Bloomberg Politics contributor, and Republican strategist. Thank you both for the insights today and a great conversation here on Balance of Power. I go back to the post on Truth Social from Donald Trump on the 20th of September. It was 6:44 p.m., a Sunday, I believe, right? Pam, I have reviewed over 30 statements and posts saying that essentially same old story as last time. All talk, no action, nothing being done. What about Comey, Adam Shifty Schiff, Letitia? 3 exclamation points. We can now answer 2 of them, at least, as a federal judge today throws out criminal charges. They threw out the case against former FBI Director James Comey and New York Attorney General Letitia James, ruling the prosecutor brought the cases had been illegally appointed. In the clutch right now, June Grosso, the host of Bloomberg Law on Bloomberg Radio, is with us from World Headquarters in New York. June, that was fast. What do you make of this?
It was fast, but it was sort of expected because judges across the country have come to the same conclusion in other cases involving Trump-appointed U.S. attorneys. It's about the Appointments Clause, and it's about Section 546, where once a U.S. attorney is appointed as an interim U.S. attorney, they have 120 days to serve. At the end of that time, a panel of judges, if the Senate hasn't confirmed them, a panel of judges then would pick the next U.S. attorney. And what happened in this case was that 120 days ran. Eric Siebert, who was the interim U.S. attorney, was then appointed by the panel of judges, and then Pam Bondi, President Trump, decided to fire him, or did he leave? It's still not clear. And put in Lindsay Halligan, someone who, as the judge notes in her first sentence, a White House aide with no prior prosecutorial experience. And the judge here ruled, and by the way, there are 3 judges handling these cases, 2 judges and a magistrate judge. So this is a judge in South Carolina who's handling just the appointment of Lindsay Halligan. She said that's not a lawful appointment, sorry, and we have to dismiss the cases without prejudice, so they can be brought again. But wow, would it be? Okay. It's a nightmare to bring these cases again for various reasons, which, if you want to know, I'll tell you. But it's
well, I can't even imagine. But I am curious. So this was without prejudice. Would prosecutors have to create a whole new indictment, or do they just find another court to refile the case?
Well, I don't think they can refile these cases in any other district, because you have where Comey testified and where Letitia James.
Understood.
So then you have the problem. So if they decided to, they'd have to go to another grand jury, bring it again. But if they decided that, so who would bring that? Because the judge just said you can't bring another U.S. attorney in here because the 120 days has expired. So unless they get a Senate-confirmed U.S. attorney, who is going to bring that case? That's one issue. Comey, there's also an issue of statute of limitations, possibly, because the statute of limitations was running, and that's why Lindsay Halligan ran into the grand jury with no one else with her and brought this. So there is a statute that you could, if there's a procedural defect, you can bring it within 6 months. You could bring it again, but is this a procedural defect or not? That's why I'm saying it's not going to be just oh, we're going to go to another grand jury and re-indict. No, it's going to be much tougher.
All right, 6 p.m. Eastern. You're my ride home, you know, June. I listen to you every weekday, 6 p.m. on Bloomberg Law. June's going to have a great conversation on this one. It looks like Letitia James Comey on the
It's 1:40 on Wall Street. I'm Amy Morris. Amazon says it will spend as much as $50 billion expanding its capacity to provide artificial intelligence and high-performance computing services to U.S. government entities. Amazon Web Services says it plans to break ground next year on what will ultimately be 1.3 gigawatts of additional capacity across data centers designed for federal agencies. Amazon shares now 2% higher. We do check markets for you all day long here at Bloomberg. The S&P 500 more than 1.5% higher. NASDAQ more than 2.5% higher. The Dow is up 0.6%. The 10-year Treasury yield at 4.04%. The 2-year yield at 3.5%. Bitcoin up now just about 0.5%. President Trump and Chinese President Xi Jinping spoke by phone earlier today to discuss trade, Taiwan, and Ukraine. President Trump posting on social media that Xi has invited him to visit Beijing in April. The Bureau of Economic Analysis says the advanced estimate of third-quarter GDP has been canceled. The figures were originally scheduled to be released October 30th, but were delayed by the federal government shutdown. The September income and spending report, which includes the Federal Reserve's preferred inflation gauge, will be released December 5th. Arizona Congressman French Hill, along with members of the House Financial Services Committee, are pushing for new tailored bank regulations. They've sent a letter to Fed Vice Chair Michelle Bowman, Comptroller of the Currency Jonathan Gould, and FDIC Acting Chairman Travis Hill, emphasizing the need for tailored regulations rather than a one-size-fits-all approach. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew.
All right, Amy, thank you so much. Amy Morris, watching Wall Street. She'll be back at the top of the hour with more as we hand things over to Bloomberg Business Week Daily. Thanks for making us part of your Monday here on Balance of Power on Bloomberg TV and radio. The Secretary of State describes the peace plan for Ukraine as a living, breathing document. Every day with input, he says, it changes. And that, of course, was the story over the course of the weekend. The Secretary of State dispatched to Geneva to meet with Ukrainian officials about this peace plan that is still evolving. In fact, revisions were made following the Secretary's meeting with Ukraine to make this more favorable, more palatable to Kyiv. In a week, of course, the President Trump said he wanted this done, putting forth a Thanksgiving deadline. The Secretary of State walking that back a bit as well, saying the deadline is that we want to get this done as soon as possible. We'd love it to be Thursday. The important point today is that we have made substantial progress. Progress was the word that came out of this meeting, with questions remaining about the source of this 28-point plan. Was it in fact drafted with the help of the Russians? In a tweet on Sunday, the Prime Minister of Poland, Donald Tusk, brought this to the fore, saying that he and other leaders are ready to negotiate. Quote, however, before we start our work, he wrote, it would be good to know for sure who is the author of the plan and where it was created, unquote. Much of this rides on security guarantees, whether Ukraine must give up territory or not, and we still need to see exactly where this plan stands now following the revisions. The security guarantees by the U.S., and by our European allies will be key to anything moving forward here, with the White House invoking, at least privately, something along the lines of an Article 5 violation if Ukraine were attacked. It's not just the Poles who are weighing in here, the Lithuanians as well. Speaking with Bloomberg's Oliver Crook this morning, Lithuania's foreign minister, Kęstutis Butrius, speaking about the prospect of a security guarantee. Let's listen together.
We cannot build our security on the hope that Russia will keep the promises. They never did, and they do not respect the international law. But they should, in the upcoming 5, 10, or 20 years. They won't. So that's why we need a credible working deterrence system, and that it is building the European security with Ukraine. And it's for us to decide how we will do it. It's not for the others, and especially not for Russia.
Especially not for Russia, he says, even though Russian fingerprints are all over this peace plan. It's where we start our conversation with Angela Stent, senior fellow at AEI and author of Putin's World, Russia Against the West and With the Rest. Angela, it's great to see you. Thank you for joining us. Could these revisions be made enough that Ukraine, in fact, accepts this peace plan?
Well, there's a lot of noise and confusion about all of this, but I mean, I think Ukraine, there are several red lines. It's not going to give up territory to Russia that Russia doesn't control. And that's why, you know, when you read the draft of the treaty, some of it was clearly drafted in Moscow. We can argue about how much was. And then that it will never be able to join NATO. That's really up to NATO, as the Europeans have pointed out, not to Russia or really to the United States. It has to reduce the size of its armed forces, which are about 900,000 now, to 600,000. And I'm sure there's some bargaining room there. And the European plan, the counter plan to the US-Russian one, says that this is something that can be discussed. Know that there would be amnesty for everyone in this war. Again, from the Ukrainian point of view, the devastation that Russia has caused, the loss of life, the terror, the assassinations. Putin, anyway, has been declared a war criminal by the International Criminal Court. So there are a number of red lines, I think, here for Ukraine. But clearly, this is a bargaining process that's going on. It's obviously not going to be completed by Thanksgiving. And the question, one of the questions for me is Russia going to drag this out now and say it's interested in a serious negotiation so that it can continue to make some advances along the battle lines in the hope that next year Ukraine will be in a weaker position than it is now?
Well, that would be right out of the Putin playbook. What do you think, Angela, about the individuals who have brought us to this point? We, of course, know Steve Witkoff has been deeply involved. Apparently, Jared Kushner, the president's son-in-law, as well. But then to see the Secretary of State come in with changes in Geneva, are they all on the same page or not?
Well, clearly this was drafted by Kirill Dmitriev, who's the head of the Sovereign Wealth Fund in Russia, and Stephen Witkoff. Dmitriev came to the United States. We made an exemption to grant him a visa, even though he's actually not supposed to get one. And he met in Miami with Mr. Witkoff, apparently with Jared Kushner, and they drafted this. But, you know, as far as we can see, Secretary Rubio was not involved in that drafting. And there was this curious thing over the weekend where he had a call with a bipartisan group of senators at the Halifax International Security Forum in Canada, saying that he hadn't seen this before, that this came from Russia and this wasn't an American plan. Then he reversed himself a couple of hours later and said it was an American plan. He was there yesterday in Geneva. But I think the impression one gets is of lack of coordination within the administration about this agreement and who really wrote it.
Not so much on the same page. Angela Stent, I saw you in the New York Times yesterday. Experts, 7 experts on how to actually end the war in Ukraine, and you brought your prescription, which is fascinating to read here. Sanctions are not enough, you say. Ukraine needs to be able to purchase more weapons to convince Putin he will not win on the battlefield. And you go along to say, even if the Europeans were able to provide a stabilization force, without U.S. backup, that force would be constrained in what it can do. So what is the credible security guarantee in your eyes?
So a credible security guarantee would be, if the U.S. is serious about it, an Article 5 type guarantee. But that, of course, begs the question, well, if you're going to give it the same guarantee that you give NATO, why not admit Ukraine to NATO? But obviously that's off the cards at the moment. But it would have to be credible. And the way we don't know how this is being formulated from the U.S. side in this current peace agreement. But, you know, previous guarantees didn't work. We all signed a memorandum in 1994 when Ukraine gave up its nuclear weapons to come to its assistance if it were again invaded, and nobody did. So I think you really have to have a guarantee where you can really believe that the U.S. would back up its European allies, and if Russia were to reinvade, would use military force to get Russia to go back into Russia and leave Ukraine.
Mm-hmm. What do you make of the language from the Secretary of State that now this must be seen, the revisions must be seen and reviewed by Moscow? I think the line was that, of course, Moscow, that, of course, Russia gets a vote. Why are we so careful in dealing with the invading country in this case?
because we have a president who really wants to improve ties to Russia, wants to reset relations with Russia, wants this war to end. He believes it wouldn't have started had he been president in 2022, and wants to get on with business deals with Russia, with maybe another nuclear arms control agreement with Russia. And this is, I think, why we're taking Russia into account. But we're treating the aggressor somehow better than we're treating the victim.
We've got the Army Secretary in Kyiv. Why is Dan Driscoll part of this, but the Secretary of Defense, Pete Hegseth, is nowhere to be found?
Well, here we get into maybe the internal politics of what's happening in this administration. Apparently, General Driscoll is quite close to the Vice President, J.D. Vance, who is advancing his potential candidacy, maybe to be the next Secretary of War. That's one explanation for it.
Okay, interesting. So what are the odds that President Trump and Vladimir Putin get together with Viktor Orban in Hungary for a summit? If they hammer out a peace plan here that Moscow feels is acceptable, is that the next step?
I think that would have been one of them. I think what we now have to see is, as the Secretary of State said, this is a living document. They're still making revisions to it. If they believe that this is the best offer they can make, and if the Russians are willing to sign on, because the Russians will have to make some compromises too, which has to do with the use of their frozen assets, then I think we could see a summit in Budapest. I wouldn't want to give a timetable to it, but that's a possibility.
Wow. We could see, I guess, President Zelensky here in Washington first. The reporting is he could make a visit as soon as this week if this comes together. Is that a smart move for him now, Angela? It seems to be, what, 1 out of 4 visits go pretty well for him at the White House. He found himself on the other side of the cabinet room table last time he was here, with reporters crowding behind him, and didn't exactly get the treatment that Viktor Orban got. Why come to Washington?
Because, I mean, Ukraine really doesn't want to lose what is left of U.S. support, and we're not really giving them financial support anymore, but we're still allowing Europeans to buy weapons from us that they then give to Ukraine. It's called the Pearl program. He wants that, and he doesn't. I don't think he wants to antagonize President Trump any further. But, the last time we were here, he was there. As you said, he was asked tough questions. But on the other hand, you can see the photos of the two leaders, the two presidents, smiling. And then we have this complete reversal from President Trump tweeting out yesterday that Ukraine was ungrateful, using really the same words that he used during that disastrous Oval Office meeting in February. So if Zelensky did come here, it would be really to reinforce the fact that Ukraine is willing to sign a peace deal, to have an immediate ceasefire along the current lines of contact, in other words, not ceding territory to Russia that Russia doesn't control. And that's why he would come here. But I'm not sure that it would be that advisable at the moment. I'm sure that he would wait and see how this now plays out with the meeting yesterday between the United States, Ukraine, and then there were some Europeans there. And then there's also a European plan, which Secretary Rubio says that he hasn't read yet, but maybe taking some of that into account too.
Yeah, it does seem interesting how we always get back to square one on the rhetoric here. It looks like the gears are turning once again on Russia sanctions on Capitol Hill, Angela Sten. In our remaining moment or so, I wonder if you see that hastening the acceptance of a peace plan. Is that motivating Donald Trump or Vladimir Putin?
So I'm afraid you just cut out. I didn't hear your question.
The prospect of sanctions in our remaining moment, will that hasten a peace deal?
Yeah. I mean, that's the intention of it. Certainly to put more pressure on the Russians. There is that, Senate bill that could be signed any moment, and President Trump could sign it too. That's to get the Russians to seriously sit at the table. I don't know how effective that will be, but that's certainly the intent of it.
Well, we'll see if it goes anywhere. Angela, thank you for joining us. It's been some time since we had a chance to speak with Angela Stent. The book is Putin's World, Russia Against the West, and with the rest, senior fellow at AEI. We'll keep tabs on this story that could develop again today with the Secretary of State back in the United States following his trip to Geneva and revisions that are actively being made to the peace plan. Breaking news as well, James Comey, Letitia James, charges dropped. The indictments have been thrown out against both of them in a story that we're still getting our heads around here following President Trump's decision to pursue indictments against both through his Department of Justice. We'll have more on the late edition on Bloomberg.
is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And
a very good afternoon, everybody. Yes, indeed. It is a holiday shortened trading week. We got a lot going on, though, on this Monday. It is Monday, November 24th, 2025. Tim, the risk trade is on.
Yeah, look at the NASDAQ composite. It's up 2.6%. In the S&P 500, you do have 309 stocks moving higher, but Carol, still 193 moving lower. Not as broad-based as, like, on the surface it would suggest.
Yeah, but kind of interesting, right? Yeah, exactly. That's a really good point. Having said that, we do see technology stocks on the move to the upside, so we're seeing that play. And this is somewhat to do with some of the optimism that's out there, that the Fed indeed will cut rates when it meets for the last time come December. So that's front and center. We're also going to get into Fed fixating on AI, but it's not ready to make that big Greenspan bet. We're going to talk about productivity.
Okay, let's talk a little bit about what's on the menu. Well, a lot when it comes to GLP-1s, from Americans microdosing to Lilly and Novo selling directly to employees to Novo's disappointment today, one of the stocks that is actually moving lower today.
All right, so we've got a roundup there. We've got a roundup, too, from the nation's capital, including a legal setback for the White House. We'll get to that in just a moment. A high-level chat and pressure on the president to kind of slow his roll. So we're going to get to all of that over the next 60 minutes. First up, though, let's get a check on that rally on this Monday. Here is Amy Morris. She's in for Charlie Pellet. Hey, Amy.
Hey, Carol. The Bureau of Economic Analysis says the advanced estimate of third quarter GDP has been canceled. The figures were originally set to be released October 30th, but they were delayed by the shutdown. The September income and spending report, which includes the Fed's preferred inflation gauge, will be released December 5th. Stocks are rising. We begin this holiday shortened week as hopes build that the Fed will cut rates at its next meeting in December. Fed Governor Christopher Waller told Fox Business he's advocating an interest rate cut in December, but after that, he expects a more meeting-by-meeting approach. And we do check markets for you all day long here at Bloomberg. The S&P 500 up 1.6%, NASDAQ up 2.6%, and the Dow up 0.6%. The 10-year Treasury yield at 4.04%, and the 2-year yield at 3.5%. Bitcoin started the week by continuing that prolonged sell-off, putting it on the path for its worst month since 2022. But oh wait, it is in the green now. It's just not very much of a rebound. Right now, about 0.8% higher, hovering around $88,000. The wider crypto market also in a pronounced slump. Novo Nordisk shares hit a 4-year low after a pill version of Ozempic failed to slow the progression of Alzheimer's. Novo has discontinued a planned 1-year extension of those studies. Novo Nordisk shares now about 6% lower. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Business Week Daily with Carol Masser and Tim Stenovec.
Great stuff. Amy, thank you so much. She is in for Charlie Pellet. Hey, we begin with some news that broke just about an hour or so ago. Federal judge threw out criminal charges against former FBI Director James Comey and New York Attorney General Letitia James, ruling that the prosecutor who brought the cases had been illegally appointed. So let's get right to it. Bloomberg News legal analyst and host of Bloomberg Law and Bloomberg Radio, June Grosso, is with us in studio. Feels significant? Is it significant?
It is significant, definitely. And I just want to read you the first line of the judge's opinion. On October 9th, 2025, Lindsay Halligan, a former White House aide with no prior prosecutorial experience, appeared before a federal grand jury in the Eastern District of Virginia. And it goes down there for Lindsay Halligan. I mean,
is that normal for a judge to kind of talk about maybe lack of experience?
That's I read it because it's sort of not. I mean, judges will do all kinds of different things, but you know, no, it hit me, and it's not real. It's not a mean statement, but it's just sort of the whole problem of what's happened here. You had a person with no pride. Not only that, but there are two cases really going on. I mean, this is before a judge in South Carolina who was appointed just to hear the case about whether Lindsay Halligan has the appointment of power. The other case involving all the alleged missteps that happened because Lindsay Halligan was by herself in front of the grand jury, that is before another judge, Nachmanoff. So what this judge ruled is something that judges across the country have been ruling, which is that Lindsay Halligan was appointed illegally because, according to the statute, you have 120 days. You appoint an interim U.S. attorney, they have 120 days to serve. If they're not confirmed by the Senate at that point, then a panel of judges from that district appoints the U.S. attorney. So what happened here is Eric Siebert was in the office for 120 days, not confirmed, not even, I don't think they even tried to have him confirmed. And then a panel of judges said, okay, we like him, he can stay in. And then Pam Bondi and Trump said, no, we don't like him because he doesn't want to bring the Comey case. He doesn't want to bring the Letitia James case. So they put in Lindsay Halligan. And the judge just said, you can't do that.
Is there a way for the government to bring this case legally?
Well,
or effectively?
I think it's going to be very difficult. I mean, the judge ruled that this was without prejudice, so they can bring it. But they can't just call up another grand jury, as you would normally think, because now the problem is, who is going to bring the case? They don't have a U.S. attorney in place that is authorized, that's legally appointed. So what are they going to do? Are they going to get an appointment, a U.S. attorney appointed by the Senate? That seems like what they would have to do.
I mean, what do first-time lawyers do? They don't have a lot of experience.
Well, it's not so
like,
much,
I don't understand. Like,
but they're making her the head of the. They're making her the head of the U.S. This is the same thing that happened with Alina Habba in New Jersey, where they've given her 5 different titles.
So the judge is saying, in this position, you can't have this kind of person.
No, you can't. You can't have anyone.
Okay.
So in other words, the statute says 120 days. You get 120 days with one person. You can't say, and then another 120. And what the Trump administration said, we can do another 120. We can do another 120. Ad infinitum. That would mean you never have to have the Senate approve your U.S. attorney.
Oh, okay.
So very briefly,
and they're doing that, by the way, in Jersey, in L.A. They're doing it all over the country.
So former FBI Director James Comey, New York AG Letitia James, their legal woes over for now?
No, I wouldn't say that. First of all, they're going to appeal this. I don't think they'll succeed on appeal, but then they'll try other things. Maybe they'll get another U.S. attorney in there. I mean, it's hard to say. Also with Comey, you have a statute of limitations problem, which there is a federal law that allows you to bring it again within 6 months. If it's a procedural problem, is this procedural or not? So, I mean, there are a lot of different problems.
So the indictments are dismissed completely?
Yes. Yes, I say yes, but I hesitate because it can't possibly be over yet.
Yes,
I just can't.
Asterisk.
Yes, right? Maybe appeals. Maybe they'll get it before the Supreme Court. Now, there's a chance that they would have, because if they take this before the Supreme Court has been overruling basically all the lower court decisions on these kinds of issues.
So that could still happen?
Yes, that could still happen. I don't think...
Would it happen in this term or no?
This term, yes. It would be on
okay.
the emergency docket, I suspect. And then it's going to go on for a while, but the question is, how is the Trump administration going to appeal this? I think they'll appeal to the Fourth Circuit. The Fourth Circuit will turn it down, then they'll appeal to the Supreme Court.
Okay, so maybe there could be more, but we'll see. Like you would expect a little bit.
There will be more. It's just a question of how much more. If the Supreme Court doesn't take it, then it's over, I think. But
okay.
You never know, because they could bring maybe different charges. I don't know.
Okay. All right. But for at least this is where we sit on this Monday, November 24th.
Happy Thanksgiving for James and Comey.
Exactly. All right, June, thank you so much. And I'm sure she'll have more too on Bloomberg Law and Bloomberg Radio. She is Bloomberg News legal analyst, June Grosso, joining us here in studio. All right. And we do want to point out, we're going to have more actually from the nation's capital, Washington, news out of the White House. There's a lot of stuff going on. That's a little bit later on, Tim, this hour.
Okay. The Fed decision, the next Fed decision, that's just about 2.5 weeks away.
Soon.
You keeping track?
I am.
Okay. Like everyone else, policymakers at the Fed are increasingly obsessed with AI and its promise of a turbocharged economy. They're just not ready to make a big call in the revolution is underway. So writes Bloomberg's Enda Curran. He's Bloomberg News global economy reporter. He joins us from our Washington, D.C. bureau. And you write that analysts across the financial world are scouring data for signs that AI is making the economy more productive. That's certainly the holy grail of new technology. Are they finding out that it is making us more productive? Is it making the economy more productive?
Well, that's the big question. So the question right now is, are we in a kind of a 1990s style tech boom where the economy grew, people's wages increased, but ultimately inflation didn't take off? So the Fed at that time was able to keep interest rates low. That's a benign outcome. Of course, the other side of the debate is, actually, we could be, even if we do get a so-called productivity gain where we all work smarter, that will be outweighed by job destruction and, of course, broader societal destruction that kind of an AI revolution will bring. Now, on paper, all of this is quite abstract. It sounds academic. What does an AI-driven productivity boom even mean? But these technological changes are happening fast, happening in real time, and hardly a week goes by now without somebody from the Federal Reserve commenting on how AI might impact the economy and how it may impact productivity. And then there's also a very salient political angle to it because Treasury Secretary Scott Bessent, for example, he's pushing a line that we're in a Greenspan boom. And just like back in the 1990s when technology drove economic growth without inflation, and then Fed Chairman Greenspan held his nerve without raising interest rates, this time around the Fed shouldn't be worrying about inflation given what's going to be happening with productivity. They should go ahead and cut interest rates. So as I say to you, it's somewhat of an academic, abstract debate, certainly not one on Main Street, but it's very, very important in terms of how this ultimately does diffuse through the entire economy.
You know, I also often wonder too, like how does the Federal Reserve and the regional banks, like how do they go about analyzing something like AI that some say we're still early on, that it's the spend, but we're waiting to really see the ROI for a lot of different companies and a lot of different industries?
Well, it's tricky. I mean, the concept of productivity is difficult to measure anyway. The statisticians will freely admit that. So when you try to nut out how exactly large the LLMs or ChatGPTs and the like are impacting how we're all working, that kind of adds to what's already a complicated job. A lot of economists will tell you one of the biggest problems is we don't measure productivity correctly, and we're not geared up to even measure AI. So just to be clear, there's going to be question marks over that. And then, anyway, it takes time for it to come through into data. It could take a year, several years before policymakers can look back and go, hey, look, actually back then the US economy was going through this major tech boom that did lift productivity, and that's why inflation stayed low, but we made the decisions we made at the time. So there's a lot of unknowns in this, but yep, sorry, go ahead.
No, I want to just jump in because in your story you mentioned Kevin Hassett, head of President Trump's National Economic Council, and he said AI is lifting worker productivity at a, quote, remarkable rate. BlackRock's executive reader said, quote, we are in a productivity revolution. So are they doing that based on data?
So, I mean, there has been some uptick in productivity, and you're absolutely right. Some of these candidates for Fed chair have been explicit in the view that AI is already impacting productivity in a very positive way. And there are different ways you can slice and dice that, but I think perhaps more objective or impartial economists or observers make the point that I was trying to articulate there, that that's very possible, but we just don't yet know because it's very complicated to measure it, and they're trying to figure out how to gauge how it's impacting the economy and how it's diffusing through the economy. But let me be clear, though, we all know, and everyone around us, that this kind of technology is being adapted everywhere at a very fast rate. I spoke to companies for this news article, spoke to one company who's in the HVAC space, and he explained to me how HVAC technicians are using his proprietary LLM software to help them on repairs to old equipment in houses around the country, and he said it saves them up to 8 hours a week. So we're in this dilemma. We're in a dilemma where we know the technology is being deployed, and we know people are using it, but we don't yet know just how it is impacting the economy. And that's the big question here.
Yeah, we also don't know what kind of dislocation it will be ultimately for the labor market. Maybe, there might be a few years where things are a little disrupted and a little uncomfortable. At least some say that. Enda Curran, global economy reporter, Bloomberg News, joining us from our Washington, D.C.
That's not
bureau.
the natural state of things, where we're just uncomfortable and unsure.
We know when things like, we go through these technological changes, things can be a little uncomfortable.
Well, let's stay on the U.S. economy as we get ready for a U.S. government read on retail sales for the month of September. The data, that's coming out tomorrow. That may give the U.S. bond market some direction. Carol, it's on track for a small gain in November after rising in 8 of the prior 10 months, even as the market is mired below October's price highs. And yields, they're range-bound.
They are indeed. Let's get to it. Let's continue on the U.S. economy and U.S. Treasuries. Back with us is Jennifer Lee. She's Senior Economist and Managing Director of Economics over at BMO Capital Markets. They've got just over $1 trillion in assets. That was as of the end of the second quarter. Jennifer joining us once again from Toronto. Jennifer, great to have you here. We did talk last on September 10th. It was just before the longest U.S. government shutdown began. It's now over. The data desert is no more. What's your read on the U.S. economy as we start to get some data points?
Well, first of all, good afternoon. Thank you very much for having me on. And by the way, my head is spinning thinking about all the politics that's going on and all this AI productivity stuff. And now we've got all the data. So there's going to be a lot more spinning going around. And I mean, so far, we haven't had a very clear read on the economy from some of the data that we've seen so far. I mean, I guess I could say that it's been pretty still steady, resilient, if you will. But, the data are kind of old, right? And I sort of have to wonder, how much we're going to see in terms of revisions in coming months as well, just given that the shutdown seems like it just ended and, everyone was like, hustle back to work and let's start getting those surveys and all the data points out. So I think we have to take everything with a grain of salt. Plus all of this data is coming before the shutdown, before that 43-day long shutdown. So we're going to see some highs. We're probably going to see some lows. So we're going to have to probably go towards the new year before we start seeing some cleaner data because the shutdown will be over unless it starts again on January 30th. And of course, we're going to see some revisions. So far, I will say this is my long-winded way of answering your question. So far, it seems like it's okay.
Not ready to start talking about another government shutdown at this point, Jennifer. Before we get there, we'll get some other data. Even during the shutdown, we did get some alternative data, and it seemed to indicate, and also commentary coming from companies, that the labor market in the U.S. is weakening. And I wonder which part of the Fed's dual mandate the Fed should be more focused on right now. Is it stable prices or is it maximum employment?
I think right now the focus is on the job market. If you had asked me this like a month ago or so, I would have said inflation, and I would have been very lonely, I think, saying that, because at that point I was still quite concerned about inflation, and I was saying that it's still too early, even though we were like in October and all that. But just the fact that we are seeing some deals being made, we're seeing tariffs being lowered, I think it was like this morning or over the weekend, with some tariffs of 40% being brought down from Brazil, for example. So that will help food prices come down a little bit in the U.S. So that gives me some comfort that we are seeing inflation, we should be seeing inflation moderate in the months ahead. Because of that, I'm thinking that the Fed is probably rightfully focusing on the jobs front, and we'll have to see how that happens. I think, it's basically a coin toss at this point with the December meeting between inflation and all that. But I think they're going to err on the side of caution and focus on jobs and probably go for another 25 basis point cut on December 10th.
Do you have any clarity when it comes to 2026?
We are still seeing, and again, this is all, hopefully, like a lot of these tariffs and all these deals will be settled by earlier in the year, and we'll hopefully see inflation, moderating further. And because we'll see some clarity on the trade front, we should hopefully see some of the job market indicators leveling off as well, being a little bit more steady, because I think a lot of the employers earlier in the year did not know what was going on the trade front. So they were holding off on hiring and firing or laying off workers, but they held off for a long time, and now we're starting to see some of those layoffs come into play. We saw like a big increase in the number of permanent layoffs, for example, in that September jobs report. So hopefully with some clarity on that front, some clarity on the fiscal front, and then now we're going to be focusing on the USMCA. We're going to be focusing on the midterms, which is not until November, but time just goes by just like that, right? So with some clarity again on the trade front, tariffs coming down, I think that will hopefully be a little bit better for jobs. But in the meantime, we still look for, after a December rate cut, we still look for about 3 more rate cuts to come from the Fed, just kind of spaced out on a quarterly basis.
All right, just want to mention 10-year note at 4.03%, 2-year note, shorter end of the yield curve, 3.50. Jennifer Lee, she's Senior Economist, Managing Director of Economics over at BMO Capital Markets. Hey, still ahead, investors in the world just gobbling up everything and anything to do with GLP-1 drugs, or so it seems. We have a ton of headlines we're going to get to. That's coming up next. This is Bloomberg Business Week Daily.
It's 2:21 on Wall Street. I'm Amy Morris. The Bureau of Economic Analysis says the advanced estimate of third quarter GDP has been canceled. Those figures were originally scheduled to be released October 30th, but were delayed by the federal government shutdown. The September income and spending report, which includes the Fed's preferred inflation gauge, will be released December 5th. A pill version of Ozempic failed to slow the progression of Alzheimer's disease in a pair of high-risk studies. That has led Novo Nordisk to discontinue a planned one-year extension of those studies. Shares of Novo Nordisk now down about 6%. Alibaba shares about 5% higher after the e-commerce company announced the number of downloads its new app reached. Alibaba is scheduled to report its second quarter results tomorrow. That stock is up 90% this year. Tech stocks are pushing markets higher. We check those markets all day long here at Bloomberg. The S&P 500 up 1.5%. NASDAQ up 2.6%. The Dow is up about 0.5%. The 10-year Treasury yield at 4.03%. The 2-year yield at 3.5%. And Bitcoin is up now 0.75%, hovering around $88,000. President Trump and Chinese President Xi Jinping spoke by phone earlier today to talk about trade, Taiwan, and Ukraine. President Trump posting on social media that Xi invited him to visit Beijing in April. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Business Week Daily with Carol Masser and Tim Stinovet.
All right. Thank you so much. Amy Morris there, in for Charlie Pellet. Hey, you know, there is a big financial and business trend when its own top search on the Bloomberg is there. And I'm talking about specifically top GLP-1.
Right, like there's top AI.
Right.
You know, there's top
world.
Yeah. There's top GLP-1.
There's top GLP-1. Like there was so much that I feel like over the last week or so has come at us. I'm like, I just got to make sure I'm not missing anything. So that's why I went to top GLP-1. Listen, it's all about the news on the blockbuster obesity drugs that have been nonstop. I feel like part of our narrative for almost 3 years now, which is kind of hard to get our head around. Among the news today, reporting that Americans are microdosing to stay thin on these obesity drugs. You had Novo coming out saying a pill version of Ozempic failed to slow the progression of Alzheimer's. And then, Tim, last week we were talking about Eli Lilly and Novo's plans to sell their obesity shots to employers. I'm just scratching the surface.
Yeah, there's more, but let's just get into it with Bloomberg News health reporter Madison Muller. She joins us from Chicago. Madison, as always, when it comes to GLP-1s, there's a lot. I want to start with the news about Novo Nordisk saying that a pill version of Ozempic failed to slow the progression of Alzheimer's because ADRs of Novo down about 6% as we speak. Does this mean that the GLP-1s don't slow the progression of Alzheimer's, or does it mean that the pill form of a GLP-1 doesn't slow the progression of Alzheimer's?
Yeah, that's a really good question, Tim. And I think that that's something that we're going to have to see, and Novo's going to have to decide whether they're going to continue doing other studies in this space, looking at maybe Ozempic or Wegovy, the shot versions of these GLP-1 drugs in Alzheimer's. But for now, it's a disappointment to investors who have had a pretty rough year with Novo. I mean, I think that this was sort of one of the last things that people were holding on to with this company that has really had a lot of challenges this year between CEO turnover and really losing their lead to Eli Lilly. And so this is something that it was a long shot to begin with. I mean, looking at an obesity drug to prevent or slow down the progression of Alzheimer's is not something that is maybe one of the first studies that these companies would run. But it was something that could have had a huge upside for Novo and obviously a big benefit for patients. And so, again, goes back to that point of whether the company will see that or think that there is something to continue studying here, or whether they're just going to sort of throw in the towel.
You know, that's what struck me, Madison, is it just felt a little random. I mean, I know it's about, these guys have got to be thinking about repurposing and really more importantly, finding other indications, right, for these drugs, which, you know, the three of us have talked about and kind of joked. It felt like this was kind of the all-in-one elixir that's going to fix all that ails us, or at least a lot of stuff. And we have seen some, other, ailments that as a result of basically losing weight, that you have a better health outcome.
Heart disease, sleep apnea, those sorts of things. Check with your doctor, but like these are the things that we see as the second order effects from people losing weight.
Totally. So was it crazy for Novo to do this, or was it random? Because I don't know, it just felt a little odd.
Definitely. Yeah. I mean, it is one of those things that these these companies are studying these drugs in so many different conditions, some of which you guys just listed, and some of which are related to obesity and, are known to help when you lose weight, that these other health benefits will happen sort of after that. But Alzheimer's always seemed like one that was sort of a little bit outside of that box. I mean, we do know that there are obviously links between inflammation, diabetes, Alzheimer's, sort of all of these things that fall under the category of metabolic health. And we do know that these drugs have an impact in the brain. I mean, there are GLP-1 receptors in the brain, and there's this signaling that happens. And so we know that the brain plays a role in just this whole ecosystem of how these drugs work. And there have been some earlier stage studies or population, like looking at sort of not an actual clinical trial, but looking in a population of people that are on these drugs, seeing some benefit in Alzheimer's or dementia and things like that. So there were signals, and, the company, I think, would say that it is on them and it is their responsibility to investigate all of these things and to look at the potential promise in many different conditions, especially for a disease like Alzheimer's, for which there aren't that great of treatments and there aren't that many on the market. And so sort of owed it to patients to look into this, even though the signal wasn't super strong.
Hey, to shift gears just a little bit, but staying on Novo Nordisk, we were looking at a chart on the screen that showed shares of Novo Nordisk down close to 50% so far this year, more than 50%. This is Novo, not the ADRs, but this is Novo. Eli Lilly, on the other hand, shares so far this year up 38%, and in fact, last week becoming the first healthcare company to reach $1 trillion. How have these two companies had such different years when it is the GLP-1 drugs that have led to so much of the success over the past couple years?
Totally. And it's a great question because it really is at the beginning of this year, at 2025, where their paths really diverged. I mean, if we go back to, I think it was winter 2024, Novo investors were really, really waiting and closely watching for this next generation drug called CagriSema that Novo had really been hyping up, 25% weight loss. And Lilly already has a next generation drug that they're working on. And then that drug, CagriSema, failed to meet the bar that the company really set for it and that investors had been hoping for. And I felt like that was where things started turning for Novo. From then on, they sort of started out the year on a not so great foot. And continued sort of losing their lead to Lilly as Zepbound really surpassed Wegovy in terms of new prescriptions and popularity. And Lilly was quicker and maybe more innovative in looking at how to get their drugs to patients. And so they started doing Lilly Direct. Novo followed suit, several months later. So Lilly was a bit quicker in sort of navigating the challenges with compounding pharmacies, getting their drugs to patients more quickly, looking at how to discount the price of the medications to compete with these compounding pharmacies and telehealth companies a bit too. And so Novo has been a bit slower sort of on all of these competitive things that Lilly has just been so quick to the punch and willing to try, I think, maybe riskier strategies that have really paid off. And then in terms of the science and just the pipeline, Lilly has really been trying to, I think, their strategy is to have a drug for everyone across the board, across the obesity spectrum. And they are just looking at everything. Whereas Novo was really caught up on semaglutide and the promise of that, which is an incredible drug. It's, that's what Ozempic and Wegovy are. But that sort of, according to experts at least, they relied a little bit too much, rested too much on their laurels with that. And so they weren't as fast as Lilly to maybe go after other molecules, do other studies, and take more of a risk-taking approach.
What do we need to know about, and I just feel like, in general, though, it does feel like there might be some starts and stops where people, like the horse race a little bit. But tell me if we're wrong. Is there one company, is it Eli Lilly, that's kind of top of the pack and they really own it right now? I feel like we talked about Novo for so long.
For sure. Lilly has really come from behind. They weren't first to the market. Zepbound came out a bit after Wegovy. And they sort of fell into the same supply challenges that Novo did, but their problems were different, and that allowed Lilly to sort of get out of those supply issues a bit faster than Novo, which gave them a bit of a leg up. And then, like I was saying, they were able to get directly to consumers a bit faster and fend off these compounding pharmacies, which have really been an issue for Novo. Like, they are continuing to eat into Novo's market share. And so Lilly has been able to surpass Novo in terms of new prescriptions and the popularity and demand for their medications. And I mean, we've just seen Lilly balloon into this giant healthcare behemoth over the last year. I mean, $1 trillion valuation is crazy for any company, but especially a healthcare company. This is the first time something like that's happened. And even though Lilly, so much of the focus over the last year or 2 years has been weight loss drugs, Lilly is a pretty diversified company, and they have some other things going on. They have an Alzheimer's treatment. They have a big pipeline of cancer drugs that they're working on, inflammation, and Novo just doesn't have those other things. It's just diabetes and weight loss.
So always about the pipeline.
Well, Madison, we said that there's a lot to get to, and we want to get to another story. You, along with Jessica Nix, out today about, we call these obesity drugs, colloquially, right? But there's this new movement that some telehealth providers are saying, essentially, hey, this is not for obesity, enter microdosing. What's going on here?
So this is something, I mean, really, I don't know if you guys have seen this, but Jess and I constantly on our social media feeds, it's like anytime you open Instagram, TikTok, Facebook, we're getting another ad for microdosing GLP-1s, or we're getting ads just for GLP-1s, and it's like, lose a couple pounds, lose weight, lose 11 pounds by Thanksgiving. And it's like these crazy numbers, and we're seeing the ads with people that are not obese and who are at a healthy weight, maybe in a bikini. And we were like, what is going on here? And so we started looking into it, and just, I mean, it's obvious that there are increasing marketing and advertising that's going into getting these drugs to a wider patient population. And one of the ways that these telehealth companies are doing that is by advertising them to people who don't necessarily need them. Obviously, we all have our we're super aware of our bodies in the United States, and especially as women, that's something that constantly comes up. And so these companies have sort of capitalized on that, and they've been pretty successful. But it's also happened without a lot of oversight from health regulators like the FDA, and it's really proliferated in the last few months, last year. And so that's what we were exploring a bit in this story.
Well, listen, it's a great story, all of this reporting, and we're so glad we were able to finally catch up with you. And speaking of about looking your best, you have a great story on Botox. We have run out of time, but promise me you'll come back because we want to talk about this, because a little bit of a Botox backlash. Can you imagine?
Yeah. Hey.
I mean, anything's possible.
Also, speaking of microdosing a little bit of Botox, right?
I guess so.
Yeah. Medical aesthetics.
Macrodosing.
Medical aesthetics.
Or pushback.
Yeah.
Madison, you are amazing. Madison Muller, health reporter at Bloomberg News, joining us from Chicago, Illinois, and highly recommend you check out her story. It's about the fight to save AbbVie's $2.7 billion Botox empire. It's a Bloomberg Business Week story. More when we continue on this Monday.
It's 2:40 on Wall Street. I'm Amy Morris. Amazon says it'll spend as much as $50 billion expanding its capacity to provide artificial intelligence and high-performance computing services to U.S. government entities. Amazon Web Services says it plans to break ground next year on what will ultimately be 1.3 gigawatts of additional capacity across data centers designed for federal agencies. And the tech markets are pushing the stocks higher. We check them for you all day long here at Bloomberg. The S&P 500 up 1.5%. NASDAQ now up 2.6%. And the Dow up about 0.5%. The 10-year Treasury yield at 4.04%. And the 2-year yield at 3.5%. Checking Bitcoin now, it's higher today, up 0.8%, hovering around $88,000. The Bureau of Economic Analysis says the advance estimate of third quarter GDP has been canceled. The figures were supposed to come out on October 30th. They were delayed by the federal government shutdown. The September income and spending report, which includes the Fed's preferred inflation gauge, will be released December 5th. Arizona Congressman French Hill, along with members of the House Financial Services Committee, are pushing for new tailored bank regulations. They've sent a letter to Fed Vice Chair Michelle Bowman, Comptroller of the Currency Jonathan Gould, and FDIC Acting Chairman Travis Hill, emphasizing the need for tailored regulations rather than a one-size-fits-all approach. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's Bloomberg Business Flash. We go back now to Bloomberg Business Week Daily with Carol Masser and Tim Stenovec.
All right, Amy, thank you so much. This is Bloomberg Business Week Daily. Carol Masser along with Tim Stenovec live here at Bloomberg headquarters in New York City. Well, as we mentioned at the top of the hour, judge dismisses cases against former FBI Director James Comey and New York Attorney General Letitia James after finding that the prosecutor was illegally appointed. You've got that going on. You've got President Trump and President Xi of China talking today. Ukraine and allies warning the United States against rushing to end Russia's war. So, Tim, we knew we needed to kind of head back to D.C. and do a little bit of a roundup here.
Well, there we find Bloomberg News Senior Editor for Technology and Strategic Industries, Mike Shepard. He's in our Bloomberg Washington, D.C. bureau. Mike, first up, the judge dismissing the cases against former FBI Director James Comey and New York Attorney General Letitia James after finding that the prosecutor was illegally appointed certainly feels like a big setback. We spoke to June Grosso a little earlier. Is it the end, in your view, of legal woes for these two?
Maybe not entirely, because the Trump administration may try to find a way to revive these in some fashion, but the judge was firm in the dismissal of those two proceedings, and it would certainly appear that there is no avenue open through that. That does not mean, though, that they cannot try to restart something. Yet again, we are only in year one of the current administration, and the president has made clear that he would like Pam Bondi to use the authorities of her office at the Justice Department to pursue the people who have crossed Trump in some fashion in the past, but particularly James Comey, who made an enemy of the president many years ago, even before his first administration.
All right, but nothing from the White House or the president so far on this.
So far, no, we haven't seen a Truth Social post, and the president has not yet appeared in public yet. So we'll be waiting to see, but we do get a sense from the Justice Department that they are disgruntled and unhappy about this finding, and yet the prosecution was riddled with missteps from the start, especially in the case of James Comey, in the question of what the grand jury saw and whether they saw the finished indictment. It was really a mess every step of the way procedurally. And, you know, the question is whether the president will push his appointee, Pam Bondi, to try to resurrect a case in some fashion.
All right, so maybe no social from the president of the White House on that, but we did get some, not yet. The day is still young. But we did get some social from President Trump talking about China, mentioning we got some reports initially from the Chinese Foreign Ministry about a conversation, if you will, between President Trump and President Xi. But President Trump on Truth Social coming out and saying our relationship with China is extremely strong. This call was a follow-up to our highly successful meeting in South Korea 3 weeks ago. President Xi invited me to visit Beijing in April, which I accepted, and I reciprocated, where he will be my guest for a state visit in the United States later on this year. What's going on right now between the two countries? Where are we? I can't even keep track between trade and tariffs and security issues and chips and so on and so forth? Where are we?
Well, it's a good question, Carol, because this call was not really on anybody's bingo card, really, at this moment. The two sides had just held that highly anticipated and highly orchestrated meeting at the end of last month where they forged this trade truce, and it seemed a little early to actually have the two leaders do a check-in call. And the message between the president's readout of his conversation with his Chinese counterpart Xi Jinping and the official Chinese news agency's version was pretty stark. Donald Trump really stressed that the call was very good. He talked about his plans for a visit to Beijing and his invitation for Xi to come visit the U.S. later next year. He also talked about some of the key trade points that had come up and had been agreed to during this trade truce, namely increased purchases of soybeans by China, efforts to curb fentanyl trafficking, and so forth. And yet the version that we got from China was a very different tone. It really stressed the conversation on Taiwan. And we have to remember that there is a spat brewing between Japan, a major U.S. ally and trading partner, and China over the island. And that is because the new Japanese Prime Minister, Sanae Takaichi, had expressed that Japan might leap to Taiwan's defense in the event of a hypothetical invasion by China of the island. China views Taiwan as its territory and has said that if necessary down the road, it would weigh whether to take it by force. Now, the U.S. has maintained strategic ambiguity over this, and the comments by Japan raise questions about whether the U.S. would side with Japan on this matter. The president was artful in not bringing up Taiwan in his Truth Social post, but the Chinese were very direct, and it does seem that they were trying to enlist the U.S., or at least warn the U.S. to back off a little bit in this confrontation with Tokyo.
Okay, well, we said we'd go around the world with you, and we're going to do that, Mike. I want to talk Ukraine because Ukraine and its European allies signaled that the key sticking points remain in U.S.-brokered peace talks, even as senior officials hailed progress in winning more favorable terms for Kyiv from a proposal backed by President Trump. Where does this leave the peace process between Russia and Ukraine?
It is still ongoing, and it is probably not moving nearly as quickly as President Donald Trump and his advisors would like. They had given authorities in Kyiv, including President Volodymyr Zelensky, until Thursday of this week to accept the proposal that they had presented last week. But that version really contained a lot of the demands and desires of the Russian government. It was forged in conversations between Moscow and officials from Moscow and Washington, and presented without much consultation at all with officials in Kyiv and in European capitals. And they have since met with the U.S. side to express their reservations and concerns, and those specifically center on questions of territorial concessions that Kyiv might be expected to make in any peace agreement, and also the security guarantees that might be baked into any final accord. The European allies of Ukraine and Ukraine have expressed concern that those provisions were not nearly strong enough, and they needed to be discussed. Now, the proposal that was presented last week has now been whittled down to 19 points from the 28 that were framed originally last week, and the conversation is ongoing. And we heard Friedrich Merz, the German chancellor, express some optimism, guarded optimism, about progress having been made, but he did see that things were a long way off. So we'll have to see where this actually goes and if it does bear fruit ultimately in a further conversation about how to end the war there.
Yeah, and where are we, like in our third year, I believe, at this point? Are we in our third year? We're approaching four, right? 4 in February.
It will be 4 years in February.
Amazing. All right, Mike, thank you so much. Around the world of Washington we went. Bloomberg News senior editor for technology and strategic industries, Mike Shepard. Thanks to him, we did that. He is there, of course, in the Bloomberg News Washington, D.C. bureau. All right, folks, we're looking at a market just rolling off our best levels of the session. What does that mean? You've got the S&P, a gain of just about 1.4% and nearly a 2.5% gain for the NASDAQ 100. We talk stocks on the move when we come back to you on this Monday. Carol Massar, Tim Stanovic. This is Bloomberg Business Week Daily.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, coming up on the last hour of trading here on this Monday. It is a holiday shortened trading week, but nonetheless, we got a rally underway. But as you pointed out earlier, Tim, it's not like everything is higher today.
No, it's not. I mean, if we look at the S&P 500, we still see 255 stocks moving higher, 248 moving lower. It kind of...
It's more of a, it was a little bit more risk on when we kicked off the hour.
But it just shows what's moving in the S&P 500. And it's, mega cap technology. I mean, it's up, S&P's up 1.4%, even though we're seeing the same number of stocks move higher that's moved lower.
I mean, Alphabet's hitting another record today. So, I mean, there are just some names that are off and running. All right, I'm Carol Masser along with Tim Stenovec. Let's get to some stocks on the move. Alexandra Semenova is with us. She is here in our New York studio. Where do you want to begin?
Hey guys, so one of the stocks that is not participating in today's rally is Novo